Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, and Hiral Daria and Sharad Dubey. And it seems like more of 2025 because we've started off on a, let's say, a decent note, but the precious metals have started off and overtaken the headline indices. So no surprise that gold and silver are ruling the roost.
And Neeraj, there's a deja vu also happening. The AI trade has started coming in. If year 2025 was for US, now it's Asia. China, Hang Seng, it's almost 3% up. There's a major listing in AI space which has happened.
So AI trade in Asia, precious metals, a deja vu of 2025? Do you think so?
No. Much better year for India.
At least for India, we need better.
Yeah, better. I think we'll have a growth bump ahead. Maybe markets will recognize that. And lots to talk about it. In fact, there's so many of those questions being answered today on India Market Open. So take a look at what is there on the show today.
Looking at the global cues, slowly the trade positioning is starting for 2026. But yes, most of the major markets were closed last night. But the US futures, they are trending positively now, and their trade, and also the trade that still remains to be on a thinner side. Interestingly, Japan, China markets are closed on January 2, but overall it has been a mixed opening for the rest of the Asian markets. The precious metals, they continue their rebound. Gold is up 0.8% above the 4350 mark, and silver is also up 1.4%, nearing that $73 mark. Bitcoin has risen for the second straight day near the $89,000 mark, but largely most asset classes have remained unchanged. But we are talking about earlier the AI trade that has picked up in Asia. China AI chip firm Biren has raised $717 million in Hong Kong IPO, and today itself the listing was there, and 82% gains were there on the listing as well, and that's why the Hang Seng Tech Index is up 3%. So that's an initial trade of the year from China coming in. But one more news is there, Baidu's AI chip arm Kunlunxin has filed a confidential IPO for the Hong Kong listing as well. So strong developments coming in. But there's an interesting fight, which we all know, BYD versus Tesla. And BYD's lead against Tesla might stretch more. It's likely to surpass Tesla to become world's largest EV maker in 2025. BYD met its full sales target. Overnight numbers had come in. And today, Tesla will be coming out with its Q4 numbers. And it's largely expected that it will be on the lower side. So interesting development coming in. So that's what we'll be looking at.
Yeah, it's very interesting. And I think BYD's forecast or ambitions for 2026 are very strong too. Yes, China is not gonna stimulate as much or give as much incentives per se, but their confidence is skyrocketing.
And globally also they're picking up pretty well.
Yeah, the export picture is the bright spot for BYD currently actually. So that
I've seen that in a lot of roads in Bombay also, that the amount of BYD cars are coming. So yes, there is an acceptance.
Actually, you have to admit that there are more BYDs than Teslas right now.
Exactly. 100%.
100%
for sure. Okay, William Lee, Chief Economist and Managing Director at Global Economic Advisors, with us on the show on presumably his first day and our second day of 2026. William, great having you, and to you and yours, a very happy 2026. I wonder, William, if you believe that 2026 could be a year for emerging markets and the ones which haven't performed as well, because even now the overall weightage and dominance of developed markets in the US in the overall world market cap is staggeringly high. That has to change.
I would be very cautious to say that this is now the year of the emerging markets based upon the fact that last year markets outside the United States have done so well. If you take a longer look back, say 5 or even 10 years, emerging markets in general have been relatively flat relative to US markets. If you compare the NASDAQ 100 with emerging market indices, I think that there's almost no comparison. And I think the reason for that is because the money goes where money is most profitable. And capital flows, surprisingly, from emerging markets into advanced economies where there's capital rich because capital is most productive in those economies. The AI trade is a perfect example of that. Right now, the United States GDP growth is driven by productivity. And much of that is because of investment. Now, the investment that we are benefiting from is not AI yet. It is the investment that was post-COVID. Now, just imagine that we now have better than 4% growth in the last quarter. If we put on top of that the productivity gains that are going to come from AI over the next 2 or 3 years. So I think the best use of capital right now is in the AI trade and trying to boost productivity. And the benefits to the rest of the world, especially to emerging markets, will be the extent to which they can employ these new technologies into enhancing their production. Right now, I think we started off last year under the traumatic influence of tariffs and fears of trade blockages, and I think what we learned is that the more important trade is the trade in capital flowing to where it's best used. And right now, much of the capital is flowing into the United States and other advanced economies where it can be used to produce the most productive capital. And I think that will continue for the next year.
Okay. William, important points that you made. Good morning. This is Hiral on this side. Now, you're talking about productivity away from trade wars. You're talking about the AI-led growth transition over here as well. If you're moving away from all of these macro anxieties, if I may put it like that, how would you advise that long-term capital allocation strategy in terms of 2026 to shift to capitalize on this productivity boom?
I think the wisest shift in your investment portfolio is to do what Warren Buffett did, which is to say, invest in what you believe in the most. Invest in your convictions. Warren Buffett was very famous for calling diversification diversification. You make your portfolio worse because you just don't know where to put it. I think right now this is the year for people to research where they believe capital can be most used and most implemented most effectively. Because right now, a lot of the uncertainty about the AI trade, which I certainly have, is whether or not the stock prices reflect the expected future profits that will actually materialize. Everyone is asking, where are the ultimate cash flows that are going to come from the AI infrastructure investments? And that is not so clear right now. And I think that's why you have a lot of hemming and hawing and a lot of shuffling across the various companies in the AI infrastructure game, because there really aren't final applications yet in sight. But I think, especially for countries like India and all emerging market economies, the applications are where it's going to be most useful. And I think the thing to do now is to see where it is in India and in every other emerging market that the productive investments can be put to use most effectively and most quickly.
Hi, good evening, William. This is the LA time I'm speaking about. But William, there are two questions. First is the Fed rate cut trajectory. Expected to be around 2 rate cuts happening in calendar year 2026. And the second question is, there's a lot of asset classes which are talking about dollar debasement. How much of this is true? And also, of course, the question on the Fed rate cut trajectory.
That's a brilliant question. And I think it's time to clear the air about what the Fed can and cannot do. The AI trade and the investments I'm talking about and the investments that are behind the productivity boom that we're expecting, those are long-term interest rates. That's much more influenced by the fiscal positions of the different countries around the world, like the United States, that are running huge deficits and issuing public debt that are raising long-term interest rates that are crowding out these longer-term investments. That should be the greatest source of concern. The Fed is able to control the shorter-term interest rates, and that is probably going to go to bank loans and inventory and essentially expanding existing businesses. So if you believe that existing businesses are starved of capital, then it certainly is the case that we need lower short-term rates. But right now, I think the real question is, the tension between the high rates that are still in place at the short end, is that appropriate for the inflationary and employment conditions in the United States? And I say no, it's not. We're way too high. Inflation is a passing phenomenon. The trade-induced inflation we've seen so far is passing as we speak, as the tariffs start to come off. The employment situation in the United States, however, because of the productivity boom and the lower demand for employment and the slower pace of job growth, is making the labor market relatively weak. And the Fed, I think, is way behind the curve in lowering rates to be appropriate, because let's remember, the lag in monetary policy is easily 6 months to 18 months. So we have to look ahead where the employment market will be 6 to 18 months from now, and I think it'll be much weaker than it is today. And the Fed is way behind the curve in lowering rates at that end.
Okay, let's watch out all of these points. But William, take a moment to thank you for joining in today. Have a great evening. Really appreciate your time.
Happy New Year.
Yep, Happy New Year to you as well. Well, that's the global view here. Now let's focus on the Indian markets. An interesting day of trade, considering a lot of individual buckets shown. I mean, what stood out here?
It was interesting because we closed on a flat note yesterday. The most interesting bucket was the tobacco stocks, ITC, Godfrey Phillip, VST. The kind of cuts that we saw, whether recovery today or not is anyone's guess, but clearly we've ended on a flat note. Shriram Finance, Bajaj Auto, these were the top gainers on Nifty 50 as well. In fact, NTPC and Eternal also gained nearly 2% for the day. ITC saw a fall of around 9%, and this was on the back of the government levies that was additional over and above the excise duty on tobacco. In fact, it was the top loser on Nifty 50. And you had the mid-cap 150, which gained for 2 consecutive sessions. Names like Vodafone Idea, Ajanta Pharma gained the most. Whereas if you see in terms of the small-cap 250, that ended lower, with names like Godfrey Phillip and Westlife Food. These were the top losers as well. Pretty mixed notice what we saw in terms of individual sectors. There was some buying that did emerge when you talk about Nifty Auto as well, on the back of the auto sales numbers that did trickle in from names like Ashok Leyland, Bajaj Auto, which saw some gains. FMCG as well fell over 3% for the day, but the major contender for that was ITC, which contributed. The PSU Bank Index has been gaining 4 consecutive sessions of gains is what we've seen, and some bit of respite coming in when it comes to IT, because that snapped the 6-day losing streak in yesterday's session. So interesting day of trade. And if you see the FIDI data as well, that has been pretty much stagnant, I would say, continuing the trends that we've seen in the past. And you have implied open, which is now indicating a 47 points up move. But again, you know, we have to take it with a pinch of salt with what happens.
Yeah. I mean, maybe pinch of salt, but I mean, right now the going seems to be okay. I mean, even if you look at markets per se in Asia, not starting off too badly. So very likely, viewers, that the markets may continue to be very, very stock specific, but the bias is upwards. This is a stark departure from maybe what the beginning of December commentary was, wherein it looked like markets need to observe those lines of support. Now it seems that markets will likely have a slightly positive bias. If there are dips, they get bought into, but otherwise don't keep your bias negative, at least for the time being. Let's wait and watch how it shapes up. I think the auto sales numbers too largely seem constructive and may support sentiment. Even the numbers that have come out post-market hours, there are more thumbs ups than thumbs downs, if you will, and which is actually a pretty good sign. We'll do a complete analysis, of course, later on in the show, but it seems to be a decent enough month based on what the expectations were. And to my mind, I think the ITC downtick seems exaggerated. I hear dealing rooms telling me that some very smart money, some smart money has gotten into ITC at those lower levels. We'd be interested to see if indeed there is a bit of a bounce here. And just as we wrap up trade setup, I think the Morgan Stanley note by Ridham Desai deserves a mention here. I mean, it deserves a mention any single point of time, but especially since the start of the year. So he mentions that India is ending 2025 with the worst relative performance versus emerging markets since 1994. 31-year record that the Indian markets have created in 2025. And this is despite the 10.5% rupee return that Indian markets have delivered at the end of 2025. He expects earnings to beat, the RBI to keep its foot on deregulation, and he see more reforms from the government and a potential trade deal with the US. Now, it's a joker in the pack. It is an expectation which will help sentiment, but it's not the be-all and end-all anymore, because Indian markets have lived for 9 months or 8 months without the trade deal and adverse trade tariffs and still done reasonably okay. Rhythm mentions that thawing of relations with China and that country's anti-involution drive could actually add to the mix of optimism. So actually, that's the other big thing. And Morgan Stanley as a house, overweight lenders and discretionary consumption. They believe they'll benefit from India amidst the India outperformance. So keep an eye out for some of these. Interesting thoughts out there.
Yes, and Neeraj, we had mentioned about the ferrous play, and it seems like technically the positions are becoming more stronger. And today also, let's focus on Tata Steel, JSW Steel, JSPL as well. These ferrous stocks actually ended near the day's high level as well, and longs are building up more on this. Interesting small cap names I have picked up in the second group for analysis. The strong updates are coming in, and this includes Bansal Wire and SG Finserv. These are smaller names, but the numbers which we'll discuss about them, they have been very significant up move in their operational setup. Interestingly, it's the winter season and the demand for eggs also goes up, and we did a couple of channel checks also, and over here we see there is a stark increase in the prices for these two counters, especially SKM eggs and Venky's. So you should have a look at these counters as well. And fertilizer stocks, it's of course a pre-budget positioning play as well, but government will process fertilizer subsidies worth 2 lakh crore. There's no new announcement, but the processing starts up. So have RCF, FACT and National Fertilizers also on your radar.
Okay, so that's what the setup is looking like in today's session. But let's head across to Puneet to take us through what the FNOQs are indicating. Puneet, good morning. What is the derivative space looking like today?
Well, very good morning here and to all three of you actually. It's been a very interesting session yesterday, because while ITC alone contributed 82 points downtick on the Nifty 50, we still managed to end in the green. So we'll take that with both hands, with IT also starting to get its time under the sun now, and with earnings starting from Jan 12th, Jan 13th, it will be a key one to watch in this earnings season. In terms of the Nifty 50 as well as the Bank Nifty, there's not too much change. Yesterday was a session that a lot of traders took their time off, and rightly so, while we were here. But largely, we did see some cues on a lot of individual names, and we'll just get to that in just a bit. But when you look at the foreign investor positions very quickly, it will give you a perspective of what in terms of futures, where there was a 183 crore long position being built. While when you look at the index long, which we've been consistently highlighting, in December it was very depressed, fell all the way down to 8%. It's now hovering around the 9.4%, but a lot of foreign investors are yet to come back in the markets, and we continue to monitor that. While the put call ratios actually inched up quite materially to 1.22, indicating a lot more shorts in the system compared to the longs. In terms of the open interest distribution, 26,000 continues to be a key level for the puts. While for the calls, we've yesterday seen an active build-up in 26,200 and 26,400, while 26,000 continues to be subdued. So the red candle, as you can see, talks about the long position in the system. So above 26,200, there's an active interest across key levels. And that's an interesting point, because we have been having 26,000 as a key level, both for the calls and puts, but not anymore. So we'll hope that this red candle bar above 26,200 continues to build up, and something that we'll monitor as well. Finally, in terms of stocks, both gainers and losers is something that we'll watch, because Swiggy yesterday had a massive open interest change in terms of long build-up, and we'll see if that continues to be so. ITC had the major build-up in shorts, and it could be one of the key ones in the FNO space, apart from Godfrey Phillips as well. That will be something to watch. In terms of the open interest losers, very quickly as well, not too much change yet again. So a lot of short build-up on a lot of individual names backed by news flow, but a key trading session for today's markets as well, with the Nifty Auto, which will continue to be in focus.
Well, certainly keep an eye out for a bunch of these, and trust Puneet to bring up auto for sure. It's not a bad month, by the way. Very quickly, the stocks to watch out for in the session today. I'm starting off with two auto stocks, since we wrapped up this last piece with auto. So TVS Motors, the December sales numbers, total sales were up 50% to 4.81 lakh units, above estimates if I'm not wrong. And the exports led to this as well, 40% uptick in exports. I read a comment somewhere that a clutch of even vehicles in South Africa, for example, are made in India and Indian models as well. But Indian bikes are certainly out there grabbing market share. So keep an eye out for TVS Motors today. Keep an eye out for Force Motors today. Total sales up 50%, 49.7 at 3048 units. Domestic sales were up 48%, but exports were up 88%. Remember, it's just a 96 unit number. So that base is so low that even if it's a 200% uptick, it's not really that big a deal. But relative to the overall size of Force Motors, wherein the total sales are 3048 units, it's not a bad number. Thirdly, what is likely to be the news of the day for sure, and let's see how Devyani reacts, but Sapphire Foods and Devyani are important ones to mention. Sapphire Foods will be merged with Devyani. Sapphire shareholders will receive 177 Devyani shares for every 100 Sapphire shares held. So technically there is no arbitrage here, because this is a 1% arbitrage, if you will, which will get corrected or open. So deal values Sapphire at par with Devyani. So no big changes there. Why the merger? There is potential for greater synergies. Obviously, they have thought through this, and which is why. But the numbers that are floating around are between 200 to 25 crores in synergy benefits, and full realization, of course, over the long term. The key is, as I read through a lot of brokerage notes, the one from UBS stood out for me, wherein they believe that Devyani is a clear beneficiary out of this merger, and their target price, I think it's some 198. The current price is 147. Remember, as I said, the stocks will not likely gyrate too much on open, because the merger ratio is exactly in line with what the current prices are. So there is no arbitrage.
If you see in terms of, though it looks very similar.
Yeah.
And I think this is going to be one of the first M&A in corporate India of 2026.
Yeah, for sure. I mean, it's 2nd of Jan, so naturally.
And just
so,
to put it in a simple way, your fried chicken and your pizza, it comes in the same company.
Yeah.
That's the KFC and Pizza Hut brands.
Yeah.
So that's something to look out for. But there are other stocks also in focus. These are the small caps I have picked up, and I like this space a lot. Time Technoplast, they have approved to manufacture 2-liter high-pressure Type 3 composite gas cylinders. Now, this is, of course, used for the compressed gas space, and this is the first company in India actually to get this approval for this high pressure segment. Already this approval is there for the oxygen and breathing air cylinders, and remember, these are high valued, high margin products as well, so this augurs well for the stock. The second company in focus is SG Finserv, a very strong operational update. Looking at the 9-month numbers, the loan growth was at 105% at 3,211 crore rupees. And to put in perspective, the company is into supply chain financing. So we might see some HNI buys in discounters. That's what the dealers have been telling me. Also, interestingly, Jefferies has come out with an interesting report on the capital goods segment. Especially out of that, I have picked up KEI Industries. They have maintained buy rating, but the target price has been hiked from 4,855 rupees to 5,460. They're expecting 10% CAGR growth in the overall infra space, and the industrial capex also over the next 3 years at 6%. And also remember, company is a holistic play on the power capex, housing and exports play. So these are the important 3 stocks which I have picked up.
Okay, so interesting names there on my list. I'll start off with the ITC, because that stock actually plummeted, what, a little 9% in trade yesterday. It's actually emerged as the session's biggest casualty, hitting a 52-week low. It nearly wiped out 50,000 crores in investor wealth. The major catalyst was the sharp cigarette tax increase, which was effective the 1st of February 2026. Now, the new tax structure would say that the excise duties will range from nearly 2,050 to 8,500 per 1,000 sticks, depending on the size. And the total tax burden, when combined with the 40% GST, is expected to reach approximately 50% of the retail prices. You have Nuvama, which went ahead and downgraded the stock to a hold from a buy for a target price of 415. And they've said that the magnitude of tax is higher than expected, and they forecast a decline in FY27 cigarette EBITDA. You have Jefferies, which has retained a buy for a target price of 535. They're saying that the move is a clear negative surprise, and the tax incident could rise by almost 20%. Prabhudas Leeladhar has downgraded the stock also to a reduce from a buy, and they've cut the target price to 348 from a 528, saying that the cigarette excise opens Pandora's box, and they're expecting a 12.5% decline in cigarette volumes in FY27 and a 2.5% growth in FY28, despite the expected uptick in profitability in FMCG and the paperboard business, and now expect ITC to post an EPS CAGR of only 4.5% over FY26 to 28. In fact, few of the other notes that have come in as well, you have a JP Morgan. They've downgraded the stock to a neutral from an overweight, and they've also cut the target price to a 375 from a 475. And you have Antique on ITC, which has maintained a buy, and they've cut the target price to a 445 from a 500. So major target price cuts coming in, and this is on the back of the 10% downtick that has come in. In fact, the Tobacco Institute of India has also said that this excise duty hike may cause massive losses to millions of farmers, MSMEs and retailers, and they're actually requesting the government to reconsider the computation behind the increase in excise duty on tobacco. We'll try getting them to speak to NDTV Profit as well as to what's their rationale and what could be expected going ahead. And moving on, Sharad did mention a couple of business updates that are coming in from the smaller world, bank universe as well. Names like Indian Bank, South Indian Bank are the ones which have announced their business updates. If you talk about Indian Bank, it's a strong provisional number. The total business has gone up around 13%. Gross advances have seen a growth of around 14.5% on a year-on-year basis, and your total deposits have also grown little over 12%. In fact, the domestic CASA ratio has come in at 39.02 versus a 40%. Now, we've seen a robust double-digit growth across key parameters, including advances, deposits, and the strategically important retail, agriculture, and MSME, which is the RAM portfolio. And strong credit demand with significant increase in gross advances is also reflecting a healthy appetite for credit. So watch out for this one in trade. If you talk about South Indian Bank as well, total deposits have seen a growth of around 12%. Gross advances again up around 11%. Your CASA has seen improvement as well at 31.84% versus a 31.15%. Again, strong numbers here. Growth across is what we've seen. The funding mix has improved as well with the improvement in CASA ratio. And this will be beneficial for managing the cost of funds going ahead for the company. If you talk about the adjusted loan growth, when accounting for a technical write-off of 900 crores in the March 2025 quarter, the year-on-year loan growth would have been even higher at around 12.43%. So clearly a strong one coming in on this one. So these are the stocks that, are on my radar. So that's what we're looking at in terms of individual counters. But it is an interesting day of trade. We are just on the 2nd of January. And when better to speak to the management of Bombay Stock Exchange? In fact, you have Sensex, which is also celebrating their 40 years today. So this is an exclusive conversation that we are going to have right now with the MD and CEO, Chairman and MD at BSE. Let's get in Mr. Ramamurthy to join us and talk to us. Mr. Ramamurthy, welcome to the show. Always a pleasure to speak to you on NDTV Profit as well. And wishing you a happy new year from Team NDTV. Let me start off with the key drivers behind BSE's turnaround over the last 3 years.
First of all, thanks to NDTV for having me in this show. Happy New Year to you and to your viewers. See, when a company gets into a turnover mode, there will be multiple factors which lead to it. There will be some basic reasons which instigate a turnaround, and there will be some strategic actions which come over that, which helps in the turnaround. When I look at the factors that what made me feel that there is a possibility of a turnaround year, two things generally I ascribe to. 3 years before, when I joined BSE, I found clearly there is a strong view amongst the market participants about the concentration risks and the issues associated with it in the market. The second was deficiencies and gaps in the market in respect of product, service and approach of service from the people who provide the service to the people who take it. When these two basic factors were identified by us, we clearly built our strategy and strategic interactions and actions over that, which probably I feel is one of the major reasons for contributing to the success of BSE and turnaround, as you call it, in the last 3 years.
So which have been the strategic changes that have played the biggest role when you talk about the revival since the time you've come in?
See, when we looked at it, See, to make any change when you come into an organization which has been making consistently operating losses for multiple years, you need money to do it. Where do you get the money? If the revenue increases, wonderful, but that's not there, that's what you are working for. Then naturally you look into the costs. We were able to identify costs which need not be there because they are not adding any value. We were able to cut it. That provided us some amount of leeway to introduce other changes which we wanted to do. Clearly, for first thing what we set for ourselves was, what should we be working for? What should be our strategic thought processes and achievements that we want to have? To make BSE vibrant was one. To improve the depth and breadth of market for ourselves is the second. And customer delight was the third. With this as three guiding principles, we started clearly weaving various strategic actions. First is, of course, as I told you, the cost-cutting part. Second, we wanted to do capacity building. When we talked of capacity, one was human capacity and second was technological capacity. And third was environment building. And fourth was product differentiation. In environment building, it was all the stakeholders with whom we had to interact, get their voice, find out what comes as the gaps to be fulfilled or what comes as the thorny issues in the success of BSE and try to address one by one. The last one, clearly, we had some initial tick size differentiation in equities market and subsequently Sensex derivatives and Bankers derivatives, which took BSE to newer heights.
So, you've spoken about a couple of segments. Now, how important, Mr. Ramamurthy, has been the growth in the derivative segment? And when you look at the new products as well, to take this turnaround forward, what's going to be the outlook looking like?
It's a very good question that you are asking. We just did not concentrate only on derivatives. While derivatives has shown a good amount of growth, because of the simple reason it is a catch-up growth. For 25 years you were nowhere there in derivatives. And when you start a new segment now, virtually it was new, though it was an existing segment, naturally you have a good catch-up growth, the pace of which is far bigger than other areas. So that is one thing where we have added members, we have added colo racks, we have added FPIs to our system. The second is, of course, the cash market. There, with the clear directive from the regulators on common contract note, we are working on a smooth implementation of SOR, best practice execution algorithms by all the brokers. They have to go to both the exchanges for taking approvals. We are granting approvals fast. Once they get the approvals fast from NSE, they will be able to do it and the market will be able to be exchange agnostic. It should be price sensitive and not exchange sensitive. That's what we are trying to do because that is what is going to be beneficial to the market. Not only this, we also extended this growth avenues to other areas. As you would recall, our colocation revenue has gone up because our footprint is bigger now and also we have order threshold charges which is augmenting to cost recovery for us from the colocation area. And data vending, wherever it is permitted, we are getting into it. We are augmenting our data set, which is permissible in India, and we are selling it to the right people to get the right type of revenue there. And our index business, which we acquired it somewhere in 2023 and 24 as fully owned subsidiary for us, that is doing extremely well. Last but not the least is our mutual fund platform. Our penetration, when I joined, probably we were making around 1 crore orders management per month. Today we are doing around 7 crores, 6.5 crores on a regular basis month on month. And the number of SIPs coming through us is very high. The percentage of SIP volumes going through us is very, very high. Clearly, this is also another area of growth where we have worked very hard and we have been trying to get success here.
Okay, so moving on, you spoke about new products already. Where is the turnaround expected? Because the SME segment is doing absolutely strong for you. What I think in 2025, little over 600 is what we saw in terms of SME IPOs. So what is the outlook for this segment and what is that monetization plan looking like?
Yeah, very good question again. If you look at it, There are 6 crore SME units in India. Having 600 plus listing is just not even scratching the surface and not even tip of the iceberg. Here, no one has to be a bit careful about the growth strategy. Out of 6 crore companies, there are good companies and bad companies. We have to ensure only good companies come for listing, and where bad companies apply and try to come for listing, we should have a methodology to ward them off. So we should not be afraid of rejecting a DRHP if we feel that it is not serving the purpose for the country or if it is not properly conceived. So we do all this. What we do is, with the help of our AI platform, we check for SEBI requirements, BSE requirements, and based on BSE requirements, wherever there could be probable red flags, we ask for questions, and if we don't get satisfactory answers, we don't accept. We also do a credibility and track check for people who are mentioned in the DRHP. Apart from all that, as you would recall, in 2024-25, we have increased the stringency in respect of multiple areas. The minimum subscription required, the track record of promoters, the corporates, profitability, how much is YFS, how much is working capital requirement, to look into it to see if there are any red flags for which questions need to be asked, and ensuring that it is in public domain and only qualified, knowledgeable, meaningful investors get into SME. By increasing the minimum subscription itself, you prevent some people from coming in who need not come, because liquidity could be poor in SME to start with, and also the risks could be higher because it's a small company. Shocks may or may not be possible of being taken by them. So all this we are putting to have a calibrated and calculated and strong and secure growth for SME. That's what we are doing. Monetization part of it is, nothing specifically can be done to sell away this to monetize, because we are doing this as a part of the exchange platform. And all is not about revenue, isn't it? SME is a great service to the nation. If there are 6 crore companies, and if you are able to make at least, say, 6,000 of them to tap the capital market, are we not helping the country in big way in capital formation? So it may not be a big profit center even at this stage, and in future also. It may be a cost center, but it is worth its while to do it because it is going to help the country grow.
Okay, so it may be a cost center to the company as well, and maybe there's no monetization plan on that front. My last question coming to you, Mr. Ramamurthy, is overall in the next 2 to 3 years, what should investors watch out for from the company?
From a shareholder's perspective, what we are working upon is to ensure this growth phase continues. Sustains and continues. Sustain and continue to grow. How do you do that? You have to concentrate on the following 5 areas. How do you diversify your revenue streams? We have already started, as we discussed some time before. Technology infrastructure building, human infrastructure building, technical capabilities building, physical infrastructure building. These are the 5 areas where we are clearly working upon, so that as a company, to my shareholders, I will be able to continue to provide sustained growth at all points of time.
So that's the message coming in from Bombay Stock Exchange to all the shareholders as well. But thank you so much for joining us on NDTV Profit, and wishing you a happy new year once again as well. We'll quickly slip into a short break. On the other side, we'll get to the top trading strategies for today. Please stay tuned to NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
माही कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस है।
फिर तो SBI कूलेस्ट है।
Really?
SBI ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
Welcome back to India Market Open, and now joining us is Kush Vora. He's the founder of kushvora.com, and Parag Thakkar, he's the head fund manager at Fort Capital. Very warm good morning to both of you gentlemen, and yes, it's still a happy 2026, and Kush, I would like to get you in first. Overall, just remove ITC out. It was a big drag of 90 odd points yesterday. Markets did start on a decent note, and the technical setup still looks good, and with a bullish sentiment coming in.
So first up, a very happy new year to you guys. We're meeting in the studios for the first time. Yes. And what I really want to know is who's falling sick on Monday. We've worked that 31st, 1st January date, so I think we deserve that break, right? So
no one can be falling sick on Monday. It's the 5th of January, where NDTV is coming back with a new look, with lots more to watch out for. So I think from all of us to all our viewers, I think no one has no one should be falling sick, in fact.
Absolutely agree. In fact, I personally am looking forward to that. But Sharat, spot on with that analysis. If it weren't for ITC, the Nifty would have been up more than about 100 points or so. And I also agree with the fact that technically Nifty is not looking so bad. Couple of points there. Since December, we've knocked at the doors of 26,200 about 6 times and retraced from there. But what's also happened is that the supports have been shifting higher, 25,700, then 25,900, now 26,000. That's a good support zone. What this essentially translates into, from a technical standpoint, is an ascending triangle formation, which is a bullish formation, and it also suggests that a break above the resistance level, which in this case is 26,200, once you break above that, the momentum, the pace of the rally could be much faster, much higher. So from here on, I still remain constructive. If you look at the options data also, that's confirming the same thing. 26,200 put, good base. 26,200 call, good base. 26,000 put, strong base. So we know that that's the broad range. If you do get any kind of declines closer to those 26,000 levels, I think it's safe to say that buy on dips still works as a strategy. Mild concern on Bank Nifty. I remain constructive, I remain bullish. It's knocking at the doors of that resistance levels of 59,800 and 60,000. But that's because HDFC Bank and ICICI Bank haven't done anything. If at all, they've contributed a little negatively, while all other banks are trying to pull their weight. So once you get a full participation on Monday, and participants come back, any kind of an uptick in these names will take Bank Nifty comfortably above 60,000. So remain constructive. We're knocking at the doors of resistance. It's just about when do we break those.
That's pretty interesting. But Kush, what are the technical picks for that? And I'm sure there'll be both buy recommendation coming in. That's per my history with you.
Indeed, I think you understand me rather well now. But just a happy update. Since it's the Happy New Year time, on a happy stock, Happy Forgings. We discussed this stock a couple of times in the past for targets of 1150, 1180. The first target was hit very comfortably. Now it's knocking on the doors of the second target. But with the kind of setup it has, I would suggest you could continue holding on to this with a trailing stop loss, maybe book partial profit. So that's just an update on Happy Forgings. Now, as far as the picks for today go, I'm starting with the big boy, Larsen and Toubro. Very interesting moves. Remember the ascending triangle I spoke on Nifty? There was a very similar formation on L&T as well for the last month and a half. And the resistance there was about the 4100 mark. That got taken out convincingly yesterday. 3 sessions of gains, volumes, close to the 20-day moving average. So we'll take that in a low volume market like this. So Larsen and Toubro, you could take this as a trading bet or even as a positional bet. 4250, 4360 are your targets. 4040 is where you keep that stop loss. And a reiteration on V2 retail. Here too, you've seen a good recovery. The stocks crossed the 20 and the 50-day moving average on the back of good volumes. You could buy into this for targets of 2500 and 2555. The stop loss on this one, 2390.
Okay, so, those are your top trading strategies you should be watching out for. Parag Bhai, good morning. I know we spoke about ITC in yesterday's session during closing. We've seen a 10% cut. You have majority of your brokerage houses who've gone ahead and cut their target price. And they're expecting major cuts when you talk about their cigarette volumes as well. Even at current levels, what would you do with the ITC now?
No, as I said, so first of all, Happy New Year to all your viewers. I said, luckily, I was holding just 1% and we have added a little bit yesterday. So we'll see, we'll gradually buy on dips with the hope that something changes, right, from government side, because I think this is going to encourage illicit and illegal cigarettes a lot, and government will also lose revenues. So I would say that I'm expecting that some change might happen in the budget or somewhere. But of course, I would say that at 4.5 to 5% dividend yield, 5% free cash flow yield, plus ITC will take price hikes in my view. So the brokerages, what they are saying is between 7 to 10% volume decline, which should actually derate the P multiple. That I also said yesterday in the interview that is going to happen. So in my view, if stock falls below 340, 330, then it becomes a very exciting contra buy. But as I said, the individual investors should not attempt a big amount of contra buying in this kind of stock. At a fund level, when we have a diversified portfolio, it is okay to buy such a quality stock when it falls so much.
Okay, so that's with regards to ITC. Staying with the consumption pack, you have Sapphire Foods and Dyani International merger that Neeraj just took us through. It's effective from the 1st of April. Dyani to pay a one-time fee to Yum towards the merger expenses. Now, interesting synergies that are coming out of this deal as well. Parag Bhai, what do you make of Dyani International and Sapphire Foods merger, and what is it store according to you for the shareholders?
No, I think Dyani is a major beneficiary, right? It will become a largest QSR company, plus there will be a synergy benefit of 210 to 250 crore as they have said in the presentation. So 2.5% EBITDA improvement. So I would say that, of course, one has to see that like-to-like sales growth revives, and that kind of gives the operating leverage to these companies. Up till now, that has not happened. It is only positive for Jubilant Foods right now. But I think with whatever has been done on the consumption side by government and RBI both, I feel that any sort of consumption should pick up gradually. First, we saw the clear-cut momentum in auto, as you saw yesterday also auto numbers across the segments, there was a fantastic growth. Gradually, it will spoil down to FMCG, which I told yesterday also. And QSR also should come. Hotels also should continue. Hotels are already doing well. They should continue. So in my view, any consumption idea, which is the stock has not done anything, for example, this stock also. So definitely it is interesting.
That's an interesting take from Parag. But Kush, I want to get you on this. Dyani and Sapphire Foods, largely the synergies might be factored in. We might have a, not a very big gap up, but what are the technical levels looking like? And I also want your view on Jubilant Foodworks. Last 6 months, stock has tanked 22%. The entire consumption space, the QSR space, not a darling of the markets in 2025. But how are you looking at this space? And of course, we'll start with your views on Dyani and Sapphire.
Yeah, and I think what you told for Jubilant applies more to the space. What's happened with Devyani and Sapphire is largely because of the deal, the excitement and the enthusiasm. But if you go broad-based, you see, RBA restaurant brand Asia, you see Jubilant Foodworks, they've not done anything well. So yes, they are definitely not the darlings of the market. And I think once this news is kind of factored in, you would see these stocks go sideways to negative. So if you had it from lower levels, or if the stocks have come close to your cost price, both Devyani and Sapphire, it's a good idea to perhaps offload and switch to some other sectors. But for now, like I said, there isn't enough juice in the entire sector. Jubilant Foodworks knocking at the doors of very near-term support levels of 550. If that's broken, I think the downward move could continue. So wouldn't remain too excited on the entire space. Like I said, Safari and Devyani, if they're close to your buying price, it's a good idea to exit.
Okay, so that's with regards to Safari and Devyani, a technical view coming in there. We did speak to Parag Bhai and Kush about ITC. But let's head across to my colleague Mahima, who will take us through what's happened, what brokerages are actually making out of it as well on the back of the fresh tax heat that will be hitting tobacco and cigarette makers. Overall, let me come to you, Mahima. What do you have for us in terms of brokerages? Because major target price cuts coming in there.
Right. So Hiral, basically just to give viewers, of course, a perspective of what happened yesterday. So there's going to be an additional excise and health cess levy on tobacco as well as pan masala products, and this will, lead to overall volume decline because companies like ITC are going to pass on the benefits to the consumer. So volumes for them will go down, and overall, if they don't pass on the entire cost to them, margins will squeeze overall. And price hikes for as of now, what brokerages are penciling in is that price hikes will be anywhere between that 20 to 40% odd. Now, to understand as to how valuation generally happens for ITC in different categories, around 25% of valuation was coming in from cigarette business, which might go down to anywhere between 15 to 17% going forward, considering the EPS cuts and EBITDA cuts that brokerages are penciling in. So that's with regards to where the valuation stands, and probably FMCG is the business that will pick up from here on, considering the GST cuts that have come in. That will augur growth for volumes in the FMCG business of ITC. So going forward, that is the business that might pick up in terms of volumes, and cigarettes is where the volumes will come down. In terms of the paper acquisition of Century Board, that is also something that is going to bottom out in FY27 and is going to start giving synergies from FY27 onwards. So that is also a business that will augur growth for ITC going forward. In terms of where the dividend yield payout is concerned, ITC has always been shareholders' favorite in terms of where dividend payout stands. The average dividend yield is around 4% with almost an 85% payout in average. If you take a look at the last 2 odd years, they've given dividend yield of 3.8 to 3.9%, and payout has been in that 55 to 84% range. And estimates as per brokerage also suggest that the yields going forward in 26 and 27 is going to be around 4% and 4.1% going forward. Now, in terms of the EBITDA and EPS cuts by brokerages, Nuvama has cut EBITDA by 7% each for FY27 and 28. Antique has also reduced FY27 and 28 EBITDA estimates by 9 to 11 odd %. And DAM Capital has also kind of cut down their EPS estimates by 8 to 9% for FY27 and 28. Now, in terms of downgrades, a lot of brokerages today have come out and downgraded ITC for now, and also given EBITDA cuts. JP Morgan has revised it to neutral with a target price of 375. Morgan Stanley has given an equal weight with a target price of 366. Jefferies has given a hold rating right now with a target price of 400. Nuvama also a hold rating with a target price of 415. For MK, it is they've revised the rating to reduce with a target price of 350, and Motilal Oswal has given it a neutral rating for now with a target price of 400. So this is the overall view of what this means for ITC. Of course, 2 businesses going forward are going to take over probably over the cigarette business, but we'll have to wait and watch out for as to exact financial impact. What will that be?
Okay, well, let's get in Devin Choksi. Mahima, thanks for that. Let's get in Devin Choksi into this conversation as well, Managing Director of DR Choksi Investment Managers. Devin bhai, thanks so much for joining in. Happy 2026 to you, but not a happy 2026 for shareholders of ITC, because this came as a big shock. What's the reaction overdone though, Devin bhai?
Hi Neeraj, good morning and wish you a happy 2026 as well. Well, I think this is not a new problem for ITC. It's a known problem, frankly. Market does react whenever the government plays around with the duty And that's what the market's job is. The market does react. In my viewpoint, it is justified that this particular reaction, largely because of the fact that I think around 78 to 80% of the contribution into PBIT is largely coming from the cigarette business in books of ITC. So certainly, I think if the norms are changing and if the cigarettes are getting costlier, quite possible that I think they may resort to the lower brand of cigarettes so that they don't lose out the customers. That is quite possible. And to that extent, I think they may probably be justified in form of, I think, maintaining the sales. Yes, I agree on the profitability part. I think there will be some amount of challenge on that front, at least in the near term, if not more. But I would like to see ITC from a different angle. Actually, I think this particular company is no more, I think, one should be looking at a cigarette company. It's building the businesses. It has already, I think, demerged the hotel business last year. It is likely to demerge the FMCG business. FMCG business as it stands today is close to around 24,000 crore top line for this financial year and growing steadily at around 10-15% rate of growth as well. So in my viewpoint, I think this is an unlocking of valuation which could possibly re-rate the stock eventually. So one will have to keep an eye on that aspect. In fact, I think the current fall and the de-rating of the stock by the analysts is something which I would consider as a contra-buy opportunity in the fall. And that could possibly mean that I think given the situation of demerging the FMCG business, the value unlocking would take place. ITC will hold 40% in this proposition like how they did in hotel business. And maybe I think the shareholders will get the other benefits. So in my viewpoint, I think one should look at this particular company differently. That's what I would like to say.
Okay, so which means, Devin Bhai, with the thesis that you have, with the reaction that happened yesterday, is it giving you an opportunity?
I absolutely believe that I think unless this kind of, I think, meaningful price correction takes place, some of these large cap companies, I think, don't give you opportunity beyond 10-15% of earning in a year. This fall is definitely giving, I think, the larger opportunity. Of course, I think the near-term cigarette-related revenue and the profits might have some impact in the quarterly results. But overall, I think that it will get normalized as we have seen it in past. Because though I am not a consumer of cigarette, but I feel that I think the habits don't change. And that's where probably I think they hold the chance of getting back the customer. If not now, I think a quarter lag after.
Okay, Devin Bhai, leave it at that. Thanks so much for taking the time out and being with us.
Thank you.
I really appreciate your time. Kushbora, very quickly, 30 seconds. ITC, is it giving you an opportunity or would you wait?
If you're a long-term investor, these are the dips that you should buy into. You don't want to buy the entire amount at one go, but if you want to start nibbling in, these corrections are where you start nibbling into a stock like ITC.
Okay, Somit is here with all the chatter from the dealing rooms as well. Somit, good morning. What are you hearing?
Well, a couple of stocks on the FII radar is Cummins and Chola Finance. Dealers are indicating that there are buy flows on FII desk and delivery volumes are also on the higher side. When it comes to Kalyan Jewellers and Titan, there are buy flows on large HNI desk at lower levels is what we are seeing. And dealers are indicating that both the companies are expected to report a strong Q3 numbers. Even the updates could be on the stronger side, so keep an eye out for both the counters. For IFL Capital, there are buy flows on PMS desk. A positive deal announcement is likely anytime soon is what dealers have indicated. And when it comes to Dixon Tech, that stock had seen a strong up move in the last half an hour of trade yesterday. Now what dealers are indicating is that there are buy flows at lower levels because the street is expecting a positive announcement to come in very soon when it comes to Dixon Tech. And KEI Industries, Hitachi Energy and Siemens was part of our segment yesterday where we did indicate that there are buy flows on institutional desks and dealers are expecting some positive development. And there has been a very bullish note that has come in from Jeffrey's side. In fact, on all these three counters, in fact, for KEI Industries, they have also upped the target price and now the target price is more than 5,400 rupees. And the Dyani and Sapphire merger is something that has been announced and this was part of our segment last on November 27th.
So Khabar confirmed from Heard on the Street segment. Thanks a lot, Somit, for that. But time for a short break. We'll be right back with the pre-open and bring you the big brokerage call of the day. Stay tuned.
power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Welcome back to India Market Open. Now, the other pack that will be in focus, which did see some bit of buying interest in yesterday's session, was the auto pack. On the back of the auto sales numbers that have trickled in, Neeraj did take us through a couple of them that were on his watch list. In addition to this, if you see in terms of Ola as well, they have reported as per Vahan data that their market share has gone up in the month of December. So that could be something that you should be watching out for as well. I know, Parag Bhai, Tata Motors PV is something that you have been fond of so far. But with the numbers, yes, CV, sorry. So with the kind of, numbers that have trickled in, anything that you also liked from the two-wheeler space or from the passenger vehicle space?
Yes, it is very clear. See, TBS continues to be the leading, I would say, innovator of this two-wheeler industry. Every product, every segment, they are dominating, gaining market share, growing profitably, exports also doing well. So TVS is an all-rounder in my view, and followed by Mahindra and Mahindra. And I feel that tractor still has further tailwinds. So tractor will continue to do well. Mahindra continues to do well on the auto side also. So TVS, Mahindra for sure, followed by Maruti, of course, and Tata Motors CV. These are the stocks which I like in this sector. And now, for example, some of the auto components who are supplying to these companies will also start gaining market's attention, because at least in trucks, tractors, two-wheelers, and passenger cars also, actually, the growth momentum is sustaining. So there are various ways to play all this, but I would not like to name because they are very small names. But I would say that the entire sector is very interesting.
Entire sector is interesting, and I take it that Parag Bhai will probably like some of the auto ancillaries as well, as he has spoken, and the financiers as well. I think Tata Capital was one on his list, not exactly a pure play CV financier, but has some bit of that flavor too. The pre-open hits have come in, so just quickly mark them. Have to mark the Nifty, have to mark ITC and see what ITC is doing in the first 8 minutes. Also keep an eye out for Sapphire Foods and Devyani. Maybe there will not be an exaggerated reaction on either of them. 2% higher for Sapphire, maybe 2% or 3% higher for Devyani as well. 7%. I think these things will change, by the way. So keep them at the back of your mind. But yeah, FMCG or foods certainly in the thick of things this morning. And then there are some of the other newsmakers as well, the auto sales numbers as we spoke about. But Parag Bhai, maybe we spoke about these, maybe we didn't. But Sapphire, Devyani and this whole merger that has been announced, the space has, or the QSR space has suffered in the last 3-4 years. Even if sales may have happened, the stock prices haven't gone anywhere. Can this merger lead to some upticks for Devyani?
Yeah, definitely. I think Devyani should do well in my view from here on, because it is the largest QSR now with synergies coming in as a 2.5% of EBITDA improvement. The like-for-like sales are not going up, but I would say it is a matter of time. So you have to be ahead of the curve and predict. So, for example, like PV, another discretionary consumption PVR, for example. Yeah, we have clearly seen people have returned to the theaters, but market is not because the stocks have not moved. And the businesses have got this kind of disruption that quarter is good and other quarter is bad. So people are not coming out of that cycle. Actually, if one realizes actually footfalls have actually increased, it is not just a Durandar effect. So there are many things like that. For example, in FMCG, as I was discussing yesterday, Godrej Consumer in my channel checks would report 8 to 9% volume growth. Tata Consumer will report 10% volume growth with 22% EBITDA growth, in my view. So I feel that many things are changing. Auto is the first one to show traction. It will be followed by many other things in the consumption space. Gradually, we'll see one after the other things picking up in consumption space.
All right. Apart from this, Kush, I want to get Reliance also as well. Last 2 days, the technical setup is showing strength, and if you remove that, now you see Reliance is up also almost 0.4%. Of course, this is the initial setup happening. But Kush, wanted to get your views on Reliance. Strength is now coming in. Now, will this sustain, or is it looking like a very short-term trade for Reliance?
No, in fact, Reliance has been the saving grace for the markets, along with IT, of course, because if you see HDFC Bank's not gone anywhere. In fact, it's seen, consolidation with a slight negative bias. So has ICICI Bank. So if it weren't for the IT names that, did what they did in December, and then Reliance holding ground and then gaining some towards the end, is what's keeping the markets right knocking at the doors at the all-time high levels, right, or close to those. So I think Reliance that way is set up beautifully. It's the 1575 level, the month and a half consolidation knocking at the doors of that resistance mark, now also very close to it. I think that's what's playing up. I think the construct for this remains very positive. Again, mind you, Reliance is not something that you buy for a day or two, but if you have a medium-term perspective, 3 to 6 months or slightly longer, Reliance, if you get any kind of dip, you should go out and buy. And right now on the verge of breakout could well be a momentum play as well. So I remain constructive on Reliance. I think in the coming days, you could very well see 1625, 1675 kind of levels on Reliance. And the support for there comes in at 1540. So even if you want to make a trade, I think this is setting up beautifully. You just need a quick close above the 1575 mark.
Okay, 1575 is the number that you should be watching out for on Reliance Industries. It's 9:05 and time for a big brokerage call for the day. Kotak Securities has initiated a buy on Smartworks co-working. Somit joins us with more details. Somit, why Smartworks co-working?
Quite a positive note that has come in from Kotak Securities side. They have initiated buy rating with a target price of 600 rupees, which suggests an upside of around 22% from the current levels. Now, what the brokerage here is saying that Smartworks is India's largest flexible workspace operator with nearly 10.3 million square feet of leased area. And going forward, they're expecting the company's EBITDA to grow at a CAGR of nearly 38% over the next 3 years. And this will be aided on the back of increase in area operation to 14.5 million square feet from current 10.3 million. And also they're expecting a margin expansion of nearly 380 basis points over the next 3 years. The brokerage also says that the operating cash flows would exceed EBITDA and supported by security deposits on the new leases coming in, and that is also something that will be positive for the company. The brokerage also says that flexible workspace continues to see strong growth within commercial real estate, contributing nearly 1/3 of the incremental leasing that is coming in the industry. And the only risk that Kotak Securities has mentioned in its brokerage is in his report is the fact that they see inability to maintain occupancy or source new real estate would be the only risk that could come in for Smartworks co-working. But overall, the brokerage is quite positive. Target price is around 600 rupees.
Yeah, that's an interesting take coming in. But Parag bhai, I just wanted to get your views, in this entire co-working space theme, the explosion of global capability centers, the startup move which is happening in India all across, and whatever is getting measured is getting valued in the market. Parag, could you just explain us, out of this co-working space theme picks, which is looking good? Sizable ones are, of course, Smartworks and Office.
No, frankly speaking, I have to do a work on this space. So I will not be able, I have not bought any stock in this space up till now, but this space is interesting. It is worth working upon, in my view. Right now, I'm sticking to, as I said yesterday, building material space is one thing which has excited me. So Greenply Industries, Astral Poly, Supreme Industries, this is related to building. That's why I remembered. So I think this is the space which I like. And in all these three companies, promoters have also bought, indicating that it is at the bottom of the cycle. And I would say that plus PVC prices have gone up yesterday by 1 rupee per kg. So I feel that I think Supreme and Astral both can report a double-digit volume growth in this quarter. Inventory losses will be there because PVC prices will down. But in my view, it will now cover up. So I think things are looking good for them.
Okay, interesting. And we'll talk about Astral. By the way, we'll talk about Smartworks with Kush in case he has a view on any of these stocks. But you know, Astral is interesting simply because I remember a conversation with the management and then with Parag Thakkar at the end of the September quarter earnings. The stock was at 1400. They had said that if indeed PVC prices start behaving well because of some duties that were expected to come but didn't come eventually, then the volume growth could perk up. It's happened three months late, but it's starting to happen, and which is why you saw that big uptick in Astral yesterday. So Kush, both the questions to you. One, Astral or Supreme, is there a trade here because of the momentum? And two, any of these co-working spaces, maybe Smartworks or Office or any other?
So let's start with the co-working spaces. Office is starting to give you that uptick, but not enough momentum. So while I have this on my radar, I wouldn't really go out and buy this today. Smartworks, I think we could be a little late in that trade. The reason being that the December volume accumulation on this one, fantastic. You know, the days when it had a green tick, it had a high delivery markup. The negative close were on very thin volumes. And right now with that 4% kind of an uptick, you've already had the stock running more than about 20-25% in the month's time frame. So as I said, it could be a little late in the day, but if you're a positional player, then you could still perhaps consider definitely a hold, if not a fresh buy. I think the buy comes in Supreme and Astral. There too, I prefer Supreme a little more over Astral because the volume action there is much more healthy. There is a falling channel breakout that has come about in Supreme. Mild resistance around the 3600 mark, but that I'll take that in the stride because, you know, in this kind of a momentum with a good volume action, those levels can be taken out. Risk reward ratio, very, very favorable. So yes, I mean, both the trades are fine, Astral and Supreme, but if I were to pick one, it would be Supreme. And for Supreme, I would place a stop loss at the 3300 mark.
Okay, so that's with regards to Supreme Industries. Parag Bhai has been looking at the space also pretty closely. But in terms of pre-open, 26,155 is what you're tracking in terms of Nifty 50 as well. Let's just pull up Bank Nifty on the screens as well and see what that is doing in trade. In terms of individual counters, you know, the pre-open is indicating a strong move when it comes to Devyani International. Hind Copper continues the uptrend as well. We did have a conversation yesterday where the commentary has been very strong when it comes to copper prices and the kind of impact that the management could see on the back of profitability. ITC, yes, is still indicating a mild downtick of around 1% versus that 9.5% that we saw in yesterday's session. TBO Tech is another one. PVR Inox, Realtel, TVS Motors, Vodafone Idea, Ola Electric, a few of the other names which are seeing some bit of moves in the opening trade as we speak. In fact, on the back of the business updates that have come in for Indian Bank, South Indian Bank, SG Finserv, anything that you like on the charts, Kush, basis the momentum that we've been seeing over the last 4 trading sessions as well on the PSU banking space?
Not the PSU banks in particular, but what I like, you know, are 2 banks. One is Karur Vysya and the other one is Federal Bank. Federal Bank's consolidated enough and more, rebounded from the 20-day moving average. It's gradually picking up, but I think once it crosses the 270, 275 zone, I think the momentum could pick up on this one. And Karur Vysya, I mean, what do I say about this? It's been just phenomenal. The run on this one has been phenomenal, and not now, for years. So every time it dips close to that 50-day moving average or the 20-day moving average, you do see some consolidation and then a big spurt. So right now it's in that spurt mode. If you want a momentum trade, you could well consider that for targets of 280, 290 as well. Keep a stop loss at the 250 zone. So within the banking space, Karur Vysya, because of the momentum that it has, and Federal Bank because of the base formation and the momentum that's about to start.
Okay, Parag Bhai, the upcoming results season, what is it that you anticipate could likely be the winners in terms of both reportage and commentary? Because we know that, for example, the auto companies might have a great reportage, But because of the steel price hike, their commentary around margins might be a bit subdued. But what are the pockets where you believe both the reportage and the commentary will be strong?
So I feel that in FMCG, as I said, Godrej Consumer, Tata Consumer, Marico kind of names. In movie exhibition, I think PVR will, I just rock the numbers in my view, and Q4 also, and the further future movie pipeline for next 1 year is also looking very robust, and it is available for 10,000 crores. It is nothing. Just because it is considered as a something which has got disrupted, but I think I am surely against that view. So that is one. Then in IT, of course, Coforge and Persistent should report good numbers, about 3% CC growth. There will be some margin compression because of the wage hikes in Coforge, but I think market knows it, so it's okay. So I think Coforge and Persistent in IT, Godrej Consumer, Tata Consumer, Marico kind of names, or Imami also for that matter. And Dabur also can surprise on the positive side because of low base and very low expectations. Auto, definitely we all know Mahindra, TVS, Tata Motors, CB, all are going to report good numbers based on the volumes which are coming, which everybody knows actually. So we have covered most of the, and cement and steel are the sectors where this quarter will mark the bottom in my view. So this is another interesting space, both cement and steel, where because of the subdued prices in this quarter and also subdued demand to some extent, only in cement we saw a revival of demand in December. But I would say that this is both these stocks you have to buy when the results are out, because I think the Q4 results are much better. The other one is Reliance, of course. I am expecting good results. And Adani Ports. Adani Ports, remember, they have increased their EBITDA guidance from 22,000 crore to 23,500 crore. And it's a cash flow generating machine and annuity cash flow. So I would say that Reliance and Adani Ports also look good from results perspective.
Very fast, cable wire stocks are buzzing. RR Cable, Polycab and KA Industries. If you have to pick, which would be the one?
I think RR Cable itself is fine. 20-day moving average respected, 3 days on the trot, the stock opening higher, the momentum could continue, risk-reward ratio favorable. For targets of about 1525, 1560 and a stop loss around the 1450 mark, you could consider RR Cable itself.
All right, RR Cable as amongst the key picks from that pocket. We'll ask Kush Bura about his top idea, maybe post-market open. Remember, Citi has a positive catalyst watch on this bucket of stocks. This is Polycab and RR Cable and KEI. But here's how the markets are starting off the last day of this first week of calendar year 26. Flat as flat can be. Banks are maybe marginally higher, if you will. I wonder if IT is sulking. Should pull that up. No, not really. But yeah, bobbing with the red in the green. Actually a very flat start. Let's get mid caps and small caps very quickly before we get the heat map up on the screen. Absolutely flat. Let's get the heat map up on the screen and just see what stocks are moving, if at all. ITC another 4% today. Another 4% today. This is staggering, the kind of losses when, now it does seem stretched, but let's wait and watch. For now, the price is saying something completely different. Titan, nearly 1%. Bajaj Auto, the street isn't quite impressed with the numbers, maybe down about 0.75%. Nestle, Tata Consumer. I think ITC is having an impact on some of the other FMCG names as well, but more green than red, which is a good sign. So you're wondering why banks are doing well and the index isn't, because of ITC. What's doing well? Maruti, 34% uptick, the street like those numbers. Tata Motors passenger vehicle, 1%, BEL 1%. There is strength in Mahindra and Mahindra too. So autos quite right up there in addition to metals. So look at the metal index. It has got Hindalco, Hindalco, Coal India, Tata Steel, all three in the green. And oil upstream is doing okay because both ONGC and Reliance are in the green. So that's an interesting bucket as well. But Maruti on the upside, ITC on the downside. That sums up the morning picture from the large moves perspective on the index, Hiral.
Absolutely. I mean, this is very interesting to see ITC because the expectation was that there could be a recovery that would come in. But if we are ending with the ITC from the large caps, let's see what a Godfrey Phillip and VST Industries are doing in trade as well before we get to broader markets, because that will be very interesting. Godfrey Phillips, there you go, 3.5% downtick. VST was the one, which was slightly more resilient as compared to the others yesterday. But today as well, little over 2% is the kind of cuts that you're seeing on this one. Let's look at the broader markets now. If you see in terms of the mid cap and the small cap index, again, it's pretty flat. I would say 0.1% higher in terms of the benchmarks, but similar kind of moves is what you're seeing on the mid cap 150, and if you talk about the small cap 250, pretty much on the borderline right now. Let's look at the sectoral heat map as well. I mean, Neeraj did mention about the auto pack and the metal pack. There you go. That's where they are. The PSU Bank Index, I think this will be a 5th consecutive session of gains coming in for the PSU Bank Index as well. Defense is seeing some bit of buying interest. FMCG has been trading under pressure, so the entire consumption pack and the consumer durables pack taking cues from ITC and the other cigarette makers, and that is having a bearing on your other FMCG names as well. And rural is what is under pressure. But apart from that, everything seems to be trading in the positive. Let's see if that lights up further during the day. In terms of individual names as well, now let's look at counters. On the back of business updates, you have Indian Bank, South Indian Bank, SG Finserv, Bansal Via, Punjab and Sindh. All of these have given up their business updates. So from the financials, all the trading in the positive with gains of 1.5 to 3% coming in there. Bansal Wire and SG Finserv also, as Sharad was pointing out, strong commentary coming in on that one. Sapphire Foods and Dyani on the back of the merger. Let's pull up both these counters and see what they are doing in trade. Sapphire Foods, interestingly, is seeing cuts of 4.5%. Dyani, 7.5%. So I'm sure, what the shareholders of both the companies are looking at now, basis the kind of opposite reaction coming in on both these counters. Cable and wire stocks, as Sharad mentioned. So KEI, Polycab, RR Cable are in focus. You have again Polycab, which is down up around 0.5% up, seeing an up move. RR Cable is seeing a 3% upside in today's day of trade. Moil has seen a price revision, so that's going to be another stock that is in focus in today's session. 0.5% up move coming in terms of oil. Sorry, that was Aurobindo Pharma. 0.5% up move coming in terms of the acquisition. Moil 1.5% on the back of the price revision. And on auto sales, Bajaj Auto, TVS Motors, Hyundai, all of these continue to remain in focus. Bajaj Auto, Hyundai trading under pressure. TVS Motors is seeing a good run in trade today. So interesting names that we're picking up so far. Sharad, anything else that is coming to your radar that probably stands out right now?
Well, currently it seems like it's a deja vu of yesterday's trading session. The same old 3 indices are going up in trade, and ITC and the cigarette related stocks are tanking as well. Let's just like to point out all these 3 stocks in the same frame. Godfrey Phillips, VST Industries and ITC. What's happening there? Kush, I want to get you on this. ITC, of course, there were some calls on the shorts as well. Do you think now the stop losses, they will change? And if that it is, then
Recording
what will
stopped.
it be for ITC?
Yeah, so now if you look at the levels, the stock is close to about 2 years low, in fact 3 years low, and volume still piling on. So like I said, you could look at levels for accumulating ITC, not go the whole hog in one shot. But if you want to start nibbling in, these are good levels, because when do you find cuts of about 10-15% on a stock like ITC? And if you have a 6 to 12 month kind of a horizon, eventually these things sort of smoothen out and the stock sees a revival. Hence, despite the kind of continued fall, I remain constructive that these are the times when you need to buy ITC. But like I said, for long term, 6 to 12 months out at least.
I just want to get in Parag Thakkar in this conversation again, and Parag bhai, reason why this becomes important, because when I read the notes, I haven't heard you, but I would love to know what your EPS cuts might have been if you were tracking ITC, right? But most notes speak about a 7-8% earnings cut, that too for FY27, because that's where this is effective, nothing in FY26 per se. For a 6 to 7% EPS cut, is a 14% correction on the stock warranted? I think that's the sum and substance of the question.
Yeah, so basically that is the answer, that for a fund manager like us, you cannot ignore this kind of a big fall in a quality company. As Kush also rightly said, as the time passes, things will eventually phase out, and I think there will be a lot of representation made by the cigarette industry also, because this is just going to encourage smuggled cigarettes consumption in a big way, where government will also lose revenue. So I would say that for if you ask me, at 19 times ITC, at 19 times FY28 after the EPS cut, and 4.5 to 5% dividend yield, definitely I'll buy some and gradually build up the position.
Okay, buy some and gradually build up the position off the lows of the day, but that doesn't mean anything. It's still down 4%, it's still down 14% from the levels that it was day before yesterday. So keep that in mind for sure. Now, interesting, Hiral pointed out, Dyani and Sapphire are having some interesting moves, Hiral, today.
Yeah, interesting moves because, I mean, exactly what you mentioned at the start of the day as well, that Dyani was the one where you could see some good gains coming in there, and that's the trade. Dyani, which is up in trade, whereas the Sapphire, if you pull up that one on the screens, you'll see that pressure that's building up. I mean, it's recovered slightly, but 2% downtake. I'm sure what the shareholders are looking at.
Yeah, right? So Hiral, one thing, obviously, Sharad and Hiral, this is not the arbitrage at play, right? Because there was no arbitrage. But UBS in its note said that this merger is so constructive or so positive for Dyani. Their target price was 198 on this one. So the street seems to be liking this for a Dyani perspective.
What is in Kush very quickly for a shareholder of Sapphire? Are you seeing any green shoots right now?
No, for me, nothing's changed in the 7-8 minutes that the markets have been open. I still maintain, agar hai, to thoda sa profit book karo ya exit kar jao. There isn't much because you see the entire sector is not doing well. Whatever's happened in this, in this space or in these two stocks in particular is because of the news. Yes, Dyani has a good run, but look at the slide from the high of the day, 159.66. The stock's already starting to see some profit taking. Hence the idea that if you have something, it's a good idea to perhaps offload, get into sectors that are doing well. So my suggestion would still remain a sell on rise for both Dyani and Sapphire.
But actually, while there was no arbitrage based on closing prices yesterday, now this brings about an arbitrage in favor of Sapphire. So either Dyani has to correct a little bit or Sapphire has to gain from where it is right now. So bear that in mind. Do the pricing. I mean, the merger is 9 months away or 12 months away or whatever it is, but there is now technically an arbitrage. Sorry, Kush, you want to make a point?
I think the markets heard you. The markets read your thought even before you mentioned it, because that's exactly what's happened, Neeraj, in Sapphire. Sapphire's bounced back from 247 lows, and Dyani's actually slipped from those 159 highs. So I think markets read your mind.
I mean, yeah, the market is wise for all of these things, but interesting moves out there nevertheless. What else? Actually, we spoke to Parag Thakkar on this. Parag bhai, I know you mentioned that you are constructive the building material space, and I believe you included the wire and cable companies too there. But apparently there is more competition out there. If I'm not wrong, one of the media reports suggests that Torrent Group is investing some 12,000 crores to get into that space as well. We know that the Adani Group is already getting into it. Isn't the competition out there in a low moat industry heating up?
Yeah, so I am not very constructive on wire and cable space. Although this quarter should be good, but I have specifically 3 selected names which are in my portfolio, which is Sectoral, Supreme Industry and Greenply. And incidentally, in all 3 cases, the promoters have bought, so that is giving me even more conviction.
Okay, so Supreme Industries, Greenply, these are few names that you're watching out for. But, Amphi has announced the stock recategorization, I beg your pardon, on a half-yearly basis. What will the potential changes be? Let's head across to Sharad to list them down for us. Sharad, over to you.
Well, this is a semi-annual Amphi categorization of stocks coming in, and this likely announcement will come in the next 3 to 5 odd days. But remember, this is no going to be any kind of inflows or outflows. This is just a parameter for the active fund managers to actually choose the stocks itself, and the potential large cap entrants. Having a look, it includes Muthoot Finance, HDFC AMC, Bosch, Cummins India making it to the list, and also there are new entrants via the IPO. This includes, of course, LG Electronics, Tata Motors CV, which had come in. That's something we'll be watching out for. But there are some stocks which will be shifting from the definition of large cap to mid cap. And as per the note by Nuvama, they've stated that stocks such as InfoEdge, Lupin, Zydus Life might be coming down. And of course, Shree Cements, Mankind Pharma also make it to the list. Now, potential entrants in the mid cap space. Having a look, we see a very lot of new age tech companies have made their way into. So Lenskart, Meesho, Grow, Physicswala, they will be getting added in as well. Apart from this, Endurance Tech, HDB Financial Services, APAR Industries also make it to the list. Now, there are certain stocks which will be, their definition will be coming down from the mid caps to the small caps, and these include the older names such as Gujarat Gas, LIC Housing Finance, Honeywell Automation, Tata Elxsi and Exide Industries, to name a few. And the other stocks from the IT space also include KPIT Tech and Global Health from the hospital space as well. So these are the stocks which you should be focusing on. Their definitions is only changing. There is not going to be any kind of inflows or outflows.
Okay, so no inflows or outflows majorly that we should be watching out for as we speak. Kush, very quickly, with the kind of trade that is emerging right now, if you just pull up Nifty 50 also on the screens, you'll see the kind of levels that you've been tracking. You're 26,194, pretty close to that 26,200 mark now. Do you think there is a potential of a 26,200 closure? Are charts indicating that for today's session?
So, Hiral, is there a trade on the Nifty right now from a very near-term perspective today, tomorrow? I doubt that, because we've not crossed that 26,200 resistance in a convincing way. Also, look at the data. Even after the markets have opened, the 26,200 call option has added significant open interest. But what we spoke in the morning, that also remains, which is the support levels are shifting higher. So now when we had, before the market opened, 26,000 as a convincing put base, the 26,100 put is also adding significant base. So my point is that the market wants to move higher. It's just that it's looking for that breakout. Maybe comes today, maybe comes on Monday or a little after that. But if you take a positional trade, then I still remain constructive. For the day, if we do close above the 26,200 mark for the for 15 to 30 minutes, then there could be a short covering rally that could come in. Otherwise, there's a good possibility that we could remain in this band and perhaps consolidate for a day or two more.
All right. Thanks a lot, Kush, for that and joining us with today as well and at IMO. And Parag Bhai, thank you very much for giving your time as well. But moving on, Bharat Forge has signed its largest small arms contract with the Defence Ministry. The value is roughly 1,662 odd crore rupees. Anushi joins in with more details on this strategic significance and what this execution could be. Hi, Anushi.
Hi, morning Sharad. So it's an important development that we are seeing for Bharat Forge, and it was an order win which was expected in this quarter itself. Now they've signed the largest small arms contract with Ministry of Defence, and this is for supply of indigenously designed and developed CQB carbines. As we talk about that, the order size being about 1,662 crore, and this is for a supply of over 2.5 lakh units that we are looking at. This is a part of the bigger order which was also there, in which even PLR systems was included. But if you talk about the order book positioning as of the first half, they had secured new orders worth about 1,582 crore in the first half. This included defense orders worth 559 crore. So considering the size that we've seen in the first half and just this new order win itself, it is a big development that we are seeing. Do note that defense order book as of the first half stands at 9,467 crore. So the first and the most important thing to ask the management is, where does the defense order book stand now, and what's the kind of pipeline that we should now be seeing? Even if you look at the recent developments in terms of where the defense sector is concerned, the Ministry of Defence had awarded contracts worth about 250 crore, and this was for supply of underwater systems. So do note, Bharat Forge has also expanded its focus towards naval and naval solutions as well. So that is another focal area for the business going forward. Order execution for this particular order is around 1 year. If you just talk about the numbers, if you take the standalone in context, revenue was down about 13%, while on consolidated basis, revenue was up around 9%. So the second half also we'll see that impact come for the business as well, because we did see that North American truck production had impacted the volumes as well. So the focal point for this conversation remains on the defense side, and of course on the macro environment picture also for the business for its overall operations.
Thanks a lot for that, Anushi. And let's welcome in Amit Kalyani, Joint Managing Director of Bharat Forge, into the conversation. Amit, good morning, and at the outset, wishing you and everybody in the Bharat Forge family a very happy 2026.
Thank you, Neeraj. Wish you all also a very happy 2026.
Yeah.
First of all, I'd just like to mention one thing, that we are now in the silent period. So can't talk too much about any of the other businesses.
Completely
I can
agree.
talk about the defense orders and the things that you specifically wanted to focus on. So that's fine.
Sure. But I would want to start off, Amit, by asking Amit Kalyani, one of the captains of India Inc., about what does he feel about 2026, because 2025 was a year of multiple challenges from multiple fronts for an Indian corporate. How does 2026 shape up according to you?
So I think, as a businessman and as a, corporate, a lot of unexpected things happened in 2025. And I think any responsible or any, corporate in India will have found ways to adjust to the current situation and make growth plans for 2026, keeping in mind whatever has transpired in 2025. So I think we are all, cognizant of where we stand globally, geopolitically, and we have chalked out a plan by which we will be able to grow our business substantially going forward.
Okay. Now, Amit, Anushi was obviously talking about the defense piece because it's a recency order win. But as I read some of the notes that have come in the last 1 month on Bharat Forge, they talk about how defense, aerospace, restructured overseas operations would be the focal points for Bharat Forge, because North America Class 8 truck sales don't quite appear to be on a strong footing. Would that be a fair assessment of the larger part of your business?
Those three factors will definitely be a large part of our business, but two additional factors. One is doubling down and focusing on strengthening our automotive business in India, which is both across passenger car and commercial vehicles, and increasing our play in the industrial sector in India. These are our focus areas.
Okay. Okay. Let's try and nibble on them one by one. Maybe we'll come to defense in just a moment, but I'm inclined to ask you, Amit, one more question. There is a lot of industry chatter about how the Indian CV cycle is coming back after a very long hiatus, and we might be at the start of a cycle which might last the next couple of years. You are a veteran in this bucket as well. Do you reckon that to be the case? And therefore, could that be net constructive for your business?
Yes. So first of all, I'd just like to, deflate this bogey of the US truck market. It is approximately, just about double-digit percentage of our total revenue. And that is our consolidated revenue, because we also have truck revenue in Europe. So it's not a very large part of our revenue. It's just 11, 12, 13% in that ballpark. Coming to the Indian CV and, let's say core industrials market, as India's GDP growth rate, you're seeing ticking upwards. And I think now you're starting to see a whole new phase of infrastructure development across India, whether it's in the cities and rebuilding city infrastructure, to expanding our highways and other kinds of key public infrastructure, whether it's building new airports, ports, railway lines, railway terminals, cargo centers, etc. I believe that the build-up of India and Bharat will now propel India's economic growth. And this is something that we saw happen in China in the in the 90s, moving into the 2000s. And I think this is the same kind of period that we will see in India now for the next 15 to 20 years.
Okay, Amit, that's an interesting point that you make. But now let's move and shift focus to the defense pack as a whole. I mean, we've seen recent order wins that have come in. With the defense order book reaching approximately, a little over 10,000 crores by now, if I would say, what are the specific milestones that you've set when it comes to 2026 to accelerate the execution pace after the slower pace that was seen in some of the previous quarters?
Yeah, so absolutely correct point. So basically, the defense business, as you know, is a B2G business. And it has certain, ebbs and flows, because it depends on when orders are placed, when the product acceptance is done, the testing is finished, and then the induction starts. So the two big orders that we signed in this year are both IDTM products, the ATAGS gun and the CQB carbine. were both products which were jointly developed by us along with ARD and DRDO, the CQP with ARD and the ATAGs with DRDO. So these are deeply and fundamentally Indian products, Indian designed, developed and manufactured with complete Indian IP. And I think this is a factor that should give a lot of confidence to the forces, to the overall system that no matter what, this can be executed. And that we can supply these and maintain these for a long time going forward. Also, we can further develop these products into more advanced versions as we go along. Our total order book is roughly around 11,000 crores now in defense. Basically, if you look at our defense journey, it started with focusing on artillery. Then it moved to protected vehicles. So we added more products on land systems. Then we got into the naval side with unmanned systems. We're also working on several new naval platforms, as we've talked about in the past. We also have a joint venture where we assemble the spice product along assemble and integrate, and that's something also that now for that recently. Plus, we have got orders in the past also for that. So if you look at the sum of all this, we are in all three domains, that is land, sea, and air. Across all platforms, and we have products that are connecting platforms for integral to every platform that is used.
Amit, I'll have to just come in a bit because I think we are losing your audio a bit. So I think our team will try and correct this. But 2 or 3 important points as we just wait for Amit Kalyani's audio to get all right. It'll stand out. One, that North American classic truck sales, every point of time some of these stocks react, it's 10 or 11% of their overall business. So that was one. In response to your question, he mentioned that the order book currently defense is at 11,000 crores strong. I think it was 10,000 crores about a month ago.
And you added another 1,100 crores. So a little above 10,000 crores that's what we're talking about.
Yeah, so 11,000 crores currently, explained by him.
And execution, which was very slow in the previous quarters, probably will see a pickup right now as well. So the key from here on, to take to the next question will be, will they be able to achieve that 2,000 crore revenue mark as well when it comes to defense, right? Because the overall contribution is going to be important from here on. In fact, we have Amit Kalyani back as well. Amit, we were talking about the execution, the slower pace, the orders that are coming in, 11,000 crores. Now, key is, will you be able to achieve that 2,000 crore revenue mark when it comes to defense as a segment?
Look, I think 2,000 crores is
I think we're still
journey. It's only one stop along the journey. It's not going to be.
Amit, we're still losing you. Amit, we're still losing you. So I think we'll have to reconnect Amit Kalyani when it comes to the conversation. So again, 2,000 crore is just one stop on the journey. That's the only point that I picked up. Lots more to achieve on that front. But this is going to be interesting because with this, they've also looked at transferring the defense business to the subsidiary, right? So Kalyani Strategic Systems, they've completed what, 450, 500 odd crores. So that operational agility, that capital raising that will help them in 2026 on transferring the defense business to the subsidiary is going to be one aspect that we should consider as well, because we know defense is a capex heavy business.
Yeah, most certainly. The point is aerospace and defense likely to be one pillar for the Indian growth side. The question only is what happens with some of the others. We'll try one last time with Amit Kalyani if we can indeed get that audio going well. Remember, while suffering a little midway through 2025 and when the stock hit levels of about 1,000 odd rupees, I think it has recovered some of those mojo as well. Amit, maybe we'll try one more time. I don't know, something wrong with tech. But yeah, you were talking about the importance of not just looking at 2,000 crores, even if you do achieve 2,000 crores in the current calendar for defense. Or the current
2,000 crores is a milestone on the journey that we want to take. We want to build this defense business into a large, platform business where we'll have multiple domains, significant platforms, and multiple technologies in this business, which will play across various platforms. So I'm confident that 2,000 crores is something we will achieve on a 4-quarter basis for sure. It just depends on which quarter what happens, and therefore which 4 quarters you can count. But going forward, this will all stabilize as the orders go from the trial phase to the steady phase. Because if you look at ATAGS itself, it's a large order. So those are all going to start playing out. And what I was saying is that besides just what we've already shown, we have a lot of new things that we're doing, which will be products which we will support or offer to both India and the global markets.
So Amit, to add to this, if you have to talk about FY26, you have the DSE, which has approved proposals worth 3.3 lakh crores so far. So where is Bharat Forge going to actually play an important role, and what is that order pipeline going to look like in terms of opportunity between the domestic as well as the export markets?
So let me, give you a broader answer. I think one of the areas where we will have a large play is on the naval systems, because India is dramatically increasing its shipbuilding capacity and its number of ships that they will have in the naval fleet. So that's an area where we have a significant opportunity, and we're developing a lot of products that go into that. We already have a bunch of products. We're developing a lot more as well in fully value-added condition. So that's one area. On the land systems, we have multiple new platforms and products that will be bidded out in the next, let's say 1 to 3 years. That's another area where we see a tremendous opportunity. And then, there are opportunities in unmanned systems, which I think are one of the largest opportunities, because I think unmanned systems are going to play roles in every domain. Plus, unmanned systems will go from, simple FPV kind of products to mail and hail, which are, real significant large platforms. And there have to be players in India that can, again, IDDM these products. And I think that's the kind of focus that we are putting behind it. It's not going to happen overnight, but I think this is a journey that we are focusing on.
Okay. And my last question from my side, Amit, coming to you is, when you talk about the KSSL spin-off, how will the transfer of the defense business to the subsidiary, which has been completed, enhance operational agility or probably the capital raising when it comes to 2026 projects as well? Because, again, a lot of opportunities that you have been eyeing in India as well. There could be acquisitions that could be on the anvil. So what's the update on that front?
So we're not spinning it off today because we need funds, but we're spinning it off because I think it's a very different business. And at some point in time, it will have an opportunity to create value independently. But this business has a different cadence. It has different DNA. It has a different kind of organizational rhythm. And I think we need to give it that kind of scaffolding and support. And that is why we have spun it off into a 100% owned subsidiary, and to create the identity and the culture and the whole organization that is required for building this business into a large standalone business.
Amit, as we wrap up, and we'll of course talk to you post your quarterly numbers as well, but I suspect you believe that 2026 is a year for business for Bharat Forge. It will be better than what 2025 was. Not that 2025 was bad, I'm just saying 2026 will be better.
Yeah, I think it's going to be qualitatively better, because I think we're going to see a lot of opportunity translating into at least new orders and initial orders in many new areas.
Well, that's a statement, and of course we'll probe this a bit more when Amit Kalyani talks to us on the numbers. But Amit, take a moment to thank you for joining in today, and once again to you and yours, a very happy 2026.
Thank you, Neeraj, to you and your team as well, and to your families. Bye-bye.
Thank you so much. Okay, that's Amit Kalyani of Bharat Forge, the big corporate voice for the day. And another very important voice joining in is Electra Green Tech. It's a stock that's not ceased to be in news, but it is in focus as the company started commercial operations at its new greenfield EV manufacturing facility in Hyderabad. Before we get the management Puneet Johnson with more details on this. Puneet.
Well, thank you for that. There are three key things that we need to know out from this conversation. One is, of course, what you rightly highlighted. 2,500 will now be the annual capacity for the company in Hyderabad. This is very key because last year the company sold about 972 buses, and the capacity constraint could be highlighted. And as we highlighted with Mr. Mahesh Babu Subramaniam as well earlier, this was one of the key contentious points. He had highlighted in September they are looking to increase it by the year end, and now that has happened. Was also interesting, this is only phase 1. Phase 2, the company will go to 5,000. So that'll be the first question of what is the timeline of going to 5,000 buses in terms of additional shifts in this manufacturing facility. The other key very important update, and this has been one of the key ones, of 10,900 e-bus order. Now, what's interesting is that media reports speculate that the legacy players of Tata Motors and Ashok Leyland haven't gotten any orders from this 10,900 buses. There are two key startups, PMI Electro Mobility as well as Eka Mobility, but also Electra Green Tech has gotten 1,700 orders, 1,700 bus orders as well. So confirmation of that aspect will be the second key update. And finally, in terms of targets for FY26, as I highlighted, 972 buses were sold in the last year, but the company appointment of a new managing director has missed targets consistently on their order books in the last year. So that will be the other key aspect to watch of what will be the FY26 number for the buses sold. It was 972 in FY25. What could it be in FY26 will be the three key things I'll be watching out from this conversation.
Thank you so much, Puneet, for setting this up for us. And Electra Green, let's pull up the counter on the screens and see what the stock is doing in trade. Commercial production when it comes to phase 1 of the Greenfield EV manufacturing facility in Hyderabad, that is what has kick-started. The stock is up nearly 5% in trade as we speak. Speaking exclusively to NDTV Profit, we have Mahesh Babu, MD at Electra Green Tech. Mahesh, welcome to the show and wishing you a happy new year as well. And always a pleasure to speak to you. My question coming to you is, this is an added advantage because capacity has always been a constraint when you talk about EV as a segment across the industry. With the commercial operations that have started, what are the kind of utilizations you're planning to achieve in the first leg?
Firstly, wish you and the viewers a very happy new year. I think we are very happy to announce that we have fully commenced the operation of phase 1 of our manufacturing facility. We can make about 2,500 buses per shift, and we can always double the shift and increase the capacity as we want. So the primary focus is to stabilize and consistently make products. So if you look at the registration numbers till now, as we are number 1 in last year with a registration of close to 900 plus vehicles. This year in the 3 quarters, we have already achieved a registration of 950 plus vehicles. So we are looking at a very significant growth with the quarter looking at deliver more vehicles in the coming quarter. So consistently we want to improve and we want to deliver as we progress.
So then 100% capacity is going to be around 5,000 units is what I understand. What is the timeline that you will go to 5,000 units, at full capacity?
See, first we want to get into second shift with the existing expansion, phase 1. And once the market can absorb more than 5,000 vehicles in 2 shifts, then we will expand very quickly. Because if you look at the plant has a much higher capacity, and we have already done the construction to cater to the full capacity of the product. It's a question of increasing the equipments and manpower and setting up the facilities to expand as we want. So we are pretty much on the pipeline. We are looking at the market. As long as the market can absorb 10,000 plus vehicle, we can as well do it in the coming financial year.
Yes, Mahesh Babu, good morning. This is Neeraj Shah here, and at the outset wishing you a very happy 2026.
Yes.
But my guess is that this is not the only expansion, because from what I remember, Electra is in a series of capacity expansion plans, some small, some large, some greenfield, some brownfield. What's happening there?
See, right now we are into a product expansion portfolio. So if you look at right now, we are in buses and we have done about 100 electric truck pilots so far. And we are planning to, the truck industry is also going to come in electric in a big way in the coming years. So we are looking at expanding into different segments. So while the bus capacity has been expanded to 2,500 into two, let's say, in two shifts we can do 5,000. We are also parallelly setting up capacity to build electric trucks. So this capacity will be ready in the coming financial year. And we are looking at expanding in truck segment in the next financial year while we are expanding in the bus as well. We are also looking at multiple portfolio, looking at where we want to play in the electric and commercial vehicle field, and that strategy is being worked out. We are investing on technologies, we are investing on products, and we are looking at, already we have invested on the capacity. So I would say that we are fully ready for taking up the EV expansion in the future.
Tippers, trucks, battery energy storage systems, there's a lot, there's a lot happening out there. But there are capacity constraints as well, right, Mahesh Babu? I mean, I think the depot infrastructure delays, as per a lot of notes, have impacted the large STU orders. What are you doing out there, if something can be done in an immediacy, to kind of offset the impact of those challenges?
So, Neeraj, as you said, the manufacturing capacity alone doesn't play an important role in EV adoption, particularly in buses. I think the infrastructure, power requirement in depots, STU's readiness to deploy them in their respective routes which they have identified, all of them play an important role. So, as you know, the electric bus is close to a growth, and we need to be very, very prudent in terms of manufacturing and deploying them as quickly as possible. And we can't keep this supply chain choked with only just manufacturing the vehicles and not able to be deployed. So we are very, very prudently looking at the expansion of manufacturing, suiting to the requirement of depots, deployments with various projects. If you look at it, if you look at Vahan and Telangana registration as of today, we are number one in e-bus registration. So we are continuing to commit our deliveries as the market leader in electric bus segment, and we will continue to do that and also work with STUs and other state transport undertaking to ensure that the infrastructure is also working well, and we'll be able to deploy as soon as possible the buses which we manufacture.
Okay. Mahesh, my question then coming to you is, currently, what is the kind of order book that you're sitting on? And the reason I ask you is because media reports were suggesting that you had bagged a 1,780 crore e-bus order. So is there any confirmation on that? And secondly, have you applied for that 10,900 crore bus order as well? Where does that stand? So with all of this, where are you as on date in terms of your order book? And in terms of execution, how much are you planning to deliver in 2026 as calendar year? And with capacities coming in, are you seeing a fast track happening on that side?
Yeah, I think so. The 10,900 PM e-drive tender, which has been released by central government and CESL, is a welcome move. I think it really gives the boost to electric bus manufacturers and EV adoption in the country. And out of which we have become, we are eligible to win about 1,785 vehicles. So the LCOA have been already given to respective STUs. It's in the process of issuing the letter of award as well as the agreement in the coming weeks. And we will announce once we sign the agreement after this in the new capacity of 1,785 in the market. So we have 8,000 plus orders already in place, and we are expecting in the FY26, if the depots are getting ready quickly, we will be happy to deliver 5,000 plus vehicles. But my judgment would be somewhere around 3,000 vehicles are expected to be delivered by us alone during the calendar year FY26.
Okay, so that's with regards to where your overall deliveries go as well in terms of the order book that you're sitting on. Now, moving from here on, 2026, what is your capex going to look like in terms of the remainder of financial year 2026 and addition that you're planning in FY27?
See, our capex is mainly going to be in product development now. I think what is we are focusing now is on getting multiple products as we spoke. And most of our manufacturing capex investments have already been done. And there will be a very minor addition to the capex in terms of manufacturing capacity expansion. The primary focus would be on product development, creating products, and bringing the products to the market as the market needs. We are seeing a likely potential of buses and trucks to go to a very high number by FY30. So we are getting ourselves prepared both on products, manufacturing capacity, and technology for being a number one player in FY30.
Okay. Mahesh, so basically FY26, 2,000 to 2,500 buses is what you were planning to deliver. Would you be able to meet that guidance, taking into consideration the deliveries that have happened so far? Because FY26 YTD is what, around 500 buses?
FY26 YTD is close to 1,000 buses. Quarter 3 is not yet done. It's Q1 and Q2 numbers you're talking about. So we are looking at very closer to that number, but looking at the present scenario, at least my view would be we will be able to be still number one in the market, and the numbers on the Q4 will decide.
Mahesh, I'm sure you will be number one, but will you meet that 2,000, 2,500 guidance, or you will see a shortfall is the question here?
As far as now where we are standing today, we are looking at between 1,500 to 2,000 buses.
Okay. Okay, so 1,500 to 2,000 buses is what we should be looking at in terms of FY26 as well. Thank you so much for joining us on the show. Always a pleasure to speak to you. So that was Mahesh Babu from Electra Green Tech. With the greenfield expansion that has come in, 2,500 is what they've started off with in terms of utilization. Second shift, they will look at the stock trading at the day's highest levels as we speak to the management. And the key, they have revised their delivery guidance. 1,500 to 2,000 units is what they will do in FY26 versus a target of 2,000 to 2,500 deliveries that they had planned earlier basis where they stand currently. That's the key takeaway from the management. But let's quickly slip into a short break. On the other side, we'll bring in Ashwin Patel, Head of Fundamental Research at LKP Securities, to talk to us about the December auto sales. Please stay tuned.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
It's fresh, bro. Straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
Nice, yeah.
Hey Mahi, suggest a cool bank जो environmentally conscious हो.
SBI coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, ईवी लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
Wow, that's cool.
SBI, the banker to every Indian. Truly.
Back with India Market Open right here on NDTV Profit. If we can pull up the markets for you briefly and just tell you what the index is doing. In fact, the next 50 is doing very well. The Nifty is doing very, very well. We are nearly at the high point of the day, and this is despite ITC being low. I mean, it's not as heavy a weightage as it used to be, but still a heavy weight in its own right. And this is despite ITC being down. Otherwise, we might be nudging new highs. Almost certainly.
85 points away from record high levels?
Yeah, so very close to the new highs, almost nudging them would have been a great thing. Let's wait and watch though how it shapes up. But autos have a part to play here, right? The numbers are in focus because of strong YOY growth across two-wheelers and PV, passenger vehicles. The two-wheeler volumes lead the December sales numbers, I believe. Now, before we get in Ashwin Patil on this conversation, let's get in our expert, Puneet, with the details to set up the conversation. Puneet.
Well, thank you for that. It's definitely been a very spectacular month in terms of December sales, and this is largely because December is a sleepy time for the auto sector. A lot of retail sales and limited wholesale, but that's been a complete change in this time because of the GST rate cut and then momentum flowing into December as well, with automakers also maintaining reduced prices. But when you look at the numbers that came yesterday, Eicher at 1 lakh was a very strong number, up 26%, beating estimates. In the four-wheeler space also, Mahindra and Mahindra Maruti reported very strong numbers, with Tata Motors also showing a 14% growth. The Sierra numbers are yet to come into these numbers, so that will be a key one that we monitor in the next couple of months. On the CV side though, it has been a spectacular story to say the least. Almost a mid 20% growth at a time where the CV cycle hasn't yet started from the government, shows you the strength of light commercial vehicles and the e-buses that all three players have ventured into. For the tractor makers as well, has been a very strong month again. That momentum has been very strong, and before December itself did cross the 10 lakh mark in 2025. These numbers add impetus as well, and you can see the stark difference on YOY growth as well as with estimates as well. So they've beaten estimates also very handsomely. A couple of key numbers, TVS amongst others, is something that I want to focus on very quickly as well, because they came post market hours yesterday. So TVS reported a 50% jump versus estimates of almost 26 to 28%, and this was led by the company's export growth of over 40%, as well as motorcycles and scooters now contributing very heavily as well. So you did see that, and you can see on the stock the reaction coming in as well. Hero MotoCorp is the other one I want to quickly highlight, because expectations were of almost 4 lakh units. They reported 4.5 lakh units in this particular month, another 40% growth. We've not seen these numbers from Hero MotoCorp, and signifies the strength in the lower CC as well as the small car space, which Maruti highlighted yesterday as well. And finally, the last company I want to quickly highlight as well before we go across to Ashwin to get his views, because we have seen the growth of all these players, it's important to put in perspective as well of what the growth has been. So the export growth shows you that for Hyundai as well, while overall sales were just about 6%, the export picture was quite strong. So we'll get to more perspective on what happens with domestic, but that's largely a very strong picture. 9 out of 10 companies beating estimates handsomely in the month of December.
I mean, this is absolutely strong. Thank you, Puneet, for that setup. In fact, let's get in Ashwin Patil, Head of Fundamental Research at LKP. Ashwin, welcome to the show and wishing you a happy New Year as well. My question coming to you is, I mean, across categories, we've seen a strong number. We'll break it down later. But at the face of it, with the retail sales really being reportedly crossing 2 lakh unit milestones for some of the OEMs in the third quarter, the double-digit growth in wholesale is leading to inventory pile-up at dealerships, or is it retail absorption keeping pace? That's the key over here now.
Well, when we had our channel checks and all, we got to know that, the retail is moving in tandem with the wholesale sales. So, it's not exactly the inventory pileup that is happening at the retail end, but, the demand itself, the intrinsic demand, which is very, very strong at this point in time, and it's getting reflected in the month of December as well, which is generally a, weaker month, and some companies take their maintenance shutdown, etc. But despite all that, and also the consumers, they want to have a new registration date, year date on their vehicles, and that's why they shift their, buying to January. But that's not the case this time. Maybe it is like, even if it is November or December, it doesn't matter. The momentum is very, very strong and it's going on. So that's why I think the auto sales have they are absolutely rocking this time with each and every company except for Hyundai and maybe like Bajaj Auto. Bajaj Auto also, I would say that the exports have been very good, but in the domestic markets they have they have actually underperformed their peers. So apart from Bajaj Auto and Hyundai, almost all the players have performed fantastically well, and I think this momentum is expected to continue going forward with the GST 2.0 reforms coming into action. So an interesting play is happening within the overall auto sector at this point in time.
Ashwin, based on the numbers that have come out post September 22nd and your assessment of what will happen in calendar year 26, which vertical or which segment looks poised for the best performance, both from a sales perspective as well as stock price perspective? Is it CVs, is it passenger vehicles, two-wheelers, tractors, what?
Last time also when we had met Neeraj, I had stressed upon that the tractor segment is doing fantastically well with the super monsoons. The reservoir levels are quite high at this point in time. The kharif output has been good. The rabi sowing has been quite good. So I think the tractors is going to play the best within the overall auto segment. Followed by, I guess now it's time for passenger vehicles as well as two wheelers. I mean, it's very difficult to pick which sector is going to do well, but even the commercial vehicles have started doing well before the overall capex outlay or the government spending has come into play. So I think each and every segment is doing fantastically well. The tractors, commercial vehicles, I think these two segments will be to be washed out in calendar year 2026.
Okay. Ashwin, let's break this up. Tata Motors, Ashok Leyland, PV, I'm talking about the CV, good revival coming in there, massive gains. Is the rebound with regards to construction and mining that is happening enough to sustain the momentum now throughout 2026?
That's what I said, Hiral. The numbers at this point in time are itself reflecting, ahead of what is going to happen in 2026. The capex outlay is yet to play out. The construction, mining have started showing some sort of green shoots, but these shoots are going to grow well in CY26. So I think a lot of impetus is going to come on these CV players like Tata Motors, Ashok Leyland, Eicher, etc. And also, the electric vehicle buses, that part also should not be ignored. That is also one important part. Through Switch Mobility, Ashok Leyland is doing great. Even Tata Motors is, coming up with their EVs and all. I mean, that segment is also flourishing really very well. So I think, both on the passenger vehicle side as well as the commercial part of the CV side with the trucks, etc., we are getting a very good response. And also, if I can talk about, the e-commerce and the quick commerce segment is flourishing. With that, the demand for the LCV is also growing. So I think, overall that pack is growing at a very good pace, and momentum should continue in the CY26 for the commercial vehicle on an overall basis.
Okay. Ashwin, one last question. What is the potential risk to this largely constructive thesis that most people, including you, have? What could be the risk?
Risk in the sense, maybe like, if the government doesn't bring, the expected kind of capex and, the spending that is expected, maybe like in the coming budget, if the stress is not very much on the capex from the government side, that spending that outlook from the government can hamper the CV, growth that is expected going forward. And the GST reforms, if they get fizzled out too earlier than expected, then we can see some sort of risk for the passenger vehicles and the two wheelers, on an overall basis.
Quickly, Ashwin, your top picks in terms of individual stocks. I know you're very positive on tractors, but any stock recommendations at this hour?
Yeah, we like Hero MotoCorp, TVS Motors on the two-wheeler side. We like M&M on the tractor side, and on commercial vehicles, we like Ashok Leyland, and we have a sell on Hyundai Motors.
Okay, so those are the top picks coming in. from Ashwin as well. But thank you so much, Ashwin, for joining us on the show and sharing your views.
Thank you so much.
This is going to be interesting. I mean, strength to continue in 2026. And, two-wheelers, Neeraj, had seen some bit of stagnation as well. Except a Bajaj Auto, all the others have fired. And if that momentum continues, it will be a comeback of the two-wheeler industry.
Yeah, let's wait and watch. But that is on autos. But markets-wide, you've had a very good conversation, Hiral.
Markets conversation, and who better than speaking to Anand Shah of ICICI Pru. The conversation has been very interesting in terms of what's in store when you talk about Indian equities in 2026, sectors and themes to bet on, and the key highlight over here is how should you be playing the bottoms-up approach from here on. Let's quickly listen in to that conversation that I had with Anand Shah.
Happy New Year to you, entire crew at NDTV Profit and all the viewers. Wishing them a very happy and prosperous and obviously the healthy 2026 to all of them.
Yeah, healthy and wealthy, I think. Wealth is what they're looking for from you, Anand.
Sure.
So, Anand, my question coming to you is over here, the way we've seen 2025 pan out, right? It's been a roller coaster ride across policy, across markets. There has been no particular direction, I mean, a lot of global events that we've actually put our backs to. The question from here on is, what is your key expectation from markets in 2026?
No, so I think 2025 has been a forgettable year, but if you see in the context of the global emerging markets, it was a disaster. So India would have done in dollar terms approximately a flattish to 0.5% positive. But the global emerging markets are up 29.5% so far. So we have a massive underperformance of almost 29% plus. And this in last 2 decades has been one of the highest underperformance for the Indian equity markets versus global markets. And to be very honest, that also takes away one of the issue, which was the premium at which Indian equity markets used to trade relative to the other emerging markets. So I think that to that extent, the valuations is not so much of an issue. Couple of things. We started the year saying, we had a fabulous 4 years on the markets and there needs to be a reset in terms of expectations. I think that stays. The returns in the markets over the next couple of years would be far more subdued than what you have seen. Couple of things that have happened positive is obviously monetary stimulus or basically the monetary stance remains fairly growth oriented. So not only interest rate cuts, but ample liquidity has been provided. On the fiscal front also, government has done certain initiatives to kickstart the consumption, be it in terms of tax incentives or GST cuts, or even we would see some bit of money in the form of pay commission. So I think those are the positives that are there for the economy and to that extent to the markets in the coming year.
Okay, that's interesting. Let's break it down. If you're talking, Anand, about earnings growth and multiples, the expectation is that probably corporate earnings growth will accelerate in FY27. Will this be a primary driver for the market performance from here on? Or is there, room for a valuation re-rating from current levels according to you?
No, I think the market expectations have to be in line with the earnings growth rate, which in turn would be in line with the nominal GDP growth rate. I think we have seen a massive earnings pickup for India Inc. between 2020 and 2024. The profit to GDP from the lows of 2% that was there in the March 2020 has now reached again above 4.5%. So I think to expect the profit to accelerate faster than nominal GDP growth rate from here on would be a little far-fetched. It can happen for a year or two, but it cannot be a structural. So that's one part. Similarly, on the price to earnings multiple also, I think we had a lot of segments of the market, especially in manufacturing allied, corporate banks, PSU banks, which are extremely cheap starting 2020, 2021. They have also got re-rated. To that extent, I don't see too many pockets where the valuations are cheap, that there can be a PE or a price to book re-rating. So I think the expectations needs to be muted more or less in line with the nominal GDP.
Okay, so muted expectation in line with the nominal GDP is what you should be looking at. If you have to talk about the global, markets, especially from the US Fed perspective, the interest rate cuts, along with that, you're talking about a potential weaker dollar influence. Will that really impact or influence your projections when it comes to reversal of FII outflows, back into Indian equities?
Indeed, as I said, India has underperformed the emerging markets by almost 29% and similar numbers compared to the world equity markets. So I think the valuations is no more relative to the world. Absolutely, it might be still expensive, but relative to the world is not that much of an issue. Coming to the flows, I think given that AI was the theme last year, India was also at the receiving end in that sense that we saw one of the highest outflows from FIIs from September peak of the market, from September 24 till date. It would be approximately $26 to $27 billion of outflows from FIIs that we have seen. So things can change given that we also believe that the valuations in the US equity markets and generally in the AI related companies and value chain remains fairly premium. A slight change in the sentiments away from AI into other markets would definitely lead to some possibility of some flows coming back to India, given the valuations are attractive and the growth would be far better this year than the last year.
So Anand, I'll pick it up from where you left in terms of the AI sector, right? I mean, it's high-flying US AI sector is what we're talking about. Anticipation is that probably it could be a bubble, there could be a correction coming in there. We're talking about India probably who's late in terms of joining the bandwagon, but the kind of investments your Indian IT companies are making when it comes to AI, in terms of data centers et al., is something that everyone is watching out for. How strong do you think is then the domestic economy as compared to being insulated from any of these global market, reactions?
No, so the way I see AI is very similar to what the telecom was in 2000. The issue was not that whether people will use data, people will transport data from one continent to other continent, and whether they will use telecom into the next decade. I think that happened and people did consume. But even then, a lot of telecom companies went bust, which was an issue of cash flow rather than the viability. Similarly, we believe AI is here to stay. AI will remain an industry which will be extremely useful for corporates and individuals at large. And eventually there will be a couple of companies which will survive. But today, the extent of overinvestment and the premium valuations at which the AI stocks are trading both makes me believe that there are extreme risks to AI stocks at this point of time. Coming back to Indian scenario, I think the Indian IT companies are more of enablers rather than creators, and to that extent, through the various transitions of technology in last 2.5 decades that has happened, be it Y2K and be it subsequently internet and SAP and everything, I think they have transitioned and they have remained useful for the global corporates through every technology transition, and they will remain relevant even for the AI.
Okay, so with all of this said and done, Anand, which are the sectors that you would have your eyes on in 2026? Because the moment FIs make a comeback, you always see a comeback of the BFSI and the IT space. BFSI as a sector has been really strong in 2026 as well. IT, I mean, it's pretty dilly-dally. So your sectors that you would be wanting to look at?
So our topic remains BFSI. I think we have a combination of both private sector, public sector banks, which are in a pink of its very healthy balance sheets. Their approach to the market remains conservative. And to that extent, that remains a compounder for us. We have a fairly good exposure to the banks, life insurance, asset management, wealth management, in that sense that the financialization of savings, which has started with RBI making real rate of interest positive. It started actually through demon and so on and so forth, has benefited all these sectors which participate in the financial savings. So that's one piece. Separately, on the consumption side, we remain more optimistic on the services side of the economy than the products. We believe the penetration story in consumption in products, depending on various categories, is fairly good, and to that extent, the growth will be at best subdued. Whereas services is the new segment of the consumption which will be sort of get penetrated in the Indian middle class, and that's where we believe the growth will be a little bit faster. And within the consumption space, we prefer services over products. And lastly, our favorite had been for last few years have been manufacturing and allied sector. There we have reduced our exposure given the stocks have done extremely well and the valuations are not cheap anymore, but we still remain overweight on manufacturing allied, but it's more bottom up than top down. So when you're asking me sectors, we believe a lot of these sectors already been explored and the valuations are not cheap anymore. From here on, it will be more bottom up. We might like a sector, we might not like a company, and we might not like a sector, but we still might like a company in that sector. So it's very bottom up from here. The theme for 2026 is narrative to execution and from macro to micro. I think a lot of these companies have shown a lot of promise, but they need to execute this year. And similarly for portfolio managers like us, we'll have to go more bottom up, identify businesses which will win, notwithstanding that the nominal GDP growth rate will be in the range of 10 to 11%.
Yeah.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है।
Very good.
SBI, the banker to every Indian. Truly.
70-75 वर्ष तक ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
खुशियों का है मौसम, जश्न मनाओ। नए साल को दिल से गले लगाओ। सपनों से भारी है दुनिया हमारी।
SIP के साथ लिखी अपनी कहानी।
नए साल के साथ नई खुशियाँ आई है। नया साल संग अपने नए सपने लाई है, नए साल के साथ खुशियाँ आई है।
कामत जी की तरह आप भी नए सपनों के लिए एक सोचा समझा निवेश कीजिए। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
From the heart of Punjab, a new era of education is unfolding. The Schools of Eminence scheme is transforming government senior secondary schools into vibrant centers of excellence that foster innovation and top quality learning. This visionary initiative is transforming education by introducing new ways of learning that children truly enjoy. It is turning classrooms into vibrant technology-rich spaces equipped with state-of-the-art furniture, equipment and interactive panels, creating dynamic environments where young minds can thrive. But the change extends far beyond infrastructure. Punjab's Department of School Education is empowering educators like never before. Principals and teachers are receiving world-class leadership training in places like Singapore, IIM Ahmedabad and Finland, while headmasters hone their skills domestically at IIM Ahmedabad. Adding to this momentum, Chief Minister Bhagwant Singh Mann has inaugurated multiple new libraries, enriching schools with inspiring spaces that spark curiosity and open the doors to knowledge.
ਜਦੋਂ ਸਾਡਾ ਬੱਚਾ ਸ਼ਿਕਾਗੋ ਜਾਵੇ मैकेनिकल इंजीनियरिंग करके जावे लीडर है तो जो उन्होंने पूछा जावे डिग्री कितनी की है तो मान ना करे मैं 50 की डिग्री है फिर अग्यों भी उन्होंने यही कहा कि अच्छा 50 की फिर तो बात है फिर काम ठीक ही होगा सारा इस तरह का ਅਸੀਂ विश्वास बनाना चाहते हैं।
This visionary program is bridging gaps, motivating young learners and building a brighter future for Punjab's youth.
Three, two, one, and lift off.
It's a dream that everyone has harbored at some point in their lives. The second Indian to travel to space. Group Captain Shubhanshu Shukla joins us today on NDTV.
So I like to say, when you launch one person into space, you actually lift 1 million here on Earth. Bharat आज भी सारे जहां से अच्छा दिखाई देता है. It is really beautiful sight.
Presented by RP Sanjeev Goenka Group. Powered by Raymond, a legacy of craftsmanship and credibility. State partner, Government of Uttar Pradesh. Stationery partner, Natraj. Sustainability partner, ProStar. Social impact partner, M3M Foundation. Industry partner, Darwin Platform Group of Companies. Powered by Government of Andhra Pradesh and EDB.
Hello and welcome. You're watching NDTV Profit. This is Ask Profit. I'm Mahima Vachajani and with me is Puneet Jhaveri. I think Puneet, today at least the markets are celebrating New Year in some or the other way. We are well above the 26,200 levels.
Better late than never.
Yes, better late than never. Comfortably above the 26,200 levels is what I can say. With regards to where the Nifty 50 stands, let's pull up the Nifty 50 heat map to see as to what are the counters that are, actually keeping that Nifty above the 0.4% level. In terms of the contribution levels, you have Reliance, HDFC Bank, M&M as well as Bajaj Finance doing fairly well. On the flip side, of course, ITC is still taking the brunt, down by about 3.5%, followed by something like Bajaj Auto on the back of its auto sales numbers coming in, down 1.6%. Shriram Finance is seeing profit booking. Dr. Reddy's, Titan are some of the other counters which are in the red today. But Hindalco, Coal India, BEL, NTPC, as well as something like a Bajaj Finance, Maruti Suzuki, Geo Finance, all of these counters are seeing gains of about 1 to 2%. Let's try to see the advanced decline ratio to see as to how the broader end of spectrum is looking like in terms of the advanced decline ratio of around 1750 odd advances versus that of 680 odd declines. So even in terms of the broader end of spectrum, overall the mid cap and the small cap 250 is also doing fairly well. The mid cap 150 is up 0.6 odd %. The small cap 250 is also in the green today, up 0.4 odd %. Let's try to quickly pull up the BSE 500 before we go on to the guests. You have counters like JBM Auto, REC, PFC, Nalco, Jamna Auto, all of these counters in the green, anywhere between 3 to 6 odd %. But on the flip side, you have ITC still in that BSE 500 chart. Aditya Birla Sun Life, previous SpecChem, yet again a day where it's seeing pressure. And something like a Sapphire Foods, which is down 2.3 odd %. I'm wondering, Devyani is not on this list, but overall Devyani is the counter that's seeing good gains on the back of merger of Devyani and Sapphire. It's paired off its gains for the day, but still up 2% as we speak. But Sapphire seeing some pressure in terms of where the shareholders are concerned, probably wanting to exit just before the merger happens. But with that, let's also welcome in our guest for the day, Avinash Gorakhshankar, founder and head research at Avinash Mentor Research, joining us now, and Gaurav Sharma, associate VP at Globe Capital, joining us now. Avinash and Gaurav, thank you so much for joining and wishing you both a very happy 2026. I'll take up the first question for the day. This is from Sanjay, who's writing us from Bengaluru, and still asking us about ITC. We've gotten a lot of queries about this counter in the past 2 days, and he's saying that, is this a good buy from a long-term perspective, from a one-year perspective or not? Avinash, I'll come to you on this one. From a one-year perspective, I think from what I gathered with regards to where brokerages are saying, and plus the kind of correction that ITC has seen, from a one-year perspective, do you think this is a good buy? Do you think the rebound will happen soon?
See, first of all, my sense is that nobody had expected this negative surprise to come, and that's the reason the stock has corrected sharply. The stock is down by almost 15 odd % from 400 levels. See, around 340, 345, my sense is probably you could see a good support. But again, investors who buy the stock now have to give at least the next 12 to 15 months time frame, because typically cigarette business is, the demand is where it is price inelastic. So price hikes will happen and the cost push will be passed on to the customer. But this may take a couple of quarters. So there could be little underperformance in the short term. But in the longer term, I think, all the excise issues will get resolved and it will be neutralized. So I think, somebody who's got a high risk appetite can definitely think of buying around 345, 350 levels. 15% drop in such a short period of time is definitely something more harsh than what most people expected. So some accumulation can be done, but with a reasonably long time frame of at least next 12 to 15 months.
Got the view, Avinash, and definitely it will be a key stock that we continue to discuss over the next few days, as we've seen in the last few months as well. Whenever a corporate action, a regulatory information coming in, that stock does pop into retail investors' minds as well on a daily basis. So we will continue to get you that coverage. And Q3, a key one for ITC. The next query that's coming in is on Vikram Solar. Venkat Giri from Hyderabad is writing into us for this query, and he's holding 2,000 shares at 341. So he's currently sitting on a loss of almost 2 lakh rupees. He's asking what he should do for the stock. Should he continue to hold from a long-term perspective? So Avinash, wishing you a very happy new year, and to everybody at your firm as well and families. Any view on Vikram Solar as well, because we've seen a clutch of a lot of these companies come to the market over the last few months. Your view?
Yeah, this question is for me.
Yes, Avinash. Yes, that's for you.
So I think, Puneet, solar business is definitely going to grow, but so many companies coming in the market, and the fear that there could be an oversupply in solar capacity, that is the fear which has actually resulted in an underperformance. As of now, the company has a very strong order book. So at least over the next, say, 6 to 12 months, top line revenue visibility is assured. But going forward, whether there would be pricing pressure, whether there would be some margin pressure, I think is something the markets are worried about. And that is why the stock is underperforming. our sense is that let the Q3 numbers come out. I think let the management commentary come in. After that, we could get a better clarity. But I think no fresh buying suggested. But yes, those who have can continue to hold.
Okay, so that's with regards to where Vikram Solar is concerned. Also, viewers who are tuning in, you can also call us on the number that's flashing on your screen down there and send us your WhatsApp queries on the numbers that's flashing on your screen up there. But moving on to the next question, which is from Siva Reddy, who's writing us from Guntur, Andhra Pradesh. He's asking about ICICI Bank. He's bought at an average price of 1375 and he's sitting on a loss of around 16,000 rupees right now. He's holding 486 shares, wants to know if he can average out, hold or book losses. Gaurav, I'll come to you on this one. What are the charts indicating for ICICI Bank?
Hi Mahima, good morning. First of all, Happy New Year to you, to all the panelists and to all the viewers at NDTV.
Thank you so much.
So, now talking about ICICI Bank, I think it's just about 2 to 3 odd percentage points down from where he has invested in. He should hold on to his position. Not much of a decline is pretty much expected from these levels. Bank Nifty has started inching higher. It is just a matter of time we will start seeing the support coming in from ICICI Bank as well. It is hovering around its support zone. I think he should maintain a stop at 1300 and hold on to his position.
So that's with regards to where ICICI Bank is concerned. We've got our first caller for the day. Krishna is calling us from Hyderabad. Krishna, hi, a very good morning to you. How can we help you today?
Yeah, hi ma'am, very good morning. First of all, it's a very happy new year to your team and panelists.
Thank you so much, Krishna. Wishing you and your family the same.
Thank you. Ma'am, I have a query. I'm holding LG Electronics, or 60 shares at 1665.
Right.
I think from yesterday onwards, the share is dropping. I would like to know whether I can add more or hold or book losses for this. I just wanted to know the future of this stock.
Sure. Okay, Krishna, I got your question and I'll take this up with Avinash then. Avinash, with regards to LG Electronics, strong fundamentals to say the least. You have ROC all growing at, very healthy pace. What's the view from a long-term perspective? Because since listing, the stock has seen correction now.
No, I think, the investor can hold on to his shares, but fresh buying, I think he should hold on because from 7th of January, I understand that the lock-in, for the anchor investors is going to get complete. So possibly you could see some selling, from these investors, and that could provide an opportunity for a lot of investors, including the investor now, could possibly accumulate the stock at slightly lower levels. So I think, it's a matter of just few days. So I think hold on to the existing shares. The prospects of the company are pretty good. As you said, it enjoys a very strong balance sheet, very strong ROEs, virtually debt-free, status for the company. And I think hopefully the October to March period is going to be a very strong period for the company. So I think, once this lock-in period ends and you see some correction in the stock via the selling from the anchor investors, you could get an opportunity to accumulate the stock at lower levels. That would be the right time to buy anything fresh here.
And that's a great perspective coming in from Avinash. Almost 50% of the anchor book is eligible for selling on those dates, so watch out for that. Stocks up almost 0.6% as we speak, but let's go across to our next query right now, and it's on Morippan Labs, and let me come to Gaurav. Gaurav, on Morippan Labs, any view that you can offer on this counter, and because our viewers sitting on a loss on this one, should he continue to hold or switch out to something like KCP is what his query is. So your view.
Yes, so Puneet, Morippan has been an underperformer for quite some time now. All the recent recovery moves were let out and the stock was unable to hold on to their higher levels. As of now, also there are minimal signs of a meaningful reversal coming in. It is better to utilize any meaningful bounce from here around 42-44 zone to actually reduce his position. And as far as KCP is concerned, even that particular stock is not on a not having a very good or a smart chart here. The good thing about KCP is it is trading near the support levels at 170. So even if he wants to switch, I'll suggest him to wait for a breakup of 190, then switch towards KCP.
Got the view, Gaurav. But we have another caller now coming in from Kerala, and Jijo is dialing for a stock query. Jijo, very good morning and wish you a very happy new year. What's your query?
Happy New Year too. My query is, I have holding 22 quantity of shares ABC Capital.
Okay.
Okay. So average of 339. So I am planning to add more quantity. So I heard some of the bills already approved for insurance. So maybe it will be benefit too for this because they are spending money for the insurance. I saw in the detail. So I just want to know the long-term view. What is the updates and price to book?
And Jijo, do you hold any other, any other company in the similar financial space in your portfolio right now, apart from AB Capital?
I am holding Sriram Finance, but not the same sector, but it's only
No,
NBFC.
of course, yes, got it. Okay, Avinash, let me come to you on this one because, Jijo's question is on AB Capital bought at 339, so very close to the current market price. Your view if he should add on more in this counter because it's seen quite a decent run-up. And he already holds Shriram Finance as well in the financial and the insurance space. So your view?
No, I think from a longer term perspective, AB Capital will definitely benefit because, the entire, you can say the whole financial services vertical is led through this company of the Birla Group. And most importantly, Q2 was quite encouraging. If you look at the Q3, Q4 outlook, our sense is that, NBFC specifically like AP Capital will benefit because they've got an exposure across various business verticals. And he said insurance, I think they also have a lot of interest on the NBFC side, on the, on the retail side. So that definitely is going to give them an edge. Plus rate cuts have happened. So then definitely that gives an additional leverage for such kind of company. So I think, if he's thinking of investing for the next, say, 12 to 18 months, I think you can buy on dips here, but keep a time frame of at least 12 to 18 months.
Okay, keep a time frame of 12 to 18 months for AB Capital is the view that Avinash has. The next question that we have is from Vidyut, who is writing us from Bengaluru asking about Suzlon. He's holding 3,000 odd shares at the levels of 65 and wants to know as to what are the views for this particular counter. Gaurav, he's sitting on a loss of 36,000 rupees. The stock is currently trading at 53. What's the view like on the charts?
Though he is already seeing the reasonable loss here, but no point exiting the position here. The stock is from a medium to longer term perspective. I'm having a bullish view on this stock. He should hold on to his position, maintain a stop at 48. Simply hold on. I expect the stock to rise up towards his buying price in the coming 3 to 4 months.
Okay, all right. We've got our next caller then. Manav is calling us from Gurugram. Manav, hi, a very good morning to you. How can we help you today?
Hi, good morning to everyone. First of all, New Year greetings to the whole NDTV team and experts as well.
Thank you so much, Manav.
2025 journey memorable and looking forward for the same in 2026 as well.
For sure. Thank you so much, Manav. Wishing you and your family the same as well.
Thank you. So I have a query on NTPC today.
Okay.
I have 50 odd shares at an average price of 350. I have been holding on to this counter for more than a year now. So I was looking at it, so it was consolidating somewhere around 320, 330 range for quite a long time. So now for the past 1 or 2 sessions, it has shown some momentum upside. So I have no issues in holding on to it a little longer also, like 2 or 3 years maybe. But is it a good counter to hold for such long term?
Okay, got your question, Manav. I'll take this up with Avinash then. Avinash, NTPC from a long-term perspective, your advice would be to hold for the next 2 to 3 odd years?
Yeah, I think, see, if the investor can hold on for the next 2 to 3 years, NTPC is typically a slow-moving stock. But in terms of power generation, the kind of investments the company is making, our sense is that steadily, possibly after April 26, possibly, because once the capacity gets commissioned, you could see a decent kind of, earnings trajectory happening for 27 and 28. So I think, one has to have the patience for holding this stock, but at least keep a 2-year time frame because power generation is the need of the hour, and I think NTPC has got a very large capacity, which finally should crystallize into monetizing these benefits. So 18 to 24 months, if he can hold on, I think he could expect a decent risk reward.
Okay, all right. So that's with regards to where NTPC stands. The next question is from Tushar Rajpurohit, who's writing us from Bengaluru, asking about JBM Auto. He intends to invest 5 lakh rupees in this counter. Wants a technical and a fundamental view on this one. Gaurav, I'll first come to you. The stock is up 5%, almost 6% in trade today. Would you recommend an entry right now? And 5 lakhs is a big amount to invest in. Not sure what percentage of his total portfolio is 5 lakh rupees. But if he were to invest this entire 5 lakh rupees, would you recommend 2 or 3 other counters to make an entry into?
Yes, absolutely, Mahima. That's a very fine piece of advice coming in from your side. It is always better to diversify the thing. Yes, we are bullish on the auto ancillary space. Although JBM Auto do not tops our list. Having said that, the stock is still looking upbeat, and there is reasonable scope of rise coming in. 750 is something that is on cards on an immediate basis. Although from an in-house point of view, FIAM and Precall are the two stocks from the auto ancillary space that he can also consider. Other than that, the tire stocks are also doing good and likely to perform in the upcoming 2 quarters as well. Therefore, he can consider the JK Tire, Apollo, SEAT as well.
Avinash, would you also have a quick view on this? Because we also spoke to the management of Electra Green Tech today. They've also commissioned their capacity of 2,500 buses. And viewers, I urge you to get that conversation because they've given some key insights on capacity as well as the new order win. Avinash, any quick one? Because you've seen JBM and Electra being the bearers, but now we're seeing another couple of new players like Eka Mobility in the private space also getting a huge order in the 10,900 CESL tender. Any quick view that you have?
No, I think longer term, the outlook seems to be quite positive. I think Electra has given a very detailed, kind of outlook view. And I think once the new capacity comes off the ground, you're going to see a strong volume pickup for Electra. JBM Auto also looks pretty interesting if you look at the next 12 to 18 months, because government is also promoting EV vehicles in a bit to, reduce the pollution levels. So my sense is that, somebody who's got a slightly medium to long term view can definitely think of parking some money here. But I think the outlook and the time frame needs to be at least 12 to 18 months.
Okay, so that's with regards to where JBM Auto is concerned. We've got our next caller. Suresh is calling us from Pune. Suresh, hi. A very good morning to you. How can we help you today?
Yeah, hello ma'am. Ma'am, my query is regarding Indus Towers shares.
Right.
So I purchased those around 2,000 quantity a couple of months back at the price of 384 rupees per share.
Okay.
So I just wanted to know the medium-term outlook for this company.
Okay. All right. Got your question, Suresh. Just wanted to understand when you bought Indus Towers, was it the charts that you saw or was it the fundamentals of the company that you saw?
So this was the time regarding when this there was some decision was going to come for Vodafone Idea, right?
Correct.
Just before that, I had bought, and there was some promoter buying. It happened after that actually when I bought. So that was a positive also. Like the Bharti Airtel also have bought the shares.
Correct.
I think, right?
Correct. Okay.
So that's the perspective.
Correct. Okay. Got your question, Suresh. I'll take this up with Avinash. And Avinash, I think a lot of investors and traders who look at Vodafone Idea also look at Indus Towers very closely because there's always a ripple effect which comes into play, right? Your view with regards to Indus Towers, because considering the way the Vodafone Idea verdict came out was not something that the street was happy with, right? They wanted more in that case. So what would your recommendation be for Suresh in terms of Indus Towers?
No, I think he can hold on to Indus Towers. See, Indus Towers, the bigger part is that they are the largest tower company in the country. More importantly, as far as Vodafone is concerned, the markets were expecting a waiver for the AGR amount, which did not come in. But I think still there is some hope because the government, ordinance or the government, clarification has to come in. There are expectations that the AGR dues could be waived off by almost 40-50%. So that would definitely be positive for Vodafone. But most importantly for Indus Towers also, clearly I think the cash flow which is now generated from Vodafone will be used to pay, the rentals as well as for their capex, because they get a decent amount of moratorium. So for Indus Towers, I think the positioning is pretty solid. They are a well-managed company and very high profitability margins. And with the 5G rollout, I think, next 2 years, I think clearly growth seems to be quite solid and very well positioned. So Indus Towers, I would suggest the investor to hold on. There's no need to panic. And if there's a further favorable announcement for Vodafone, that would obviously have a ripple effect on Indus Towers.
That's Avinash's view on Indus Towers and something that we continue to monitor as well. But time now to dive into the BSE F&O market setup. And the cues that are shaping up the trade today. Let me bring in Sharad to give us that snapshot.
Well, we are seeing Sensex is nearly at its day's high levels. Some interesting DI positioning coming in. The volumes are also coming back into the market as we go into this new year. And interestingly, institutional trades have started coming in. NTPC, one of the top gainers as well. And remember, cyclical bets, the positioning is happening. We have also pointed out these RE financing companies earlier in IMO yesterday. And now buying has started coming here. Sensex also we see largely is a sea of green happening. And Reliance is holding up very strong for the third straight day. And that's also helping most of the sectors and the counters. The only drag which is there in the market, remove that, it has been a superb 2 trading sessions, and that is ITC. That's actually giving kind of a drag in the FMCG pack as well. Let's look at overall how the numbers are fetching. The Sensex futures that has gone past the 86,000 levels, and yes, the volumes are increasing slowly. And BankX also, the story remains the same. A good up move coming in. The hold up is strong. Kotak Mahindra is also on the positive side. Yes Bank, IDFC First. We are seeing good positioning coming up. And also HDFC Bank and IndusInd Bank. Street is bullish, especially on the technical setup for IndusInd Bank for a positional trade. Let's look at the stocks which should be in focus. Long build up for RECPFC, which I had spoken about. And look at it. These 2 stocks have come in. Short covering for Eiffel Cap and Inox Wind, nothing much major technical change happening in this counter. But if you look at the long unwinding, it includes Hutco and SAIL, some kind of profit booking, of course, happening in SAIL. But still the medium term level is strong. A short build up coming in for MCX, but kind of a reversal. But ITC for second straight day, the pain is here. The stock is down 4% odd. So a lot of stock specific moves are happening right now in the market. But yes, the sentiment in the options data suggesting for both Sensex as well as BankX is turning positive.
Sharad, but let's go across to our next query, and this is coming from Raja on National Aluminium. He's bought 152 shares at 198 rupees per share, and he's asking if we should book profits or some partial profits, take the money off the table. Gaurav, let me come to you on this one. On the charts, we've started to get a lot of bullish momentum from a lot of tech analysts. Do you have a similar view?
I do maintain a similar view that yes, National Aluminium has done well. It is looking upbeat. But the kind of run-up that we have seen immediately also rings some bells that the one should keep a little cautious view as well. So therefore, taking some profits off the table is advisable. So partial profit should be done here. Maintain a trailing stop loss at 280 and hold on to the remaining position. Keep lifting the stop loss with every rise in price.
All right, so that's with regards to where Nalco stands. The stock is up 3.6% as we speak. Now, Avinash and Gaurav, it's time for our rapid fire segment in Ask Profit. So what we do here is we try to throw as many questions as possible, and you can try to keep your answers as short as possible to buy, sell or hold. I take up the first question, which is from Madhusudan, who's writing us from Hyderabad, asking about Som Distilleries. He's purchased at the levels of 142. Currently, the stock is trading at around 104. What should he do? Gaurav, your view on the charts?
Hold.
ITC is the other one. We've discussed the fundamentals quite a bit. On the technicals, Gaurav, our viewers holding at 260. Good time to exit?
I think one should hold on to the position, take a stop at 340.
Okay, Elecon Engineering is the next. Okay, Elecon Engineering is the next one. Lata from Hyderabad is holding 2,000 shares at an average price of 614. She's sitting on a loss of over 2 lakh rupees. On the charts, Gaurav, what would you recommend?
Add.
JSW Cement, is it a good time to enter, Avinash?
Yeah, I think from a longer term perspective, one can accumulate.
Okay, Indigo Paints is the next one. Dr. Raju from Doha is sitting on a loss of around 23%. Should he continue to hold or sell? Avinash, your view?
No, I think one can continue to hold. I think this is a good company, but I think keep a time frame of at least 12-18 months.
Mankind Pharma, viewer, Mahalakshmi has bought it at 2,675, so sitting at a loss. Asking a long-term view, Avinash, your view?
Yeah, I think keep a time frame of at least 2 years and stay invested.
Okay, Hyundai is the next one. Rohan is holding 14 shares at the levels of 1960. 1 to 2 month view on the charts, Gaurav?
Hold as of now, add about 2,400.
JM Financial, is it a good time to add, Avinash, is what K Guru is asking?
Yeah, I think from a longer term perspective, the stock has corrected from higher levels. I think worthwhile taking a bet, but keep a time frame of at least 12 to 18 months.
Okay, Madhusumi Wiring is the next one. Soumya Prasad wants to know from a 1 year time frame, is this the right time to make an entry? Gaurav, on the charts?
Absolutely. Start adding now. Look for targets close to 55 to 56.
Bajaj Housing Finance, Avinash, is it a good time to enter after the correction?
Yeah, I think longer term, I think this company should add a lot of value. Keep a time frame of at least 12 to 15 months, but worthwhile accumulating at current levels.
Well, with that is the end of the first round of the rapid fire in this edition of Ask Profit. It's time for a very short break. Lots more stock related queries on the other side. Stay tuned.
Agarwal Packers and Movers Limited. Man with the cap. Now 300, 300, 300.
सोचो आप सुबह उठते हो, अपना ट्रेडिंग ऐप खोलते हो and your portfolio is empty. Scary है, right? This is the nightmare of getting hacked or scammed online. And here are some basics that you always need to stick to. हमेशा याद रखिए, digital hygiene is a key factor towards safe and successful investment.
An investor awareness initiative by SEBI.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है, आँख नहीं फूटती धूम में, मैं फटदनी सी चाय बना ले, बहुत सहूलियत है हमें इसकी.
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले.
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
Right, our next category is Actor of the Year Female, and to give away the award we would like to invite Dr. Payal Kanodia, Chairperson and Trustee M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Foremost in public welfare, transformation of land and property registration. Punjab government has transformed the process related to registration of land and property in Punjab. The complete digitization of easy Jama Bandi and easy registry processes has significantly curbed red tape and corruption in the state. Online tools like Draft My Deed and Calculate My Fees has helped almost 40 lakh people avoid queues at the offices of Patwari, Sub-Registrar and Fard Kendra or Land Revenue Records.
ਜੇ ਸਾਰੀਆਂ ਸਰਕਾਰਾਂ ਨੂੰ ਹਟ ਕੇ ਕੰਮ ਹੋਇਆ ਜੋ ਈਜੀ ਰਜਿਸਟਰੀ ਹੋਈ ਆ ਇਹਨੂੰ ਹਰੇਕ ਬੰਦਾ ਬਹੁਤ ਹੀ ਸਖਾਲੇ ਢੰਗ ਨਾਲ ਸਮਝ ਰਿਹਾ ਹੈ ਇਹਨੂੰ ਯੂਜ਼ ਕਰ ਰਿਹਾ ਹੈ.
The digitally certified Jama Bandi receipts have QR codes and digital signatures. Besides downloading them from the website or WhatsApp, these receipts can also be received from Seva Kendras or helpline number 1076. In cases of death, citizens can apply for mutation or registry in any sub-registrar's office in the district. Online tracking and time-bound resolution has been set up for every application. For instance, a time limit of 2 days has been fixed for registry and 30 days for mutation.
ऑनलाइन रजिस्ट्री आप भी लिख सकते हो. गवर्नमेंट वालों लिखा हुआ एक ड्राफ्ट माई डीड एक आंदा है, उसे क्लिक करके तो सीधा सौखा पंजाबी च करती रजिस्ट्री भी आ बेचने वाला है, आ खरीदने वाला है, इन्ने पैसे ਇਹਦਾ कलैक्टर रेट है इन्ना ते हुण ਇਹਦਾ मालक आ हो जाऊगा. तुसीं आप सबमिट कर दो ਜਾਂ ਫਿਰ ਸੇਵਾ ਕੇਂਦਰ ਉੱਥੇ ਖੋਲਤੇ ਤੁਸੀਂ ਉੱਥੇ ਕਰਵਾ ਲਓ, ਲਿਖ ਕੇ 1 ਮਿੰਟ ਚ ਆਨਲਾਈਨ ਹੋ ਜਾਊਗਾ.
Punjab government, foremost in public welfare.
It's fresh, bro, straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments
with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. On this side of the show, we're also joined by Rajesh Bhosle of Angel One joining us now. Rajesh, a very happy 2026 to you and your family. I'll take up the next question from Mahesh, who's writing us from Bengaluru, asking about Swan Defence. It's been time since we've received an Ask Profit query on Swan Defence. He's bought 250 quantity at the levels of 963 and wants to know a view on this particular counter. Rajesh, I'll take this up with you. He's already sitting on profits of over 1.4 lakh rupees. What's the view like on the charts?
I mean, this is a illiquid counter, generally moves in upper circuit. So no technical view on this counter.
Quick view on this one, considering the recent Defence Acquisition Council announcement of the entire allocation of funds towards defence. What's the view for this particular counter?
Yeah, is this for me?
Yeah, this is for you.
No, I think the investor can continue to hold, because I believe, the fructification of these defense orders is yet to get culminated into top line growth, profitability for the company. And there's a very strong revenue visibility for the company, Mahima, for the next at least 12 to 18 months. So I think despite the fact that he's made a decent amount of profit, he can partially book profit, but he can hold on to the the rest of the quantity of the shares which he holds at least for the next 12 to 15 months. We expect very strong numbers for March 27, wherein you will get to see the benefit of these orders.
Got that view, and it's definitely been a key counter that we continue to track yet again in upper circuit today. But the next query that's coming in is on Jindal SAW. Shruti from Telangana is actually sitting on a profit on this. Actually, we'll go across to Jindal SAW. He is sitting at a loss of almost 22%. Bought at 214, currently trades at 169, asking if he should exit at this point or continue to hold. Rajesh, on the charts, last 1 year has been quite difficult for this counter, down 40%. Any recovery in sight on charts?
So if we see weekly charts, in the last few sessions, we are seeing some signs of bottoming out. We are seeing a morning star pattern on the weekly chart, and this week there is a follow-up buying. Also, if we see, the stock is holding on to its August 2023 swing low. So we are expecting a bounce back. Possibly the stock can bounce towards 180 to 185 levels. So this has been an underperforming stock, and we don't expect any major outperformance, but can hold on to it. When it comes around 180, 185 levels, there we need to recheck the charts.
Got the view, but let's go across to another query now. That's on Ashok Leyland, and it's been a winner. Let's look at the 1 year chart, and because the stock had a split, a corporate action, was at 240, fell to 120. It's back to 180 in no time. So you can see that the last 12 months have been spectacular for this, up 59%. And Sushila Billeri is holding shares at 178. Almost 1,000 shares. So she's sitting at a profit of almost 10,000 rupees. Asking what are some of the key targets to look at. Avinash, it's been a key winner, and even December sales of almost a 25% growth for this counter. It surprised everyone. Your view on Ashok Leyland, should he continue to hold, and also would you recommend buying into after the stellar rally, because the CV cycle momentum has just started to take shape with no government capex yet in sight. Once that comes in, what could be the momentum gain?
No, I think Ashok Leyland can be held on. See, because frankly, apart from the commercial vehicle business, which is their main bread and butter, I think they also have a large defense business. And I think both these segments are doing well. According to me, I think the next 12 months are going to be pretty solid. Not only the commercial vehicle cycle has started off on a good wicket. Hopefully, if government spending starts, infrastructure spending gets going in a big way, then I think you're going to see the CV cycle at least on an industry level growing by about 14-15%. And Ashok Leyland will definitely benefit. I think, from a 12 to 15 month time frame, one could easily expect a 14-15% upside from the current level, considering the fact that, Tata Motors and Ashok Leyland are the key players here. And defense will be the surprise pocket, because hopefully in the budget, if any big announcements comes in, there would be definitely some rub-off for companies like Ashok Leyland. So I think we believe that one should hold on, keep a time frame of at least next to 12 to 15 months, where a decent risk reward can be expected.
Fair point, Avinash. And let's go across to our next query, and this is coming in from Mysuru. Mohan has a stock query for us. Mohan, welcome to Ask Profit, and wish you a very happy new year. What's your query?
Wish you a happy new year. What Keynes Technologies at 4,300, quantity 6 numbers. I just want to know the long-term perspective, whether I have to buy or I have to hold it, whatever.
And Mohan, did you buy it after the correction that we've seen in the stock, or have you been holding it on for a while?
No, I saw the corrections there. I saw there was a discrepancy in the balance sheet. Something was there. There was a lot of discrepancies.
That's right.
So I thought 52 high, week high was around 7,300.
7,000 rupees, yes.
So in view of that, I took it.
So you bought it after the fall, basically?
Yeah, after the fall.
Okay. And any other EMS company that you have in your portfolio apart from Keynes Tech?
No, I don't have anything.
Okay, perfect. Avinash, on Keynes Technologies, the street seems to be penciling in that they will want to wait for Q3 earnings to see if the debt goes down, the working capital improves, because revenue growth on one side has been quite strong. Any view that you have on Keynes Tech, and what should Mohan do? Should he continue to hold? And if so, any opportunity to add more?
No, I think my sense is Q3 numbers will be out very soon. So I think it's better that the numbers are out. There is a good amount of clarity from the management. Although the management did clarify after the earlier, corporate governance issue. But my sense is, the market should be looking at very strong data points, especially on the top line, on the EBITDA, on the operating cash flows. So I think Q3 is going to be a very important quarter. My sense is that investors should hold on at least for the December quarter numbers to come out possibly by the 2nd or 3rd week of January. And then I think it would be wise enough to take a fresh call rather than, putting the buying as of now. It is always better to wait for some sort of confirmation, post the Q3 numbers. So we'll prefer to wait. And I think longer term, yes, the company will do well. But in the short term, there are some doubts in the markets. Market wants to get clarity as to whether the numbers are now back on track. And that is something we'll have to wait till the Q3 numbers are out.
Okay, all right. So that's with regards to where Keynes Tech is concerned. The next question that we have is from Vishal, who is writing us from Gurgaon, asking about L&T. He's got 250 shares since the past 10 years now. He's saying that today the stock has hit its 52-week high. He's sitting on profits of over 8 lakh rupees. Wants to know if he can sell or hold at the current market price. Avinash, I'll stick with you for this one. What's the view like?
No, I think one should at least book out some money from this stock. I think considering the fact that the gain has been quite significant. Yes. See, I think in case of L&T, it's a strong player in the capital goods space, infra as well as defense. And I think numbers are going to get better going forward. But I think looking at the kind of buying price, I think the investor should at least try to take out his capital and say book out 25% of his investment, and the rest he can hold on. I think definitely FY27 looks much better, but some part profit booking would be advisable.
Okay, all right. So that's the view with regards to where L&T is concerned. We've got our next caller, Shankar Narayanan, is calling us from Bengaluru. Shankar, hi, a very good morning to you. How can we help you today?
Happy New Year to all of you. Thanks, Mahima, for taking up the question.
Thank you
I'm
so much,
holding Tilak Nagar. I think you are doing a wonderful job.
Thank you so much, Shankar.
Convey my
Means a
regards
lot.
to Alex also, Alex Matthew. You are smiling, Alex Matthew. Okay, I'm holding Tilak Nagar Industries, 90 shares at 358. I'm a long-term investor. The prices are falling, but profitability, sales, all other aspects are fine.
Correct.
Recently, they have taken over some business. So we have to wait for that. But quarterly sales are coming down. And there is a operating margin also coming down. I would like to know the long-term view, whether we can add or what's the view.
All right, Shankar, first of all, thank you so much for your kind words. Means a lot. Wishing you and your family also a very happy new year. And I'll convey your regards to Alex. I'll take this up with Avinash again. Avinash, I'll stick with you for Tilak Nagar as well. What he's saying is not wrong, right? Overall, the company is good in terms of where the growth is concerned, where profitability is concerned. The recent acquisition of Imperial Brew also was at a very attractive valuations and is going to augur growth for the company. Overall, from a long-term perspective, do you think this is a good counter to continue to hold in the Alcobev space?
Yeah, I think he can continue to hold considering the acquisition of Imperial Blue and plus, the kind of product categories which the company has got. I think the second half traditionally is a very strong period for the company. And I think the alcohol beverages sector has started moving up. Consumption has started moving in the positive trajectory. And this is a very large player in the sense that once now the full acquisition process gets complete, going to see a large kind of top line as well as large market share getting back to the company. So my sense is, you give a time frame of at least 1.5 years. The benefit of this acquisition will be felt obviously over the medium to long term. But even growth numbers in the second half are going to be much better than the first half. So nothing to worry. I think maybe one quarter was not good, but longer term, I think the structural story is very much intact.
Got the view, Avinash. The next question, and we don't talk about this stock too much. India Nippon Electrical Limited. Let's pull that counter up. And Jay Parekh actually has been holding this counter and is sitting on a very big profit of almost 14 lakh rupees. So Jay, actually, I would have loved if you could have just give us a call. Tell us what you saw in this counter. Almost 2,000 crores in terms of market cap right now. He's asking what he should do with this counter going forward because he's holding a decent quantity as well. But on the charts, Rajesh, any view in terms of momentum on this counter? What would you suggest?
Well, I'm not tracking this counter and I'm not able to find a symbol of this.
Okay. I think the symbol of this one is IND Nippon on the NSE. I'll just give you a minute. I'm not sure, Avinash, if you are also tracking this. It's a very small counter. Any view?
No, I think, Puneet, this is a very interesting company. They operate in the auto electrical space. And it's one of the very old companies. So I would say that, the investor has really made a very strong and a very clever decision. My sense is that, some profit booking could be advisable, but the next 2 years, hopefully with new vehicles coming in, a lot of, electrical devices, digital devices getting into cars. I would not be surprised that the growth potential for this company looks quite strong. Even at these levels, there could be a good amount of risk reward happening. Possibly, second half will be much better for them. But they are a very well-established old vendor from Chennai. And I think the investor can hold these shares for longer term, but some profit booking can be considered considering that the money made now is quite significant.
Avinash, definitely expect, I think I'm going to give you a call, Avinash, after of how are you tracking these smaller spaces because it's definitely one. In terms of revenue also, it's done well, 840 crores of FY25, 11% margins and profits of almost 82 crores. So definitely one that we'll monitor going forward. But thanks for that, Avinash, getting us that view on the fundamentals. The next question is another counter that we are also tracking. And this one's Tata Motors. So sticking with the auto theme, Ram from Hyderabad actually is holding Tata Motors passenger vehicle at 390. So I'm guessing this is, he might have bought it recently, but he's bought a huge quantity of 5,000 shares. Avinash, actually, let me come back to you for this one. Given the quantity, would you suggest him to diversify, if any, into the other auto OEM space? Because we're seeing across categories, tractors, CV makers, two-wheelers, all doing quite well. And he's holding a considerable amount. So he wanted a view on Tata Motors PV for calendar year 26. But also, what would you suggest in terms of positioning, sizing, if any?
Well, I think Tata Motors PV can definitely hold on. See, I think the stock is corrected, but hopefully once the CV cycle picks up, the passenger car business has been doing well. So my sense is that, Tata Motors PV, the Land Rover business, definitely holds a kind of a surprise element. And I think once that picks up, you're going to see a good amount of traction. So I think, there's nothing to worry on Tata Motors. But if one were to look at the auto pack, companies like Mahindra and Mahindra, typically in the auto component space, something like a Shriram Pistons, these are companies where the growth trajectory for FY26-27 looks very promising. And I think despite the fact that these stocks have outperformed, the growth momentum will continue. So I think it's better that he puts his money in, say, 2-3 companies, even if he wants to, play the automobile theme, which will give him not only diversification, but, growth opportunities across 2 to 3 companies.
Okay, all right. So that's with regards to where Tata Motors passenger vehicles is concerned. The next question that we have is from Srinivas, who's writing us from Warangal, asking about KPI Green and whether this is the right time to make an entry into this counter with regards to where charts are concerned. Rajesh, I'll take this up with you. I think since Tuesday, there has been a sharp momentum seen in this counter. Tuesday, if I'm not wrong, the volumes were 100 times its 20-day average. And today, of course, the stock is not doing much. But do you think it makes sense to make an entry into this counter right now?
So yeah, on Tuesday we saw strong traction on the daily chart. We saw a bullish kicking pattern, and prices also crossed its 200 DMA after a very long time. So overall, the chart structure is positive. After that 2 days of move, prices are consolidating a bit, but overall bias remains positive. The 200 DMA around 470, 475 levels seems to be a great level to re-enter. And on the high side, we are expecting the move can extend towards 545 to 550 levels, which is its previous swing high. Once that is crossed, we can expect positional up move. But for now, 545 to 550 can be kept as a immediate targets.
Got the view. Let's go across to our next question now, and this one's coming in from Bengaluru. And Soumya is actually asking a question on Coal India. Bought at 412, it's back to that price, and she's bought it a year ago. So it's trading at a very similar level where it was. He's asking if we should continue to hold on to this counter or sell out. Avinash, I think there was a recent update as well that 2 companies will be listed, the subsidiaries will be listed, and the government has asked the other 6 also to be listed by 2030. With that in mind, with the dividend deal, what would you recommend on Coal India?
No, I think one should hold on because, typically now with this financial year approaching very soon, so I think, the company will definitely reward its shareholders with a good, dividend, which Coal India is well known for. But this value unlocking, which is going to happen, is also going to add a lot of cash to the company's books. So I think to that extent, Coal India is very well positioned. And, I think in the entire power generation space, Coal India is one company which holds a monopolistic hold on the coal, kind of product. So definitely worthwhile holding. Keep a time frame of 6 to 12 months. I think you should get decent, levels even from these levels. So I think positively, it should get impacted. So please hold on.
All right. The next query that we have is on Rain Industries, and this is from Mahesh Kumar, who is writing as he's bought at the price of 152 and 1,000 shares is what he has in his portfolio. He wants to know the target for the next 1 month. Rajesh, on the charts?
In last 1 month, we have seen strong traction. It was trading around 100, and from there onward, it's trading at 140. Overall, on the daily chart, we are seeing a saucer pattern breakout. So around 140, we see a strong support. And as per the pattern, the stock can head towards 155 to 160 levels. So hold on to it. Strong positive momentum is there in this counter.
Got the view, Rajesh. The next one's on Vodafone Idea, and we can't stop talking about it. We can't have enough of it, and I'm guessing the guest also can't. But this one's from Anil from Bengaluru, holding 2,000 shares at 14 rupees per share. So he's currently sitting on a loss. What's the long-term outlook is what his question is. Rajesh, firstly on the charts, anything that you can suggest for Vodafone Idea? Because we did speak to Avinash on Indus Tower amongst others and Vodafone Idea, but your view on this one?
Yes, in the short term, definitely positive momentum is there. Some kind of bullish reversal patterns are also there. But if we see the longer time frame charts, the stock struggles at higher levels. So I would suggest him, use the current positive momentum to exit at higher levels. As far as levels are concerned, 2 days back, we had a lower spike. So somewhere around 10 rupees is the support, and on the high side, 13. So 10 and 13 is the immediate range that we are expecting in Vodafone Idea.
Okay, all right. So that's the view with regards to where Vodafone Idea is concerned. Of course, one of the most favorite stocks of retail investors. But the next question that we have is from Surya Prakash, who's writing us from Vishakhapatnam, asking about KPIT. Bought 50 odd shares at the levels of 1355. Can he wait for 1 more year? Rajesh, on the charts, what would you recommend?
So as of now, not much is happening. The prices are in a consolidation mode, but yes, it's on a strong support. So currently hold on to it. If we see somewhere around 1100, the stock has a support, and on the high side, 1250 is the immediate resistance. That is 200 DMA. Once 200 DMA at 1250 is crossed, we can expect momentum. But as of now, hold on for a levels of with a support of 1100.
Got the view, Rajesh. We have another query now on Bajaj Finance. It's another counter that's done very well for its investors. in multiple time frames that you might see for this counter. Now, Prakash from Bengaluru has actually bought it at 800 rupees, so he is sitting on a considerable profits. Last 12 months also at 33% has given him quite decent returns, and he's asking if he should hold or exit, book some profits. Avinash, the momentum on this counter doesn't fizzle out given the performance of the management as well. Your view on Bajaj Finance?
No, I think he can continue to hold. See, I think with now interest cuts happening, the consumption, trend likely to get a boost in the Q3. And plus, hopefully, I think FY27 things look slightly better. I think, the kind of buying price he has entered, he should keep a time frame of at least 12 months. He could expect levels of around 1100, 1150. At that point, maybe he could book out little profit. But the traction looks to be very frankly quite strong for the October to March period. So I think better numbers can obviously re-rate the stock much earlier.
Got the view, Avinash. The next one and the final caller for today and for this week as well, at least for the morning edition, has to be from Shiv Kumar. He's dialing into us. Shiv Kumar, very good morning. Welcome to Ask Profit and, Happy New Year. What's your query?
Yeah, good morning. Happy New Year to you all there. My query is on Tenneco Clean Air System. I hold around 100 shares, 26 shares around 500 rupees. So I would like to know its future. Today it has gone up really well.
Yep.
What are its future prospects and what target I can keep it for another 12 to 15 months?
Shivkumar, very quickly, do you have any other auto or auto ancillary play in your portfolio?
No, nothing like that.
Okay, nothing.
This
Got
is
it.
the only one.
Got it. Avinash, it's a recent listing, so the tech view won't make too much sense. But on the for this IPO, a global parentage gets the support for patents. Any view on Tenneco?
Well, I think he can hold on. The company is into the air, environment solutions. And more importantly, the public issue was a OFS. So, the entire money went to the collaborators. But despite that, if you see the positioning of Tenneco globally, I think they have a very strong marquee Indian customer base. They get a lot of global support from their parent. And overall, I think this market is going to grow quite rapidly. So overall, 12 to 18 months is what I would suggest the investor to hold. He could easily expect an upside of at least 20-25%. But I think, we'll have to wait for the Q3 numbers post the IPO for the first time. Once that happens, we'll get better clarity on the earnings growth trajectory and the growth outlook. I think till that time, we'll have to wait and watch. But Q3 is expected to be on a strong note.
Right, okay. So that's in regards to where Tenneco Clean Air is concerned. Avinash and Rajesh, it's time for our second rapid fire segment. Try to keep your answers as short as possible. The first question is from Nibu, who's holding 50,000 shares of Ease My Trip at 8.02. Avinash, should he continue to hold?
I think exit.
Sujata is asking 2 stocks to buy into her son's account for 2026. Avinash?
I think she can look at buying into Lemon Tree and, if she can also look at a large cap stock like Mahindra and Mahindra. Both these stocks should give good money.
Okay. The next question is from Mahesh, who's writing us from Chennai, asking about Inox Wind. He's bought at the price of 190 and 1500 is what he's holding. Price target for the next 1 month. Rajesh, on the charts?
So today we are seeing positive momentum. Hold on to it for the targets of around 135.
A short-term view on Godfrey Phillips also, Rajesh?
So, as of now, it's volatile, so avoid for now.
Okay, Forge is the next one. Rajesh is holding 600 shares at the levels of 1785. He's sitting on a loss of over 92,000 rupees. On the charts, Rajesh?
Hold on to it. We are seeing support around 1600 levels.
Copran, a long-term view is what Karan is asking. Avinash?
I think avoid.
Okay, Godrej Properties is the next one. Prasanna is holding at the levels of 2150 from a short-term perspective. Can he book losses or continue to hold? Rajesh, on the charts?
Hold on to it. We are expecting bounce towards 2180.
Shakti Pumps bought at 750. What should we continue to do, Avinash?
I think continue to hold. Our sense is that over the next 12-15 months, the company should do extremely well.
Okay, Balaji Amines is the next one. Simhadri is holding 30 shares at the levels of 3230. Any chances of recovering his losses? Rajesh, on the charts?
Exit on a bounce around 1200 levels.
GMR Imports, a long-term view. Our viewers bought at 95. What should Raghuram do, Avinash?
I think continue to hold. My sense is that over the next, say, 12-15 months should be a very strong outperform.
Okay, Yatharth Hospital is the next one. Sunil Kumar is holding 30 shares at the levels of 813. From a long-term perspective, can he continue to hold? Avinash, your view?
Yeah, definitely one can hold for long term.
Avinash, TD Power, your view?
I think continue to hold.
Okay, RFC is the next one. NKS from Mumbai is holding 700 shares at the levels of 175. What should you do? Hold or sell on the charts, Rajesh?
Yes, hold on to it.
All right, hold on to RFC is the view coming in from Rajesh. Rajesh and Avinash, thank you so much for taking out the time and of course taking us through all those 50 queries that we managed to answer on the show today. And yes, and of course wishing all our viewers a very happy 2026. With that, we're completely out of time on this edition of Ask Profit, but we do have an afternoon edition as well, so do stay tuned and of course keep watching NDTV Profit.
सत्तर 75 वर्ष के मुँह ये कोई कागज नहीं थे अब जो है अपन साइकिल हुई अपन ले अपन धरो
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Smartworks Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी अब उस भूमि के नाम पर वह कर्ज ले सकती है व्यवसाय कर सकती है
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues. Punjab government, foremost in public welfare. High-tech ambulance brings speedy help. The government led by Bhagwant Singh Maan has deployed more than 400 high-tech ambulances to provide rapid emergency assistance across villages and cities. Equipped with GPS tracking and digital communication systems, besides medical equipment like oxygen cylinders, ventilators and ECG machines, these ambulances provide critical care similar to the hospital emergency ward. This helps the doctors and paramedical staff to provide the best care to critically ill patients while in transit.
325 ਐਂਬੂਲੈਂਸਾਂ ਜਿਹੜੀਆਂ ਨੇ ਉਹ ਮੁਫਤ ਸੇਵਾਵਾਂ ਪ੍ਰਦਾਨ ਕਰ ਰਹੀਆਂ ਪੰਜਾਬ ਦੇ ਵਿੱਚ ਸ਼ਹਿਰੀ ਖੇਤਰ 'ਚ 15 ਮਿੰਟ ਤੇ ਪਿੰਡੂ ਖੇਤਰ 'ਚ 20 ਮਿੰਟ ਔਸਤਨ ਟਾਈਮ ਹੈ ਉੱਥੇ ਪਹੁੰਚਣ ਦਾ ਕੋਈ ਕਿਸੇ ਕਿਸਮ ਦੀ ਜੇ ਕੋਈ ਰੱਬ ਨਾ ਕਰੇ ਇਸ ਤਰ੍ਹਾਂ ਦੀ ਐਮਰਜੈਂਸੀ ਹੋ ਜੇ GPS ਸਿਸਟਮ ਲੱਗੇ ਹੋਏ ਨੇ ਆਪ ਵੀ ਅਸੀਂ ਚੈੱਕ ਕਰ ਸਕਦੇ ਹਾਂ ਕਿ ਗੱਡੀ ਕਿੱਥੇ ਹੈ
In order to run this high-tech ambulance service efficiently and provide rapid assistance in villages and cities, the government has established a network where a dedicated helpline number 108 and 24/7 call centers help direct immediate assistance to patients in an emergency situation.
ਐਂਬੂਲੈਂਸ ਦਾ ਤਾਂ ਬਹੁਤ ਜ਼ਿਆਦਾ ਫਾਇਦਾ ਹੈਗਾ ਐਮਰਜੈਂਸੀ ਦੇ ਵਿੱਚ ਐਂਬੂਲੈਂਸ ਦੇ ਥਰੂ ਆਪਾਂ ਪੇਸ਼ੈਂਟ ਨੂੰ ਬਚਾ ਸਕਦੇ ਹਾਂ
This is proving very helpful in saving lives in critical cases of road accidents and heart attacks. Punjab government, foremost in public welfare.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with 2 major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है आँख नहीं फूटती धूम में फटदनी से चाय बना ले बहुत सहूलियत है हमें इसकी
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1,86,00,000 परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले।
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1,500 crore rupees on it.
Hello and welcome to KYC. I am Sharad Dubey and let's start the show. And also a warm wishes for our entire audience, wishing you a very happy new year, happy 2026. But today on the show is a company where I'll give you some hints. Try to guess it. It has been buzzing a lot over the last 3 trading sessions in the small cap space. The company has received a 6,200 crore windfall, and remember, the market cap is on the lower side. The company will be transitioning from the specialty chemical side to a copper play. Lot of industry headwinds were there in the old business, so let's see what happens ahead. And the company is likely to announce a special dividend for the minority shareholders. And lastly, the company is planning to become debt free as well. Big debt levels coming in. So you must be wondering, which is the company? The company which we are talking about today is going through a big change, inflection point. But are the minority shareholders or the markets convinced? That's the question I will be asking the management, and also my analysis will be there at where does the company stand. The company's name is Kiri Industries. Everybody is talking about it. So over here we will be looking at this company, how it's going to transform from its current play of just a die and an intermediate manufacturer. It's a very commoditized business, but company says it's a specialty chemical business. And we will be talking about some critical questions. First one is this operational profit turnaround. What happens to the core legacy business? Does it come back to the EBITDA profits? The second question I'll be asking is, minority shareholders need special dividend. How much will it be? Will it be less? Will it be more? Because it has tested the patience of most of the investors, this counter. And what is India-Asia copper project? They have a windfall. Now what they do with this copper business, we'll be asking all the details to the management, and the role of green chemistry products. Will this improve the realizations? That's what we'll ask Manish Giri. He's the chairman of Kiri Industries, and the margin outlook for the die and intermediate segment. That will be another important questions we'll be asking. So the management is here, and Manish Giri, the chairman and MD, that's whom we'll be posing all our important questions. And a lot of retail investors have written to me for the analysis in this setup. But before the analysis starts, let's give you some details of flavors about what's the company all about. The company is very much important, and then we'll explain you the ratings, how it goes in our show at KYC. The company manufactures die intermediates and basic chemicals. That's why perhaps the market has not given premium yet. The completion of a die-star stake sale, that is where the war chest comes in. A company which was very basic, a 10-year-old legal battle, and now a huge windfall coming in the company. Now what happens with the windfall? They will receive roughly 689 million on December 30th, 2025. Recently they have received it, and the amount is 1.7 times of the market cap. Look at it. The market cap itself is just 1 rupees. 1.7 is the additional money coming into the company. The legal overhang, it has been for years and years, and now that has come down. So of course it will help out with the lower finance cost or the lower legal cost as well. Now the company will diverse away from a struggling chemical dye business. It has been under the dumps, and now it will move on to the copper segment in the Indo-Asia copper flagship. Now that is where the diversification takes place. And we'll be wondering with this diversification what actually happens. There will be an integrated copper smelter and fertilizer complex which will be located in Gujarat. That's the initial plan coming in. The project cost will be 10,661 crore rupees. Roughly, you could say there might be some debt included also going ahead for this kind of a payment coming in. Now they're aiming for a strong expansion also in the trial production. The target, that's where my concern is also, it's December 2028. That means it's going to take at least, you could say, 3 more years tons per annum. That is something which I talk about. That's the overall, you could say parameter to judge the company on. And the dyes business outlook, it has reduced its FY26 revenue guidance by 20% to 1200 odd crore rupees. That means the pain is still there. Q3, Q4 numbers will reflect that. Guidance reduction led to headwinds in the existing dyes business. So literally the dyes business is a kind of dying. Expecting a 12,000 crore revenue by FY27-28 overall currently on the old legacy business. And management's execution is a huge risk for just the common business I'm talking about, not the copper business. Over that we'll of course come into it. Also this FY27 and FY28 outlook. Apart from that, let's understand what actually is the KYC show. We have 8 ratings where we give the company a number coming in. There is an income statement, balance sheet, cash flow, return ratios, and of course there is a shareholding, street cred. Street cred is nothing but the stock price movement which has happened, be it 1 month, 6 months, 1 year, or even 5 years. What return the company has given to the shareholders, valuation and outlook. That is also something we will be looking at for. And apart from this, the first parameter is the income statement. A lot of retail investors of the company had written to us to analyze this, and now we are analyzing it, and that's where my concern starts creeping into this company. 3-year CAGR is just 3%. Be it revenue, be it EBITDA, be it PAT, there's literally nothing there to watch. The company has been deeply impacted in the past because of these numbers, and because of that, and I haven't seen any kind of good green shoots also coming in, and management stated that guidance is being reduced for FY26. That means Q3 numbers might be muted, and Q4 also nothing much would be coming in. So because of that, I'll start with the thumbs down when it comes to the income statement. Let's go for the second parameter, and that is the balance sheet parameter, and that will be also very much important. And largely the book values in the higher side, and that's around 3,200 odd crore rupees. And the concern is for borrowings. Borrowings is something which is very much important. Why? I'll tell you later on. Also 1,222 crore rupees of borrowing is there. Now almost 6,200 crores of inflows come in from the taxation settlement which has come in, and likely that this number will become zero. So that's actually a good point, but that's future looking. I judge a company on these financial numbers actually on what has actually happened. That's the important criteria I set up for my show, and that's around 180 crore rupees of cash balances coming in definitely. But net because of just the cash balance suggesting some liquidity help in the company, I'll give a neutral rating when it comes to the balance sheet. Also, apart from balance sheet, cash flows are very much important in this kind of a business, but I doubt the cash flows will be for uniform or not, and it's largely erratic, and that's where my concern again comes back. PAT, there's nothing happening here. The losses are there. At times they are widening, at times they're coming down, but they are still the losses. That's the concern. Operating cash flows is just, it's been a massive outflow coming in, at least in the FY25 numbers. Net cash flows, it is very small, and it's kind of a lot of movements is happening. Definitely a big cause of concern if you're studying these numbers. So for that, cash flow also I'll give a strong thumbs down when it comes to Kiri Industries. Also, apart from cash flows is the return ratios, and there hasn't been anything, and I'm really sorry. The entire charts are not there, but the ROC is not meaningful at all for the company, and that's one of the biggest concerns for me, because there isn't much there, ROC, ROE numbers, and there's a prolonged weak profitability which has come in, and because of that, return ratios also will be a strong thumbs down. So financials, we can say out of 4 ratings, 3 of them have received thumbs down, and that's a very big concern coming in, and all these concerns will be addressed by Manish Kiri, who's the MD chairman at Kiri Industries. The 5th one is the shareholding pattern, and interestingly, the promoters have been lapping up stake, 26%, then in March 25 it was 31%, and then in September 25 also it went up to almost 37%. But institutional support largely not coming in. That's an interesting thing. FIs are holding stake, minor profit booking coming in, but concern is domestic institutions very less or negligible. Interestingly, the public kind of interest has come down from 48% in March. That has actually come down to 40-odd%. But nevertheless, the retail activity is there. It's on the lower side. So that's something which we'll also think about why. Apart from shareholding pattern, which I've given a neutral rating, we move on to the street cred. 1 month stock has been flat. Of course, there was a 20% up move when the announcement has come in, but after that, it was selling started happening in key industries counter, and literally that news has absorbed, and it's almost 0% gain. 6 months, 12% down. Year to date, 4%. And concern is definitely there. 2% it's up, in 1 year. So nothing has happened to the shareholders who have been positionally holding this counter, and last 5 years also nothing has moved. It's 10% up only. That means each year at an average 2% the company has returned to the shareholders. So shareholders are waiting for this company. What reward will they give? Is it just the stock price increase, or will there be some special dividends, because a huge windfall has come and a demand is coming in from the minority shareholders that they need something. Of course, we will be also tracking this counter, but for my side, it's a thumbs down. Moving on, valuations. 2 names I have picked up. One is Kiri Industries, trailing 12 months P is 10 times, and Ultramarine Pigments, that's around 13 odd times. Technically, both of these counters are in an industry right now which is largely a commoditized play right now, and there's nothing much premium we should assign either of the counters, and that's what the market and the analysts have told me. Valuations for the time being, I'll just give a neutral as a benefit of doubt, but it's nothing that the stock might command a valuation premium. So we need to figure out, futuristically how things change. Will this be only a chemical play, or now a copper play comes in? Then of course the valuations will start changing. But apart from this, of course, peers, we go into the next rating parameters, and that is the outlook. That's the last but the most important thing in my analysis, because now the company is only future forward looking, and if you just remove the past in the last 7 rating parameters in KYC, this is the future. Now they have reduced their business guidance, and that's one of my concerns, which is definitely there, because this number will be actually shown in FY 27-28. This 6,200 crore windfall, that's what everybody is talking about, and we will also understand where will this money actually go, how will it diversify. Also, apart from this, looking at the outlook, the company is expected to announce a special dividend. Now, how large it's going to be, that is something we will be looking out for, and the management has to say what's going to happen next, and they'll make the company debt free. That 1,222 crore debt I spoke about, that's largely going to become zero, and the transformation into a copper play. Now it's not a chemical company anymore. Now it moves on to the copper. So how much benefits will come in, what are the synergies, what are the timelines, we'll give you all these details. But as of now, outlook is a neutral rating. But net, my concerns are all there in the financial aspects, and it has not been, satisfactory, and the concerns are also there on street cred. Some benefit of doubt, of course, given on shareholding and valuation, and outlook also. It is very, very optimistic, but I have taken a cautious approach, because the FY 27-28 numbers, still it will come from the existing legacy business. But of course, future is definitely there, which the street is actually looking out for. So net, for my KYC rating, I will be giving Kiri Industries 2 out of it, on the lower side of my ratings. But to understand more why this is there and the future what it is, there's a 2 different school of thoughts. I had a chat with Manish Kiri, the chairman and the MD of Kiri Industries, and asked him on the 6,200 crore windfall they have received, what's the specific percent of this cash where it's earmarked, whether it's for immediate distribution versus the reinvestment into the copper project. Do listen in.
See, majority of the funds which are coming in are going to be reinvested for the future growth. And that is what feedback we have been getting from many investors, shareholders, and during a lot of conversations which have taken place over a period of last 2 to 3 years. So it would be a small portion of the receipt which would be distributed as the dividend. Otherwise, the majority of the amount is going to get invested into future projects, and that is how we are going to create value for the shareholders. The percentage or how much quantum that would be has not been decided yet. The board will take a view and decide in the next few weeks, and will announce accordingly.
All right, in the next couple of weeks, our dividend announcement is likely for Kiri Industries. That's what the management is stating. But Manishji, the DY-Star dispute has taught a hard lesson to the minority, operation. That thing was there. But for your new subsidiary, which is Indo-Asia Copper, what governance structures are you putting in place to ensure that in future strategic partners cannot trigger a similar decade-long legal deadlock?
So there are three things which we have done to ensure that we learn from the history. Number one, Indo-Asia Copper Limited is 100% subsidiary of Kiri. There is no foreign partner. There are no partners. It's wholly owned subsidiary of the company, and it is going to be that way. Number two, we have strengthened the board of IACL, and we have got very good people who have long years of experience in governance, projects, banking, as well as legal, all. So we have strengthening the board and the governance of IACL. Number three, we have taken on board very experienced team, a management team, a separate management team headed by the separate CEO for the sector who is experienced in the sector. And we will ensure that the entire investment remains in India, is going to be a India-driven, India import replacement project. So there are things which we will be doing in IACL that would be unique for catering the growth of the country along with the replacement of current imports.
All right, but my question again comes back to the proceeds. Now, do you intend to make Kiri Industries a zero debt company using just a small fraction of DY-Star proceeds before committing to a new project debt?
Yes, absolutely. It is going to be a zero debt company. And as we speak today, in a matter of a week, it is going to be a zero debt company.
In just a matter of week, Kiri Industries is going to be a zero debt company. That's a very important statement coming from the management. But the Indo-Asia Copper project is a massive leap from the specialty chemicals to metals. Since trial production is targeted for December 2028, how will you ensure there is no execution creep coming in the cost or escalations in the timelines during this 36-month construction phase? There is still some time. Delhi abhi bhi dur hai. What's your take on that?
See, there are certain measures which we have taken. We have taken on board very experienced project management and execution team, along with an external well-known project management and execution company. We have done quite a substantial work on ensuring that our vendors are selected properly. So very stringent vendor selection process we have gone through along with the experienced team, and we have ensured that every project execution risk is mitigated. So these are the factors will ensure that we are within the time frame of the announced deadline before which we will make the project operational.
All right, Manishji, coming back to the core business of dyes, revenue went 23% up in Q2, but there was an EBITDA loss, and there is always a quarterly overhang of, the legal cost which was coming. It was having roughly between 7 to 10 crore rupees per quarter. Now, exactly when do you expect the standalone dye business to return to double-digit EBITDA margins? Now that big overhang is done. So I want your view on that.
So now, having legal costs done with, we are not expecting much legal cost to come. It will be sharply dropping, expecting to go to zero within a quarter. But that would improve the bottom line significantly. So in addition to having a beta positive, which we have been, bottom line would also turn positive soon. The dyes and intermediate business has been also going through quite challenging market situation over a period of last 2 years. So these are the factors which are affecting the the profitability of that business. But as we just mentioned, the standalone business, the traditional business in a debt-free form, is going to continue and that would be helpful to have it in an auto mode and cash generation situation going forward. We are not expecting quite a significant growth coming forward from the traditional business. We are sitting on significant capacities in India, so we are not investing any new funds into the dyes, the current business, and that is the decision of the board taken few years ago. But you will see that in a steady state, profitable, if not single digit, lower double digit EBITDA, and we will ensure that it functions in a cash generating mode.
All right, so important statement coming in from the management, a lower double-digit EBITDA for the dye business. But this dye and intermediate business, it's a very important thing you stated, that no chance of making capex expansion on this old business, and you should be, because it's just 48% capacity utilization was there in Q1 FY26.
Exactly.
And the global textile recovery, it's still there. Globally, some places it's definitely happening. Just give me a ballpark figure. What's the utilization levels you're targeting for FY27? And also, tell me, are you exploring any new green chemistry products to improve the realizations? That's my additional question to you as well.
2026 and 27, if the capacity utilization reaches to 70% of existing capacities, we would be happy. And that is the internal target that we have kept. Looking at the overall textile recovery which is expected, and looking at the restructuring which is taking place after our exit from Dystar, we might be able to have some improvements in the market share. So that would allow us to increase our capacity utilization going forward in the next 2 years. With regards to the green technology, I would be very happy to to mention to you that almost all facilities of Kiri today are zero liquid discharge. So we are reducing our carbon footprint. Entire power requirement, energy requirement is changing to renewable energy very soon, in a matter of months. And in addition to that, we are introducing few more products which would be produced only from the recycled material. So that would allow us to contribute to the circular economy in the dyes and intermediates industry as well. So these are the initiatives that we are taking to be more sustainable, to have more contribution to the recycling concept, and also adding renewable as a part of our energy requirement.
So definitely when you add this renewable segment as well, does it incrementally help your margins out also?
Yes, exactly. It would also expand our margins. Agree with you in a few years to come. Exactly.
All right. Thank you very much, Manish ji, to taking out your time and speaking to NDTV Profit. Stay tuned to KYC, and Happy New Year to you as well.
Thank you.
खुशियों का है मौसम, जश्न मनाओ, नए साल को दिल से गले लगाओ, सपनों से भरी है दुनिया हमारी,
सरप्राइज! SIP के साथ लिखी अपनी कहानी।
नए साल के साथ नई खुशियाँ आई है, नया साल संग अपने नए सपने लाई है, नए साल के साथ खुशियाँ आई है।
कामत जी की तरह आप भी नए सपनों के लिए एक सोचा समझा निवेश कीजिए। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Aam Aadmi Clinics transform healthcare. The Aam Aadmi Clinics set up in August 2022 have transformed the primary healthcare system in Punjab. A total of 881 Aam Aadmi clinics, 565 in rural areas and 316 in cities are offering free of cost medical consultation. 107 essential medicines and 47 diagnostic tests to the people in Punjab. Facilities include anti-rabies injections and free consultation, tests and treatment for expecting mothers. Each Aam Aadmi clinic provides free of cost medical care to 80 to 85 patients daily.
मैं ਪੰਜਾਬ ਸਰਕਾਰ ਔਰ ਮੁੱਖ ਮੰਤਰੀ ਸਾਹਿਬ ਭਗਵੰਤ ਸਿੰਘ ਜੀ ਮਾਨ ਦਾ ਬਹੁਤ ਹੀ ਧੰਨਵਾਦ ਕਰਦਾ ਹਾਂ ਕਿ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਦਵਾਈਆਂ, ਫ੍ਰੀ 'ਚ ਹੀ ਰੇਬੀਸ ਦੇ ਇੰਜੈਕਸ਼ਨ, ਡੇਂਗੂ, ਮਲੇਰੀਆ ਸਾਰਿਆਂ ਦੇ ਇੰਜੈਕਸ਼ਨ ਸਾਨੂੰ ਉਰੇ ਫ੍ਰੀ 'ਚ ਹੀ ਲੱਗ ਜਾਂਦੇ ਆ। ਇੱਥੇ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਸਾਰੇ ਟੈਸਟ ਵੀ ਹੋ ਜਾਂਦੇ ਆ।
The scheme has benefited around 4 crore 25 lakh people so far. Chief Minister Bhagwant Singh Mann has decided to add 236 new clinics to take the total number of clinics to 1,117. Some of the clinics will be equipped with AI-enabled instruments and mobile medical care. WhatsApp chatbots are being used to set up follow-up reminders and send test results to patients.
WhatsApp पे आपको मिल जाएगा, पर्ची भी नहीं रखनी पड़ेगी, कोई दवाइयों की लिस्ट, कोई दवाई कब लेनी है, याद करानी है तो उनको याद कराना, ये सब कुछ WhatsApp पे कर दिया हमने। दिस इज अ ड्यूटी ऑफ ए गवर्नमेंट एक्चुअली। हेल्थ केयर में ड्यूटी बनती है हमारी लोगों की सेहत की चिंता करना, ख्याल रखना, चिंता करना।
Punjab government foremost in public welfare.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Gewan.
Our next category is Actor of the Year Female, and to give away the award we would like to invite Dr. Payal Kanodia, Chairperson and Trustee, M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Presented by The Bold Look of Kohler. Co-presented by Royal Ranthambore Premium Golf Accessories. Foundation partner Kamala AGG Trust. Associate partner Charge Zone, powering the future, and MG Select. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. 5th January 2026 on NDTV Profit, for your profit.
A good day of trade on Dalal Street as markets climb today's high level driven by heavy buying in the index heavyweights. Nifty nears lifetime high while broader markets mirror benchmarks. Autos and metals lead the gains while FMCG trades with cuts. ITC continues to trade with cuts, hitting the 52-week low level as multiple brokerages downgrade the FMCG major following the steep hike in excise duty on cigarettes. Sapphire Foods and Dyani International announced a landmark merger to create India's largest quick service restaurant platform effective from 1st of April. The merger will be executed through a share swap agreement, consolidating iconic brands like KFC and Pizza Hut under one umbrella. Auto stocks climbed following a strong December sales across two-wheelers and passenger vehicles. M&M, Maruti and Eicher post robust performance while exports surge for Bajaj Auto as well as Hyundai. Electra Green Tech confident of selling near 2,000 electric buses in FY26. Management tells NDTV Profit that they are eligible to apply for 1,700 e-buses under the new CESL tender. Stock trades with a healthy gain. Good afternoon. You're watching Markets at 12 with me, Mahima Vacharani. On this show, we get you updates on the top buzzers and news updates at noon. But first things first, let's take a quick look as to how the markets are doing. Well, the markets probably are celebrating New Year just a day after the New Year. And today is the day when the Nifty 50 is trading comfortably above the 26,200 levels. In fact, now 80 points above that 26,200 levels. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are actually, making sure that the Nifty sees a good life high today. There is counters like Reliance, which is doing fairly well. Trent also seeing good gains in terms of where the counter stands. You have counters like Adani Enterprises and Ports also doing fairly well. Coal India, NTPC, Hindalco, Jio Finance, Bajaj Finance, Maruti Suzuki are some of the counters which are trading anywhere between that 1 to 3% So that's with regards to where the Nifty 50 is concerned. I think the only laggard which is pulling the Nifty down right now is ITC, because of which this the stock which is down almost 4% in trade. And in fact, the lowest target price right now by brokerages on the ITC is 340 and the stock is currently trading at 350. So we'll have to see whether it reaches the 340 level and whether a further downgrade from brokerages will be seen on ITC or not. So that's with regards to where ITC stands. Nestle also slightly under pressure, down 1%, followed by something like a Shriram Finance, which is seeing profit booking today. Let's try to pull up the sectoral heat map and see as to what sectors are doing in trade today. In terms of where the sectors stand, of course, auto and metal seeing good gains. Nifty Bank also up by about 1.2%. Nifty Energy also seeing gains of about 1.4%. The only sector in the red is Nifty FMCG, largely dragged by the major ITC in terms of where the sectors are concerned. Let's try to pull up the broader markets, the mid-cap 150 and the small-cap 250. The mid-cap 150 also in tandem with where the benchmarks are, up 0.7%. The small-cap 250 also in line almost with where the benchmarks are, up by about 0.6%. Let's quickly pull up the advanced decline ratio to see as to how the stocks are doing in the broader end of spectrum. You have around 1,818 odd advances versus that of 638 odd declines. So almost in that ratio of 3:1, where the chart has been widening throughout the day in terms of where the advances stand. So clearly in the favor of the bulls is what we are seeing for the markets. Lastly, the BSE 500 quickly if we can, to see as to how the broader end of spectrum is doing. There's Radico Khaitan, which is seeing a lot of pressure in trade today. A big name like ITC on that chart. Something like an Embassy Development is also down by about 4%. Sapphire Foods seeing that pressure. Probably investors, who are not interested to switching to something like a Devyani are exiting the counter, down by about 3.7%. Aditya Birla Sun Life, Dr. Lal Path all down by about 2 to 3% each. But on the flip side, you have something like a Bosch, which is doing very well, up 7.6%. Something like a JBM Auto, which is up 6.5% as well. IDBI, MMTC, SJVN and Jamna Auto all seeing gains about 4 to 6% each. So that's the view with regards to where the markets stand. But, with regards to where we're just 39 points right now away with regards to where the Nifty is from touching its all-time high. So the countdown is really nearing. And we'll have to see whether that happens in today's trade or not. Just 38 points away from the all-time high of 26,325 is what we're seeing for the Nifty 50, now almost about 38 to 39 odd points. So that's with regards to where the Nifty, of course, is concerned. But shifting focus to an interesting conversation, India's biggest risk heading into 2026 remains the tariff, right? Environment, because even as domestic demand holds steady and growth expectations improve, and also FY26 GDP forecast has been revised up to about 7.3%, which was kind of helped by recent upside surprises through the pace, and overall this pace is unlikely to kind of moderate in FY27. And to speak more about this in detail, we're joined by Dheeraj Nim, who is the economist strategist at ANZ Research, joining us now. Dheeraj, thank you so much, first of all, for taking out the time, and a very happy 2026 to you and your family. Recently when I was talking to Nimesh Chandan of Bajaj Finserv, and we were discussing about how there are 4 cycles as to how the economy runs into, right? There's economic, there's profit, there's credit, and there's sentiment. While all the other 3, that is economic, profit, and credit, are now in place, I think it's just the sentiment that is still waiting to pick up, and tariffs is probably the only reason as to why the markets are also probably why the markets are also still kind of in the consolidating phase. I'll take this up with you. Entering into 2026, how do you think the sentimental cycle can see an upturn once we see some positive momentum towards the tariff news?
Well, thank you very much for inviting me on the show. I completely agree. It is the sentiment that remains very downbeat, quite in juxtaposition to what the economy has been doing or faring for the past few quarters. Look, going into the FY27, we have forecasted GDP grow at 6.5%, assuming status quo on tariffs, which is because we don't know when the trade deal would be signed, what the fine print would look like. So for now, for the sake of prudence, we have assumed that US tariffs remain, and Indian economy can still clock about 6.5% GDP growth in real terms. Now, while this is of course lower than our forecast of 7.3% for FY26, I would like to acknowledge that 6.5% is a fairly robust outcome when you consider the state of the global economy. And I think it sort of testifies to the resilience that Indian economy has in terms of its new growth drivers and the reliance it has on domestic demand, which seems to be consolidating in the last few months. In fact, we have an in-house growth nowcasting model which tracks about 40 high-frequency indicators that continues to point that India's growth is still holding up in 6.5% to 7% range, which is a very encouraging outcome. Now, would it mean that the sentiment reverses on its own, even if a deal does not happen? Well, certainly not. We believe that the US tariffs are fairly steep, are fairly going to hurt India's relative advantage in global trade. And even more worrisome is the downstream impact on jobs in a lot of low-tech sectors, so employment problems, and you can think about private consumption issues and the fiscal burden coming out of it. So I think markets are broadly reflecting that sentiment. Now, if we have a favorable trade deal, which means that we get a reciprocal tariff rate in the range of 15 to 20% as most of the other Asian peers, I think the sentiment can quickly reverse. And financial conditions, as the economists call them, can actually, ease a bit on account of inflows that can come back from foreign institutional investors. But having said that, I was just listening very keenly to your commentary on the broader markets. We're just, stone's throw away from the lifetime high. So I think markets, in a way, have performed also very resiliently. But of course, we are noticing a lot of pressure on the external accounts because of the outflow story.
Absolutely. And I think, when I was going through the report that, you as, your research team shared, there was also a point that stood out for me, which was with regards to current account deficit, which is expected to widen according to you. And this is on account of gold imports and weaker exports from the US. Just want to understand as to how are you penciling, the entire chain of this import-export, and in terms of the way we've seen the rally in gold and everything, how are you calculating this deficit to be going forward in 2026?
Right. So look, behind the current account deficit dynamic, of course, like you pointed out, gold prices are a problem. And as a house, we don't really expect that they will subside very easily or very quickly going into 2026 because of the elevated geopolitical uncertainty and several other factors. Gold prices could very well remain supported. Now, going into 2026, 2027, we are forecasting, assuming status quo on tariffs. that the current account deficit could land in 1.5% to 2% of GDP range. Now, this is, of course, much wider than the outcomes we have seen in the recent past, but of course, still better than the worst outcomes we had seen in the last decade and a half. So what I'm trying to allude to here is there's a certain resilience around India's current account deficit now than it was, let's say, 10 years ago, thanks to a very strong services and a secondary income flow surplus that we accrue from remittances. And that has come to cushion a widening goods trade deficit. So between the last, I think since 2022 and now, the goods trade deficit has widened quite notably while services surpluses continue to rise. So this dichotomous trend has provided an overall cushion to current account deficit. And even with the US tariffs remaining where they are, we think that the current account deficit next year could remain below 2% of GDP, which in a way is fairly sustainable if there is a turnaround, for example, in capital flows and sentiment with respect to the Indian economy after the spate of corrections we have seen across asset classes in the recent few weeks.
With regards to inflation, right, while the recent numbers came in and gave a comfort, out there in terms of where the inflation numbers stood, the question really that an Aam Aadmi had was that even if we're seeing the inflationary numbers at lower levels, we are kind of not feeling that, right? It's not being felt on your pockets right now. At least that's the common view that a lot of our viewers had. So your view with regards to, of course, this, and how are you viewing inflation in 2026?
Right. So look, inflation with respect to how people feel it, etc. I completely agree with you. There's a bit of a recency bias when we think about prices and the purchasing power. We as economists are very good at calculating real purchasing power of incomes, but general people are not. And that's the factor we need to bear in mind, because while price inflation is low, it is not negative. Prices are not falling, versus they were last year. And a lot of it is concentrated in a few items in the consumption basket, specifically within food. So the broader spate of goods and services that households are consuming are growing at a fairly decent pace in terms of their price inflation. Look, around 3 to 4%. If you track core inflation, it is about 3% if you exclude gold on the trend basis. And I think that's why the lived reality of inflation could feel different from what the numbers are indicating. Of course, apart from this, the bigger view is that a consumption basket that we track for the calculation of CPI needs to be updated. I mean, it's based on the consumption basket which prevailed more than a decade ago, and it's rapidly changed since. But I think all of those criticism withstanding, because the disinflation is so narrowly based in the CPI basket, the lived reality is different from what the numbers are telling. Now, going into FY27, our view is that inflation is set for a turnaround because, one, the base effects fade away. In the sense that, the base turns unfavorable from a very low inflation this year, the next year inflation numbers could look slightly larger. And therefore, we think that CPI inflation could be about 4.2% in FY27, which is still very close to the 4% target and should not feel highly inflationary to the common man or to the policymakers. But it is, of course, not going to be as low as it was in FY26.
Okay. All right. So that's the view with regards to where inflation stands. And hopefully, the consumption bar that you were talking about going forward with everything that's happened with GST cuts, consumption from here on should only pick up is what the street will also expect. So, Dheeraj, thank you so much, of course, for taking out the time and giving us all those insights, and a very happy 2026 going forward.
Thank you.
All right. So with that, that was the holistic view of what you can expect in 2026 with regards to inflation, with regards to how, economics will stand in terms of where tariff is concerned, and what you can expect in terms of, your pocket being felt light or heavy going forward. But with that, let's also welcome in Narendra Solanki, who's the Senior VP and Head Fundamental Research Investment Services at Anand Rathi Shares and Stockbrokers, joining us now. Narendra, thank you so much for taking out the time, and of course, a very happy 2026 to you and your family. I think we are very near to the life high for the Nifty 50. Any quick view entering into 2026, and any particular picks that you have for us in 2026?
Yeah, good afternoon, and a very happy new year to you and to your viewers also. Definitely, the markets have started off 2026 in a positive stance and optimism. And I think with result season also just a few days away, starting from 12th, I think the markets are now eyeing two key events. One is, of course, the result season, and the second is the budget season is also almost on the horizon. And in few days or so, I would be start hearing different kind of new cycle in regards to budget as well as results happening. On a broader sense, I think the markets are very decently placed for the year, wherein we see H2 earnings, especially Q3 and Q4 earnings, should be better than the first two quarters. And then we are also heading in, we would also be seeing how the on-ground impact of the announcements the big announcements made by the government and the rate cuts impact also coming in this year, which should also support the overall growth and also the liquidity measures which the RBI has also announced. So all these three, four things coming into the play this year should support the overall sentiments as well as growth for the market. So I think apart from the global uncertainties, from a domestic point of view, do not see any kind of a major unseen risk which the markets may have not priced in so far. So I think we are set up for a good earning season as well and a good growth season this year. Now.
Okay. I'm sorry, Narendra, if I've missed any picks that you've given for us in 2026, maybe top two, top three?
I think from a sectoral perspective, autos still continue to look very good. Autos and auto inquiries both we continue to remain very positive. And one stock which I would like to recommend is that from manufacturing space is APL Apollo Tubes. If you see their yesterday's flash numbers, which they have reported highest volumes in terms of tonnage, 916,000 plus volumes. That is 11% growth. So that has also been a very impressive number. The company is having a market share of more than 40% in their structural steel segment. And with the kind of power projects, manufacturing capex happening, and also we are seeing a lot of infrastructure projects. So a lot of demand is also there for these kind of projects. So from a long-term perspective, I think this space is also very interesting. And then we are also continue to remain positive on healthcare space. So mostly we are very positive on the domestic sectors. And now capital goods also looks very interesting at this space, wherein we have seen a lot of correction happening in this space. So right now, I think we are well poised to see some kind of bounce back in the cap goods sector as well.
Right. Okay, Narendra, thank you so much for giving us those insights and, of course, taking out the time and speaking with us at NDTV Profit. All right, the other two counters that are in focus today, and probably the story of the day, is Dyani and Sapphire. And this is on the back of the merger being announced for both of these counters. So what will happen is that Sapphire is going to get merged into Dyani International. This is going to happen via swap transaction. So there's going to be a swap ratio where around 177 shares of Dyani International are going to be issued to shareholders of Sapphire, which is going to be in the ratio of 177:100. In terms of Dyani, it is going to pay a one-time fee to Yum as a brand, which owns KFC and some other brands, towards the merger expenses, and that is also at a very well negotiated level. So it's a win-win situation for both of these counters, especially for Dyani International. Now, why this merger? Of course, this is going to bring potential synergies in terms of EBITDA margin level at around 2.5%. The overall synergies expected post the merger happens in the next 2 odd years is expected to be anywhere between 210 to 255 odd crores. This is as per Dyani International's recent presentation, and this is going to, of course, create one of the largest QSR companies in India, and strong balance sheet is going to support overall accelerated expansion as well going forward. In terms of financial synergies, once both of these are merged, overall the merged entity is going to have over 3,000 stores. Revenue is going to be at around that 7,800 odd crore. This is as per the recent numbers of Q2. EBITDA at that 1334 crore, margins at that around 17%. Both of them have the same range of EBITDA margin, so that's not going to be a problem. And borrowings at that 951 odd crore. Lastly, in terms of timelines, of course, once the NCLT approval is received, the merger is expected to be completed in the next 12 to 15 odd years. So that's with regards to where the entire merger of Sapphire and Devyani is concerned. So that's with regards to where Sapphire and Devyani is concerned. But the other counter that is in focus since yesterday is ITC. Now, the way we've seen the counter sinking and how the least target price given by brokerages, as I was mentioning earlier, is 340 and the stock is currently trading at 350. So the question really here is that if it touches the 340 levels, will we see any downgrades further from brokerages or not? So what has basically happened is that overall government has levied additional excise duty and health cess on tobacco as well as pan masala products. Manufacturers will probably pass on this entire cost to the consumers, because of which their volumes will get impacted. And overall, if the cost is not passed on, margins will take a hit for companies like ITC, Godfrey Phillips and VST. Now, price hikes could be anywhere right now between that 20 to 40 odd %. So your cigarettes will get expensive by that 20 to 40 odd % going forward. Now, in terms of valuations, if you take a look at how cigarette is being valued as a part of the whole ITC business, which of course has various businesses like FMCG, agri, paper, etc. ITC was around that 25% of, cigarette business was around 25% of their overall business, which is now going to be around that 15 to 17 odd %. So valuations for it will come down considering the EPS downgrades and EBITDA downgrades. In terms of the other business outlook, however, FMCG is something that is going to expect positive volumes coming in, considering the GST rate cut which has already come in, and paper acquisition of Century Paper is also going to bottom out in FY27, and from there on we're going to see benefits coming in from that business as well. Plus, the dividend yield of ITC has always remained strong. With regards to the dividend yield, it's at an average of 4% and payout also at around that 85 odd %. The expectations going forward from brokerages are also that the dividend yield is going to remain in that 4% range. But of course, a lot of brokerages have downgraded the counter, and there are EPS and EBITDA cuts also coming in from a lot of brokerages. So that's with regards to where ITC is concerned. But as I was talking earlier about the Sapphire Devyani merger, what does that actually mean for you as a shareholder? Whether there's going to be any tax implication? To understand that, we're joined by Badri Narayan, who's a lawyer, joining us now. Badri Narayan, thank you so much for taking out the time. My first question, because a lot of viewers would want to understand this right now, whosoever is holding that Sapphire share in that portfolio or Devyani International in their portfolio would want to understand that once the merger happens, once the swap ratio is being credited to their account, will that attract any kind of tax liability or not?
Thank you. I think first and foremost, this is a great news for the industry of the DIL and SFIL merger. It's been something which everybody has been wanting for a long period of time, and will consolidate the brands under a very strategic center. As you know, this will be going through as a merger scheme, and in a merger scheme, basically the shareholders of SFIL will now have be holding 177 to 100 shares in DIL. So there will be one company, DIL, which will be there. As you know, this will be under Section 47 of the Income Tax Act and under Section 232 of the Companies Act as a scheme. Under these two provisions, when read together, these are tax neutral transactions, which means that the shareholders will not have to pay any taxes on the share swap which is happening. So this is a completely tax neutral, very, very clean transaction. We do not expect any implications for the shareholders. The other question that keeps coming up from a tax perspective is, I have been holding, say, Sapphire shares for more than 3 years. Now I get Devyani International shares immediately. And if I decide to offload the share tomorrow, would I have to pay short-term capital gains or long-term capital gains? That also is protected. The shareholding will be reflected as of from the date you hold the shares in SFIL, and therefore we do not see any implications changing merely because of this share swap. So in summary, there should not be any tax implications for the shareholders of SFIL who are now going to be holding shares in Devyani International going forward.
Okay, but in terms of where a particular investor is holding Sapphire Limited from a really long time and is going to be credited with Dyani International, is there going to be any kind of lock-in that is going to be in place in terms of where from a taxation point of view to make sure that there is no tax attracted going forward?
No, so there is no lock-in period with respect to shareholders. They are free. That's what I was explaining. That the period of time when you held the Sapphire shares in SFIL will be reflected as if you've been holding Dyani shares for that period of time. So typically, for example, you are then able to sell these shares going forward. There could be certain provisions in the scheme which might limit certain shareholders from being able to offload for a period of time. I have not looked at the scheme in detail, but my expectation is that the public, which is holding shares in SFIL, which is Sapphire, should be in a position to transact in Dyani as if they've been shareholders of Dyani from the time they've been holding Sapphire shares.
Okay, all right. So, it's very clear, viewers, right, that there's not going to be any tax implication for you going forward once, after the entity gets merged and the extra shares of Dyani International are credited to your demat account. Badrinarayan, thank you so much for taking out the time and, of course, helping our viewers understand the tax implications for this particular transaction. So, thank you so much for that. Viewers, we are completely out of time on this edition of Markets at 12, but do stay tuned. More news and updates on the other side lined up for you.
Agarwal Packers and Movers Limited. Man with the cap. Now 300, 300, 300.
Rangla Punjab means more than just development projects. It is a vision to bring back a Punjab that is healthier, drug-free, greener, more educated and truly developed. To turn this vision into reality, the Punjab government, under the leadership of Chief Minister Bhagwant Singh Mann, has launched the Rangla Punjab Society. This unique initiative brings together non-resident Punjabis, which are NRIs, local citizens, corporates and well-wishers to directly participate in building a better tomorrow for Punjab. The core of Rangla Punjab is transparency and public participation. Every contribution goes straight to verified high-impact projects without any middlemen or political interference. These funds are used to strengthen healthcare, improve education, upgrade sanitation, power and water facilities, build better roads, support agriculture and boost rural development, all with the aim of making Punjab cleaner, safer and more livable.
ਰੰਗਲਾ ਪੰਜਾਬ ਜੇ ਬਣਾਉਣਾ ਉਹਦੇ ਵਾਸਤੇ ਸਿਹਤਮੰਦ ਪੰਜਾਬ ਪਹਿਲਾਂ ਚਾਹੀਦਾ ਹੈ 96 ਤੋਂ 97% ਲੋਕ ਜਿਹੜੇ ਨੇ ਉਹ ਮੁਹੱਲਾ ਕਲੀਨਿਕਾਂ ਚੋਂ ਠੀਕ ਹੋ ਕੇ ਘਰੇ ਵਾਪਸ ਚਲੇ ਜਾਂਦੇ ਨੇ ਸਰਕਾਰੀ ਹਸਪਤਾਲਾਂ ਤੇ ਬਰਡਨ ਬਹੁਤ ਘਟ ਗਿਆ
Beyond physical infrastructure, Rangla Punjab supports innovation, startups and research that create jobs, empower youth and help build a drug-free, future-ready Punjab. Rangla Punjab is not just a fund, it's a people's movement.
ਮੈਂ ਪੰਜਾਬ ਨੂੰ ਦੁਬਾਰੇ ਪੰਜਾਬ ਬਣਾਉਣਾ ਚਾਹੁੰਦਾ ਸਾਨੂੰ ਲੰਡਨ ਪੈਰਿਸ ਕੈਲੀਫੋਰਨੀਆ ਬਣਾਉਣ ਦੀ ਲੋੜ ਨਹੀਂ ਰੰਗਲਾ ਪੰਜਾਬ ਬਣਾਉਣਾ ਚਾਹੁੰਦਾ
It invites every Punjabi from villages to global diasporas to join hands in creating a prosperous, modern and people-first Punjab.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है आँख नहीं फूटती धूम में फटदनी सी चाय बना ले बहुत सहूलियत है हमें इसकी
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले।
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
I love you.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए।
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं। मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख DTH और केबल ऑपरेटर्स पर उपलब्ध।
Hello and welcome to Profit Buzzers. You are watching NDTV Profit with me, Sharad Dubey and Puneet Zaveri. Let's look at the markets, how they are faring, and both the indices, the benchmark indices I'm talking about, Nifty and Nifty Bank at the day's high level. This is just the second day of 2026 and now we are seeing some good positioning happening and a basket buying happening across the sectors. Just the one sector which is underperforming, that's the FMCG pack, and especially because of ITC there are some downgrades coming in this stock and that's why we are seeing some kind of selling pressure. But largely let's look at the sectors, how they are performing, and most of the sectors are doing really well. And energy pack, especially led by Coal India, recently the news flow also came that foreign companies can participate in these auctions. Apart from this, auto stocks have been doing well on the back of December numbers. Realty, last year it was beaten down and now there has been a buying coming in these counters. Most of the stocks, their NAV is lower than their current market price. PSU banks also holding strength, and even the banking names are there where we are seeing good up moves. Also, if you look at the companies itself, some value buying coming in from Trent, Maruti Suzuki and Bajaj Finance as well. And broader indices, if we have a look at it, the advanced decline ratio is certainly in the favor of bulls, and that ratio which is there, it's almost 3:1 in the favor of them. Largely the small cap indices and the mid cap indices, they are outperforming the markets, and that signifies a decent breadth in the market. And the volumes, they have started to pick up, but they're not very strong as well. But definitely we'll be looking out more institutional bets as and when time comes, especially from Monday onwards when FIs start participating in the Indian markets as well. But in the menu list, what are the stocks which would be featuring, Puneet?
Well, most certainly it's a very interesting trading session today, because you are seeing stocks like Electra Green Tech being one of the key ones. We are starting off with that. Now, they have started off with a greenfield EV manufacturing plant in Hyderabad. This will take the manufacturing to 2,500 units per annum, and this is much higher than what they sold in the entire year for FY25, which was 972 units. So you are seeing a strong reaction on that counter. JBM Auto also likely seeing a positive, rub-off reaction on that note as well. But there have been some key updates, and Q3 earnings will be key for the company. There is competition intensifying in the electric bus segment. We spoke to the management also of Electra Green Tech on CESL tender win as well, and we'll get you that buy during the show. But overall, these two counters are the key ones. Sapphire Foods as well as Dyani International are the other couple of them. They are going to merge together starting April 1 of 2026. It's a key approval. While a lot was, around in media reports for the last few months, the transaction has now been completed. And you did see a reaction on the positive side for Dyani, a negative side for Sapphire. But they seem to have subsided as of now, closing very close to yesterday's closing levels as well. Smartworks is the other one, and we are starting to see brokerages lighten up to this company. Kotak has initiated coverage on the stock with a target price of 600 rupees per share. RR Kabel, Citi has maintained a buy rating, and they are positive, getting out a report of a 90-day positive catalyst on this counter. But, let's also look at the other key stocks that are also in focus. PG Electroplast is definitely one of them. We'll bring you some key updates because it is the only EMS company that has given positive returns, and that's 15% in the last 3 months, while all the others have seen a negative reaction of 14 to 22%. Keynes Technologies is down almost 45% in the last 3 months, but PG Electroplast, definitely one that you have to have on your radar. Indian Bank has reported a strong Q3 update, and so has South Indian Bank. So those two counters are continue to be in focus. Bansal Wires has come out with a update for Q3 where the sales volume are up 32%. The stock up 6% as was up 6% almost an hour ago and continues to maintain that positive reaction. Bosch also is having a very strong move after a fall that has happened over the last few weeks. So that counter was up almost 6%, and it's an expensive stock to say the least. So definitely one that is having investor interest, and Q3 will be key for this company as well. And finally, Bajaj Auto. Now, the company came out with its December sales update today morning. It was the last one in that pack, and it has been a disappointing number. You're also seeing Hyundai show a similar reaction on the downtick. These two companies have reported numbers which are below street estimates, while all the other 8 auto companies, the likes of Escorts, Ashok Leyland amongst others, have done quite well. So that's the menu list for in Profit Buzzers today. But Sharad, in terms of some key stocks that you are tracking, what are those?
Puneet, interestingly, let's get in our technical guest also, Akshay Bhagwat. He joins in. A very warm good afternoon to you and happy 2026 to you, Akshay. Akshay, I'll start the rapid fire round, which is very much important with the stocks which should be in focus. And in this entire setup, I would be requiring your views in a very fast manner. The first one is Electra Green Tech.
Good afternoon and happy and prosperous 2026 to you and your entire team. So first of all, I think Electra Green Tech is the stock you asked for. So technically, yes, it is forming a short-term bottom at 1200. A trading bounce back till 1320 is likely in a time frame of 8 to 10 trading sessions.
Okay, another pair of Electra Green Tech, JBM Auto. What will be your view?
For JBM Auto, again, if you look at the price structure, there is a good recovery in the last 3-4 days, and this recovery can extend all the way till 740. So short-term positive view with the support of 600.
All right, 2 stocks and one. Sapphire Foods, Dyani International.
For Sapphire Foods, I think it's more of a neutral setup, so there is no fresh trade recommendation. 270 is a very strong resistance, and I think JBM Auto is the other stock you mentioned for. I think JBM Auto 740 is the target you can look forward to.
All right, is there a positional trade coming up for Smartworks co-working?
For Smartworks co-working, the way the setup is positionally, it might take some more time. 2 to 3 months of holding can see the stock retest 600 levels.
All right, and the cable wire segment that's been buzzing, RR Cable, what's your view on that?
For RR Cable, well, see, technically, it is more a neutral setup. It is picking up traction, but still, as the current technical setup goes, being a neutral setup, buy and hold, but do not recommend any fresh trade as of now.
All right, that's the view coming in. Thank you very much, Akshay, for joining us at NDTV Profit. Over to you, Puneet.
Well, the other key aspect that we are looking at is Electra Green Tech, and we have to continue monitoring the stock because there have been legacy issues that have highlighted the company in the past, and with the change in management starting September of Mahesh Babu Subramaniam, who was the ex-CEO and managing director of Switch Mobility, the EV business of Ashok Leyland, has likely put the foot on the pedal and seems to have showing some results. Now, stock's almost up 4.4% as we speak, and the management highlighted that increasing capacity, which was one of the major talking points for Electra Green Tech. When we last spoke to him in September as well as in October, he highlighted that by the end of this year, calendar year 2025, the capacity will come on stream, and that has happened. We actually had a chance to catch up with Mr. Mahesh Babu Subramaniam, and we will get you that conversation, but as highlighted, as visible on your screen right now, the distance to all-time high is not that away, just 21 points, and this is in context to what's happening with ITC as well. Yesterday, almost 82 points on the downtick contribution to the Nifty on the negative side of ITC. Today as well, if you can pull that counter up and see the Nifty contribution of what's happening with ITC, it will give you that perspective. Despite that, when you look at this counter, ITC contributing 31 points on the downside. So over the last 2 days, 110 point negative downtake on the Nifty has been led by just this one stock, ITC. And despite that, we're now above the 26,300 level. It shows you the significance of this move which we're seeing on the benchmarks, starting off with 1st January as well. And in the last couple of days, it has been a key one as well. So we will be counting down those 20 points and get you more perspective as well once that happens. But overall, the all-time high, not too away, we are about 26,300. But pull up Electra Green Tech again. And the reason is because the management highlighted on the company's growth roadmap as well as what he expects from the year ahead. Let's listen into what he had to say.
Firstly, wish you and the viewers a very happy New Year. I think we are very happy to announce that we have fully commenced the operation of phase 1 of our manufacturing facility. We can make about 2,500 buses per shift, and we can always double the shift and increase the capacity as we want. So the primary focus is to stabilize and consistently make products. So if you look at the registration numbers till now, as we are number 1 in last year with a registration close to 900 plus vehicles. This year in the 3 quarters, we have already achieved a registration of 950 plus vehicles. So we are looking at a very significant growth with the quarter looking at to deliver more vehicles in the coming quarter. So consistently we want to improve and we want to deliver as we progress.
So then 100% capacity is going to be around 5,000 units is what I understand. What is the timeline that you will go to 5,000 units, at full capacity?
See, first we want to get into second shift with the existing expansion, phase 1. And once the market can absorb more than 5,000 vehicles in 2 shifts, then we will expand very quickly. Because if you look at the plant has a much higher capacity, and we have already done the construction to cater to the full capacity of the product. It's a question of increasing the equipments and manpower and setting up the facilities to expand as we want. So we are pretty much on the pipeline. We are looking at the market. As long as the market can absorb 10,000 plus vehicle, we can as well do it in the coming financial year.
Mahesh Babu, this is Neeraj Shah here, and at the outset wishing you a very happy 2026.
Yes.
But my guess is that this is not the only expansion, because from what I remember, Electra is in a series of capacity expansion plans, some small, some large, some greenfield, some brownfield. What's happening there?
See, right now we are into product expansion portfolio. So if you look at right now, we are in buses and we have done about 100 electric truck pilots so far. And we are planning to, the truck industry is also going to come in electric in a big way in the coming years. So we are looking at expanding into different segments. So while the bus capacity has been expanded to 2,500 into 2, let's say, in 2 shifts, we can do 5,000. We are also parallelly setting up capacity to build electric trucks. So this capacity will be ready in the coming financial year. And we are looking at expanding in truck segment in the next financial year while we are expanding in the bus as well. We are also looking at multiple portfolio, looking at where we want to play in the electric and commercial vehicle field, and that strategy is being worked out. We are investing on technologies, we are investing on products, and we are looking at, already we have invested on the capacity. So I would say that we are fully ready for taking up the EV expansion in the future.
Tippers, trucks, battery energy storage systems, there's a lot, there's a lot happening out there. But there are capacity constraints as well, right, Mahesh Babu? I mean, I think the depot infrastructure delays, as per a lot of notes, have impacted the large STU orders. What are you doing out there, if something can be done in an immediacy, to kind of offset the impact of those challenges?
So, Neeraj, as you said, the manufacturing capacity alone doesn't play an important role in EV adoption, particularly buses. I think the infrastructure, power requirement in depots, STU's readiness to deploy them in their respective routes which they have identified, all of them play an important role. So, as you know, the electric bus is close to a growth, and we need to be very, very prudent in terms of manufacturing and deploying them as quickly as possible. And we can't keep this supply chain choked with only just manufacturing the vehicles and not able to be deployed. So, we are very, very prudently looking at the expansion of manufacturing, suiting to the requirement of depots, deployments with various projects. If you look at it, if you look at Vahan and Telangana registration as of today, we are number one in e-bus registration. So we are continuing to commit our deliveries as the market leader in electric bus segment, and we will continue to do that and also work with STUs and other state transport undertaking to ensure that the infrastructure is also working well, and we'll be able to deploy as soon as possible the buses which we manufacture.
Well, that was the management of Electra Green Tech, quite positive on multiple key factors. But let me also welcome Prashant Apse, the Senior VP Research Analyst at Mehta Equities at this point of time of the show. Prashant, very good afternoon and thanks so much for joining in today. On Electra Green Tech, let me first ask you a question on that, because we have seen that before the new Managing Director and CEO joining in, there were some legacy issues, and that seems to be taken care of one at a time. Now, capacity has come on stream, 2,500 units in phase 1, going to phase 2 with 5,000 units as well. But it's not a very cheap stock. So how would you want us to look at this aspect? Because in terms of sales momentum, it has steadily increased. What should we look at for Electra Green Tech, and does it make it to your buy list, given that we have a lot of other listed players also that are operating in the space, the likes of JBM Auto, and you can play it indirectly via Tata Motors and Ashok Leyland and VECV as well. So how would you look at this space?
Very optimistic, I think, the way how the sector is moving forward, and even the center is thinking of some kind of policy for the commercial vehicle like bus and trucks, and where Electra Green is perfectly fitting into. I think having a biggest capacity will give a lot of advantage when it comes to center focus on giving some incentives towards the companies like the EV companies like Electra Green again. But again, yes, there is a huge demand which is going to coming few quarters or few years. I think the Electra is getting ready for those kind of order book management system. But I guess the legacy was there again, that has been, I think, fully managed or discounted in the price as of now. Currently on the valuation side, I guess it's still on the very expensive space. But again, I think the way how the outlook remains very optimistic with respect to order flow, with respect to the growth expected for next 12 months from the current years, I think this valuation suits such kind of growth going forward. So overall, I am very much bullish on this sector. I think government is going to think a lot of policies for such kind of issues where Delhi is facing with respect to the climate and all. So I think overall the trend looks very positive. Sector is very optimistic right now.
Prashant, also a very quick view on the EMS space as well, because today, we've seen stocks like PG Electroplast continue the momentum, and of course, there was a big drop in those shares, almost 49% till October 1st. So in the last 3 months, the stock's given 15% returns. But I also want to quickly highlight Dixon Tech and Amber, if you can pull those stocks up as well, because under the third round of the ECMS transaction, they have gotten approval. And this is a key one, especially for the likes of Distinct Technologies, because the name was missing in the first 2 rounds of the ECMS scheme. Now, this is, of course, the component scheme where the government will incentivize a lot of the EMS players to invest and have that exposure towards component as well. So, Prashant, in that space, I want to quickly ask you a question on Dixon Technologies, because the stocks corrected massively from the highs over the last 3 months, down almost 20 to 22%. Is this one which makes it to your list, and how do you see the new approval that's come in also? Because while we are still awaiting updates, Dixon had highlighted on the camera assembly that they had applied for under ECMS, and they've gotten the approval now, and better late than ever. So how do you see it?
I think the worst is over for the whole segment right now. I think government is also giving some kind of good push towards the sector growth. The way that it has been performing from last 2-3 months, I think the government has seen such kind of pressure, which will also indirectly dent their business also. So for me, Dixon looks very attractive at this point of time after the a recent correction from almost 17,000-18,000 to almost 12,000 to 12,500. That gives an advantage for valuation correction, as well as the visibility for the growth would be very positive. I think 1 or 2 quarters there may be some kind of pressure in the EBITDA margins, but I think post that again that business can continue. There is a huge opportunity from a shift from Chinese manufacturing to India manufacturing hub from global brands. I think Dexon, PGML, PGEL will see some kind of good growth for next 12 months. So overall, very optimistic.
That's the optimism for discounters which Prashant was talking about. But ITC for the last 2 days, it has been on a major drag. There's a big detailed deep dive analysis which Mahima is getting it. Mahima, what is the overall analysis for ITC right now? A lot of announcements have come in, views are there. What's your view?
Basically, just to give viewers, of course, a perspective of what happened yesterday. So there's going to be an additional excise and health cess levy on tobacco as well as pan masala products, and this will, lead to overall volume decline because companies like ITC are going to pass on the benefits to the consumer. So volumes for them will go down, and overall, if they don't pass on the entire cost to them, margins will squeeze overall. And price hikes for as of now, what brokerages are penciling in is that price hikes will be anywhere between that 20 to 40%. Now, to understand as to how valuation generally happens for ITC in different categories, around 25% of valuation was coming in from cigarette business, which might go down to anywhere between 15 to 17% going forward, considering the EPS cuts and EBITDA cuts that brokerages are penciling in. So that's with regards to where the valuation stands, and probably FMCG is the business that will pick up from here on, considering the GST cuts that have come in. That will augur growth for volumes in the FMCG business of ITC. So going forward, that is the business that might pick up in terms of volumes, and cigarettes is where the volumes will come down. In terms of the paper acquisition of Century Board, that is also something that is going to bottom out in FY27 and is going to start giving synergies from FY27 onwards. So that is also a business that will augur growth for ITC going forward. In terms of where the dividend yield payout is concerned, ITC has always been shareholders' favorite in terms of where dividend payouts. The average dividend yield is around 4% with almost an 85% payout in average. If you take a look at the last 2 odd years, they've given dividend yield of 3.8 to 3.9%, and payout has been in that 55 to 84% range. And estimates as per brokerage also suggest that the yields going forward in 26 and 27 is going to be around 4% and 4.1% going forward. Now, in terms of the EBITDA and EPS cuts by brokerages, Nuvama has cut EBITDA by 7% each for FY27 and 28. Antique has also reduced FY27 and 28 EBITDA estimates by 9 to 11 odd percent. And DAM Capital has also kind of cut down their EPS estimates by 8 to 9% for FY27 and 28. Now, in terms of downgrades, a lot of brokerages today have come out and downgraded ITC for now, and also given EBITDA cuts. JP Morgan has revised it to neutral with a target price of 375. Morgan Stanley has given an equal weight with a target price of 366. Jefferies has given a hold rating right now with a target price of 400. Nuvama also a hold rating with a target price of 415. For MK, it is they've revised the rating to reduce with a target price of 350, and Motilal Oswal has given it a neutral rating for now with a target price of 400. So this is the overall view of what this means for ITC. Of course, 2 businesses going forward are going to take over probably over the cigarette business, but we'll have to wait and watch out for as to exact financial impact. What will that be?
Thank you very much, Mahima, for that. But Prashant, is the street punishing ITC counter a little bit too much? Is it more exaggerated selling now? What's your view on that? And fundamentally, now what happens?
I think yes, the street is giving a lot of more pressure towards the price action. I think historically, whenever government has done such kind of hikes in the excise duty, so slowly or the later way, ITC passes on the price hike or the excise to the consumer. So that will happen very slowly. But again, immediately, if you see some kind of impact, obviously the immediate rise cannot be taken in the current market. So another 3 to 4 months, I think that 2 to 4 rupees kind of hike can be easily passed on to the customers. So I think with that optimistic view, I think for me a very positive momentum where I'm getting almost 15 to 16% discount for last average prices. So overall, I will have a hold rating on this with a positive outlook for long term, but maybe some kind of pressure going forward for a very short period of time. So overall, fundamentally, I think there will not be big impact. I think the impact of cutting down the EPS growth as well as EBITDA margins will be immediate for 1 or 2 quarters, but on a full year basis, that will be passed down.
All right, but now KFC and Pizza Hut, same company it becomes. Just to put it in perspective, Sapphire Dyani Groups, their merger that's expected to be effective from April, and it's a merger through share swap ratio, and the rationale of course is that there would be some kind of a benefit. The synergy benefits would be coming in, a better balance sheet would be there. This industry itself, you saw it was plateauing with the growth rates, and that's what it makes important, that more buying happens, consolidation happens, and this is what is there. It might be first of many, that's what investment bankers tell me, and the timeline of course is going to take 12 to 15 odd months, and brokerages have given thumbs up. I just want to get you on this, Prashant. Now what happens for the industry, for Sapphire Dyani, what's your view on that?
For two companies, when they get merged, there will not be meaningful impact with respect to the consumer behavior. The way how the footfalls are growing from last many quarters, I think that is not so suitable for a company like this to have a good growth going forward. They are doing it at the best level to make sure their balance sheet and their P&L level looks good at this point of time. But again, valuation still, even after the merger, if you understand, the valuation will remain very expensive. But the growth concern still remains because of the competition in the markets, and there are a lot of branded, unbranded things which are coming into market and making sure there is a tough competition for KFC as a business. But yes, this should be a leader in that, good brand, good strategy. But for me, it's a avoid kind of list.
All right, so avoid is coming in for these players because they need to show the growth as well. Thanks a lot, Prashant, for joining in and giving your views on the stocks and even the market. That's all, folks, for Profit Buzzers. Stay tuned to NDTV Profit.
सत्तर 75 वर्ष के हम ये कोई कागज नहीं थे अब जो है अपन साइट हुई अपन ले अपन धारो
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Smartworks Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी अब उस भूमि के नाम पर वह कर्ज ले सकती है व्यवसाय कर सकती है
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
I love you. टीवी पर पहली बार
तुम कभी नहीं बदलोगे मैं प्रेग्नेंट हूँ
मैंने बोला था बच्चा रखने के लिए
सिंधु अपने घर में नहीं वो लोग घर छोड़कर चले गए हैं
मैं उसे कभी माफ नहीं करूंगा हमें किसी की जरूरत नहीं हम जी लेंगे
डैडा यू आर द बेस्ट डैड
परिवार के साथ होगी नए साल की शुरुआत डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर सभी प्रमुख DTH और केबल ऑपरेटर्स पर उपलब्ध
Foremost in public welfare, transformation of land and property registration. Punjab government has transformed the process related to registration of land and property in Punjab. The complete digitization of easy Jama Bandi and easy registry processes has significantly curbed red tape and corruption in the state. Online tools like Draft My Deed and Calculate My Fees has helped almost 40 lakh people avoid queues at the offices of Patwari, Sub-Registrar and Fard Kendra or Land Revenue Records.
ਜੇ ਸਾਰੀਆਂ ਸਰਕਾਰਾਂ ਨੂੰ ਹਟ ਕੇ ਕੰਮ ਹੋਇਆ ਜੋ ਈਜੀ ਰਜਿਸਟਰੀ ਹੋਈ ਆ ਇਹਨੂੰ ਹਰੇਕ ਬੰਦਾ ਬਹੁਤ ਹੀ ਸਖਾਲੇ ਢੰਗ ਨਾਲ ਸਮਝ ਰਿਹਾ ਹੈ ਇਹਨੂੰ ਯੂਜ਼ ਕਰ ਰਿਹਾ ਹੈ
The digitally certified Jama Bandi receipts have QR codes and digital signatures. Besides downloading them from the website or WhatsApp, these receipts can also be received from Seva Kendras or helpline number 1076. In cases of death, citizens can apply for mutation or registry in any sub-registrar's office in the district. Online tracking and time-bound resolution has been set up for every application. For instance, a time limit of 2 days has been fixed for registry and 30 days for mutation.
ऑनलाइन रजिस्ट्री आप भी लिख सकते हो गवर्नमेंट वालों लिखा हुआ एक ड्राफ्ट माई डीड
ਇੱਕ ਆਉਂਦਾ ਉੱਤੇ ਕਲਿੱਕ ਕਰਕੇ ਤਾਂ ਉਹਦੇ ਵਿੱਚ ਸਿੱਧਾ ਸੌਖਾ ਪੰਜਾਬੀ ਚ ਕਰਤੀ ਰਜਿਸਟਰੀ ਵੀ ਆ ਵੇਚਣ ਵਾਲਾ ਆ ਖਰੀਦਣ ਵਾਲਾ ਇੰਨੇ ਪੈਸੇ ਇਹਦਾ ਕਲੈਕਟਰ ਰੇਟ ਹੈ ਇੰਨਾ ਤੇ ਹੁਣ ਇਹਦਾ ਮਾਲਕ ਆਹ ਹੋ ਜਾਊਗਾ ਤੁਸੀਂ ਆਪ ਸਬਮਿਟ ਕਰ ਦਿਓ ਜਾਂ ਫਿਰ ਸੇਵਾ ਕੇਂਦਰ ਉੱਥੇ ਖੋਲਤੇ ਤੁਸੀਂ ਉੱਥੇ ਕਰਵਾ ਲਓ ਲਿਖ ਕੇ 1 ਮਿੰਟ ਚ ਆਨਲਾਈਨ ਹੋ ਜਾਊਗਾ।
Punjab government, foremost in public welfare.
It's fresh, bro, straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है, आँख नहीं फूटती धूप में, मैं फटदनी से चाय बना ले, बहुत सहूलियत है हमें इसकी।
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले।
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1,500 crore rupees on it.
Benchmarks hover close to today's high, Nifty more than 40 points away from all-time high. Energy, auto and real estate lead the gains, FMCG on the back foot. Tobacco shares like ITC and Godfrey Phillips see a sharp decline after the Finance Ministry notifies February 1st as the effective date for levying additional excise duty on tobacco products. This new duty comes in addition to the existing 40% GST, and this is the second consecutive session of decline. Vodafone Idea shares rally after its UK-based promoter Vodafone Group commits 5,836 crores under a restructured contingent liability deal stemming from the 2017 merger. And M&M reports a strong performance in December driven by SUV sales. Overall sales see 25% growth in December. Eicher Motors also sees a healthy December as exports contribution rises. And Hind Copper maintains a positive outlook as the management tells NDTV Profit that the company is focused on maintaining 40% EBITDA margin in the year coming by. The leadership also sounds bullish on price upside and aggressive exploration plans, signaling confidence in growth and expansion. Welcome back. You're watching Profit Buzzers on NDTV Profit. What a day for the markets. You are seeing life high levels, I would say, in the short time. Bank Nifty is already at record high levels. Nifty 50, 26,292. We did reach that 26,300 mark. Receded slightly, but we're just a couple of points away when you talk about record high levels. Let's pull up Bank Nifty as well. That is already at record high levels as we speak. 60,100 is what you're tracking on that front. Almost a 0.7% up move. And it's the PSU banking space, which is seeing, what, a third or a fourth consecutive session of gain. Let's just pull up a 5-day chart of the PSU banking index, and that will tell you the entire story when you talk about the PSU banks in trade today. If we can just have the PSU banking chart on the screens, and then we'll quickly look at the contribution to Nifty 50. The PSU Bank Index also at the day's highest levels as we speak. 4.5% up move coming in the last 5 trading days. Let's look at the Nifty 50 contributors and see what that is looking like. And where is the strength coming in from? HDFC, ICICI Bank, both the private banking heavyweights contributing. RIL on the Morgan Stanley noticing gains of 20 points in terms of contribution, and it's close towards its record high levels as well. Coal India as well is firing in today's day of trade. ITC is the sole loser. Again, marginal negative contribution coming in from the likes of a Bharti Airtel, Shriram Finance, which is seeing profit booking after that stellar run that Counter had seen. Let's look at the broader markets as well, and then we look at the sectoral heat map. In terms of the broader markets, if you look at the mid cap 150 and the small cap 250, let's see if they are actually mirroring what's happening in the markets. Again, at day's high, 0.7 to 0.8% higher on the mid cap index, and if you have the small cap index as well, that is seeing gains of around 0.5% in trade. Let's look at the sectoral heat map to understand which are the sectors which are contributing, because it was mainly consumption that was down in trade when we started off in today's session. The same picture continues. FMCG down 1.2%, but your consumer durables index, which was also in the red in the morning, has turned into the positive. Apart from that, you have auto, which is one of the top gainers in today's day of trade. Real estate also on the back of the sales data in the metropolitan region has hit records in the month of December, and that's the reason why you're seeing those kind of gains come in when it comes to real estate. Private banks trading in the positive in today's session as well. So across, you're seeing that buying interest in the beginning of the year, which is a key positive that we should be tracking. But moving on, while addressing a press conference on the government's decision for the third tranche of approvals under the electronics component manufacturing scheme, MeitY Secretaries Krishnan announced clearance of 22 applications. Let's listen and then we'll look at all the stocks that were announced as well.
Tranche, we are approving totally 22 proposals. 2 of them in the area of capacitors with a total investment of 560 crores. 1 in lithium-ion cells with an investment of 2,922 crore. 1 in laminates, copper clad, with an investment of 368 crore. 3 in the space of enclosures with a total investment of 27,166 crore. 9 in PCBs with a total investment of 7,377 crore, which are spread almost across the country at different locations. 1 in anode material, which is 1,835 crore in terms of investment. Connectors, 1 of 61 crore. Display module subassemblies, 1 investment of 524 crore. Camera module subassembly, 1 investment of 550 crore. Optical receivers of small form factor, pluggable, 1 investment of 52 crore. Aluminium extrusion plant for mobile enclosures, 1 investment of 449 crore.
Okay, so that's the word coming in from the MeitY Secretary. Now, Hindalco is one of the companies. Dixon Technologies is one of the other ones. Let's pull up both these counters and see what they are doing in trade as we speak. Because, again, Keynes Technologies, Sirma, Avalon Technologies, PG Electroplast, Centum Electronics. These are companies which do stand to benefit. You've seen that marginal spike that has come in as well. Some of the companies already trading with smart gains on the back of this announcement. It's only Centum Electronics which is trading at the day's low. So this is going to be an interesting development that we should be watching out for. But moving on, it's time to have that commodity conversation. What's interesting is we're mirroring the start of 2026 when it comes to commodities as it was in 2025. The gains have started to flow in yet again when it comes to gold, silver, platinum, copper. The expectation is also very high from India Inc. that the kind of rally copper could see from here on. Let's get in Kunal Shah, Head Commodities Research at Nirmal Bang. Kunal, welcome to the show. And wishing you a happy new year as well. My question to you is the kind of start that we've seen for the commodities universe as a whole, from base metals to precious metals, maybe ferrous, non-ferrous. It seems there is no stopping after that mild correction that we saw towards the end of the year as well. Let's break it up. Let's start with gold and silver.
I think gold and silver out of these two commodities, gold looks much better for the year 2026 because the gold silver ratio, which was 105 during the second half of 2025. So I think in the month of April 2025, it was 105. Now that has come down to 55. So I foresee from here silver should not outperform and gold should. So we are slightly positive on gold. We are not very bullish, or neither we are advising to increase allocation at these level, but we feel that the fundamental for gold are still bullish for the year 2026. There are a lot of uncertainties on the monetary front, on the fiscal front, in the Western central bankers. People are still want to be in precious metal because there is a fear that the dollar index can decline quite sharply. Federal Reserve has started to expand its balance sheet again, and that's the reason why we are seeing all asset class rising together. Like you were saying just before this segment started, equities are on the verge of making new highs. Again, S&P 500, Nasdaq, Dow Jones, all of these indices are also moving up. So the Federal Reserve has started to expand its balance sheet, and interest rates are likely to go down. So the money is losing value, and that's why commodities you should continue to remain invested in. Even though there can be a volatility about of profit taking, whatever it comes, but commodity on a larger front will still continue to remain one of the most favored asset class to be in a scenario, because the paper currencies are likely to lose their value, and hence commodities should really appreciate going forward. So your wealth will be protected if you are in commodities. That is the overall take. So silver, we are expecting 15 to 20% upside conservatively, and gold, we expect to give you return of 10 to 18% during the year 2026. And return expectation is tapered down, but the outlook is still bullish.
Okay, outlook is bullish, return expectation could be tapered down. Kunal, how will factors like, say, your global economic growth, inflation dynamics, the trajectory when it comes to the US dollar and interest rates influence this commodity prices? Because the commodity super cycle that everyone is talking about, is this early bull market expected to continue then in 2026? I know we are taming down expectations, but overall, if you have to look at the macroeconomic factors, what could be the risks?
Okay, so in 2007-8, we used to really keenly track the demand and supply, and we used to determine the outlook of commodities. I think all those old traditional theories are no longer working. Right now, the markets are behaving and the commodity prices are moving up because the investors across the globe have started to take this asset class as more of a strategic asset class. So from globalization, we are moving towards multipolar world, and it seems that from globalized, we are going backwards. So that's the reason why whoever possesses the commodity. So for example, if India has a power consumption and the power demand and AI data center boom is going to take place, we'll need more power and more copper to transmit that power. So price is not important. If we don't have copper, then it's going to be a big problem. So right now there is a rush to procure these commodities because the multipolar world continue to remain there. The US tariffs have caused a lot of disturbance in the globalization trend, which has been going on from last 20-25 years. So I think it's more of a strategic asset class rather than just the normal demand and supply. So even if the demand of some of the commodities may remain subdued, I mean, most of the industrial metals, the demand growth in China is 1 to 2%. But in spite of that, we are seeing commodity prices have shot up by 35 to 40%. So the traditional demand theory doesn't work. You have to view commodity as more of a strategic asset class, and hence you should remain in it.
What about energy? With the supply growth currently outpacing demand, with the oil surplus, which is probably deepening, what is your forecast when it comes to Brent crude and WTI in 2026?
I think oil prices are going to move up in the year 2026. It's a completely contrary view, which I have. The main reason is anything below $55 in WTI is going to cause a lot of the shale oil producers to cut off their production. So I think the production is going to go down going forward. Permian Basin, which remains the key basin, where the oil supply growth used to come. I think this basin is showing signs of exhaustion. Number 3, China and US likely to build their strategic petroleum reserve if oil goes below $55. And from last 2 years, in spite of the fact that the EV revolution is going on,
Okay, I think, we've just lost
So
Kunal's feed, and we will try repatching him again as well. I think he's back. Yes, Kunal.
So, oil demand from last 2 years is growing at 1 million barrels per day, okay, which is still a good growth considering there is a revolution going on in the world. So, I think even if this year, if the demand growth is 1 million barrels and the supply side starts shrinking, I think oil prices should move up to $65 to $70 per barrel. So it's a complete contrarian call right now, and I'm positive, I'm bullish on oil, and I think this year oil can deliver you 10 to 15% return on a conservative basis.
Okay, so that's with regards to oil as well. Kunal, my last question is running slightly short of time, but in terms of base metals, despite the slowdown that we're seeing in the Chinese property sector, the investments in renewable energy and infrastructure as well, do you think that could affect the stability from a longer term perspective when it comes to copper and aluminium?
I think, like I just said, it's a strategic metals. And right now, what China is doing is China is cutting the smelting capacity of these metals. Okay. So China is tapering down the capacity of copper, aluminum by 10%, 15%. And the concentrate market is already in deficit. There is a tightness in the concentrate market. The quality ores are very difficult to find in case of copper. So, even though there was a slowdown in Chinese property market, these two reasons, and like I said, strategic asset class, these are the reasons why metals are doing well. And I believe that copper will be the new gold for the year 2026. I'm expecting a humongous upside in copper prices. Already they have rallied by 35%. From here also, if they rally by another 20 to 25%, I will not be surprised. I'm very, very bullish on copper. The tightness in the concentrate market and expectation of cut down in the refining capacity. The treatment and the refining charges are at zero level in China. So I believe that the supply of refined copper is going to be a big problem going forward 6 months down the line. In fact, in India, on MCX, copper prices are trading 110 rupees per kg above than LME prices. So there is a tightness in the physical market, and I think that is going to drive copper prices the way silver and gold rallied in 2025. That's going to be the same case for copper in 2026.
Silver and your copper is going to be the new silver and gold. Thank you, Kunal, so much for joining the show. Always a pleasure to get your views as well. So that was Kunal Shah from Nirmal Bang. But moving on, the auto pack has been in focus as well with the numbers the way they have panned up in terms of the month of December. We did speak to Ashwin Patel, Head of Fundamental Research at LKP, where he talked about how CVs and tractors are something to watch out for this year, and probably the tide is turning for the two-wheeler space as well. The sector is at record high levels. Let's quickly listen into what he had to say.
The tractor segment is doing fantastically well with the super monsoons. The reservoir levels are quite high at this point in time. The kharif output has been good. The rabi sowing has been quite good. So I think the tractors is going to play the best within the overall auto segment. Followed by, I guess, now it's time for passenger vehicles as well as two-wheelers. I mean, it's very difficult to pick which sector is going to do well, but even the commercial vehicles have started doing well before the overall capex outlay or the government spending has come into play. So I think each and every segment is doing fantastically well. The tractors, commercial vehicles, I think these two segments will be to be washed out in calendar year 2026.
Okay, so that's the view coming in when it comes to the auto pack as a whole. But on to the corporate management segment. We had a chat with Amit Kalyani of Bharat Forge, who said that he wants to achieve really the 2,000 crore milestone, and he has a lot of new things for India and global markets. In fact, we also spoke to Sundaraman Ramamurthy, MD and CEO at BSE, who gives the outlook to his investors for the next 2 to 3 years. But let's quickly listen in.
The 2,000 crores is a milestone on the journey that we want to take. We want to build this defense business into a large, platform business where we'll have multiple domains, significant platforms, and multiple technologies in this business. which will play across various platforms. So I'm confident that 2,000 crores is something we will achieve on a 4-quarter basis for sure. It just depends on which quarter what happens, and therefore which 4 quarters you can count. But going forward, this will all stabilize as the orders go from the trial phase to the steady phase. Because if you look at ATAGS itself, it's a large order. So those are all going to start playing out. And what I was saying is that besides just what we've already shown, we have a lot of new things that we're doing, which will be products which we will support or offer to both India and the global markets.
For my shareholders' perspective, what we are working upon is to ensure this growth phase continues, sustains and continues, sustain and continue to grow. How do you do that? You have to concentrate on the following 5 areas. How do you diversify your revenue streams? We have already started, as we discussed some time before. Technology infrastructure building, human infrastructure building, technical capabilities building, physical infrastructure building. These are the 5 areas where we are clearly working upon, so that as a company, to my shareholders, I will be able to continue to provide sustained growth at all points of time.
Okay, so that's the corporate radar that we're looking out for. But Varsha joins in now with the buzzing stocks in trade today. Varsha, over to you.
Well, thank you so much for that. Let me start with stocks which are buzzing on the back of Q3 updates. You have Indian Bank, wherein total business is up almost 13.4%. Gross advances, if you see, is up 14.5%, and the domestic CASA ratio stand at around 39% versus 40% a year ago. Then you have South Indian Bank, wherein deposits are up 12%, gross advances, if you see, are up almost 11.3%, and the CASA ratio stand at around 31.8% versus 31.15% last year. Moving on, NLC India is in focus. The stock is buzzing because they've transferred 7 renewable energy assets to ARM NLC India Renewables, and of course all the power stocks, if you see, are buzzing in trade on the expectations of on the good power demand, and on the expectation of good announcement coming in budget. Also you have Time Technoplast, wherein they've approved to manufacture 2-liter high pressure Type 3 composite gas cylinder, which are used in your compressed gas applications. This is the first company in India to get approval for multiple high pressure gas cylinders, and they've already been approved for oxygen and breathing air cylinders, and these are basically higher value advanced products. So overall, these are all the stocks which are actually buzzing on the back of news flows.
Okay, so thank you so much for that. Interesting names coming in there. But moving on, you have Eternal and Swiggy that have been in focus since the 25th on the back of the gig workers strike that has been discussed since quite some time. In fact, Zomato and Blinkit actually made record deliveries on New Year's Eve despite calls for a nationwide strike by the gig workers. Now, in a post on X, Dipinder Goel said that Zomato and Blinkit deliveries ran at record pace on New Year's Eve, with operations remaining largely unaffected. According to him, over 4.5 lakh delivery partners completed more than 75 lakh orders, which is an all-time high, serving over 63 lakh customers in a single day. In fact, Goel credited support from local law enforcement and ensuring smooth operations, and said no additional incentives were offered beyond the usual New Year's Eve rates. He also thanked the delivery partners, who he said continued working despite intimidation, and defended the gig economy model, arguing that a system attracting millions of workers cannot be fundamentally unfair. In fact, Deepak Shenoy also said, adding on to the delivery strike reaction bandwagon, let's take a look at Deepak Shenoy's tweet as well, where he says that it is quite convenient for delivery partners to reach dark stores. He also says that the folks aren't participating with them, not being oppressed enough. That's the commentary coming in from Deepak Shenoy of Capital Minds as well when it comes to the entire gig workers scenario. But moving on, the top gainer on Nifty 50 has been Coal India. Let's pull up that one on the screens and see what the counter is doing in trade at the day's highest levels, with 6.5% coming in there. Yesterday, during market hours, we did see the production update, wherein the December production was up 6.5%. 4.5%, I beg your pardon. Your sales were down, though, 5.5% as well. In addition to that, news coming in that they've permitted direct participation of foreign coal buyers in e-auction, and this will be effective the 1st of January 2026. In fact, the earlier access to companies' coal was restricted only to domestic coal traders. So pricing is going to be in Coal India's stride, because you will have a lot of other foreign players who will be coming in and participating in terms of auctions. What will that do to pricing is the key. And consumers located in neighboring countries like Bangladesh, Bhutan, Nepal are the ones who can directly participate in the auctions conducted by the company. And that benefit is what is coming across in terms of the stock price as well, trading at the day's highest level. So that's the story that we're tracking at this hour, but lots more lined up. We're completely out of time on this edition of Profit Buzzers. Up next is going to be Small Cap Buzzers with Soumit Sarkar. Please stay tuned to NDTV Profit.
From the heart of Punjab, a new era of education is unfolding. The Schools of Eminence scheme is transforming government senior secondary schools into vibrant centres of excellence that foster innovation and top quality learning. This visionary initiative is transforming education by introducing new ways of learning that children truly enjoy. It is turning classrooms into vibrant, technology-rich spaces equipped with state-of-the-art furniture, equipment, and interactive panels, creating dynamic environments where young minds can thrive. But the change extends far beyond infrastructure. Punjab's Department of School Education is empowering educators like never before. Principals and teachers are receiving world-class leadership training in places like Singapore, IIM Ahmedabad and Finland, while headmasters hone their skills domestically at IIM Ahmedabad. Adding to this momentum, Chief Minister Bhagwant Singh Mann has inaugurated multiple new libraries, enriching schools with inspiring spaces that spark curiosity and open the doors to knowledge.
ਜਦੋਂ ਸਾਡਾ ਬੱਚਾ ਸ਼ਿਕਾਗੋ ਜਾਵੇ मैकेनिकल इंजीनियरिंग करके जावे लीडर है तो जो उन्होंने पूछा जाए डिग्री कितनी की है तो मान ना कहे मैं 50 की डिग्री है फिर अग्यों भी उन्होंने यही जवाब दिया अच्छा 50 से फिर तो आ जाए फिर काम ठीक ही होगा सारा इस तरह का ਅਸੀਂ विश्वास बनाना चाहते हैं.
This visionary program is bridging gaps, motivating young learners and building a brighter future for Punjab's youth.
70-75 वर्ष के हम ये कोई कागज नहीं थे. अब जो है अपन साइट हुई अपन ले अपन धारो.
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करनी. अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है.
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat, while in cases of objections, the concerned officials resolve the issues.
I love you.
टीवी पर पहली बार.
तुम कभी नहीं बदलोगे. मैं प्रेग्नेंट हूँ.
मैंने बोला था बच्चा रखने के लिए.
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं.
मैं उसे कभी माफ नहीं करूंगा. हमें किसी की जरूरत नहीं, हम जी लेंगे.
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत. डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर. सभी प्रमुख DTH और केबल ऑपरेटर्स पर उपलब्ध.
Punjab government foremost in public welfare. Transformation of education. Thanks to the Punjab government's new education policies, Punjab has made its way to the top bracket of the National Achievement Survey 2024 in the categories of class 3, 6 and 9. Free books and uniforms distributed to about 27 lakh students of government schools have led to a decline in the dropout rate as well as social discrimination.
हमारी जो बुक्स हैं वो भी हमें स्कूल के द्वारा ही प्रोवाइड की जाती हैं और हमारी यूनिफॉर्म वो भी हमें फ्री ऑफ कॉस्ट ही मिलती है और जो हमारा बस फी है वो भी गवर्नमेंट ही पे करती है।
केमिस्ट्री लैब है, बायो लैब है, फिजिक्स लैब है और कंप्यूटर लैब है जिसकी वजह से हम प्रैक्टिकल करके देखते हैं, अच्छे से समझ भी आता है। इंफ्रास्ट्रक्चर बहुत ही अच्छा दिया है बैठने के लिए, पॉजिटिव एनर्जी मिलती है पढ़ाई में, जी लगता है, अच्छा लगता है पूरा। मैं पंजाब सरकार का बहुत बहुत धन्यवाद करता हूँ।
Regularization of contract teachers and transparent appointments to vacant posts have led to tremendous improvement in the educational environment of schools. More than 52,600 permanent posts of teachers and teaching staff have been filled in the past 3.5 years. 118 schools of eminence are paving the way for a bright future of talented students from underprivileged communities.
ਹੁਣ ਸਾਡੇ ਬੱਚੇ ਸਕੂਲਾਂ ਦੇ ਵਿੱਚੋਂ ਪੜ੍ਹਾਈਆਂ ਕਰਕੇ ਜੇਈ ਐਡਵਾਂਸ, ਜੇਈ ਮੇਨ, NET, ਫੌਜ ਦੇ ਵੱਡੇ ਵੱਡੇ ਐਗਜ਼ਾਮ ਪਾਸ ਕਰਕੇ ਸਾਡੇ ਸਰਕਾਰੀ ਸਕੂਲਾਂ ਦੇ ਜਵਾਕ ਟੌਪ ਕਰ ਰਹੇ ਨੇ। ਹੁਣ ਸਾਡਾ ਅਸੀਂ ਕੰਪੀਟੀਸ਼ਨ ਚ ਆਏ ਹਾਂ। 98.9, 99.4, 99.5, 99.6 ਹੁਣ ਸਾਡੇ ਬੱਚਿਆਂ ਦੇ ਇੰਨੇ ਨੰਬਰ ਆਉਂਦੇ ਆ।
Punjab government foremost in public welfare.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But before that, let's try and see what's on the show today. Firstly, we'll be speaking with the management of Viceroy Hotels. Now, they have approved an acquisition of SLN Terminus Hotels and Resorts. And if you look at the volumes today, they are nearly 34 times its 30-day average. Second stock on the show today is Igarashi Motors. Now the volumes are quite strong, nearly 14 times its 30-day average, and the stock has been gaining for the last third straight sessions. Tembo Global, now that company has received defense manufacturing license from the government of Maharashtra. The stock has snapped its 6-day losing streak, and if you look at the volumes, it's nearly 10 times its 30-day average. The stock has hit an upper circuit of 5% in trade today. Apart from that, we'll also be discussing about the auto ancillary companies that have been gaining in trade on the back of strong auto numbers that we are currently seeing. But before that, if you look at the markets, the Nifty is up nearly 150 points. It is about 26,300 level, and these gains have been largely led by Nifty Bank and the Nifty IT index. Both the major indices have been trading in green. The Nifty IT index is up nearly 150 points, while the Nifty Bank index, that's up nearly 400 points. But Varsha, what's been buzzing when it comes to the small cap segment?
Well, not bad day for a small cap segment as well. If you see, let me, start with the gainers when it comes to this segment. You have Silver Touch Technologies, where the volumes are buzzing. The stock is actually buzzing on the back of volumes of 4x. Stock has touched intraday high of around 13%. Then you have HCL Info. If you see, the volumes are at 8x. Company has seen an intraday high of 15.8%. That's HCL Info. There you go. The stock is up almost 13% in trade. Orient Tech, if you see, the stock is up 41% in the last 5 days. Also, the volumes are at 7x. The stock is buzzing still. It's up almost 9%. Even Natural Capsules, if you see, the stock is up almost 15% in the last 5 days. Today, if you see, the stock has gained almost 10%. Let's talk about losers also. You have Kiri Industries, which is, under pressure for the second straight session. I think Kiri Industries will take away all the gains that, company gave day before yesterday. Let's see what happens. Even Indo-Thai Securities, if you see, is down 17% in the last 5 days. Still under pressure. Visa Steel is also one of the counters which is under pressure. So overall, not a bad day, I would say, for many of the stocks which are actually buzzing on the back of volumes.
Right, let's go across to the management that will be speaking today. Anirudh Reddy, Konda Reddy, non-executive and non-independent director with Viceroy Hotels. Firstly, sir, if you start about the acquisition of SLN Terminal, could you give us some more details on what is the kind of revenue potential one could see from this new acquisition?
Yeah, hi. Thanks for having us on the show. This is a hotel which has about 75 rooms of inventory. It's a long-term stay kind of inventory, and we see a substantial income being added to the company with this acquisition. The acquisition as of 31st January has been completed, and Q4 will be having this acquisition. We see a strong occupancy rate in this hotel, about more than 80%. And this drives from the major players like corporate players who have extended stay requirements. So we see this revenue hitting our balance sheet in Q4.
Right. Hi, Mr. Reddy, Varsha this side. Just wanted to understand about SLN Terminus more. What's the current occupancy or, EBITDA margin for this counter, and how much uplift can you expect post-integration? Just wanted to understand how much this will add to your top line, to your EBITDA margins, and what's the ARR and occupancy currently for this counter?
So the occupancy is about 82 to 83%, and the ADRs are about 14,500 of last year, and the GOP is around 42 to 45%. We integrating both the three properties which we have, we are going to bring in certain efficiencies which will increase the GOP by some percentage. And also the revenue will substantially go up because there's a huge supply and demand gap in the newer part of Hyderabad, which is Gachibowli. So we see the revenues and the GOP is going to be going up because of these two reasons.
So sorry I missed asking you on this front, but how much are you paying for this acquisition, and is this acquisition EPS accretive right from day one?
So we have paid about 206 crores in total for this acquisition. And this has, as on today, added to our balance sheet, and will also, the Q4 will be part of the two other properties which we have in the company.
Understood. Mr. Reddy, the Courtyard Hotel, which has seen a revenue and occupancy pressure due to ongoing renovations, can you quantify, how much inventory was offline, and clearly what is the revenue potential which will be restored?
Yeah, so Courtyard, we had an inventory of about 110 rooms, and we had to, because of the renovation of adding another 56 new rooms to the hotel, we had to bring down the inventory to about 60 rooms. But regardless, even though the room count came down, we improved on the ADRs and the efficiencies and brought about the same amount of revenue to the company. And hence, this is how we try to displace the shortfall in the rooms which we didn't have to offer. So in that way, we tried to sell these rooms at a higher ADR, and which we were successful and December looked really well for us as well.
December looked very well, but for the entire Q3, if you could give us some idea what is the kind of growth that you have seen compared to last year, and because of the flight issues that we had seen for a brief period in the start of December, was there any big impact that had come in?
So firstly, November was really good for the company as well. And when moving into December, the flight disruptions, even though that happened in November, they moved and impacted us in December a bit. But because Hyderabad has a great base for corporate travel because of the IT and biotech and pharma industries, we were able to easily cope up with that revenue loss because of the flight disruptions. And because of the some of the room inventory being taken out for renovation purposes, we still achieved the same amount of revenue. We would be achieving the same amount of revenue in this quarter.
Right. Also, Mr. Reddy, the EBITDA margins have been, quite volatile considering the, renovation related cost. Just wanted to know, what should investor consider a sustainable level of EBITDA margin, maybe, for FY27? And if you could also highlight what margins are you expecting for H2 FY26 as well?
So it's an ongoing process of renovation in the existing two properties which the company has. So it's an older property, and we are trying to bring in efficiencies throughout this year of renovations. And this will add up a lot more in the years to come. And it's the phased-wise renovation. So the first phase is done, which is the courtyard. And that's why the courtyard numbers will be very efficient in the coming year. And the SLN acquisition which we did is a 2018 open property. So it's completely efficient, well done. It's a new property. So the efficiencies are the highest there. But we are aiming to push to increase these efficiencies as we go along. And that's what our main concentration in the renovation is also.
Right. So if you could also take us through what is the expansion plans of the company? Are you planning any more acquisitions going forward? And say for the next 2 to 3 years, what is the kind of revenue growth investors should expect from Viceroy Hotels?
Yeah, so this year we're concentrating on the banqueting of the properties which we have. We aim to increase the double the banqueting and be one of the top 5 MICE event hotels in the country. And this we would be achieving by the end of this year. And we have also announced a greenfield project in Madhapur, which is the IT corridor of Hyderabad. We see strong demand here because of the IT companies and the startups that are in and around the place. This property, we are expecting to add 200 keys by FY29. And with these 4 properties, we would be reaching about 800 rooms. But our commitment, as we have communicated earlier, will be about 1,000 rooms by FY30. So we are on track for that, and we're looking at a lot of brownfield projects to take over, and we're analyzing them. We're analyzing whether these make sense to the investment going to be made, and we will take that forward to reach the 1,000-room inventory.
Right. Mr. Reddy, I'm sorry, but I still not get the answer. So again, 2 questions. One is, in the last 3 years, if you see the revenue CAGR has been around 38%. Will you maintain that for next 2 years, number one? And also any ballpark range, if you could give us for EBITDA margin, for 26, that is FY26 and FY27, please?
So the EBITDA margins on a blended rate of all the properties would be north of 35%. Considering we're still in the renovation phase, and the real EBITDA margin would be out next year when all the renovations actually kick in. And we see the growth increasing a lot more because we're really pushing the banqueting renovation this year. So even though the EBITDAs have reported about 38 crores last year, there will be a substantial jump in them in the next coming year because we are adding this banqueting, and we are positioning our hotel as a MICE event destination. So there'll be a substantial growth in the EBITDA in the coming years.
So also, how will debt position look like post your capex plans or your greenfield expansion once you're done with that?
So we are at about 268 crore of debt after the acquisition of the SLN Terminus property, and we have a healthy cash balance, and we have completed the courtyard renovation. So we are very well placed to finish the renovation at Marriott, and we will be in the future announcing certain more fundraisers for the completion of the different projects which we are going to undertake in the future.
Right. And Mr. Reddy, my last question would be, do you plan to remain, asset heavy, or you want to be an asset light hotel with management contracts?
So we are an asset heavy company. We believe in partnering up with brands like Marriott, the Accor Group, and because these are the best in the world, and they have the loyalty programs which really add value to the properties which we build. And we remain as the asset builder and trying to get the operator to get the maximum efficiency for us.
Sir, thank you for joining us and giving us the way forward for Viceroy Hotels. Gaurang, you heard the management of Viceroy Hotels. They're doing an acquisition which is expected to be EPS accretive going forward. And given the uptrend that we are overall seeing in the hotel industry, how are you looking at this counter?
First of all, thank you so much for having me on the show. Good afternoon to all the viewers of NDTV Profit, and season's greetings and a happy new year to all of you all. A small disclosure before we go any further, that all recommendations that I'll be sharing this afternoon on your show, they're part of our research team recommendations. Our company, Georgette or I, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines, and they might have that investment interest. So the entire hospitality sector looks to be on the path of growth trajectory, if I can say that. And not only with this commentary of Viceroy Hotels, but even if you actually spin back about a couple of quarters, post the announcement of quarterly numbers, most of the hospitality sector related companies, hotels, managements have come out and given us very strong verbatim as far as the expansion plan is concerned. There are a lot of triggers that will support this particular sector as we go into the future. You have the number of tourists coming into India going up. Domestic tourism is growing. Religious tourism is growing. Medical tourism is growing. And of course, to top it all, business-related travel is also going up to a great extent. Post-COVID, there has been a decent increase in terms of percentage for the room tariffs. And there is a likely possibility, and as the verbatim was given by some management, that they expect another 15 to 20% upward movement in the room tariff. Occupancy rate have been decent. Income from food, beverages, banquets has also gone up. A lot of festival season in India that keeps the registers ringing on the higher side. One particular company, of course, Viceroy happens to be one of the small to mid cap category company, which has shown interest of expansion as we were listening to the management. Don't have any specific comments on Viceroy Hotels, but like I said, we have positive coverage on the sector. And one hospitality or hotel related company that we are positive on is Indian Hotels.
Right, thank you, Gaurang, for that view coming in on Viceroy Hotels and the entire hotel industry. Before we move on to our next stock on the small cap segment, let's get in Sharad to understand the F&O market setup.
Well, it's a very strong bullish setup coming in for the F&O market, and likely that Sensex might be near its highest levels as well. Reliance is holding up as well at 1045. We have stated that the options data is suggesting a bullish move ahead. Look at that NTPC trend, Bajaj Twins, Auto, all of the sectors doing well. Only the FMCG, there is a drag, largely coming from ITC. Now, if you remove that ITC, in the last 2 days, there has been a very strong performance from the IT, and this is what the data is also suggesting. We are near the lifetime high levels for the key benchmark indices. Also, looking at the BankX, the story remains the same. A good buy coming in the banking names as well, all across a sea of green. Kotak is flat, nothing much to worry about, but the rest, other constituents are doing well in trade. Bank of Baroda, SBI, HDFC Bank. HDFC Bank is up almost 1% and largely the contracts are also showing more bullish momentum and likely a positional trade going ahead, especially next week. Also, let's look at the stocks which would be in focus. A strong build-up happening in longs. This includes Bosch and Coal India. Coal India, look at the stock, that's up 6%. Of course, there's a corporate news flow as well on that. Apart from long build-up, we're having short covering for Irida and Inox Wind, renewable plays. Interesting, recently Irida came with a very strong set of operational update. Apart from this, long unwinding shares, this includes Marico and Hudco, but very little amount of volumes here. But short build-up, the last one, this includes Wari Energy, that's down 3%, and for the second straight day in my list is ITC, it's down 4%. The stock-specific moves definitely happening, but now the index setup for both BankX and Sensex is looking positive.
Right, thank you, Sharad, for that F&O setup. Moving on to the auto ancillary space. Both Forging and Jai Bharat Maruti have been gaining. Now, this is after a strong auto sales number that we have seen in the month of December. By strong, I mean that the numbers were much better compared to what the street was estimating on an average basis. Let's get in, Puneet, to understand how these auto ancillary companies also stand to benefit.
Well, thank you for that. It's definitely the commercial vehicle space that was the biggest surprise in the month of December, with sales for Ashok Leyland, Tata Motors, as well as VECV, which is the commercial vehicle arm of Eicher Motors, showing growth of over in the mid-20s and 25 to 27% growth. And also when you compare it with the estimates that we were working with, that's visible on your screen right now, it shows you the strength and the structural strength in sales for all these companies. It's also important to note that the government capex hasn't yet picked up, and despite that, all of the companies have reported tremendous growth across categories, both MHCV and the light commercial vehicle as well. So this will be a key point that we continue to monitor. And a couple of players like Forging for one could be an indirect beneficiary of this upcycle that we are seeing in the commercial vehicle space. Now, when you look at the differentiation, domestic CV is almost 47% of revenue for Forging, and hence upcycle in the domestic CV market will bode well for the company. US has been a key talking point and a difficult sector for the company, a difficult space as well because of the tariffs. So they have diversified into Europe. Now Europe for FY20 for this particular time frame, roughly 33% is from the global CV space, but the share of Europe almost doubled to 21% of revenue in quarter 2 of FY26. So we continue to monitor that. It's also important that in quarter 2, the low profitability was largely because of a couple of reasons of higher cost inflation that they highlighted, as well as the negative operating leverage. Both of those are expected to reverse in the next few quarters. So keep that in mind. The other aspect of Jai Bharat Maruti as a company as well. Now it's a very interesting one because revenue of almost 2,290 crores with 7% of margins is what the company operates at in the financial space. But the last 3 years have actually been quite difficult. Flat revenues that we have seen, so it's largely staggered, and this could be the first sign of any up move from those levels. So Maruti Suzuki actually has almost a 29% stake, and on the passenger vehicle size, they are one of the biggest revenue drivers. But also sheet metal components as well as welded assemblies are some of the key other products that they make. So we will continue to monitor the indirect beneficiaries of the CV space. But for now, these couple of companies make it to the list.
Gaurang, any view on Forgings or Jai Bharat Maruti? Forgings is benefiting out of the CV upcycle that everyone's talking about. But when it comes to a stock like Jai Bharat Maruti, will an uptick in Maruti's sales number benefit this counter as well?
Well, so to assume that, I think it will be a little bit premature, to be very honest, as far as this particular stock, Jai Bharat Maruti, is concerned. Forging, I think, as Puneet was mentioning, because of the news flow. But, I would like to highlight this particular point that we have in mind. Look, if you are of the opinion that the auto sector is going to perform well, then I don't think that auto ancillary tire or battery manufacturing companies will lag behind, because they are heavily dependent on each other. If auto sector is going to do well, so is going to be the performance from auto ancillary tire or battery manufacturing companies or OEM segment companies. So while don't have any specific coverage on Forging or Jai Bharat Maruti, but we have positive coverage on Amara Raja Mobility. We like Excite Industries, JK Tire. We have positive coverage on Uno Minda, Samvardhan Motherson, CIE Automotive. These are some of the names. Bharat Forge actually also features, which is a mixed play of auto ancillary as well as defense. And our view is that going into this year, 2026, and in the years to come by, I think export market is going to open up a huge opportunity for automobile manufacturing companies in India. And that benefit will also have a positive reaction on auto ancillary tire and battery manufacturing companies.
Right. Thank you so much for that view, Gaurang. Well, moving on, Kiri Industries Chairman and MD Manish Kiri says that the dyes and intermediate business continues to face headwinds with no significant growth expected in the near term. Let's listen in.
The dyes and intermediate business has been also going through quite challenging market situation over a period of last 2 years. So these are the factors which are affecting the the profitability of that business. But as we just mentioned, the standalone business, the traditional business in a debt-free form is going to continue, and that would be helpful to have it in an auto mode and cash generation situation going forward. We are not expecting quite a significant growth coming forward from the traditional business. We are sitting on significant capacities in India, so we are not investing any new funds into the dyes, the current business, and that is the decision of the board taken few years ago. But you will see that in a steady state, profitable, if not single digit, lower double digit EBITDA, and we will ensure that it functions in a cash generating mode.
Gaurang, just wanted to have your view on Kiri, because they've completed their Dystar stake sale, which was, I mean, investors were expecting that, and now they are shifting from their traditional business, that is dyes and pigment intermediates, considering the headwinds that the industry is in. What's your view when it comes to Kiri Industries? Because in the last 2 days, so when the announcement came, the stock was up 20%, but in the last 2 days, the stock is under pressure. What will your advice be to investors?
So, Varsha, look, first of all, I think the statement made by the management in terms of cautious business outlook, I think it's the good corporate governance. I would give it to that. I would give credit to that. Not to forget, I think some time back, Kiri Industries was one of the outperforming stocks for all the good reasons that we had in the past. Dyes, pigments and intermediaries business looks to be challenging, at least in the immediate short to medium term. If not higher single digit, but lower double digit growth is what management just gave us the verbatim, will put in a cause of concern. So while this particular segment is going to go through a difficult time, and possibly it will reflect upon the third and the fourth quarter earnings also, they are not investing in any more additional capacity or new capacity because they are not utilizing their existing capacity to 100%. So that's a wise decision that the board has taken. We are very positive from a different angle, Varsha, if I have to say, we are positive on the specialty agrochemical sector. And that's where you should possibly focus on.
Right. Well, thank you so much, Gaurang, for answering all the questions. It was a pleasure having you at NDTV Profit. Thank you so much. Well, guys, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है, आँख नहीं फूटती धूप में, मैं फटदनी सी चाय बना ले, बहुत सहूलियत है हमें इसकी.
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले.
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
I love you.
टीवी पर पहली बार.
तुम कभी नहीं बदलोगे. मैं प्रेग्नेंट हूँ.
मैंने बोला था बच्चा रखने के लिए. सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं.
मैं उसे कभी माफ नहीं करूंगा. हमें किसी की जरूरत नहीं, हम जी लेंगे.
डैडा, यू आर द बेस्ट डैड.
परिवार के साथ होगी नए साल की शुरुआत. डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर. सभी प्रमुख DTH और केबल ऑपरेटर्स पर उपलब्ध.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2,600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
राइट टू बिजनेस हर एक कह दिंदा बट ईज ऑफ डूइंग बिजनेस ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast-track Punjab portal with priority.
पहले के ज़माने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
पंजाब गवर्नमेंट foremost in public welfare.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धारो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को यह अधिकार दिया गया उसके नाम पे जमीन करनी है। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Hello and welcome to NDTV Profit. My name is Puneet Zaveri and you're watching Ask Profit, the afternoon edition. Over the next half an hour or so, we'll try and solve all your stock related queries. To do start sending them on the numbers that will shortly start flashing on your screen. You can send us a text on WhatsApp. You can also call us. So the number that you can send on WhatsApp is flashing on the top of your screen. You can also call us on the number that's flashing on the bottom of your screen as well. Before we do all of that and a lot more, it's going to be a very, very interesting session of the markets because the next half an hour will tell you about the markets as well as stock related queries. Pull up the Nifty 50 and I'll give you some perspective of where we are because we crossed the 26,300 mark very briefly. And while we saw some selling posts that we are back at that level, so it's going to be a very interesting session of where we end today. Because you have to realize when you look at the contributors that the ITC has been one of the biggest negative impacts on the Nifty 50 over the last 2 days. Today it's contributing negatively by almost 32 points. Yesterday it was down 80 points. So over the last 2 days, you could only one particular stock has led to the downtick of almost 110 points. And despite that, we are at the 26,300 level as well. Look at the heat map, it will give you perspective of the other stocks which are leading the gains today for the Nifty 50. Specifically, Eternal, Nifty Auto was some of them. So let's look at the heat map very quickly. Amongst others, of course, NTPC has continued the momentum from the start of the trading session and so has Trend after an incessant selling that we've seen since September 2024 since the company entered the Nifty 50. Largely seeing that the advanced decline ratio very quickly will also give you that perspective of what's happening in the broader markets as well. Because while at the start of the trading session, we were very neck and neck, the momentum on the gaining side has continued. And finally, the BSE 500 individual movers in the cigarette space continue to have impact. So the likes of Godfrey Phillips as well as ITC was some of them, but Godfrey seems to have slipped away from the losses. So JBM Auto up 6%, SJVN up to 10% as we speak, and IDBI Bank. Possible news yet again on the stake sale continues to have an impact. But also let's look at Godfrey Phillips. You can pull up that counter because it's slipped away from the BSE 500 list. So a lot of those gains have subsided, as you can see. So it's down just 1% right now, and hence not visible there. But let me welcome in CA Tapan Doshi, research analyst at catapan.in, as well as Ruchit Jain, the Vice President, Equity Technical Research at Motilal Oswal Financial Services. Gentlemen, thanks so much for joining in today. Let me first go straight into the first query for Ask Profit, the afternoon edition. It's from Vijay Reddy, and he's asking on Dyani International, asking if it's a good time to enter the stock as we speak. Now, Tapan, very good afternoon, and wish you a very happy new year to you as well as your family and everybody at the company as well. On Devyani, as well as on the back of the news flow with the merger with Sapphire, is it a good time to enter the stock now, according to you?
Good afternoon, Pune, and happy new year to everyone and all your viewers also. So yes, if you see this merger announcement, that's why the stock gone up a little bit. But somehow, if you see from last few years, this stock is not performing. Even other stock also not performing. The reason is simple, that there is a lot of pressure on QSR, and again even the Jubilant also did not well for the last few years. So I think here still the pressure will exit. Still I think a lot of competition is there from online ordering system. Zomato and Swiggy is doing quite well on that part. So I think still I am not too much hopeful from long term perspective. Of course, short term there may be a little bit of jump, but for long term, my answer will be no. For trading idea, that's a different call. Otherwise, for long term, I will not say to enter at this stock at this level.
Got that view, Tapan. The other query that's coming in is on TBZ. Tribhuvan Das Bhimji was a very, and Lingamurthy from Hyderabad is asking the second question. It's he's asking if we should hold on or exit this particular counter. So he's bought it at 252. Stock's trading at 168 right now. Ruchit. Very good afternoon, and thanks so much for joining in today, and season greetings. Wish you a very happy new year. What do you make of TVZ on the charts? Any chance that Linga can recover some of those losses?
Yeah, hi, very good afternoon. Season greeting to you and your entire team as well. If you look at TBZ, it has been a relative underperformer since last few months, and the volumes action is missing. We are not witnessing any kind of good volumes coming in whenever there are in between price up moves or pullbacks. So stock going up with lower volumes, underperforming the broader markets, these are not good signs for positional for short to medium term. So I think just because of the market momentum, if you get any pullback move towards that 175, 180, take that as an opportunity to exit from this stock. I think there are much better stocks which are available in the market and are trending where you can make a shift. But from TBZ, I would suggest to keep a sell on rise approach.
Got the view. We have another query now that's coming in on Solar Industries, and Rajan has actually bought it in the last 1 year. So his buying price is 10,350. And he's holding on to roughly about 200 shares. So it's a decent position that he's built up. Asking that how long should he continue to hold, because he is a long-term investor. Tapan, the stock's done very well for its shareholders over the last few years. Any view on Solar Industry? Should he continue to hold?
Yeah, Puni, the stock has done very well for the investor, and I think it will do well. If you say there, export order is actually increasing. Even the order book is also sizable now, and management is targeting global expansion. And we know that sector demand is already there. Only the utilization part and how they are able to execute, that is the main thing. Historically, if you see ROE, ROC is quite good, and I think from here international business will more than 1,000 crores. So that's a record breaking. So yes, I am quite positive. I think he can hold this stock for next few years. This will give good returns.
Got the view, Tapan, but let's go across to the first call of this afternoon, and it's coming in from Hyderabad. Rakesh is dialing in for a stock query. Rakesh, very good afternoon, and thanks so much for joining in. Wish you a very happy new year. What's your query?
Happy New Year. So I want to enter Hero MotoCorp at the current level.
And is this a short-term or a long-term outlook that you're looking for, Rakesh?
I'm looking for short-term for 6 months.
6 months, got it. Ruchit, let me come to you on Hero MotoCorp. It has seen some selling from after hitting those highs. Any 6-month view on the stock that you can give, Rakesh? Ruchit, I think
So overall, we have a positive outlook on the auto space, and especially the two-wheeler space, such as TVS, Hero MotoCorp. The broader trend seems to be positive. Recently, we have seen some correction from that highs of 6,300, but in that correction, the stock has managed to form a higher bottom, and long-term supports are still intact for the stock. So I believe if you have a bit time horizon of 6 months, you can definitely go long at current levels, but keep some room that on the downside, if you get lower levels around 5750 to 5700, take that as an opportunity to average at lower levels.
Let's go across for our next query on WhatsApp, and it's an interesting one coming in from Joseph. Tapan, this was for you because he's asking for a 12-month duration, and his question is, what, according to you, is the best stock that he can invest in 2026? Any space, Ruchit, any space, Tapan, that you like right now?
So currently, if you talk about valuation perspective, I think EMS sector is quite down and out, and that is where I feel that things have become up a lot. So yes, my take will be on Dixon. I think it will do well over the time. Yes, there is a free fall currently because of profit booking and some other reasons, but I think this already EMS sector is going to grow by 30-40% CAGR, and in the Dixon will be benefit. So my bet will be Dixon. I think long term it will give you good return.
Ruchit, actually, let me ask you as well, because I'm sure you have a couple of them on your radar in 2026. The best stock according to you?
So I think the broader markets, the mid-cap space from the more broader markets is expected to do well. Recently, we have seen a good momentum in most of the auto names. The auto numbers were also good. And I think based on this, auto ancillaries would be the next segment where we would see some good outperformance going ahead. So, Minda is one stock that we like from the auto ancillary space at current levels. Last 2-3 months, the stock has gone through a consolidation phase, have formed a good support base around 1240, 1250. So from here on, we should see a resumption of the broader trend. So sector-wise, I think auto ancillaries would be one space to get into, within which if I have to select any one stock, then Minda would be the preferred one.
Got that view, Ruchit. The next query that we're getting is on K-Fintech, and Gautam Shinoy from Bengaluru is asking a question. He has a 6 months time frame. 1280 is what he's holding these shares at, so it has seen some correction from those levels. Ruchit, on K-Fintech, should he continue to hold or book losses?
Well, the stock is into a consolidation phase. So we do not expect any outperformance compared to the broader markets, but yes, the downside also seems to be limited. So here we expect some consolidation to happen in the stock. 1000 is a good support for the stock, and on the higher levels, 1150, 1170 is the resistance zone. So if you get some up moves towards the resistance of the end of the range, 1150, 1170, then you can look to exit and shift to some other names.
Okay, all right. The next question that we have is from Gopi, who is asking about CAMS. He wants to know if he can average CAMS at the current levels. His holding price is around 762, and he wants to hold this for the next 3 odd months. Rajit, I'll come to you on this one. What are the charts indicating?
So again, overall, similar to what we discussed earlier as well, so that the stock is, even the stock is more into a consolidation phase, and but the stock has a good support around the 730, 740 range. So considering that, you can add some positions and average over here, but do not expect any major uptrended phases. At higher levels, you can expect targets around 820, 830, where again, you should take a review to exit the entire positions.
Viewers, you can call us directly and speak to us on stock-related queries as well. The numbers flashing on the bottom of your screen, but some important updates coming on the bottom of your screen. Cement prices has been something that we're continuously tracking. It seems to have moved up by 20 to 30 rupees per bag. It was a similar impact post the GST rate cuts as well. So we will continue to monitor that story. It's an interesting one before the Q3 impact as well. But we have another caller coming in now from Hyderabad, and Venkat Raman has a stock query for us. Venkat Raman, very good afternoon and wish you a very happy new year. What's your query? Hi Venkat Raman, am I audible to you? Well, we seem to have lost him, but let me take his query because it's on ITC. It's a stock that we continue to track from yesterday itself. And he's holding 1,000 shares at 428. Tapan, on ITC, we seem to have taken the stock seems to have taken it on the chin, because the FY27 growth has now been lowered. Most brokerages anticipating a fall essentially in terms of cigarette volumes by roughly 3 to 9%. Do you think it's coming into a zone of a value buy? Because a lot of estimates now moving into FY28. From the long term, do you expect it to be a key one the investors should watch out for and keep in their portfolio?
See, this is the stock which may be a slow mover. The reason is, see, if you see almost 65% revenue coming from cigarette, 80 to 85% of profitability coming from cigarette. So any news on cigarette, it will create this type of buzz and the stock may fall. And that is the why the market is giving a thumbs down to this stock. Now, if you talk about the valuation, of course, no, it's on a lower side. But if he enters, it will take some time. It is not going to be like, no, going fast from here also. So I think the 420, it will take time to recover, but my take is that once it comes up, get out from the stock. There are much better FMCG stock which are not depending on cigarettes and all like that, where the volume growth is more than 20%. So I think my take will be sell on rise.
All right, the next question that we have is on Sonata Software. This is from Mansi Vahia. She's got it at an average price of 454 and 65 shares is what she's holding and wants to know if she can buy more, average, hold or sell considering the current market price. Ruchit, I'll come to you on this one. What are the charts indicating?
The downside seems to be limited from here on, but this is not the stock where there is any kind of outperformance seen, even when the IT space recently had seen a pullback move. Hence, I would not advise to put in more money or average out this stock. You can keep holding your existing positions for a pullback towards 400. Take a review again around those levels. But in case of fresh buying, I think if you want to go with the IT names itself, then certain large cap stocks such as TCS should be preferred. Where overall, I think if the IT moves up, then leadership would be taken or the outperformance would be seen by such large cap names rather than mid cap IT such as Sonata.
Got the view, Ruchit. The next query that's coming in is also on a very interesting stock, Jupiter Wagons. Now, pull up the 1 year chart and it'll give you that perspective because NKS from Mumbai is writing into us. He's holding 200 shares at 680 and the last 12 months have been very forgetful for investors. He's asking if he should take the loss right now, which is considerable as his buy price is 680 or hold on to this counter. Tapan, what would you recommend?
I think he should hold on. The reason is major issue which Jupiter Wagon was that the wheel set, one of the main component was not been delivered on time and that was the reason it was a delay. But management is quite hopeful and you have seen a good jump also from the lower level. I think next 1 or 2 quarter will be much better for Jupiter Wagons and they have a good order book. The only thing was execution was not there because of the component was missing. I think from next 2 quarter will be better. So please hold on. I think things will be recovering from here.
Okay, all right. So that's with regards to where Jupiter Wagons is concerned. We've got our next caller. Mudgil is calling us from New Delhi. Mudgil, hi. A very good afternoon to you. How can we help you today?
Yeah, very good afternoon. How are you?
All good. How are you?
Yeah, I'm quite fine, please.
Go ahead and ask your question.
My query is, should I go for Lumax Industries or Lumax Auto? They both are from the background to the same company, but which one is better to invest 1.5?
Okay, and you are looking at this from a shorter term perspective or a slightly long term perspective. What would you want to know in terms of fundamentals? Sorry, short term perspective.
3 to 6 months because as far as results of fundamentals are concerned, they are showing constantly good results for the past 1 to 2 years now.
Okay, all right. Then I'll take this up with Ruchit. Ruchit, Lumax Industries or Lumax Auto, where are the charts looking more attractive?
So relatively, Lumax Auto is looking more attractive. A structured higher top, higher bottom is getting formed, which clearly indicates an uptrend. Although the volumes are usually not that high in this stock, but still the price movement action indicates a possible up move towards 1720, 1730 going ahead. So if you have to choose anyone within these two stocks of the group, then Lumax Auto should be preferred.
We have another caller now coming from Andhra Pradesh and Ramudu is dialing for stock query. Ramudu, very good afternoon and wish you a very happy new year at the onset. What's your query?
Thank you, sir. Regarding Shilpa Medicare, sir.
Okay.
Sir, please, before bonus I have purchased 100 shares at the rate of 900, sir. Still I hold our exit, sir.
Okay, and can you hold on for some more time, Ramudu? Then I can get you a fundamental answer on this as well.
hold it.
So, Ramadhu, I was asking if how long can you hold this counter? Can you hold it for the short term or can you hold it for the long term?
Short run, sir. 6 months
Short term,
around.
okay. Ruchit, on Shilpa Medicare, he's currently sitting at a loss because he's bought it at 900 rupees per share. What's your view?
The technical trend for the stock is still negative. I think the 900 post recently we had seen a bonus of 1:1. So 900 was not an all-time high for the stock if you adjust the prices. So even if you take adjusted prices of 1:1, then I think 450 is around 450 is buying price should be. But yes, the overall trend still seems to be negative. We have recently seen that the stock has not participated along with the broader markets up move. The stock is comfortably trading below its 200 DMA. Any pullback moves are there. It's witnessing selling pressure at higher levels. So my advice would be that if you get any kind of pullback move again, a short-term pullback, then take that as an opportunity to exit rather than holding the stock.
Okay, all right. So that's with regards to where Shilpa Medicare is concerned. The next question that we have is from Parag Visaria, who's writing us from Jamnagar. He's holding 10 odd shares of MCX bought at the levels of 8328. Wants to know if he can consider moving out and deploy the proceeds elsewhere, and if yes, what should he go ahead and buy? Tapan, I'll come to you on this one. What's the view like?
I think with regards to MCX, he should stick on MCX now because it's doing well. Again, the silver and gold demand is quite high. Again, the volume is picking up, and they have one type of monopoly in commodity. In future, also it looks like that because it is a monopoly in commodity, I think more and more volume will come, and again the future lots are also increasing. So I'm quite positive on MCX. No need to go anywhere else. Even I will tell him to, if it comes on dip, he can buy more. I think long term it will give you a good return.
Got that view, Tapan, but the next query that's coming in is another one on WhatsApp, and this one's coming in from Bharat from Iluru, and he's holding 80 shares of United Spirits bought at 1,461 rupees per share, asking if he should hold or sell out the counter. Let's pull up the share price. 1384 is where it's trading right now. He's not mentioned his time frame. Ruchit, on the charts, anything on United Spirits?
It seems to be consolidating. 1480 is the resistance, and until we see the stock going above that 1480 mark, it doesn't seem that we would see any kind of broader trended up move in the stock. So I would suggest that you can make a shift to some other sector rather than liquors and cigarettes, which off late have not shown any kind of fresh buying interest coming in. So maybe sectors such as banking, NBFCs, which are doing well, that can be preferred over this stock. So my call would be to take an exit from United Spirits.
The view, Ruchit. We have another caller now dialing in from Mysuru, and Suresh has a stock query for us. Suresh, very good afternoon.
Yeah.
Wish you a very happy new year. What's your query?
Same to you. Happy New Year. I just want to know outlook, long-term outlook of Mahindra and Mahindra Limited. Can I buy shares at this time?
And Suresh, do you have any other auto company, either auto OEM or ancillary in your portfolio right now?
I have got JBM Auto and Lumax Auto.
Okay, JBM and Lumax Auto you already have in your portfolio. You're looking to enter M&M and asking for a view. Got your question. Tapan, on Mahindra and Mahindra, it's been a very spectacular year in terms of sales performance. Is it a good time to enter the stock right now, as well as your long-term view on Mahindra and Mahindra? What's your view?
Well, it's a very simple answer. You also know that, of course, the stock is great and is doing very good. And but the only thing is the valuation gone up a lot. But I think the volume will pick up in next few quarters also, because if you see the GST rationalization impact is still coming. And I think next 2 quarters will also be good. But the only thing is, my suggestion will be buy on dips. Of course, they are working on their, you can say, the margins. Again, the guidance is quite good and everything is going good for M&M, but it will be buy on dips category. Again, another Lumax and JBM Auto, that also you can hold on for a long term little bit.
All right, so that's with regards to where M&M is concerned. The next question that we have is from Chandrasekhar, who's writing us from Tamil Nadu, asking about Cupid. He's holding 600 odd shares and wants to know if he can sell or hold. The stock is locked in lower circuit today. Of course, we've seen good moves coming in last week post the promoter pledge coming down. Plus, they did get an approval in terms of their FMCG manufacturing unit in Saudi Arabia as well. But, Tapan, I'll take this up with you. What's the view like with regards to where Cupid stands?
So, of course, the stock is down by almost 20% today and gone up a lot, too much. And I think that is where the problem is. If you enter this type of stock on a upper side, you may get stuck also. Now here, I think of course entry is not at all possible here. Just wait for some time, let it get stable, and if he already having a stock, I think he can sell if he wants. I think the real valuation will be much more, I think 20-30% down from here. Then only the valuation will be accurate to get in again.
And we spoke about Cupid. Mahima and I discussed that in yesterday's show as well in the afternoon session, that stocks trading, stock was up 589% on the last 1 year. Today, that 20% downtick is hampering the 1 year return, but at 220 times price to earnings, and the company's market cap more than the overall market cap in the industry it operates in. Investors have to take caution. But viewers, it's time for the rapid fire round in this edition of Ask Profit. Ruchit as well as Tapan, you know the drill. Keep your answers on buy, sell and hold so we can take as many queries as possible. And the first one's coming in on Sagility. Praveen Kumar is asking for a long-term view. Tapan, your view?
Hold it.
Okay, Canton Homes is the next one. Sujan from Hyderabad is holding at the levels of 915 from a short-term perspective. Ruchit, on the charts?
So the trend still remains positive, so can continue to hold on longs.
Sattvic Green bought at 540 by Anil. What would you recommend, Tapan?
Yeah, that also hold it.
Okay, NTPC Green, 350 shares is what our viewers bought at the levels of 140. Can you continue to hold for the next 1 year? Your view on this, Tapan?
No, sell.
Is it right time to continue to hold Federal Bank for the next 1 year, Ruchit?
Yes, the mid-cap banks have been outperforming, so can continue to hold the stock.
Okay, SW Solar is the next one. Balaji is bought at the level of 661. Should he hold or close the position? Ruchit, on the charts?
Sorry, which stock?
SW Solar.
No, it should be a sell on rise approach. Any pullback moves take opportunity to exit.
Karnataka Bank for the next 9 to 12 months. What would you recommend, Tapan?
Yeah, hold it.
Okay, Gujarat Gas is the next one. 400 shares bought at the levels of 414. Can Gopi from Hyderabad continue to hold this or not? Ruchit, on the charts?
Hold for some pullback moves. The overall, these are not the levels where one should look to exit.
Geo Financial bought at 336. Should he hold or sell, Ruchit?
Should continue to hold on existing longs.
Okay, Sky Gold, 2 years view. If fresh entry makes sense right now. Sabu from Kerala wants to know. Tapan, your view?
Not now, at dips, maybe 10-15% down.
One NBFC that you can recommend for the short term is what Navneet is asking, Ruchit.
Manappuram Finance is looking good positioning, so can create longs in Manappuram.
Okay, Coal India, from a fundamental point of view, Vijay is asking as to how do you view this stock. Tapan, your view?
Yeah, you can hold for a little bit longer.
Tata Capital, a recent listing, Ruchit, but a viewer is asking, Rishabh is asking if it's a good trading bet for the next 1 to 2 months. Stocks up almost 4.8% today.
Keep the stop loss below 340 and can trade on the long side.
Tata Steel is the next one. Girish from Hyderabad is a long-term investor. He's been holding 700 shares at the levels of 103. Should he continue to hold? Tapan, your view?
He can hold it, but with a stop loss.
Eternal bought at 302. What should he do with it, Ruchit?
So hold because stock has already corrected. So expect a pullback move and then take a review again.
Okay, Vinay is holding L&T 1000 shares at the levels of 3244. Target for the next 2 years. Tapan, your view?
Yeah, maybe 30-40% return for next 2 years.
Next one is coming in on Natco Pharma, 120 shares. What would you recommend, Tapan?
Yeah, please hold it and buy on dips.
Okay, Bajaj Housing Finance is the next one. Rajan from Kerala is holding at the levels of 102. Ruchit, your view on the charts?
Can hold at current levels. Any up move towards 105, take a review again.
Alright, okay, so that brings us to the end of this rapid fire round for Ask Profit. Ruchit and Tapan, thank you so much for helping us answer those queries, and thank you so much for taking out the time and speaking with us at NDTV Profit. Viewers, we are completely out of time on this afternoon edition of Ask Profit, but do stay tuned. India Market Close on the other side.
Punjab government has taken a heartfelt step to bring relief to thousands of Dalit families burdened by old loans. Now, the loans they had taken before March 2020 will be waived completely, giving them a fresh start and peace of mind.
ਕੈਬਨਿਟ ਦੇ ਵਿੱਚ ਇੱਕ ਫੈਸਲਾ ਕੀਤਾ ਗਿਆ 68 ਕਰੋੜ ਰੁਪਏ ਦਾ ਕਰਜ਼ਾ ਬਕਾਇਆ ਸੀਗਾ ਐਸਸੀ ਪਰਿਵਾਰਾਂ ਤੇ ਨਵੀਂ ਸ਼ੁਰੂਆਤ ਉਹਨਾਂ ਲਈ ਅੱਜ ਇੱਕ ਹੋਊਗੀ। ਪੰਜਾਬ ਸ਼ਡਿਊਲ ਕਾਸਟ ਲੈਂਡ ਡਿਵੈਲਪਮੈਂਟ ਐਂਡ ਫਾਈਨਾਂਸ ਕਾਰਪੋਰੇਸ਼ਨ ਵੱਲੋਂ 31 ਮਾਰਚ 2020 ਦਿੱਤੇ ਗਏ ਸਾਰੇ ਕਰਜ਼ੇ ਉਹ ਮਾਫ ਕੀਤੇ ਜਾ ਰਹੇ।
This decision will lift a heavy burden off the shoulders of families who have faced financial struggles for years. It opens doors to new opportunities, hope and dignity for many deserving households.
मेरी सरकार ने बकाया राशि माफ कर दी, इसलिए मैं सरकार का बहुत बहुत धन्यवादी हूँ।
Under the visionary leadership of Chief Minister Bhagwant Singh Mann, this initiative stands as a promise to support and empower the Dalit community, helping them rebuild their lives without the fear of debt.
कोरोना काल के कारण मेरिया मझां डेथ हो गई जी, मेरिया किस्तां टुट गई। उदों बाद मैथों किस्तां वापस नहीं हुई ते हुण मेरा सरकार ने लोन वापस करता। धन्यवाद जी बहुत बहुत सरकार का।
This loan waiver is more than just financial help. It's a new beginning, a chance for brighter and better days ahead for Punjab's Dalit families.
I love you.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए। सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं।
मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख डीटीएच और केबल ऑपरेटर्स पर उपलब्ध।
70-75 वर्ष के हमू ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat, while in cases of objections, the concerned officials resolve the issues.
Hello and welcome. You are watching India Market Close, and looking at the markets, it's showing some really great numbers, and hopefully we can touch that all-time high levels in the coming session. This is me, Sharad Dubey, and with me is Hiral Dadia and Somit Sarkar in this important trading session, as it's likely that the market is giving a New Year gift. And we can see Nifty, that's around 26,300 odd levels. It's trading at Nifty Bank comfortably above 60,000. Just let's show the countdown timer, how far we are from the all-time high levels. So just put that out back again. The all-time high levels were at 26,325 odd levels. And right now, let's look at it. And largely we are seeing it is still around 30 points away, and that is distance, near the all-time high levels. It's gyrating those 10 points up, down. That's what Somit was mentioning earlier. But nevertheless, the technical setup looks strong. Also, apart from this, let's pull out the Nifty constituents, what's actually happening in the trade. Coal India, NTPC, look at the stock price moves. It's up 6%. Of course, news flows are happening in most of the sectors.
The metals, they have maintained their strength in the market, and so has Reliance over the last 3 trading sessions. All support coming in from banks also. No major cuts actually coming in. Only concern in the street is the FMCG, which is led by the ITC counter. India VIX is slowly inching up, but still below the 10 mark. Also, let's pull out the sectors where the action is there, and largely most of the sectors would be in green. And yes, apart from FMCG, everything is doing well in trade. Realty has bounced back. Most of the realty stocks they are below their NAV compared to their market cap, and the Nifty CPSE index, that's also up around 3% odd. Consumer durables also trying to make their short coverings in certain counters, and of course the advanced decline ratio, that is also doing wonderfully well, and throughout the day they have maintained that lead of almost 3:1 in the favor of bulls. Lot of action in the broader indices as well. Hiral, what you are gathering? It seems like mid caps and small caps are actually outperforming Nifty in such a good market.
Absolutely. I think all engines are firing. That's what it's seeming like. Let's pull up the mid cap and the small cap index. But what's interesting is, even in terms of record high levels, initially we were just 10 points away. Now we're really 40 points away from record high levels. So there is some bit of easing that's happening when you talk about benchmarks as well as we speak. Let's pull up the mid cap 150 and the small cap 250, because clear outperformance coming in there, and the kind of returns that this individual stocks are giving is spectacular. 0.8% higher on the mid cap index and nearly 0.7% higher at the day's highest levels there. Bank Nifty also at record high. You have the metal pack, the auto index, all of them trading at record high levels in intraday trade today. In terms of individual counters, let's see which are the ones which are buzzing. SJVN, that's an interesting name to watch out for. That stock at the day's highs. See the kind of returns you're seeing on that one, 11.5%. IDBI Bank is up almost 10 to 11% in trade. You have Ola Electric, Taril, Bosch, all upwards of 8 to 9% in the kind of returns that we're seeing. On the losing end, Radico has now caught up to the bandwagon, 4.5% downtick coming in on a Radico Khaitan. Karnataka Bank is now trading under pressure. You have Dr. Lalpath Lab also down in trade. Cupid is another one that we are watching out for, which is under pressure. Tourism Finance also trading under pressure. So these are a few of the movers and shakers, but let's head across to Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Share Khan, and we have CA Tapan Doshi from Research Analyst at catapan.in joining in. Welcome to the show, gentlemen, and always a pleasure to speak to you. Let me come to you, Kunal, first, and wishing all of you all a happy new year as well. Kunal, my question coming to you is, we're just probably around 40 points away from record high levels. Those gyrations are pretty wild in the last, between that 30 to 40 point range right now. What are the closing levels that you're tracking on Nifty? And you have Bank Nifty, which is already at record high.
Good afternoon. Good afternoon to everyone. Firstly, Happy New Year to everyone, and Happy New Year to all the viewers. See, I think what we have been seeing on the Nifty index, that 25,700, 800 was the make or break level. We didn't break that level, and now we are heading towards the new high. 26,500, 26,700 is what we are eyeing in the index. So I think any intraday dip in today's trading session also to be utilized as a buying opportunity. Doesn't seem like probably in the last half an hour, if the move comes in where we surpass the all-time high, or probably on the Monday gap up opening, that's a thing to watch out for. But I think positionally one should be ready for 26,700 on the upside for the Nifty index. For the Bank Nifty, you have already surpassed the new high, and Bank Nifty is still looking strong. Your private banks like HDFC, ICICI have just started the move. So I think Bank Nifty is ready towards 61,000 on the upside. So even that is on the buy zone. So on the indices perspective, the view remains bullish. Dips to be utilized as a buying opportunity.
Okay, Kunal. So that's with regards to where, the levels on Nifty and Bank Nifty. So in this kind of a market right now, are you seeing any buying opportunities, or would you say book profits? What are the key strategies?
No, I think definitely buying opportunities. I think a lot of buying opportunities, specifically in the mid cap and the small cap space. That is what is really buzzing in this market. My over here on the technical perspective, my picks would be firstly from the hotel space. I'll be looking out for, I think hotel space has seen a decent correction in the recent times, and I now think now is the time where one should go on the long side. Over here, my pick would be Sami Hotels on technicals, bottoming out on the technical charts, and I'm expecting a good move on the upside from the current level. The risk to reward ratio is extremely favorable, currently trading at around 184, 185 marks, so one can go long at the current levels for here. The stop loss on the downside will be 176. Which is the recent swing low what the stock had made, and I'm expecting a positionally big targets of close to 195 to 196, 195, 196 would be the first target, and second target will be 205 on the upside. So Sami Hotels is one stock which is looking extremely good on the technical charts. The second pick over here, I will be looking out where I think the momentum has started to build up is the auto ancillary space. I think that is also looking again very attractive on the technical chart. And my pick over here will be Subros. Subros again has bottom out on the technical charts. We are seeing a fresh leg of up move getting started into the stock here. So that's a buy for me with a stop loss of 860 for targets on the 1000 on the upside.
Kunal's two picks are Subros and Sami Hotels. But moving on, the street is split whether Budget 2026 will be presented on February 1st. It's a Sunday. We have with us Himanshu Shekhar Mishra from NDTV, who has picked up what government sources are telling. Himanshu, over to you.
Well, the sources have told us that the highest decision-making body with regard to finalizing the schedule of the budget session of Parliament is Cabinet Committee on Parliamentary Affairs, which is expected to meet in the next few days. And it's only after the Cabinet Committee on Parliamentary Affairs examines this issue that a final decision will be taken with regard to on which day the government now plans to present the budget. But as of now, sources in the government have told us that no final decision has been taken regarding any change in the schedule, the convention of presenting the budget on 1st February, or whether the government has any new plans. I think we'll have to wait for some more time to get a final picture on what is the decision. But as of now, sources are telling us that the Cabinet Committee on Parliamentary Affairs is the only body, the highest decision-making body, which is authorized to take a decision as to on which date the budget should be presented. That's right.
Thanks for that, Himanshu. I'm going to get in Tapan also in this conversation. Just kind of a hypothetical situation. It's good that it actually happens, the budget happens on Sunday, right? Because Saturdays we have seen, I think Soumit and Hiral will agree, we have worked on Saturdays also when it comes to budget and the markets opening, and Sunday also it has happened, right?
I hope actually the market doesn't stay open. But I'm assuming, I think they will keep the markets open. That's an assumption. Again, we will have to check that with NSE and BSE as well, you know, once the official announcement comes in from the government with regards to the budget. But so far, the government is likely to present the budget on the 1st of February. And if that happens, it's going to be interesting. So that's the latest development we have. There is no official approval that has come in from the government. That's what sources are indicating so far. But moving on, Tapan, let me come to you. You know, with the kind of euphoria that's picking up in the markets, now if you pull up Nifty 50, we are nearly, 70, 75 points away. So there is that little bit of profit booking that is coming in at higher levels. What is, your top stock, advice that you would have for investors?
Yeah, good afternoon. See, my advice will be go for the valuation wherever it is, there is a comfort zone. And I think here we get comfort in hospitals, and another sector which has gone down a lot is EMS sector. You can talk about Dixon Technology, Sirma and all that. I can see a lot of value rising there because this sector is going to grow by 20 to 30% minimum for next few years. And of course, there are some because the stock has gone up, that's why the stock has come down, like Dixon or Keynes and all that. Keynes had the management issue, but I think from here the things will pick up. So my pick will be from EMS sector. Dixon is one of them, and another is hospitals. Hospitals also little bit coming down. So I think there also you can talk about Aster DM or Apollo. There also opportunity rise. There is also a mega trend. So you have to pick wherever the valuation comfort is there for the long term, and then you can get into it.
With the EMS sector, PG Electroplast is the only EMS stock that has managed to give positive returns so far. The downfall that we had seen in multiple EMS names like Amber, Dixon, Keynes Tech, but PG Electroplast has continued to remain in positive. So what are those factors that are leading to these kind of positive returns when it comes to PG Electroplast? Let's get in Puneet to understand more in detail.
Well, thank you for that. So as you rightly said, the returns is what we've looked at over the last 3 months, starting October 1st to the December 31st. And PG Electroplast shines through with 15% returns. So when you look at, the number essentially, and all the 5 companies, Dixon Technologies as well as Keynes Tech have been the 2 biggest laggards at this point of time. Roughly about 45% downtake on Keynes Tech. This was triggered because of the issues of cash flow generation, and that essentially put the spotlight on the EMS space, but on the negative side, Dixon Tech was the casualty of that, and so was Amber Enterprises. For Amber also, the AC play has been one of the key negatives, which is impacting its results. But for PG Electroplast as well as for Sirma, the returns have also been similar. For PG, it's been the only one in the greens at this point of time. But there are 4 key points that you need to understand for PG Electroplast. These gains have come in largely because of a positive inventory reduction in Q2 of FY26 versus Q1 of FY26. But you have to understand that PG stock was down 49% in the first 9 months of calendar year 2025, and hence some positive respite from those lower levels. Still lower at around 600 rupees per share currently, from the highs of about 1,050 that was trading at the start of the year. It's also maintained its order book and given a strong revenue visibility, and that's the other key point that we'll dive deep into. And the valuations also reasonable compared to its peers as well as its own trading history. So when you look at the biggest positive post Q2 results was the company maintaining the revenue guidance for FY26. Now 5,700 crores to 5,800 crores is what they maintain, with profits of almost 300 crores. But you have to understand that in the first 2 quarters, very limited of those targets have been yet achieved, and there was estimates that this will get cut down. But because the guidance was maintained, there could be some positive respite that the stock got in those last 3 months. Finally, in terms of what the management expects, inventory normalization starting in Q3 and Q4, 15% growth for room air conditioner space versus a flat growth for the industry is a key positive. Similar commentary has been heard from Amber Enterprises as well, while the working capital release will help the company's cash flows as well. In terms of brokerages, as the last and final point, Nuvama has highlighted that there's significant potential for industry-leading growth as well as profitability for PG, while maintaining that this is one of the top picks in the EMS space. Equirus has also said that it was a decent quarter by the company in Q2 in a tough industry environment, and highlighted long-term demand drivers continue to be a key positive, while Daulat has maintained that it is a likely outperformer in the industry in FY26 and something that they'll continue to monitor. So overall, that's the key picture. The next trigger will be Q3 earnings, and the outlook for Q3 is quite weak for all EMS companies, especially the ones that are operating in the air conditioner space. So that'll be something to watch out for.
Thanks a lot for that. Kunal, I just want to get you onto this also. The EMS space, Tapan was also bullish in the counter, and Puneet also discussed about PG Electroplast, the outperformance and actually being in the positive in the last 3 months as compared to its peers. Kunal, anything looking good in the technical charts, especially PG Electroplast?
I think definitely PG Electroplast is one stock which is looking good. There was a good consolidation which has happened in the last 2 months, and we are expecting this to break out on the upside. Already there has been accumulation at the lower end, and now we'll see the follow-up move coming in. The immediate hurdle for the stock is 610. Once that is taken out, then you can see a sharp rally towards 660, 670 on the upside. So PG Electroplast would be a bet on the long side. The support for the stock is at 560.
Okay, so that's with regards to PG Electroplast, but it's 245, and we can't miss taking the Herd on Street segment with Somit Sarkar. Somit, Herd on Street, what are dealing room checks indicating right now? Because markets are on a high. I think I'm sure dealers are waiting for opportunities.
Well, yes, there are a lot of opportunities, and as we were talking about the EMS space, that's the first counter that is in focus when it comes to dealer check. PG Electroplast and Avalon Tech. Both these counters are seeing strong buy flows on the large HNI desk, and dealers are indicating that the Q3 numbers of both the companies could be on the stronger side. So keep an eye out for PG Electroplast and Avalon Tech. When it comes to IRCTC, there are buy flows on DI desk, and delivery volumes are also expected to be on the higher side. For IndusInd Bank, there are buy flows on the PMS desk, and dealers are expecting that the news flow regarding a fundraise could come in anytime soon from the companies from the bank's side. So keep an eye out for IndusInd Bank as well. For ITC, that stock has been under pressure for the last couple of trading sessions. Today also it's down nearly 4%, but the buzz on the street is that few mutual funds have started to accumulate ITC at the lower levels. But do remember, this is not a short-term view that the mutual funds are looking at. Obviously, when mutual fund is investing, it's from a longer-term perspective. So they have started to accumulate is what the buzz is on the street. And lastly, when it comes to Bajaj Finance, that counter is seeing some sell flows on the large HNI desk at higher levels. Dealers are indicating that the Q3 update could be on the weaker side for Bajaj Finance.
Okay, so interesting names coming in. In fact, Tapan, let me take PG Electroplast and the EMS system as a whole with you. How are you looking at it fundamentally? Because there's a lot of profit booking that has already happened in the month of December in these names. From where valuations stack up to what the outlook is, what would you advise?
So talking about PG Electroplast, no, I'm quite positive on the stock. Just a disclaimer, we have already given around 550 lakh to our clients. But here, no, what was the main issue? The main issue was the inventory, and almost 1500 crore inventory was stuck, and I think that is going to clear in next quarter. And otherwise, the demand is quite strong. You can see the management guidance also is quite good. Almost 25 to 30% revenue growth will be there in next 1 year, and overall whole EMS sector. And that is why, if you see the valuation now is much more better, and we know that India is quite low in the EMS sector, and growth will be there, and government PLI scheme is helping all these companies, which is going to continue maybe in future also. So that's why, yes, PG Electroplast is a buy, and even other EMS stock, no, one can think about it as and when their correct valuation is coming, and slowly in a SIP manner they can invest in next 2-3 months. I think things will be better from here.
Things will be better from here when it comes to EMS players as well. But moving on, Coal India, the top gainer on Nifty 50 is what we're talking about. And Sharad, interesting developments there, because yesterday we spoke about the production and the sales numbers that did come in. Production has been strong, sales has been slightly lower, and a couple of other announcements on the back of the e-auction which will work in their favor.
Yes, and now I think the entire setup becomes bigger. Better pricing comes in and foreign buyers come in, the Asian ones which are near. So I think Coal India itself is doing well. It's the top gainer also in the index as well. And just like to point out, Coal India, apart from that, the power stocks, the Nifty Energy Index, if you could show, then we'll see most of the basket buying is happening across this segment. And remember, this segment was not in work for the last 3 to 4 odd months, and now we are seeing a good interest coming. Nifty Energy Index is almost 2%. And let's show the constituents to show you the entire good picture. And December month itself, if you look at it, it had a peak demand coming back as well. Now we are joined in by Rupesh Sankhe. He's the Senior Vice President of Research at Elara Capital. Good afternoon to you, Rupesh, and happy 2026 to you and the entire family at Elara Capital. Rupesh, I want to get to know about, first thing is on the Coal India. This is a very important announcement coming in for outside countries also coming in for auctions. I just wanted to get you on the long-term impact for this.
Yeah, good afternoon and happy new year to everyone. Definitely it's positive for Coal India because their e-auction got impacted in the last 12 to 15 months, which was earlier around close to 7,000 rupees per ton. Bottom was close to 2,300. So the almost 30% profitability comes from e-auction volumes. And in the last 12 months, we have seen power demand has almost flat demand was there. And because of that, volume for demand for e-auction volume was also very low. So it got impacted because of low volumes and the low realization. But now in the month of December, second half, we have seen very good traction on the power demand front, almost gone up by close to 6.5%, even the high volume of base of last year. And next month onwards, we will see better growth in the overall power demand. And the coal, which was largely impacted, will also significant growth. So some inventory is there at the power station. So once next month onwards, you will see better offtake volume for Coal India. So it's definitely positive for Coal India. Again, the last week announcement or news on the listing of subsidiaries is also positive. They can unlock some value there. And overall, we can see better numbers for Coal India. Valuation comfort is there at 6% kind of a dividend yield, a strong operating cash flows, valuation at less than 4.5 times EBITDA multiple. Gives a lot of comfort at this current valuation.
But if you look at the other power stocks in general, the power generators, the power transmission companies, not much of a movement that we have seen from share price perspective at least. But given the fact that today they are on an up move, December demand was reasonably good at around 6% on a YY basis. Do you think that this is the right time for any investor to invest in power companies?
Yeah, definitely, because in the last 12 to 15 months, we have seen a derating on multiple fronts because most of these developers, conventional players, were expanding in a big way on the renewable energy front. And we saw a lot of projects got delayed. The multiple was higher, market was assigning close to 13, 14x EV/EBITDA multiple. So derating has happened on the renewable energy front. Even on their regulated long-term PPAs portfolio also got impacted because of low power demand. So on the renewable energy front, we have seen some tenders coming out from the DISCOMs and a lot of issues which were there in terms of right-of-way issues, land acquisitions has got resolved. So we see a lot of tendering activities in the coming months. So that will also boost sentiment and the projects which got stuck will see some revival there. And on the power PPAs and on the regulated portfolio, power demand recovery is good for them in terms of getting a higher merchant business as well as higher incentives from the regulated assets model. So on those fronts, we see a lot of improvement there in the coming months, and that will drive some valuation comfort. And no doubt in the last 12 months, we have seen most of these players have corrected 20-25% from their peak. And now stocks are trading at a reasonable valuation.
Right. Just wanted an update. I guess you were also mentioning that in past there were many renewable projects that were stuck. So what is the update on that front?
Yeah, so see what was happening that nodal agencies were signing power purchase agreement, but the DISCOMs were not signing the power sale agreement, and because it's mostly plain vanilla kind of a solar. But now recently we have seen the battery cost has come down significantly, and now solar with a battery is a good, viable and economically better option for the distribution companies. So distribution companies are now going ahead with a big way on the solar and battery, and that will take this renewable energy. Most of these companies who are now trying for a backward integration like solar cells, modules, battery manufacturing, green hydrogen, all this will see some sort of a better capital allocation, and that will drive their valuation from the current levels.
Thank you, Rupesh. Thank you for joining us and giving us the way forward for power companies. Kunal, coming to you quickly, post the 6% up move in Coal India, is it still in the buy zone?
I think definitely Coal India has been one of the stocks which has seen a good underperformance, and now we are finally seeing an outperformance coming in the stock. The next resistance for the stock on the upside is placed at around 435, 436. So still from the current levels, you have a 6 to 7 rupees upside left. So already if somebody is holding long, continue to hold long. Fresh entry I would not recommend because the risk to reward ratio is not favorable. But definitely it has now become a buy on dip stock. The support is at 412, 413 zone. Any dips towards this 420, 415 mark would be a good point to entry into the stock.
Okay, so that's the view coming in on a Coal India. But thank you, Tapan, so much for joining us on the show. We'll quickly slip into a short break. On the other side, we'll get you the top buy today, sell tomorrow picks as well, and lots more lined up in the next half an hour of trade. Please stay tuned to NDTV Profit.
माही कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस।
फिर तो SBI कूलेस्ट है।
Really?
SBI ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Aam Aadmi clinics transform healthcare. The Aam Aadmi clinics set up in August 2022 have transformed the primary healthcare system in Punjab. A total of 881 Aam Aadmi clinics, 565 in rural areas and 316 in cities are offering free of cost medical consultation, 107 essential medicines and 47 diagnostic tests to the people in Punjab. Facilities include anti-rabies injections and free consultation, tests and treatment for expecting mothers. Each Aam Aadmi clinic provides free of cost medical care to 80 to 85 patients daily.
ਮੈਂ ਪੰਜਾਬ ਸਰਕਾਰ ਔਰ ਮੁੱਖ ਮੰਤਰੀ ਸਾਹਿਬ ਭਗਵੰਤ ਸਿੰਘ ਜੀ ਮਾਨ ਦਾ ਬਹੁਤ ਹੀ ਧੰਨਵਾਦ ਕਰਦਾ ਹਾਂ ਕਿ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਦਵਾਈਆਂ, ਫ੍ਰੀ 'ਚ ਹੀ ਰੇਬੀਸ ਦੇ ਇੰਜੈਕਸ਼ਨ, ਡੇਂਗੂ, ਮਲੇਰੀਆ ਸਾਰਿਆਂ ਦੇ ਇੰਜੈਕਸ਼ਨ ਸਾਨੂੰ ਉਰੇ ਫ੍ਰੀ 'ਚ ਹੀ ਲੱਗ ਜਾਂਦੇ ਆ। ਇੱਥੇ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਸਾਰੇ ਟੈਸਟ ਵੀ ਹੋ ਜਾਂਦੇ ਆ।
The scheme has benefited around 4 crore 25 lakh people so far. Chief Minister Bharat Forge has decided to add 236 new clinics to take the total number of clinics to 1,117. Some of the clinics will be equipped with AI-enabled instruments and mobile medical care. WhatsApp chatbots are being used to set up follow-up reminders and send test results to patients.
WhatsApp पे आपको मिल जाएगा, पर्ची भी नहीं रखनी पड़ेगी, कोई दवाइयों की लिस्ट, कोई दवाई कब लेनी है, याद करानी है तो उनको याद कराना, ये सब कुछ WhatsApp पे कर दिया हमने। दिस इज अ ड्यूटी ऑफ ए गवर्नमेंट एक्चुअली। हेल्थ केयर में ड्यूटी बनती है हमारी लोगों की सेहत की चिंता करना, ख्याल रखना, चिंता करना।
Punjab government foremost in public welfare.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Gewan.
This is the fourth time. Time for a new car, bro.
But I don't have the money right away.
Why don't you apply for a loan from Bank of Maharashtra through Zen Life?
I will do it now. So simple. Zen Life. Get instant loans with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
70-75 वर्ष के मुँह ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को यह अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Welcome back to India Market Close, and we are just 18 points away from Nifty's all-time high levels. The level is 26,325. Currently, we are comfortably above the 26,300 mark. Let's see how fast we can actually come. And we have roughly, we could say, 30 minutes. So we'll be looking at that. But moving on to a counter which has been in discussion for the last two trading sessions. Fresh tax heat has hit tobacco and cigarette makers as they brace for steep 20 to 40% price hikes. ITC yesterday saw a sharp fall on the back of this development, and today also stock is facing pressure as brokerages slash EBITDA and EPS estimates and downgrade the targets. So Mahima is here joining us with a bull versus bear scenario on this stock. Too much punishment, Mahima, on ITC, is it?
Yeah, absolutely. And I think the street was not expecting this kind of harsh taxes coming in. That's why the stock is being punished. Now, with respect to where the bull versus bear case is concerned, I think one of the reasons as to why investors like ITC stock is is because of the dividend yield that it provides, right? A 4% average dividend yield and an 85% payout ratio is generally what ITC gives to its investors. But on the flip side, the news that has come in with government levying extra excise duty overall on tobacco and health cess on pan masala products is definitely a negative, a big negative coming in for something like an ITC, and this is going to impact their overall volumes as well as margins going forward. And that's the next bear case, right? Additional excise to impact their volumes, because whatever cost that comes on board along with this new taxes being introduced will be passed on to the customers, and because of that their volumes will come down. So one aspect could be this, and the other, if they don't pass on the entire benefit, it could also impact their overall margins and squeeze the margins going forward. But on the flip side, FMCG business is seeing a growth and is going to going forward see volume growth as well, considering the GST cuts that have come in last quarter. In terms of the other aspect, the paper business, that's been doing well, but the Century Paper acquisition is set to kind of bottom out in FY27, and that's when the synergies come to kick in. That's when margins seem to be improving in the paper business. But on the flip side, we've seen brokerages come out and cut EBITDA estimates anywhere between that 7 to 11% for FY27 to 28, considering this overall tax impact that ITC will have on itself. Lastly, in terms of what brokerages are penciling in, where lowest brokerage target was by Nomura at 340, and right now ITC is trading at the around 350 mark. So the question mark really here is that whether we'll see further downgrades coming in from brokerages or not. And on the flip side, you have Macquarie, which is still maintained and outperformed with a target price of 500, and what they believe is that going forward, tobacco leaf prices is going to ease out and is going to give some benefit to the overall business in terms of margins as well as profitability going forward. So this is the overall view of the bull versus bear case of ITC, but of course right now the bears tends to outweigh for sure.
Right.
Yes.
The bears are strong. In fact, Kunal, do you see any reversal when it comes to ITC on the charts with the 2 days of losses that have already come in, stock trading at a 3-year low? And with the ITC, if you look at a VST and Godfrey Phillips, a similar trend coming in there as well.
I think we hardly see such moves in ITC. Probably in a month, ITC would move by 3 to 4%. And now what we have seen in 2 days, the stock has moved by almost close to say 8 to 10%. So again, on the technical charts, the support for the stock from where we had seen the previous rally is around 340. We are trading at around 350. So again, we are coming closer to that demand zone. We need to see any reversal, strong buying hands coming from those levels. If that is the case, then probably one can look for a pullback rally towards 380 on the upside. But still early to call. 340 is something which I'm looking at. I want some reversal coming on the technical charts from those levels, and then probably confirm a buy signal from those levels.
Okay. Also, let's just quickly pull up UCO Bank. They've just reported their quarterly business update, and if you see in terms of the numbers, total business is up around 13%, advances have grown 16%, deposits have seen a growth of around 10 to 11%. So a strong number coming in there as well, on the back of which again UCO Bank is also at the day's highest level. So no major moves once the announcement has come in, but the banking space has been in the positive. Let's also get in Dipan Mehta, founder and director at Elixir Equities. Dipan, welcome to the show. Always a pleasure to speak to you, and wishing you a happy new year as well. Let's start off with this kind of euphoria that's coming in terms of markets. I mean, we've started out on a very positive note, and it seems this trend is expected to continue. Your initial assessment, because we're just, say now, around 70 to 80 points away from record high levels, but we were this close in achieving that today.
Good afternoon, and thank you for having me on your show. Yeah, I think 2026 are on a good note. In fact, the news flow also is positive. Impressive GST numbers despite the cut, and also the auto numbers have been very good for both two-wheeler, three-wheeler, commercial vehicle. So I think we've got off the year on a good start, and I have always expected 2026 to be a great year for equities, because we are seeing a broad-based revival in earnings, and valuations have certainly become reasonable for good quality businesses. They were over the top back in 24 end and to the first half of 2025. But now I think we've seen a decent correction in valuations, and earnings growth also has picked up. So very, very positive on the markets in 2026 per se. And I'm not so sure about the Nifty and the Sensex, but definitely portfolio returns will improve. They were mostly negative for 2025.
Okay. In fact, now we're just probably 9 points, 8 points away from record high levels. So I'm not sure whether we'll be hitting that or again we'll see a reversal from here on. And Dipan, your view when it comes to ITC as well. Last 2 trading sessions have been a mayhem. We are already at a 3-year low. Never seen this kind of a move in terms of ITC. How are you looking at this? Would you look at the current moves as a buying opportunity from a longer term perspective, or would you say just stay away? How are you seeing it?
Valuations are attractive, no denying that, and this is a setback for the company, major or minor, only time will tell. But look, ITC and the entire tobacco industry have navigated a lot of these price increases because of taxation, and they will get over this as well, because at the end of the day, their customers are habituated, and it's a large growing population within India, and very, very high entry barriers. Brand plays a very important role over there. So I think that it's a setback, minor or major, as I said, only time will tell. And valuations are attractive. So we remain positive on ITC per se. Only disappointment is that the non-tobacco businesses haven't scaled up as well. But nonetheless, I think it's a cash cow. And eventually, I think once this particular event has been absorbed and discounted, you may see ITC do at least give returns in line with the market returns.
All right, the auto segment is also something which we are looking at. Of course, good set of numbers came in. But apart from this, on the December auto sales, earlier today we had Ashwin Patil, the head of fundamental research at LKP as well, where he talked about how CVs and tractors are something to watch out for this year. Let's listen in why.
The tractor segment is doing fantastically well with the super monsoons. The reservoir levels are quite high at this point in time. The kharif output has been good. The rabi sowing has been quite good. So I think the tractors is going to play the best within the overall auto segment. Followed by, I guess now it's time for passenger vehicles as well as two-wheelers. I mean it's very difficult to pick which sector is going to do well, but even the commercial vehicles have started doing well before the overall capex outlay or the government spending has come into play. So I think each and every segment is doing fantastically well. The tractors, commercial vehicles, I think these 2 segments will be to be washed out in calendar year 2020.
Deepan, we'll get back to you on the auto front, but we are just 2 or at least 1 point away to Nifty. Just pull up the Nifty and the Nifty Bank chart. We are almost about to get that levels in. We are at 26,330 odd levels. If you could just show the intraday chart of Nifty, we'll understand that as well. And the Nifty constituents, the top gainers who are doing the trick here. Of course, the FMCG pack is on the losing side because of ITC, but remove ITC. All the sectors are doing well in trade. I've just seen Nifty is comfortably above its day's high level as well. And Nifty has hit its record high levels on an intraday basis. Yes, it's at a record high level, and that's bulls are in charge. Hiral, important factors and a very good gift in 2026.
Absolutely, record high levels is what we've achieved yet again at the start of 2026. Let's just look at the Nifty contributors, and we'll look at, the intraday in terms of the counters which are firing on all engines. If we could just have
HDFC Bank, ICICI Bank and
Reliance. I think these are the 3 counters which are contributing. NTPC is coming up to the radar as well, which is very interesting. Very quickly, Dipan, let me come to you. HDFC Bank, ICICI Bank, Reliance Industries and NTPC. Top 4 contributing to the kind of gains that we are seeing to let Nifty hit a record high level. Dipan, your view?
Yes, sir. I think they are the big index hit heavyweights, and we are seeing a lot of money coming in. I suspect that today we may see good FI flows as well because of the large cap stocks which are doing very well. And HDFC, ICICI Bank have been underperforming for the past several years or so, and they're playing a bit of a catch up. I think the issues around them are well behind. And when you have the economy doing well, then credit growth should do well, and that will benefit large banks.
All right, Kunal, now of course Nifty has hit its record high levels, and I just want to get the technical view of this entire space for the Nifty key levels. Now, of course, these levels will change. Which levels it's looking at? Give me a positional setup kind of levels as well. Kunal.
Yeah, so as we discussed at the start of the show, what we are expecting 26,700 on the upside for the Nifty index in the very short term. And if you ask for a very longer term view, I think we are ready to head towards 28,000 for the Nifty index. So 26,700 is what I'll be looking from a short term perspective. On the lower end, now 26,100 is the support for the markets. So I think still 200 points downside is the support, and you still have from your 500 points upside left for the Nifty index. So still one can go long at the current levels and play the entire move upside.
There is a strength in the markets coming in, but also the broader indices, they are also doing well. Let's just pull up the mid cap and the small cap indices as well. The Nifty mid cap index, how they are doing, and Nifty small cap, they are also showing a very strong momentum in the markets. And also apart from this, let's just pull up the Nifty constituents to give you the entire picture of where the action is, and it's looking really wonderful. All across the sectors, we are seeing a sea of green taking place. And Somit, interestingly, the setup is looking like it'll sustain. I just want to get you in on the HDFC Bank and Reliance. The strength is actually coming in.
Well, yes, we are seeing, in fact, both the counters, specifically HDFC Bank has been an underperformer. And given this uptrend has started, so this could sustain in HDFC Bank. And when it comes to Reliance Industries, there have been multiple broking firm notes also which are quite bullish on the counter. In fact, Morgan Stanley came out with this note where they're seeing multiple triggers that could come in for Reliance Industries in 2026. They have maintained their overtreating, the target price is over 1800. So they're also quite bullish when it comes to Reliance Industries. But apart from that, the strength that we are seeing largely when it comes to NTPC and Coal India is something that was unexpected, and that is something been supporting the market. ITC, yes, it has been an underperformer for the last 2 trading sessions, and if ITC would not have been an underperformer, yes, the market would have touched their all-time high anytime soon. Apart from that, yeah, largely Reliance Industries, ICICI, NTPC and Coal India are the gainers that we are seeing largely on trade today.
Absolutely, the contribution coming in from banks is very strong, as Somit is mentioning. ITC, Kotak, Axis, Shriram Finance, these are few of the ones which are putting some bit of pressure. We have Pankaj Murarka as well. Deepan is already with us. Pankaj, welcome to the show. Record high levels hit yet again after the 1st of December. Where from here on?
Well, I think Indian markets have been in a secular bull market. I was just doing my year-end note, and what I realized is now 10 years in a row, Indian markets have given positive returns every year. So, and last year gone by is a pretty decent year with Nifty returning about 10% returns. I think we're coming to a stage where we're coming out of slow earnings growth, where earnings growth is going to accelerate from here on. So I think markets are poised for a mid-teens kind of a returns going into this year. So from here on higher.
So from here on the trajectory is looking high. Pankaj, you have banking majors like HDFC Bank, ICICI Bank, as well as Reliance Industries, which is contributing to the kind of gains that we are seeing in today's session. How would you look at them? Do you think it's going to be the banking majors who will continue to get this uptrend high?
Well, so we continue to remain positive on banks. We like banks, and I think as I also believe that this is going to be a year where foreign flows will come back to India as the world gets into a reverse AI trade. Last year, India has seen outflows because all through last year, all the equity flows have gone into AI companies and countries which have AI stories, and India does not have a AI story. So now that the AI trade reverses this year, which is what my expectation is, India should start getting foreign flows back. And as foreigners or external money comes to India, I think first they will buy the large cap heavyweights, and so which is where I think more money flowing into banks and some of the larger heavyweights, including Reliance.
But Pankaj, what is your view when it comes to specifically the auto? In fact, the Nifty Auto Index also is at a record high. Similarly, Nifty Metal Index has been on an uptrend for the last 1.5 months. So, how are you looking at both these indices and the stocks that are part of it?
So the view on auto continues to remain positive, and that's primarily because we saw the December monthly sales which came out yesterday were pretty healthy. So post GST cut, we had a very sharp sales rebound in automotive sector, but that sales momentum has sustained is what we can figure out from the December numbers. Maruti sales were up 27%, and likewise two-wheeler sales were pretty healthy. So I think there's a lot of latent demand because auto as a sector is coming out of almost 3 years of very sluggish demand. So what it effectively tells us is that the demand rebound that we saw post GST cut was not one-off, and there's a latent demand that exists, and which is what is playing out and will play out during the course of the year. So the outlook on auto continues to remain positive. On metals, I think it's a rub-off effect of the fact that the government did extend duty protection to steel industry, and aluminum prices have been holding pretty well. So again, metal companies have been a beneficiary of that.
Pankaj, another query here, Sharad, this side, especially the mid caps and the small caps. The 2025 was, of course, not a year for small caps as well, but at least for mid caps, is 2026 showing some signs of hope? Because there are some beaten down quality companies as well, or the idea is to still stick to the large caps for 2026?
My view is that investors will have to be very selective in mid and small cap. While mid caps will deliver returns, but yet I think that not all mid caps will make money. So it will be more stock specific when it comes to mid and small cap, because while a lot of these quality companies have corrected and probably are at attractive valuations, but there are equal number of mid and small cap companies where valuations are still very rich or far ahead of fundamentals. So I think investors should be very careful. At the broader level, I still think that going into CY26, the large cap index will outperform the mid and small cap index as it happened in CY25.
Interesting, Pankaj. Stay with us. Deepan, what would you have to say? You know, because everyone is looking at a bottoms-up approach when it comes to the broader markets. Anticipation was that earnings will improve and there could be a good opportunity and, you know, a wealth creation opportunity in the broader markets as well. Would you still say that it's best to be with the large caps in this kind of a rally, or in this kind of a market, it's going to be the broader markets which will play catch up?
I think that small mid-cap stocks can have a revival in 2026. And of course, there have to be stock-specific, selective, look for companies which have a nice innovative business model, good corporate governance standards, reasonable valuations. All those typical check boxes have to be marked. But broadly, I think that small mid-cap stocks should drive the growth returns in 2026. The essential problem with large caps is that among the Nifty 50 stocks, there are only a handful of stocks, maybe 10, 12 stocks, which can show consistent growth in excess of, say, 12, 13% or so. The rest of them are in flat territory. But look, you know, I think it doesn't matter whether it's large cap, small cap. I think going to be a great year for equities. And some of the sectors, I think, which have been underperforming, they may come back into reckoning, like software services. I think if the rupee depreciated and if there's a trade deal with US, then I certainly feel the prospects and sentiment in both pharma and software should improve. And software service companies have very high weightage in Sensex Nifty. So that could drive the Sensex Nifty returns as well. So I think that across the board, I think it's important for investors to remain more or less fully invested within the equity market. And after many quarters of underperformance, negative returns, especially in small mid-cap stocks and individual portfolios, 2026 may be a good year.
Pankaj, I would like to get you on this. We are speaking about some sectors, you know, after 3 to 4 months, these sectors have actually come up. I'm talking about the cement, the power segment, some infra names, and even the capital goods segment as well. Now, when these sectors move, generally they move in tandem, historically speaking. But Pankaj, in case you had to pick up something like a cement, something in infra, or maybe in capital goods, what would that be?
Well, I think the outlook for power sector going into this year is much better than last year, because last year, calendar year CY25, you see, power demand had moderated significantly at just about 4% growth for the full year. But now we're looking at about high single-digit growth this year. Likewise, when you talk about cement as a sector, is coming out of a fair bit of consolidation, because cement as a sector has underperformed in the last 12 months. But now with improving demand environment and some price hike already expected in January, probably we should see improved prospects for cement industry as well. One thing I really want to highlight is that I think this year is going to be year of stock pickers. So within sectors, we'll see significant divergence in performance of stocks. So while broader trends are important, but eventually what will make money for investors is buying the right stock, because stocks within sectors will show significant divergence.
Kunal, from you, just wanted to understand, in past also we have seen this trend coming in, that whenever in fact in the recent past we have seen this trend coming in. So what is that technical factor that is making you believe that this time the gains that we are seeing will sustain and Nifty could see more upside from the current levels? And if yes, what is that target that you're giving for the next 1 month or for the January series for Nifty?
I think as I discussed, 26,700 is what I'm expecting for the January series. That's my first target on the upside. And positionally, we expect Nifty to go towards 28,000 on the upside in the next probably say 3 to 4 months. So I think overall the setup is bullish. 25,700 was the make or break level for the markets. We are able to hold that successfully, and now we are seeing the broader market participation also coming in. So the view continues to remain bullish on the indices. Even for the Bank Nifty, 61,000 looks as a medium-term target for the Bank Nifty index.
Okay, so that's with regards to, the levels that you're tracking. Pankaj, before we let you go, a quick view in terms of IT as well, because usually the expectation now is that if the FIs are also going to come back, your BFSI and IT space will be in focus, but IT has not seen a good run yet. Would you be a buyer?
100%. Hold your breath. This year is going to be a year of IT. I think IT will be the best performing sector this year is what my bet is. I think globally as well, we're seeing two things change or will change during the course of this year. One, investments into AI will transition from AI infrastructure to AI software and services. And India has the largest market share in software services in the world. So Indian companies will benefit in terms of more flow down of business to them. In terms of capital market flows also, IT is one sector where investors are grossly underweight. And as business outlook improves, investors will be forced to buy both domestic and international. So I think from a capital market perspective also, we'll see a significant amount of money flowing into IT as a sector. So I think there is a high probability that IT could be the sector of the year this year.
Okay, IT could be the sector of the year as well. Thank you, Pankaj, for that. Dipan, how are you looking at the IT space?
Well, I just said earlier in the interview that we are very positive on IT services. And the fact that they are stagnated in terms of earnings and stock price for last several quarters means that they are to an extent under-owned, out of favor, and typically out of favor stocks and out of favor sectors generally deliver the best returns going ahead. And the way the commentary is coming in from TCS, Accenture, we are noticing gradually that the proportion of revenues coming in from AI, that proportion within the revenue pie is increasing steadily. That's growing at a much faster pace, and eventually that will drive the overall growth rates for these companies. So I think there could be a good trading rally in IT services companies. Valuations are reasonable, and as I said, I think rupee depreciation is a big factor for them. Right now, I think next couple of quarters or so, the hedges may lead to mark-to-market losses. But all the new hedges that these companies are taking, they are at 91 or so, and that certainly will go a long way in improving their margins. And lastly, I think a lot of these services companies, IT service companies, are sitting on good engagements. They've tied up for orders, they've got the customers in place, they got the projects in place, but execution has not yet picked up. And has been the situation for last 2-3 quarters or so, where you've seen that the deal book is improving for them, but not the execution. I think that may change in the next few quarters or so, where actual implementation and revenue booking on the order book position may start in a good earnest for the sector as a whole.
Kunal, 5 minutes to market close. What would be your BTST ideas?
Yeah, I think my BTST idea would be from the PSU bank space and the big boy SBI. It has given us a fresh breakout, new all-time high. I think still there is upside left into the stock. So that would be a buy for me at the current levels with a stop loss of 990 on the downside, looking for targets of 1020 to 1030 on the upside.
Okay, so that's with regards to where SBI goes. Let's just quickly pull up IDBI Bank on the screens and see what that counter is doing in trade. As reports are suggesting right now, IDBI Bank stake sale, all decks are cleared for financial bids. The government is likely to invite financial bids for IDBI Bank within a week. That's the latest that we're picking up at NDTV Profit. And the interministerial group has cleared the bidding process, and the final draft of the share purchase agreement has been approved. Invitation for the financial bids could be uploaded on the DIPAM website shortly as well. In fact, I have my colleague Shrimi who joins us on the phone line. Shrimi, what are the details that you're picking up so far? IDBI stock has been on a tear, 10.5% up move coming in today's day, trading at the day's highest levels. And from what we understand, you are picking up details on the bank's stake sale where the decks are all clear so far. I think we've just lost the phone line with her, but let me take this quick view with Dipan. Dipan, your view on the IDBI stake sale now that all decks are clear. The expectation is that the financial bids will be invited within a week.
I think from IDBI Bank's shareholders' perspective, it's a great news. The bank has been completely cleaned up, one of the best balance sheets in the industry and industry-leading growth rates as well. I think the government has done a splendid job in terms of ensuring that whoever the next owner of IDBI Bank is or the majority owner has got a bank which is, in terms of balance sheet, extremely clean and decent growth dynamics, very deep relationships, good technology platform, and reasonable valuation. So this will be a great, I would say, example of good privatization. And I hope it encourages the government to take many more such steps for their enterprises where they feel that private sector may play a more important role and can take the company to the next level.
Thanks a lot, Deepan and Kunal, for your time and giving both fundamental and technical views. But today has been a very eventful day. Nifty Bank, Nifty Midcap, all these three indices have hit its lifetime high levels and giving the entire nation a very nice gift on the new year. Nifty above the 26,300 levels and Nifty Bank also more than 60,000 odd levels are likely to close near the day's high levels. Also, let's see the Nifty constituents where the action has been. And largely it has been a sea of green, but look at the old economic stocks, Coal India, NTPC, Hindalco, all doing well. Of course, there's a new specific flows happening as well. Consumption names, private banking names, and Reliance all are holding the fort. The only thing which is kind of dragging Nifty, but actually not, is ITC. It's down almost 4%, but the VIX, that has actually come up to 9.5 levels as well. Sector speaking, a sea of green coming in, the usual suspects. Metal, PSU Bank doing well, Realty also seeing a good jump, but look at this CPSE index, the PSU segment index, that is doing well. It's up 3% in the day's trade. Of course, SBI is also pulling that up. Consumer durables, short covering happening, and largely the small caps and the mid cap indices also doing well. Only FMCG down 1%. See, it's ending near the day's high level, and the story will remain same for the small cap index also. That's also ending near the day's high level. See the strength which is coming back in the market. The volumes are also coming in, and likely the FI short covering has started. Also, let's pull up the advanced decline ratio to see what's there in the broader markets, and it's a very great kind of a setup coming in 3:1 in the favors of bulls, Nifty mid cap, and the small cap indices also we had discussed earlier. Let's pull out the BSE 500 contribution to show you the action. IDBI Bank on the divestment buzz, Bosch doing really well, broking upgrades have started in, and a lot of sectors are finding new positions being built, be it by the HNIs, family office or DIs. Amongst the losers, not so much, but definitely Prince Pipes, Dr. Lal Pathlabs, Metro Brands, a slight profit booking definitely coming in, but consumption names, select consumption names, still there is selling in these counters. But what you should be preparing for next week, that's also pretty much important as we start focusing on the earnings season. FI is coming back, volumes will also be more, DI's positioning will be higher. Rights issue is also there. Forex, India Forex Services is there. Rights issue is coming. Silgo Retail, it's a small cap, but nevertheless, I'll get you that information. And also buyback for Kim Organics, the buyback price is at 800 rupees per share. That's what we'll be looking out for. Bonus issue for Orient Tech, that's coming in at almost 1:10. And also apart from this bonus issue, anchor lock-in exits are happening, so you might see some selling pressure on Monday. These are the stocks where you should be focusing on. Board meeting is there for financial results for Axita, Cotton, KSH International, as well as we kick off the Q3 earnings season, and a couple of fundraise announcements are also there for these companies as well. So a lot of action lined up next week, and this has been a great day for the Indian markets. And that's all, folks, for India Market Close. Stay tuned to NDTV Profit And up next is Market Express by Himanshu.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. यूज कीजिए वैलिडेटेड यूपीआई फैसिलिटी और सेफगार्ड करिए अपना हार्ड अर्न्ड मनी.
An investor awareness initiative by SEBI.
I love you.
टीवी पर पहली बार.
तुम कभी नहीं बदलोगे. मैं प्रेग्नेंट हूँ.
मैंने बोला था बच्चा रखने के लिए.
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं.
मैं उसे कभी माफ नहीं करूंगा. हमें किसी की जरूरत नहीं, हम जी लेंगे.
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत. डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर. सभी प्रमुख DTH और केबल ऑपरेटर्स पर उपलब्ध.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है. आँख नहीं फूटती धूप में, मैं फटदनी से चाय बना ले, बहुत सहूलियत है हमें इसकी.
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले.
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
Nice, yeah.
Hey, Mahi, suggest a cool bank जो environmentally conscious हो.
SBI कूलेस्ट है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
Wow, that's cool.
SBI, the banker to every Indian. Truly.
Punjab government, foremost in public welfare. High-tech ambulance brings speedy help. The government led by Bhagwant Singh Maan has deployed more than 400 high-tech ambulances to provide rapid emergency assistance across villages and cities. Equipped with GPS tracking and digital communication systems, besides medical equipment like oxygen cylinders, ventilators and ECG machines, these ambulances provide critical care similar to the hospital emergency ward. This helps the doctors and paramedical staff to provide the best care to critically ill patients while in transit.
325 ਐਂਬੂਲੈਂਸਾਂ ਜਿਹੜੀਆਂ ਨੇ ਉਹ ਮੁਫਤ ਸੇਵਾਵਾਂ ਪ੍ਰਦਾਨ ਕਰ ਰਹੀਆਂ ਪੰਜਾਬ ਦੇ ਵਿੱਚ. ਸ਼ਹਿਰੀ ਖੇਤਰ 'ਚ 15 ਮਿੰਟ ਤੇ ਪਿੰਡੂ ਖੇਤਰ 'ਚ 20 ਮਿੰਟ ਔਸਤਨ ਟਾਈਮ ਹੈ ਉੱਥੇ ਪਹੁੰਚਣ ਦਾ. ਕੋਈ ਕਿਸੇ ਕਿਸਮ ਦੀ ਜੇ ਕੋਈ ਰੱਬ ਨਾ ਕਰੇ ਇਸ ਤਰ੍ਹਾਂ ਦੀ ਐਮਰਜੈਂਸੀ ਹੋ ਜੇ, GPS ਸਿਸਟਮ ਲੱਗੇ ਹੋਏ ਨੇ, ਆਪ ਵੀ ਅਸੀਂ ਚੈੱਕ ਕਰ ਸਕਦੇ ਹਾਂ ਕਿ ਗੱਡੀ ਕਿੱਥੇ ਹੈ.
In order to run this high-tech ambulance service efficiently and provide rapid assistance in villages and cities, the government has established a network where a dedicated helpline number 108 and 24/7 call centers help direct immediate assistance to patients in an emergency situation.
ਐਂਬੂਲੈਂਸ ਦਾ ਤਾਂ ਬਹੁਤ ਜ਼ਿਆਦਾ ਫਾਇਦਾ ਹੈਗਾ. ਐਮਰਜੈਂਸੀ ਦੇ ਵਿੱਚ ਐਂਬੂਲੈਂਸ ਦੇ ਥਰੂ ਆਪਾਂ ਪੇਸ਼ੈਂਟ ਨੂੰ ਬਚਾ ਸਕਦੇ ਹਾਂ.
This is proving very helpful in saving lives in critical cases of road accidents and heart attacks. Punjab Government, foremost in public welfare.
Hello, good evening, and welcome to Market Express. I'm Himakshi Bahugna. Now let's get started with the show and see how the markets have fared today. So, talking about the markets, it was a stellar day of trade. Nifty has managed to scale a record peak. Sensex also jumped nearly 600 points as bulls took charge over the Lal Street. And if we talk about the advance decline ratio, so that was sharply, tilted in the favor of the advances. And it was a sea of green on the Lal Street with bulls powering ahead and energy as well as PSU banks leading the gains. FMCG was the only sector to shut shop in the red, dragged by ITC that hit a 52-week low today. Talking about the Nifty Metal Index, that has hit a record high, gaining for the fourth straight session with a 5% surge in the last 4 trading days. And this rally is fueled by domestic safeguard duties and also robust global commodity prices. Meanwhile, the Nifty Auto is also in the top gear, rising for the 4th session in a row after strong December auto sales. Both the sectors, are driving the market momentum as investors cheer positive demand cues and also pricing the power. And big consolidation in the QSR space. The Sapphire Dyani merger becomes effective April 1 through a share swap route. Now, under this deal, shareholders will receive 177 Dyani shares for every 100 Sapphire shares. Now, Dyani will also pay a one-time fee to Yum. Now, brands to cover the merger-related expenses. With this move, India's largest franchise operators for global food chains are joining the forces, creating a stronger footprint in the quick-service restaurant market. And all eyes now on how this merger reshapes the competitive landscape. Also, ITC shares have tumbled to a 52-week low as additional levies kick in from February 1st. So, brokerages warn steep price hikes may follow, and Jefferies is expecting a 15% increase, while MK projects 20 to 40% across slabs. So, MK has downgraded the ITC to reduce from add, while Motilal Oswal and JP Morgan has cut the ratings to neutral. So, Nuvama has also moved to hold. Analysts have slashed the EBITDA estimates by 7 to 11%. So that's a huge, drop there for FY27 and FY28, with the lowest target now at 340 rupees. So clearly the sentiment around ITC has turned cautious as regulatory headwinds weigh on the outlook. Next up, we have Coal India. So the shares of Coal India has surged, marking their biggest one-day gain since August 2024. Yes, and what's the trigger here? So a major policy shift, that is foreign buyers can now participate in the e-auction starting January 1st. And consumers in the neighboring countries will also be allowed, expanding the buyer base beyond domestic traders. And this move unlocks the new revenue streams through cross-border demand and also boost the competitiveness in the e-auctions. And analysts are saying that the change positions Coal India as the key supplier across South Asia. And this also signals a strong start to the year for the energy major. In fact, let's look at some brokerage notes. So, Citi is maintaining its buy call on RR Cable with a target price of 2,050 rupees and has also placed the stock on a 90-day catalyst watch. Now, the brokerage expects the company's earnings trajectory to remain strong, projecting a robust 74% year-on-year growth, and margins are also expected to improve, supported by operational efficiencies and also demand trends. And Citi's outlook signals confidence in the RR Cable's fundamentals and growth potential, making it one of the key picks in the electricals and cable space for now. Let's keep it going with the brokerage notes then. So Citi is maintaining its buy call on Polycab with a target price of 9,200 rupees and also has added the stock to its 90-day catalyst watch. The brokerage is expecting the company's earnings trajectory to remain robust, and this will be driven by robust performance in the wires and cable segment. So Citi projects a solid 38% year-on-year growth along with a 50 basis point improvement in the margins. So this outlook signals confidence in Polycab's fundamentals and also positions it as a key player in India's electrical space. And big breakthrough for Time Technoplast. So the company has received approval to manufacture high pressure cylinders used for compressed gas applications, making it the first in India to get this nod. Now the clearance covers multiple high pressure gas cylinders, adding to its existing approval for oxygen cylinders. And this move allows Time Techno to enter the higher value advanced product segment, unlocking new growth opportunities in the industrial and specialty gas markets. This is a significant step forward, for the company's innovation and also expansion strategy. Next up, we have Aurobindo Pharma that is strengthening its domestic presence with a strategic acquisition. So the company has completed the purchase of Khandelwal's branded formulations business for 325 crore rupees effective January 1st of 2026. Now this deal, brings in 23 brands and also 67 SKUs, adding the depth to Aurobindo's portfolio in the Indian market. Now this move marks a significant step in expanding its branded formulation segment and also positions Aurobindo for stronger growth in the domestic pharma space as well. Next up, we have Indian Bank that is riding strong business momentum. In the third quarter, total business grew 13.4% year-on-year to 14.3 lakh crores. Now, gross advances have jumped 14.5% to 6.4 lakh crores, while the total deposits have risen 12.5% to 7.9 lakh crore rupees. So, the bank's domestic CASA ratio stands at a healthy 39.02%. And this signals robust deposit traction. And these numbers highlight solid growth across lending and deposits, positioning the Indian Bank for a strong finish to the fiscal year. Whereas South Indian Bank has reported steady trends in the third quarter. Total deposits have grown 12.2% year-on-year to 1.18 lakh crores, while the gross advances have risen 11.3% to 96,765 crore rupees. And if we talk about the CASA ratio, so that has improved slightly to 31.84% as compared to 31.15% year-on-year. So these numbers reflect consistent growth in both the lending and deposit, and this signals stability in the bank's core operations as it heads into the final quarter of the fiscal year. Whereas next up we have Kotak Securities that has also initiated coverage on Smartworks co-working with a buy rating and target price of 600 rupees. So the brokerage is highlighting Smartworks as India's largest flexible workspace operator with 10.3 million square feet of the leased area. Now, Kotak expects an impressive 38% CAGR in adjusted EBITDA over the next 3 years, and this is driven by expansion in area and also strong demand trends. Flexible workspaces remain among the top absorbers of the new office supply. However, Kotak is flagging key risk, that is sustaining occupancy levels and also sourcing new real estate. And viewers, MCX shares have hit a fresh high today after the stock has turned, ex-date for its 1-for-5 split. Now, the exchange has jumped about 4% in early trade, rising to a new peak as investors reacted to the split, which was aimed at improving the liquidity. And the strong move also comes at a time when MCX is benefiting from the higher commodity volatility and also solid volume growth through the December quarter. And big push for electronics manufacturing from the centre. The government has cleared 22 more projects worth nearly 41,863 crore rupees under the Electronics Components Manufacturing Scheme, or the ECMS. Now, these approvals form the third tranche, taking the total number of cleared projects to 46 so far. And what's important is that these fresh projects are expected to generate over 2.58 lakh crores in the production and also create nearly 34,000 direct jobs, more than double, the output expected from the first two tranches combined. So the scheme, notified in April 2025 with an outlay of almost 23,000 crores over 6 years, has seen massive interest, with applications proposing investments of over 1.15 lakh crores. Clearly, India's electronics push is gathering serious momentum here. And from manufacturing to the gig economy, So where the centre is now proposing new eligibility rules for social security benefits. The centre has proposed a key change that could impact gig and platform workers across the country. Under draft rules issued by the Labour Ministry, gig workers will need to be engaged for at least 90 days in a financial year with one aggregator to qualify for social security benefits. And for those working with multiple platforms, the requirement goes up to 120 days cumulatively. And importantly, a worker is considered engaged for a day if any income is earned. Irrespective of the amount, this notification came just a day before gig workers held a strike on New Year's Eve demanding better pay and also working conditions, making this a closely watched move. And staying with jobs here, here's a story that's making headlines for all the right reasons. Amid a tough hiring environment, a standout success story from IIT Hyderabad, Edward Nathan Varghese, a final year computer science student, has landed a record-breaking 2.5 crore job offer. Yes, this is the highest ever for the institute since inception in 2008. So Edward will join global trading firm Optiva as a software engineer starting July after converting a 2-month internship into pre-placement offer. Having grown up in Hyderabad and also studied in Bengaluru, the 21-year-old says that he remained confident despite the broader slowdown, proving skill still find its reward. And finally, back home strong. So investment numbers coming in from Tamil Nadu, and Tamil Nadu has clocked a strong investment year in 2025. The state has signed 270 MOUs committing investments worth 2.7 lakh crores, according to industry's minister. So these investments are expected to create over 4 lakh jobs with growth spreading beyond Chennai through regional investment conclaves, and the state also expanded its, the IT, infrastructure through tidal neo parks and also set up new SIPCOT industrial parks in districts like Tenkasi, Madurai, and Thiruvarur. Now, the minister has said that sector-specific policies have helped Tamil Nadu strengthen its position in the futuristic areas like aerospace, defense, electronics, and manufacturing. Viewers, India's manufacturing sector has lost some steam in December, with the PMI slipping to 55, which is the weakest reading in more than 3 years. Despite the slowdown, the index has stayed well above the 50 mark, which basically means factory activity is still expanding and new orders and output continue to rise, but a much softer pace as demand has cooled and competition picked up across several categories. Export orders also weakened, posting their slowest increase in 14 months. Now on to some national news. Strong words coming in from India's External Affairs Minister. He delivered a sharp message on India's national security stance, calling Pakistan a bad neighbor and also asserting India's right to defend itself against terrorism. Speaking at IIT Madras, Jaishankar said that nobody can tell us what we should do or not do. So in a clear reference to Operation Sindoor, under which India has targeted terror infrastructure in Pakistan and POK last year after the Pahalgam terror attack, he said that when terrorism is pursued deliberately and persistently, India will exercise its right to respond on its own terms. So the minister also touched down upon the Indus Waters Treaty, which was suspended after the attack. And now to a serious public health emergency where fear and uncertainty continue to grip the residents. The water contamination crisis in Indore has turned grimmer, with death toll rising to 10 as the High Court hears the matter today. Residents of Bhagirathpura continue to report vomiting, diarrhea and dehydration allegedly caused by sewage mixing with the drinking water. Now, despite tanker supply and assurances from the civic body, locals say that they do not trust the water, even after boiling it. Officials are saying that contaminated pipelines have been isolated and repaired. Health teams are conducting door-to-door surveys and compensation has been announced for the victims' families. Authorities admit that it will take some time to restore public confidence in the water supply. And new FASTag norms are now in force from 1st of February, bringing a major change for the highway users. So the National Highways Authority of India has scrapped the post-activation KYV process for the all-new FASTags issued to cars, jeeps and vans. And this move is designed to cut delays and also make the system easier for everyday motorists. Instead of asking users for repeated verification after activation, all checks will now be completed by banks upfront using the Vahan database before a FASTag goes live. So this means that no more follow-up calls, document uploads or last-minute suspensions for the new tags. Viewers, India has logged its 8th warmest year on record in 2025 according to the Meteorological Department. Now, temperatures were higher than the long-term average and the country saw a rise in cyclonic systems and also severe weather. Heavy rains and floods to thunderstorms and lightning, claimed more than 700 lives during this year. So lightning alone accounted for nearly half of all the fatalities, and the IMD notes that climate pressures will continue to shape India's weather patterns, with changing temperatures and also extreme events likely to remain a challenge in the years ahead. Now on to some international news. Viewers, protests in Iran are widening beyond the capital, with at least 7 people reported dead as demonstrations spread into the rural provinces. The unrest triggered by the country's ailing economy has now entered its 6th day and is being described as the largest wave of protests since 2022. So the deaths involving both the protesters and security forces were reported from 4 cities, many in regions home to Iran's Lur ethnic group. So while demonstrations in Tehran have slowed, their expansion elsewhere raises fears of a stronger crackdown by authorities, echoing memories of the Mahsa Amini protest that shook the country 3 years ago. In fact, US President Donald Trump has issued a sharp warning to Iran, cautioning authorities against using force on protesters as nationwide unrest intensifies. In a post on Truth Social, Trump has said that the United States is locked and loaded and ready to go if peaceful demonstrations are shot or killed. So the warning comes as Iran faces its largest protests in 3 years, triggered by worsening the economic conditions and also a sharp collapse of the rial. Now, Iranian media and rights group report multiple deaths as protests spread across several provinces, raising concerns of a tougher crackdown by the regime. Now, from political unrest to a climate emergency, deadly weather events hitting Afghanistan. At least 17 people have been killed and 11 injured in Afghanistan after heavy rains and snowfall has triggered flash floods across multiple regions. The season's first major rainfall has ended a prolonged dry spell but led to widespread devastation, damaging the infrastructure, killing livestock and affecting nearly 1,800 families. Among the victims were 5 members of a single family, including 2 children, after a roof collapsed in Herat province. Now, disaster response teams have been deployed to assess the damage, as authorities warn Afghanistan remains highly vulnerable to extreme weather events. And news coming in from Hollywood, where a major legal battle is now unfolding. Actor and rapper Will Smith has been sued by violinist Brian King Joseph, who performed on his 2025 concert tour. So the lawsuit alleges sexual harassment, retaliation and wrongful termination, with claims centered around incidents during the first leg of the tour in March 2025. Now, according to the court filings, Joseph says that Smith made comments suggesting a personal bond and alleges misconduct during a hotel stay in Las Vegas, where access to his room is now being questioned. Now, Will Smith and his management team have not yet publicly responded to the allegations. And in the entertainment space, Ranveer Singh's Dhurandhar has now been declared tax-free in Ladakh. So the announcement was made by the Office of the Lieutenant Governor of Ladakh in an official social media post. And shot extensively in the region, the film showcases Ladakh's stunning cinematic landscapes, with the move seen as strong support for filmmakers and part of the Union Territory's push to position itself as a preferred shooting destination. So the tax-free status is expected to further widen the film's reach in the region. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit for more news and updates.
Agarwal Packers and Movers Limited. Man with the cap, not 300.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है, आँख नहीं फूटती धूप में, मैं फटदनी से चाय बना ले, बहुत सहूलियत है हमें इसकी।
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले।
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1500 crore rupees on it.
Powered by Government of Andhra Pradesh and EDB.
Punjab government, foremost in public welfare, campaign to enrich youth through libraries. The Punjab government has taken a far-reaching decision to build modern libraries in the villages of Punjab in order to inculcate the habit of reading among the youth. The aim is to bridge the gap in the level of education and general knowledge in the rural areas. Since the inauguration of the first village library in Isru in Ludhiana on 15th August 2024, 275 modern libraries have been opened and 58 more are under construction.
घर कई बार माहौल नहीं बनता पढ़ाई का, सिटिंग नहीं बनती। इतने सानू ये फायदा है कि जो इतने असीं आउने आ, खास तौर ते कुड़ियां एक गल दस रही सी कि असीं 4-4 5-5 कुड़ियां इकट्ठियां होकर इत्थे आ जाने आ। सिलेबस दी किताबां सानू इत्थों भी मिल जांदियां ने, घरों भी ले आउने आ, तो साडी सिटिंग बन जाती है इत्थे।
Each library costs about 35 lakh rupees and offers books on literature and diverse topics, besides those related to competitive exams. These modern libraries offer services like Wi-Fi, solar backup, digital and analog resources so that the youth can connect with the world of knowledge right in their villages.
मैं इस लाइब्रेरी में डेली आती हूँ, 7 से 8 घंटे के लिए पढ़ती हूँ। मुझे यहाँ पर आना बहुत अच्छा लगता है क्योंकि यहाँ का वातावरण बहुत अच्छा है। मैं और मेरी जैसी जो लड़कियाँ घर पर नहीं पढ़ पाती थी, वो यहाँ पर आकर पढ़ सकती हैं।
यहाँ सारी किताबें मिल जाती हैं जो कंपटीशन के एग्जाम की तैयारी के लिए जरूरी होती हैं। यहाँ का इंफ्रास्ट्रक्चर बहुत ही अच्छा है और यहाँ पे वाईफाई भी लगा हुआ है। अगर हम पढ़ना चाहें तो अपने फ़ोन या लैपटॉप को वाईफाई से कनेक्ट करके ऑनलाइन भी पढ़ सकते हैं।
The Village Libraries project is not merely about constructing buildings. It's a campaign for the intellectual and social rejuvenation of rural Punjab. Punjab government, foremost in public welfare.
Nifty hits the first record high of 2026. ITC slides for second straight day. IDBI Bank stake sale. All decks clear for financial bids. Government yet to give the nod to hold budget on February 1st. Market ends the first week of 2026 with gains after Nifty hit an all-time high. All sectoral indices barring Nifty FMCG finish in the green with energy as the top gainer. Broader markets outperform the benchmarks. ITC loses for second consecutive day after falling to a 52-week low on the back of new excise duties on cigarettes that are set to attract 40% tax. All decks cleared for financial bids in IDBI Bank state sale process. Sources: the government will likely invite financial bids within a week. Government is yet to formally approve the proposal to hold Budget 2026 on the 1st of February. Sources say meeting of the Cabinet Committee on Parliamentary Affairs has not been held yet. Government clears investments of over 41,800 crores in the third tranche of electronics component manufacturing scheme. approves 22 projects with production of more than 2.5 lakh crores expected that will generate around 33,000 jobs. BSE MD and CEO believes catch-up growth is being played in derivatives, tells NDTV Profit that the SME platform may not be a profit center for the exchange and may continue to be a cost. Bharat Forge expects 2026 to be a qualitatively better year for the company. Joint MD Amit Kalyan anticipates a strong volume of domestic defense wins and infrastructure growth after signing a small arms contract with the government. Centre proposes 90 days work rule for gig workers to get social security, says they must be engaged with a single aggregator for at least 90 days in a year to qualify for benefits such as health, life and personal accident insurance. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bhogna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And let's go straight to the day's market action. So it's the first weekend of 2026 and the street has said, thank God it's Friday. Nifty hit an all-time high to close above 26,300 levels and Sensex has gained more than 500 points. Now all the sectors except FMCG has ended in the green. Let's go across to my colleague Mahima, who joins us with a detailed analysis of how the markets have fared today.
Alright, so markets have celebrated a belated New Year today and we did hit an all-time high of 26,340 for the Nifty 50. Third consecutive day where Nifty ends on a high note. The Nifty Realty Metal lead the gaining sectors on the Nifty. In terms of the gainers on the Nifty, Coal India topped the chart with 7% gains. All sectoral indices end in the green except for the Nifty FMCG, largely dragged down by ITC, and broader markets also close higher in trade at its day's high point almost. In terms of the mid-cap 150, SJVN and IDBI topped the chart. For small-cap 250, JBM Auto and Anantraj gained the most. So this is the, that's of course in terms of where the small caps are concerned. So this is the overall view as to how markets have panned in the day today.
Thank you so much, Mahima, for that market roundup. And as the Sensex completes 4 decades, NDTV Profit spoke exclusively with BSE MD and CEO Sundara Raman Ramamurthy, who spoke about the key drivers behind BSE's turnaround over the last 3 years. Listen in.
First of all, thanks to NDTV for having me in this show. Happy New Year to you and to your viewers. See, when a company gets into a turnover mode, there will be multiple factors which lead to it. There will be some basic reasons which instigate a turnaround, and there will be some strategic actions which come over that which helps in the turnaround. When I look at the factors that what made me feel that there is a possibility of a turnaround year, 2 things generally I ascribe to. 3 years before when I joined BSE, I found clearly there is a strong view amongst the market participants about the concentration risks and the issues associated with it in the market. The second was deficiencies and gaps in the market in respect of product, service and approach of service from the people who provide the service to the people who take it. When these 2 basic factors were identified by us, we clearly built our strategy and strategic interactions and actions over that, which probably I feel is one of the major reasons for contributing to the success of BSE and turnaround, as you call it, in the last 3 years.
In fact, a fresh tax heat has hit the tobacco and cigarette makers as they brace for steep 20 to 40% price hikes. ITC yesterday saw a sharp fall on the back of this development, and also now stocks are facing pressure as brokerages have slashed the EBITDA and also the EPS estimates and have also downgraded the targets. My colleague Mahima is back to share more details on this.
just to give viewers, of course, a perspective of what happened yesterday. So there's going to be an additional excise and health cess levy on tobacco as well as pan masala products, and this will, lead to overall volume decline because companies like ITC are going to pass on the benefits to the consumer. So volumes for them will go down, and overall, if they don't pass on the entire cost to them, margins will squeeze overall. And price hikes for as of now, what brokerages are penciling in is that price hikes will be anywhere between that 20 to 40% odd. Now, to understand as to how valuation generally happens for ITC in different categories, around 25% of valuation was coming in from cigarette business, which might go down to anywhere between 15 to 17% going forward, considering the EPS cuts and EBITDA cuts that brokerages are penciling in. So that's with regards to where the valuation stands, and probably FMCG is the business that will pick up from here on, considering the GST cuts that have come in. That will augur growth for volumes in the FMCG business of ITC. So going forward, that is the business that might pick up in terms of volumes, and cigarettes is where the volumes will come down. In terms of the paper acquisition of Century Board, that is also something that is going to bottom out in FY27 and is going to start giving synergies from FY27 onwards. So that is also a business that will augur growth for ITC going forward. In terms of where the dividend yield payout is concerned, ITC has always been shareholders' favorite in terms of where dividend payout stands. The average dividend yield is around 4% with almost an 85% payout in average. If you take a look at the last 2 odd years, they've given dividend yield of 3.8 to 3.9%, and payout has been in that 55 to 84% range. And estimates as per brokerage also suggest that the yields going forward in 26 and 27 is going to be around 4% and 4.1% going forward. Now, in terms of the EBITDA and EPS cuts by brokerages, Nuvama has cut EBITDA by 7% each for FY27 and 28. Antique has also reduced FY27 and 28 EBITDA estimates by 9 to 11 odd percent. And DAM Capital has also kind of cut down their EPS estimates by 8 to 9% for FY27 and 28. Now, in terms of downgrades, a lot of brokerages today have come out and downgraded ITC for now, and also given EBITDA cuts. JP Morgan has revised it to neutral with a target price of 375. Morgan Stanley has given an equal weight with a target price of 366. Jefferies has given a hold rating right now with a target price of 400. Nuvama also a hold rating with a target price of 415. For MK, it is they've revised the rating to reduce with a target price of 350, and Motilal Oswal has given it a neutral rating for now with a target price of 400. So this is the overall view of what this means for ITC. Of course, two businesses going forward are going to take over probably over the cigarette business, but we'll have to wait and watch out for us to exact financial impact. What will that be?
Absolutely, Mahima. In fact, Bharat Forge has signed 1,661.9 crore, which is nearly 1,662 crores with the Defence Ministry for the supply of 2.7 lakh close quarter battle carbines to the Indian Army. And it's the largest ever small arms contract here. We spoke exclusively to Amit Kalyani, JMD of Bharat Forge. Listen in to his commentary.
The two big orders that we signed in this year are both IDTM products. The ATAGS gun and the CQB carbine were both products which were jointly developed by us along with ARD and DRDO. The CQB with ARD and the ATAGS with DRDO. So these are deeply and fundamentally Indian products, Indian designed, developed and manufactured with complete Indian IP. And I think this is a factor that should give a lot of confidence to the forces, to the overall system, that no matter what, this can be executed. And that we can supply these and maintain these for a long time going forward. Also, we can further develop these products into more advanced versions as we go along. Our total order book is roughly around 11,000 crores now in defense. Basically, if you look at our defense journey, it started with focusing on artillery. Then it moved to protected vehicles. So we added more products on land systems. Then we got into the naval side with unmanned systems. We're also working on several new naval platforms, as we've talked about in the past. We also have a joint venture where we assemble the spice product along assemble and integrate, and that's something also that now for that recently. Plus, we have got orders in the past also for that. So, if you look at the sum of all this, we are in all three domains, that is land, sea, and air.
Via Sapphire Foods Dyani International merger will be effective from April 1st through a sharp swap route. And I'm going back to my colleague Mahima. So Mahima, tell us more on the merger structure and also the growth outlook.
This is one of the biggest stories that the markets is going to be tracking today. That is Dyani and Sapphire merger, which is now being announced. The street was expecting this announcement from a very long time. The merger, of course, will be with effect from 1st of April, and of course, this will follow after NCLT approval. The swap ratio right now is that 177 shares of Dyani International will be issued for every 100 shares of Sapphire Food, and Dyani will pay one-time fees to Yum as a brand, because Yum as a brand owns brands like KFC, which was under both Dyani and Sapphire, for all the kind of expenses towards the merger. Now, why the merger? Of course, there will be a lot of potential synergies unlocked post the merger. They're expecting a 2.5% synergy at EBITDA margin level. Potential realizations are expected anywhere between 210 to 215 crores post the merger, post one odd year after the merger. Full realization is expected after 2 years of merger. And this will create one of the largest QSR companies in India after both of them get merged, and stronger balance sheet to support accelerated expansion. Brokerages also believe that this merger is going to give a tough competition to the biggest chain of QSR, that is Jubilant Food World. Now, in terms of where financial synergy stands, store count for the merged entity will be beyond that 3,000 odd stores. Revenue will be over that 7,800 odd crores. EBITDA over 1,300 odd crores. And margins, both of them have a similar range of margins. So margins is going to remain the same for the merged company, that is around 17 odd %. And borrowings will be at that 950 odd crore. In terms of timelines, and once the NCLT approval is received, it's expected to get completed within the next 12 to 15 odd months. Now, what are the brokerages saying with regards to this merger? MK has come out with a note. They've maintained buy with a target price of 190 for Dyani International. Merger brand negotiation provides a sizable scale and energy is what they're saying. Combined entity has similar scale and growth prospectus as Jubilant Food World. The swap ratio is largely in line with the current market price. So overall, the merger is fairly valued, and shareholders of both companies would enjoy potential synergy benefits equally. Highlighted savings at around 15% of combined EBITDA estimates for the two companies is what the brokerage is penciling in. So this is the overall view and one of the biggest stories to track for sure today.
Viewers, IDBI bank stake sale is gathering pace. Sources are telling that the government has cleared all the decks to invite financial bids for the bank, and also the interministerial group has cleared the bidding process. We also understand that the final draft of the share purchase agreement has been approved. Invitation for the financial bids is expected to be uploaded shortly on the DPAM website. And there's a buzz around budget presentation date, as 1st of February falls on a Sunday this year. Now, according to government sources, at the moment, the proposal is yet to be formally approved by the government, and the CCPA meeting has not yet been held. So my colleague Himanshu Shekhar is sharing details about the Union Budget 2025 here.
Well, the sources have told us that the highest decision-making body with regard to finalizing the schedule of the budget session of Parliament is Cabinet Committee on Parliamentary Affairs, which is expected to meet in the next few days. And it's only after the Cabinet Committee on Parliamentary Affairs examines this issue that a final decision will be taken with regard to on which day the government now plans to present the budget. But as of now, sources in the government have told us that no final decision has been taken regarding any change in the schedule, the convention of presenting the budget on 1st February, or whether the government has any new plans. I think we'll have to wait for some more time to get a final picture on what is the decision. But as of now, sources are telling us that the Cabinet Committee on Parliamentary Affairs is the only body, the highest decision-making body which is authorized to take a decision as to on which date the budget should be presented. That's right.
And while addressing a press conference on government's decision for third tranche of approvals under the electronics component manufacturing scheme, METI Secretary Krishnan announced clearance of 22 applications. Let's listen into his commentary.
In the third tranche, we are approving totally 22 proposals, two of them in the area of capacitors with a total investment of 560 crores, one in lithium-ion cells with an investment of 2,922 crore, one in laminates, copper-clad, with an investment of 368 crore, three in the space of enclosures with a total investment of 27,166 crore, 9 in PCBs with a total investment of 7,377 crore, which are spread almost across the country at different locations. One in anode material, which is 1,835 crore in terms of investment. Connectors, one of 61 crore. Display module subassemblies, one investment of 524 crore. Camera module subassembly, one investment of 550 crore. Optical receivers of small form factor, pluggable, one investment of 52 crore. Aluminium extrusion plant for mobile enclosures, one investment of 449 crore.
The Union Labour Ministry has proposed key social security benefits for gig and platform workers in the draft Social Security Code, Central Rules 2025. So, to qualify for the benefits, workers must have worked at least, for 90 days with one aggregator or 120 days across multiple aggregators in the last financial year. And all the gig and platform workers aged 16 plus must register on a government portal using Aadhaar and other documents. I'm going back to my colleague Himanshu here. Himanshu, can you please explain the social, security norms for gig workers?
The Union Labour Ministry has proposed important social security benefits for the millions of gig workers or platform workers in the country who are engaged for different kinds of work by aggregators. Importantly, the most important provision in the draft rules that have been published for public comments relates to the mandatory registration of every gig worker or platform worker who are hired by aggregators. It specifically says, and I quote, every gig worker or platform worker who has completed 16 years of age shall be required to be registered with Aadhaar and other documents as prescribed by the central government on a portal designated for this purpose by the central government. And importantly, every aggregator will have to publish data with regard to the number of gig workers or platform workers they have hired for different kind of work, and this will be used for generation of a universal account number or any other such unique number that will be given and allotted to every gig worker or platform worker. It also says that every eligible registered gig worker or platform worker shall be issued an identity card, digital or otherwise, bearing his photograph and other details as specified by the central government for such purpose, and such digital card shall be downloadable from the designated portal of the central government. So these are important provisions with regard to the mandatory registration of workers. But there are also essential prerequisites in terms of how many minimum days of work a gig worker or a platform worker has to do to access social security benefits. The draft rules specifies the central government may notify specific conditions for eligibility provided that such eligible worker has been engaged as gig worker or platform worker for not less than 90 days with an aggregator, or in case of multiple aggregators, not less than 120 days in the last financial year. So these are the basic minimum requirements that the government wants to implement once these rules are implemented across the country for a gig worker or a platform worker to access social security benefits.
Thank you so much, Himanshu, for taking us through that. And now on to some national news. Strong words coming in by the External Affairs Minister S. Shankar. He has called Pakistan a bad neighbor and asserted India's right to defend itself against terrorism. Speaking to students at IIT Madras, the External Affairs Minister has said that nobody can tell us what we should do or not do, and in an apparent reference to the Operation Sindoor. Let's listen in to his remarks.
But you can also have bad neighbors. Unfortunately, we do. Now, when you have bad neighbors, and if you look to the one to the west, if a country decides that they will deliberately, persistently, unrepentantly continue with terrorism, we have a right to defend our people against terrorism. We will exercise that right. How we exercise that right is up to us. Nobody can tell us what we should do or not. We will do whatever we have to do to defend ourselves. That's a common sense proposition.
And moving on to the entertainment space, Ranveer Singh's Dhurandhar has now been declared tax-free in Ladakh. The announcement was made by the office of the Lieutenant Governor of Ladakh in an official social media post. Shot extensively in the region, the film showcases Ladakh's stunning cinematic landscapes, with the move seen as strong support for filmmakers and also part of the Union Territory's push to position itself as a preferred shooting destination. So the tax-free status is expected to further widen the film's reach in the region. And now to a serious public health emergency where fear and uncertainty continue to grip the residents. The water contamination crisis in Indore has turned grimmer, with the death toll rising to 10 as the High Court hears the matter today. Residents of Bhagirathpura continue to report vomiting, diarrhea and dehydration allegedly caused by sewage mixing with the drinking water. Now, despite tanker supply and assurances from the civic body, locals are saying that they do not trust the water, even after, boiling it. Officials are saying that contaminated pipelines have been isolated and repaired. Health teams are conducting door-to-door surveys, and compensation has been announced for the victims' families. Authorities admit that it will take some time to restore public confidence in the water supply. Now let's take a look at the global headlines. President Donald Trump has issued a sharp warning to Iran, cautioning authorities against using force on protesters as nationwide unrest intensifies. In a post on Truth Social, Trump has said that United States is locked and loaded and ready to go if peaceful demonstrators are shot or killed. Now, the warning comes as Iran faces its largest protests in 3 years, triggered by worsening economic conditions and a sharp collapse of the rial. Now, Iranian media and a rights group report multiple deaths as protests spread across several provinces, raising concerns of a tougher crackdown by the regime. Now, from political unrest to climate emergency, deadly weather events hitting Afghanistan. At least 17 people have been killed and 11 injured in Afghanistan after heavy rains and snowfall triggered flash floods across multiple regions. The season's first major rainfall has ended a prolonged dry spell but led to widespread devastation, damaging infrastructure, killing livestock, and affecting nearly 1,800 families. Among the victims were 5 members of a single family, including 2 children, after a roof collapsed in Herat province. Now, disaster response teams have been deployed to assess the damage, as authorities warn Afghanistan remains highly vulnerable to extreme weather events. And news coming in from Hollywood, where a major legal battle is now unfolding. Actor and rapper Will Smith has been sued by, Brian King Joseph, who performed on his 2025 concert tour. Now, the lawsuit alleges sexual harassment, retaliation, and also wrongful termination, with claims centered around the incidents, during the first leg of the tour in March 2025. Now, according to the court filings, Joseph is saying that Smith made some comments suggesting a personal bond and also alleges misconduct during a hotel stay in Las Vegas, where access to his room is now being questioned. So Will Smith and his management team have not yet publicly responded to the allegations. Viewers, with that, it's a wrap on this edition of Profit 360. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए।
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं।
मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख डीटीएच और केबल ऑपरेटर्स पर उपलब्ध।
Punjab government foremost in public welfare. Crackdown on drug abuse. In order to stamp down on the decades-old problem of drug abuse among the youth in Punjab, the Punjab government launched the Yudh Nasheyan Viruddh campaign in February 2025. The campaign works on 3 fronts: crackdown on drug smuggling with the help of people and panchayats, stringent action against drug dealers and de-addiction and rehabilitation of drug addicts. Around 24,000 FIRs have been registered, 36,000 accused have been arrested and 1,500 kilogram heroin has been confiscated so far.
ਛੋਟਾ ਵੱਡਾ ਕੋਈ ਵੀ ਕੁਝ ਕਰਦਾ ਹੈ, ਜਿੱਥੇ ਤੁਹਾਨੂੰ ਜਾਣਕਾਰੀ ਮਿਲਦੀ ਹੈ ਵੀ ਇੱਥੇ ਆ ਕੰਮ ਹੋਈ ਜਾਂਦਾ ਹੈ, WhatsApp ਦਾ ਨੰਬਰ ਹੈ, ਇੱਕ ਵਾਰੀ ਸਾਨੂੰ ਦਾ ਮਿਸ ਕਾਲ ਮਾਰ ਦਿਓ, ਤੁਹਾਡੀ ਜਾਣਕਾਰੀ ਬਿਲਕੁਲ ਗੁਪਤ। ਉਸ ਤੋਂ ਬਾਅਦ ਉਹ ਬੰਦਾ ਘੰਟੇ 2 ਘੰਟਿਆਂ ਬਾਅਦ ਤੁਹਾਨੂੰ ਕਿਸੇ ਨਾ ਕਿਸੇ ਥਾਣੇ 'ਚ ਦਿਸੂਗਾ।
More than 4,500 villages in Punjab have declared themselves drugs-free. As part of the crackdown, the government has demolished 104 illegal properties of drug smugglers, besides freezing 144 properties worth 75 crore rupees belonging to corrupt officers and drug smugglers. In order to disrupt the supply chain of smugglers using drones to ferry drugs from across the border, the government decided in August 2025 to launch 9 anti-drone systems worth 51 crore rupees. The capacity of de-addiction centers has been expanded to include skill development, employment and rehabilitation of drug addicts.
जो एडिक्टेड हैं लोग, उनको नशे से दूर करने के लिए जैसे सरकार ने ओट सेंटर खोले हुए हैं, बड़े अच्छे उपराले कर रही है सरकार, जो कि पंजाब को ड्रग फ्री कर दे।
Punjab government foremost in public welfare.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई, अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat, while in cases of objections, the concerned officials resolve the issues.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए।
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं।
मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख डीटीएच और केबल ऑपरेटर्स पर उपलब्ध।
Hello and welcome to KYC. I am Sharad Dubey and let's start the show. And also, a warm wishes for our entire audience, wishing you a very, very happy new year, happy 2026. But today on the show is a company where I'll give you some hints. Try to guess it. It has been buzzing a lot over the last 3 trading sessions in the small cap space. The company has received a 6,200 crore windfall, and remember, the market cap is on the lower side. The company will be transitioning from the specialty chemical side to a copper play. Lot of industry headwinds were there in the old business. So let's see what happens ahead. And the company is likely to announce a special dividend for the minority shareholders. And lastly, the company is planning to become debt free as well. Big debt levels coming in. So you must be wondering, which is the company? The company which we are talking about today is going through a big change, inflection point. But are the minority shareholders or the markets convinced? That's the question I will be asking the management, and also my analysis will be there at where does the company stand. The company's name is Kiri Industries. Everybody is talking about it. So over here we will be looking at this company, how it's going to transform from its current play of just a die and an intermediate manufacturer. It's a very commoditized business, but company says it's a specialty chemical business. And we will be talking about some critical questions. First one is this operational profit turnaround. What happens to the core legacy business? Does it come back to the EBITDA profits? The second question I'll be asking is, minority shareholders need special dividend. How much will it be? Will it be less? Will it be more? Because it has tested the patience of most of the investors, this counter. And what is India-Asia copper project? They have a windfall. Now what they do with this copper business, we'll be asking all the details to the management, and the role of green chemistry products. Will this improve the realizations? That's what we'll ask Manish Giri. He's the chairman of Kiri Industries, and the margin outlook for the die and intermediate segment. That will be another important questions we'll be asking. So the management is here, and Manish Giri, the chairman and MD, that's whom we'll be posing all our important questions. And a lot of retail investors have written to me for the analysis in this setup. But before the analysis starts, let's give you some details of flavors about what's the company all about. The company is very much important, and then we'll explain you the ratings, how it goes in our show at KYC. The company manufactures die intermediates and basic chemicals. That's why perhaps the market has not given premium yet. The completion of a die-star stake sale, that is where the war chest comes in. A company which was very basic, a 10-year-old legal battle, and now a huge windfall coming in the company. Now what happens with the windfall? They will receive roughly 689 million on December 30th, 2025. Recently they have received it, and the amount is 1.7 times of the market cap. Look at it. The market cap itself is just 1 rupees. 1.7 is the additional money coming into the company. The legal overhang, it has been for years and years, and now that has come down. So of course it will help out with the lower finance cost or the lower legal cost as well. Now the company will diverse away from a struggling chemical dye business. It has been under the dumps, and now it will move on to the copper segment in the Indo-Asia copper flagship. Now that is where the diversification takes place. And we'll be wondering with this diversification what actually happens. There will be an integrated copper smelter and fertilizer complex which will be located in Gujarat. That's the initial plan coming in. The project cost will be 10,661 crore rupees. Roughly, you could say there might be some debt included also going ahead for this kind of a payment coming in. Now they're aiming for a strong expansion also in the trial production. The target, that's where my concern is also, it's December 2028. That means it's going to take at least, you could say, 3 more years. Tons per annum, that is something which I talk about. That's the overall, you could say, parameter to judge the company on. And the dyes business outlook, it has reduced its FY26 revenue guidance by 20% to 1200 odd crore rupees. That means the pain is still there. Q3, Q4 numbers will reflect that. Guidance reduction led to headwinds in the existing dyes business. So literally the dyes business is a kind of dying. Expecting a 12,000 crore revenue by FY27-28 overall currently on the old legacy business. And management's execution is a huge risk for just the common business I'm talking about, not the copper business. Over that we'll of course come into it. Also this FY27 and FY28 outlook. Apart from that, let's understand what actually is the KYC show. We have 8 ratings where we give the company a number coming in. There is an income statement, balance sheet, cash flow, return ratios, and of course there is a shareholding, street cred. Street cred is nothing but the stock price movement which has happened, be it 1 month, 6 months, 1 year, or even 5 years, what return the company has given to the shareholders. Valuation and outlook, that is also something we will be looking at for. And apart from this, the first parameter is the income statement. A lot of retail investors of the company had written to us to analyze this, and now we are analyzing it, and that's why my concern starts creeping into this company. 3-year CAGR is just 3%. Be it revenue, be it EBITDA, be it PAT, there's literally nothing there to watch. The company has been deeply impacted in the past because of these numbers, and because of that, and I haven't seen any kind of good green shoots also coming in, and management stated that guidance is being reduced for FY26. That means Q3 numbers might be muted, and Q4 also nothing much would be coming in. So because of that, I'll start with the thumbs down when it comes to the income statement. Let's go for the second parameter, and that is the balance sheet parameter, and that will be also very much important. And largely the book value is in the higher side, and that's around 3,200 odd crore rupees. And the concern is for borrowings. Borrowings is something which is very much important. Why? I'll tell you later on. Also 1,222 crore rupees of borrowing is there. Now almost 6,200 crores of inflows come in from the taxation settlement which has come in, and likely that this number will become zero. So that's actually a good point, but that's future looking. I judge a company on these financial numbers actually on what has actually happened. That's the important criteria I set up for my show, and that's around 180 crore rupees of cash balances coming in definitely. But net because of just the cash balance suggesting some liquidity help in the company, I'll give a neutral rating when it comes to the balance sheet. Also, apart from balance sheet, cash flows are very much important in this kind of a business, but I doubt the cash flows will be for uniform or not, and it's largely erratic, and that's where my concern again comes back. PAT, there's nothing happening here. The losses are there. At times they are widening, at times they are coming down, but they are still the losses. That's the concern. Operating cash flows is just, it's been a massive outflow coming in, at least in the FY25 numbers. Net cash flows, it is very small, and it's kind of a lot of movements is happening. Definitely a big cause of concern if you're studying these numbers. For that, cash flow also I'll give a strong thumbs down when it comes to Kiri Industries. Also, apart from cash flows is the return ratios, and there hasn't been anything, and I'm really sorry. The entire charts are not there, but the ROC is not meaningful at all for the company, and that's one of the biggest concerns for me, because there isn't much there, ROC, ROE numbers, and there's a prolonged weak profitability which has come in, and because of that, return ratios also will be a strong thumbs down. So financials, we can say out of 4 ratings, 3 of them have received thumbs down, and that's a very big concern coming in, and all these concerns will be addressed by Manish Kiri, who's the MD chairman at Kiri Industries. The 5th one is the shareholding pattern, and interestingly, the promoters have been lapping up stake, 26%, then in March 25 it was 31%, and then in September 25 also it went up to almost 37%. But institutional support largely not coming in. That's an interesting thing. FIs are holding stake, minor profit booking coming in, but concern is domestic institutions very less or negligible. Interestingly, the public kind of interest has come down from 48% from March. That has actually come down to 40%. But nevertheless, the retail activity is there. It's on the lower side. So that's something which we'll also think about why. Apart from shareholding pattern, which I've given a neutral rating, we move on to the street cred. 1 month stock has been flat. Of course, there was a 20% up move when the announcement has come in, but after that, it was selling started happening in Kiri Industries counter, and literally that news has absorbed, and it's almost 0% gain. 6 months 12% down, year to date 4%. And concern is definitely there. 2% it's up, in 1 year. So nothing has happened to the shareholders who have been positionally holding this counter, and last 5 years also nothing has moved. It's 10% up only. That means each year at an average 2% the company has returned to the shareholders. So shareholders are waiting for this company. What reward will they give? Is it just the stock price increase, or will there be some special dividends, because a huge windfall has come and a demand is coming in from the minority shareholders that they need something. Of course, we will be also tracking this counter, but from my side, it's a thumbs down. Moving on, valuations. Two names I have picked up. One is Kiri Industries, trailing 12 months P is 10 times, and Ultramarine Pigments, that's around 13 odd times. Technically, both of these counters are in an industry right now which is largely a commoditized play right now, and there's nothing much premium we should assign either of the counters, and that's what the market and the analysts have told me. Valuations for the time being, I'll just give a neutral as a benefit of doubt, but it's nothing that the stock might command a valuation premium. So we need to figure out, futuristically how things change. Will this be only a chemical play, or now a copper play comes in? Then of course the valuations will start changing. But apart from this, of course, peers, we go into the next rating parameters, and that is the outlook. That's the last but the most important thing in my analysis, because now the company is only future forward looking, and if you just remove the past in the last 7 rating parameters in KYC, this is the future. Now they have reduced their business guidance, and that's one of my concerns, which is definitely there, because this number will be actually shown in FY 27-28. This 6,200 crore windfall, that's what everybody is talking about, and we will also understand where will this money actually go, how will it diversify. Also, apart from this, looking at the outlook, the company is expected to announce a special dividend. Now, how large it's going to be, that is something we will be looking out for, and the management has to say what's going to happen next, and they'll make the company debt free. That 1,222 crore debt I spoke about, that's largely going to become zero, and the transformation into a copper play. Now it's not a chemical company anymore. Now it moves on to the copper. So how much benefits will come in, what are the synergies, what are the timelines, we'll give you all these details. But as of now, outlook is a neutral rating, but net my concerns are all there in the financial aspects, and it has not been satisfactory, and concerns are also there on street cred. Some benefit of doubt, of course, given on shareholding and valuation, and outlook also. It is very optimistic, but I have taken a cautious approach, because the FY 27-28 numbers, still it will come from the existing legacy business. But of course, future is definitely there, which the street is actually looking out for. So net, for my KYC rating, I will be giving Kiri Industries 2 out of it, on the lower side of my ratings. But to understand more why this is there and the future what it is, there's a 2 different school of thoughts. I had a chat with Manish Kiri, the chairman and the MD of Kiri Industries, and asked him on the 6,200 crore windfall they have received, what's the specific percent of this cash where it's earmarked, whether it's for immediate distribution versus the reinvestment into the copper project. Do listen in.
See, majority of the funds which are coming in are going to be reinvested for the future growth, and that is what feedback we have been getting from many investors, shareholders, and during a lot of conversations which have taken place over a period of last 2 to 3 years. So it would be a small portion of the receipt which would be distributed as the dividend. Otherwise, the majority of the amount is going to get invested into future projects, and that is how we are going to create value for the shareholders. The percentage or how much quantum that would be has not been decided yet for the shareholders. The percentage or how much quantum that would be has not been decided yet. The board will take a view and decide in the next few weeks, and will announce accordingly.
All right, in the next couple of weeks, our dividend announcement is likely for Kiri Industries. That's what the management is stating. But Manish ji, the device star dispute has taught a hard lesson to the minority, operation. That thing was there. But for your new subsidiary, which is Indo-Asia Copper, what governance structures are you putting in place to ensure that in future strategic partners cannot trigger a similar decade-long legal deadlock?
So there are three things which we have done to ensure that we learn from the history. Number one, Indo-Asia Copper Limited is 100% subsidiary of Kiri. There is no foreign partner. There are no partners. It's wholly owned subsidiary of the company, and it is going to be that way. Number two, we have strengthened the board of IACL, and we have got very good people who have long years of experience in governance, projects, banking, as well as legal, all. So we have strengthened and strengthening the board and the governance of IACL. Number three, we have taken on board very experienced team, a management team, a separate management team headed by the separate CEO for the sector who is experienced in the sector. And we will ensure that the entire investment remains in India, is going to be a India-driven, India import replacement project. So there are things which we will be doing in ISCL that would be unique for catering the growth of the country along with the replacement of current imports.
All right, but my question again comes back to the proceeds. Now, do you intend to make Kiri Industries a zero debt company using just a small fraction of device star proceeds before committing to a new project debt?
Yes, absolutely. It is going to be a zero debt company. And as we speak today, in a matter of a week, it is going to be a zero debt company.
In just a matter of week, Kiri Industries is going to be a zero debt company. That's a very important statement coming from the management. But the Indo-Asia Copper project is a massive leap from the specialty chemicals to metals. Since trial production is targeted for December 2028, how will you ensure there is no execution creep coming in the cost or escalations in the timelines during this 36-month construction phase? There is still some time. Delhi abhi bhi dur hai. What's your take on that?
See, there are certain measures which we have taken. We have taken on board very experienced project management and execution team, along with an external well-known project management and execution company. We have done quite a substantial work on ensuring that our vendors are selected properly. So very stringent vendor selection process we have gone through along with the experienced team, and we have ensured that every project execution risk is mitigated. So these are the factors will ensure that we are within the time frame of the announced deadline before which we will make the project operational.
All right, Manish ji, coming back to the core business of dyes, revenue went 23% up in Q2, but there was an EBITDA loss, and there is always a quarterly overhang of, the legal cost which was coming. It was having roughly between 7 to 10 crore rupees per quarter. Now, exactly when do you expect the standalone dye business to return to double-digit EBITDA margins? Now that big overhang is done. So I want your view on that.
So now, having legal costs done with, we are not expecting much legal cost to come. It will be sharply dropping, expecting to go to zero within a quarter. But that would improve the bottom line significantly. So in addition to having a beta positive, which we have been, bottom line would also turn positive soon. The dyes and intermediate business has been also going through quite challenging market situation over a period of last 2 years. So these are the factors which are affecting the the profitability of that business. But as we just mentioned, the standalone business, the traditional business in a debt-free form is going to continue. And that would be helpful to have it in an auto mode and cash generation situation going forward. We are not expecting quite a significant growth coming forward from the traditional business. We are sitting on significant capacities in India, so we are not investing any new funds into the dyes the current business, and that is the decision of the board taken few years ago. But you will see that in a steady state, profitable, if not single digit, lower double digit EBITDA, and we will ensure that it functions in a cash generating mode.
All right, so important statement coming in from the management, a lower double-digit EBITDA for the dye business. But this dye and intermediate business, it's a very important thing you stated, that no chance of making capex expansion on this old business, and you should be, because it's just 48% capacity utilization was there in Q1 FY26.
Exactly.
And the global textile recovery, it's still there globally. Some places it's definitely happening. Just give me a ballpark figure. What's the utilization levels you're targeting for FY27? Also,
the Great Depression of 1929, oil shock, dot-com bubble burst, the global financial crisis, and more recent COVID-19 pandemic, Ukraine crisis, and ongoing geopolitical turmoil. The BSE is one such institution. Its longevity itself is a testament to resilience, adaptability, and trust. During its rich institutional history, the launch of the Sensex in 1986 marked a defining moment in the evolution of India's capital markets. When the Sensex was introduced, India's economy and markets were very different from what we see today. Trading was manual, market participation was limited, and the economy was relatively inward-looking. Yet the idea behind the Sensex was forward-looking, to create a transparent, representative, and a credible benchmark that reflected the performance of leading companies in the economy. Over the last 4 decades, the Sensex has stood the test of time as a robust market indicator, mirroring India's economic transformation and the growing maturity of our capital markets. As India liberalized and integrated with global markets, the index evolved alongside the economy. Its changing composition reflected rise of private enterprise, shifts from traditional industries to services, finance and technology, and deeper linkages between domestic markets and global capital. It's indeed remarkable to note that a few companies that were part of Sensex at its inception continue to be constituents even today. Over 4 decades marked by liberalization, technological disruption, regulatory evolution, and global shocks, these enterprises have adapted without losing sight of their core principles. Their continued presence is not a coincidence. It reflects sustained attention to governance, competitiveness, and long-term value creation. In many ways, this continuity reminds us that while markets respond to cycles, enduring value is built across generations. The journey of Sensex is inseparable from evolution of India's broader market infrastructure. Over the last 4 decades, exchanges have transformed from traditional trading floors into technology-driven, demutualized, and professionally governed market institutions. This transformation has been complemented by development of a strong supporting ecosystem, clearing corporations managing counterparty risk, depositories ensuring safety and efficiency of holdings, and intermediaries operating within clearly defined regulatory responsibilities. Together, these institutions have ensured that growth in volumes and participation have been accompanied by strong risk management, operational resilience, and orderly markets. There was a time when market closures, settlement delays, and operational disruptions were seen an avoidable part of investing. Each such episode, however, became a catalyst for reform. The shift to screen-based trading, the move towards shorter settlement cycles, and continuous improvements in corporate governance standards fundamentally transformed how Indian markets function. Many of the strengths we take for granted today were shaped not overnight, but through lessons learned patiently and institutionally. No market can sustain growth without trust, and trust in turn rests on appropriate regulation, transparency, and effective enforcement. Over time, India's securities market regulation has matured from fragmented oversight to a comprehensive and evolving regulatory framework. The focus has consistently been on market integrity, investor protection, and systemic stability. As participation widens and the investor base becomes more diverse, our focus has also been on strengthening the regulatory architecture that upholds the integrity of the market.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए।
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं।
मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख डीटीएच और केबल ऑपरेटर्स पर उपलब्ध।
For decades, Punjab has been celebrated as the food basket of India, but today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure, and a skilled workforce.
इंडस्ट्री लग जाऊगी, साढ़े नौजवान मुंडे कुड़े ਨੂੰ ਕੰਮ ਮਿਲ ਜਾਊਗਾ। ਇੰਡਸਟਰੀ ਤੋਂ ਹੀ ਅਸੀਂ ਸੁਝਾਅ ਲਏ ਨੇ ਸਾਰੇ, ਬਹੁਤ ਸਾਰੇ ਇੰਡਸਟਰੀਜ਼ ਬੈਠੇ ਨੇ। ਇੰਡਸਟਰੀ ਤੋਂ ਅਸੀਂ ਪੁੱਛਿਆ ਵੀ ਕੀ ਕਰੀਏ। ਸਰਕਾਰਾਂ ਤੰਗ ਕਰਨ ਵਾਸਤੇ ਜਾਂ ਸਰਕਾਰਾਂ ਕੋਈ ਮੁਸ਼ਕਲਾਂ ਪੈਦਾ ਕਰਨ ਵਾਸਤੇ ਨਹੀਂ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਹਮੇਸ਼ਾ ਸਹੂਲਤਾਂ ਦੇਣ ਵਾਸਤੇ ਔਰ ਲੋਕਾਂ ਦੀ ਤਰੱਕੀ, ਲੋਕਾਂ ਦਾ ਜੀਵਨ ਪੱਧਰ ਉੱਚਾ ਚੱਕਣ ਵਾਸਤੇ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਦਾ ਕੰਮ ਹੀ ਇਹ ਹੁੰਦਾ, ਜਿਵੇਂ ਲੋਕ ਕਹਿਣ ਉਵੇਂ ਸਰਕਾਰਾਂ ਨੂੰ ਚੱਲਣਾ ਪੈਂਦਾ ਔਰ ਚੱਲਣਾ ਚਾਹੀਦਾ ਵੀ, ਕਿਉਂਕਿ ਸਰਕਾਰਾਂ ਲੋਕਾਂ ਨੇ ਚੁਣੀਆਂ ਨੇ।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise, a land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
टीवी पर पहली बार
तुम कभी नहीं बदलोगे। मैं प्रेग्नेंट हूँ।
मैंने बोला था बच्चा रखने के लिए।
सिंधु अपने घर में नहीं, वो लोग घर छोड़कर चले गए हैं।
मैं उसे कभी माफ नहीं करूंगा। हमें किसी की जरूरत नहीं, हम जी लेंगे।
Dada, you are the best dad.
परिवार के साथ होगी नए साल की शुरुआत। डैडा दी अप्पा आज शाम 7 बजे सिर्फ शिमारू जोश पर। सभी प्रमुख डीटीएच और केबल ऑपरेटर्स पर उपलब्ध।
watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani. Today we are going to throw light on 3 different topics. The first one that we've chosen for you is how to build on passive income in 2026. And to talk exactly about this, we're joined by Rohin Pagriwala, who's the founder of Pagriwala Investments, joining us now. Rohin, thank you so much for taking out the time, and a very happy new year to you and your family. My first question to you with regards to this passive income topic is that everyone wants passive income, right? But very few get it right. In 2026, what does real passive income actually look like is my first question to you.
Sure. Thank you for having me on the show, Mahima. Happy New Year to all your viewers and to you and your families. So let's just spend a minute to first define what's passive income, right? So passive income is something where you're generating money for consumption, for use, without having to actively work for it. So for example, you've made some investments, you're getting dividends out of that, or you're getting some kinds of returns out of that. That is passive income. Side hustles, jobs like photography, which you may do at the side to earn some extra money, website creations, etc., are not what I'd call passive income. Those are sort of second incomes, third incomes, side hustles, call it what you will. Yeah, so passive income is that. Now, there are a variety of options or ways to generate passive income depending on the individual's comfort level, risk appetite, size of corpus that they have, etc. And I'll just list down some of those for you, for our viewers as well. Simple ones, the traditional ones are, let's say, dividend stocks, right? You put money into high dividend stocks, and you could get dividends ranging from 3, 4, 5%, as high as 8% as well. Some high dividend stocks could be Vedanta, Coal India, Hindustan Zinc, and so on. So that's a very traditional way of generating what I'd say passive income. You could obviously also do FDs or fixed return products, so insurance policies, bonds, deposits in banks, deposits in corporates. Very, very straightforward ways of generating a passive income. There are some newer age opportunities, right? So, for example, there you can buy InvITs, or what are called infrastructure investment trusts, or real estate investment trusts, right? These are relatively newer avenues which give you a high dividend, ranging from 4-5% to as high as 13%, and that becomes a source of passive income as well. Another new opportunity that's emerging is what is called P2P lending, which is peer-to-peer lending, right? Or also called person-to-person. That's a higher risk avenue, but that can also generate some passive income, and there are ways to do that. But the most common or the most recommended practice, depending on the size of the corpus, is to use mutual funds to do this, where you sort of invest a certain amount of money, create multiple buckets, and ensure that you're doing an SWP or a systematic withdrawal plan from one of those buckets to run your expenses.
Got it. The next question that I had is that, the viewers who watch us vary in the range from, 25 years to almost 50 years. How do you think that, 2 different categories of age groups, let's say somebody who's in their 25 or 30s versus that of 50s, think differently about building passive income?
A lot of the younger people I've observed this a few times. A lot of the younger people are willing to take higher risks to generate a passive income. So they are happy to do this through equity. Many people consider equity trading as a passive income, though I would not call that passive income, nor would I recommend doing something like that. But the key difference in my mind is that the younger generation wants to take a higher risk to be able to eventually retire early or get financial freedom earlier. The older generation have a larger corpus. They've obviously worked much longer to earn that corpus, and therefore are much more conservative in the ways that they choose to generate that passive income.
Okay. In terms of the behavior when it comes to passive income, right? Is it more about what product are you choosing, or is it more about systems and discipline? How would you define passive income?
A mix of both, but products would matter a lot. And I would say it will matter more because you could do this through equity investments. You could do this through fixed income investments. You could do this through, like I said, new age avenues like P2P lending and so on. So, the product or the risk that you take will define how much passive income you can generate and for how long you can sustain that, right? Behavior matters, but when somebody's looking for passive income, I'm assuming that it is with the intention of being able to either quit your job or in the future be able to retire or get financial freedom to pursue something else. So that discipline will matter. The process of saving regularly, etc., and building a sizable corpus. But eventually, where you put that money is going to be material in arriving at how much passive income you can generate.
Okay. Do you think passive income can replace your salary income realistically, or that is oversold?
It can, and I've done that. You're seeing a live example of
income realistically.
It can, and I've done that. You're seeing a live example of that. So I've replaced my salary that and meticulous planning and a lot of discipline. But I would just warn people and viewers that lots of people on social media keep talking of retiring early as a means of stopping work. I don't think that concept is something that I would not recommend that. Retire early or quit work to do something else, but under no circumstances should someone think of retiring early as in I'm not going to do anything else, because that will first mentally.
Makes sense. So then why don't you tell us, Rohin, if for example, if somebody starts with a 10,000 rupee per month, what's the sensible passive income roadmap that from 2026 and beyond that?
Well, it depends on when that passive income needs to be generated, but the simple thumb rule to follow is about 3 to 4% withdrawal. So let's say you have 10,000 rupees a month, which is, or let's say for simplicity, somebody has 1 crore rupees already accumulated. Why 3 to 4%? Because you want the rest of your the corpus that remains invested to also grow at a rate which is faster than inflation. So you want your capital to be preserved, your capital to grow and grow at a rate faster than inflation, yet be able to withdraw some money to generate that passive income. So 3 to 4% is a good reference point.
Okay. All right. Rohin, one mistake that can completely derail your passive income plans.
I think a sequence of return risk is a big risk. So you have to give your corpus adequate time to generate that return. And if you happen to, let's say, build a corpus of, let's say, 1 CR or 5 CR, whatever that number might be, you build that corpus, then you say, okay, I'm not going to work anymore, I'm going to do something else, and you're not earning enough. And at that point of time, let's say you've got 50-60% in equity markets and markets correct, then you're running a big risk. So you've got to give it at least 4-5 years. The corpus has to be there for 4-5 years for you to start, thinking of quitting your job or whatever you want to do after that.
Okay. One last question, Rohin, with regards to the way markets have done in 2025, right? 2025 was a year of consolidation for the markets. But overall, if you take a look at the history, our economy is pro-equity, but in a volatile environment, right? Which passive income streams do you think will be the most reliable this year in 2026?
I think for retail investors, it's more often than not mutual funds, because they're well regulated. They have diversification, they have flexibility. So all the attributes that you want from a product, I would think mutual funds will offer that.
All right. Okay. All right, Rohin, thank you so much for giving us those insights. I think everybody or anybody who's watching this show and wants to understand with regards to how they can start building their passive income has probably taken away a lot from this conversation. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you. My pleasure.
The other topic that we're going to put spotlight on is with regards to the no change, that has taken place in small savings returns. What does this mean for your savings account? Basically, what will happen is that PPF will continue to offer that 7.1% and post office savings deposit will again continue to offer that 4% return that were already there in place. Now, to understand as to what this means for you and to help you understand that, we're joined by Santosh Joseph, who's the founder of Germinate Investor Services, joining us now. Santosh, always a pleasure speaking with you. What this means for you, and to help you understand that, we're joined by Santosh Joseph, who's the founder of Germinate Investor Services, joining us now. Santosh, always a pleasure speaking with you. My first question to you is that government has kept this unchanged again, right? Why is this CPF or post office deposit? What does it mean for them?
Hi, good afternoon. I think for most of the people waiting for this news to come out, considering that we had a couple of rate cuts during the year, this must have been a welcome surprise, because now this is the 7th quarter in a row from April of 2024 to now, rates have not been cut, which means the people who are dependent on this return are happy to notice that this returns are going to continue. Now, this is of great importance to the people because this segment of the money is usually the stable part of the income that produces a consistent income. Now, with the government not tweaking these rates but keeping them status quo and stable and continuing with the rates, I think for people who depend on this, there is continuity, there's stability, and there's confidence that their monthly income that they depend on this remains the same. So I would see this as a great positive for the people who are in this segment of the market, this stable fixed income like product that they're depending on for whatever needs that they have. So I think it's a positive move. I think people should be happy considering that even inflation has cooled off. These rates are very good.
Okay. Santosh, in an easing rate environment, should investors still rely on PPF, NSC, etc. and post office schemes? Do you think they should still go ahead and, because we've been talking about this since the longest time, that it's not even beating inflation post the tax rate that we generally get in terms of what we get it as in hand, right? Do you think it still makes sense to invest in these asset classes?
Well, the answer is actually in the approach that we take, whether it's all or none. Now, if you're going to look at this part of your portfolio as a portion of it, then you are bound to make an equal or larger investment elsewhere that can beat inflation. Now, this is now rested that it's difficult in these small saving investments to actually beat inflation and to grow your capital, because not only inflation adjusted, but just lifestyle and the cost of living has gone up substantially over the past few years. Therefore, it is imperative that we look at the small savings plus the extra that you do in your portfolio to give you a holistic total return. So therefore, this part, even though it gives you a stable return, can only be a kind of an anchor to your portfolio. You will have to invest outside of this. And because of this giving you the stability, you will have the courage to maybe look a little more deeper for a risk reward return from a total portfolio perspective. And therefore, to such an extent, to go outside this product, whether mutual funds or otherwise, is a normal thing. Now, within mutual funds, you've got plenty of scope, and even the income can be generated through a systematic withdrawal plan, not worrying about the fluctuation in the moment or the mark-to-market experiences that one goes through. So it's not all or none. You will have to have some bit of stability and also some bit of growth built into your portfolio. Depending on one's appetite for risk, you will load up more on the stable side. But I think most people have by now gathered up the understanding that you need both spectrums, stability and growth, working for you simultaneously.
Okay, but Santosh, the question really that I'm trying to understand is that, is this a signal that small savings may no longer beat inflation meaningfully?
I think that has also been happening already for some time right now. That's difficult because on one hand, the government also wants to take care of the people who are dependent on small savings while also trying to manage inflation. At some level, you can't be fair to both ends of the spectrum. It is prudent for the investor to realize that small savings have a limited scope in terms of helping them preserve capital, generate a steady return on income. But it's also important for people to be dependent on themselves to manage a better inflation beating asset. Now, I know it's not easy for everybody to go out there and get into inflation beating assets like maybe equities, real estate, mutual fund, and those kind of products. So therefore, this allows you interplay between both. But eventually, the more you are building a portfolio which can beat inflation, you're better off. So the answer is very clear. Eventually, you will have to be in assets that will beat inflation and not worry about meeting inflation or just return somewhere close to inflation. You will have to go slightly higher than beating inflation. And this is just part of the strategy.
Okay. So then, Santosh, for conservative savers, what's the risk of staying over allocated to these schemes?
Well, the risk of staying over allocated is over a point of time, the value of your money is going to shrink, even though you may feel the value of the money is stable, but the shrink and the effect of the shrink in the portfolio will be felt very tangibly. Maybe in a year 1 or year 2, you don't feel it much and you're happy that your money is stable and you're getting a consistent income. But suddenly after 3-5 years, when you see a significant depreciation in the value of the money and the need for money, the present value of money, you will feel that you should have invested to get a more real return on the value of your money. So I'm sure the people who have watched it for the last 3 to 5 years realized, even though small savings have given you stable and consistent return, it doesn't compare to what beating inflation and meeting inflation returns are required. So the answer is very, very clear. You have to look at how your money can grow greater than inflation, beat inflation, and have a net positive return.
Okay. And Santosh, then how should retirees versus working professional interpret this rate pause differently? Because somebody who is having an ongoing income has more risk appetite, right?
You're right. So the people who are having an ongoing income and actually have other sources of income will, not worry so much so about the people who have no income and they have to make their corpus work for them. Quite frankly, here, the people who are not having an income but yet want to make their money really relevant would actually maybe base their portfolio based on their appetite for risk and the need for cash flow. See, we're also making an assumption that the people who do not have an income will need more return. But I think it is case to case. The people who do not have an active income but want to make their money beat inflation, here is where they can actually structure their portfolio in such a way that their today is not compromised and even their tomorrow is not compromised. See, today you don't compromise by ensuring you get a stable cash flow, but your tomorrow is not compromised when you ensure that the value of your money is staying in line with the way things are changing with inflation and the cost of goods and services that we need to consume. So you will have to at some level pay some intention to understand how this works and build a portfolio that can help you mitigate. Now, if you're having extra income, you have a longer leeway. If you don't have income, you'll have to be that much more intentional of building the right mix of portfolio.
Santosh, do you think that bank FDs or debt mutual funds look more attractive than small savings in 2026?
I definitely think that there is enough scope that within the stable income category that some bit of bank FDs and other stable mutual funds can add value to it. Now you have to realize that in fixed income or the stable part, adding value would be maybe 0.5% to 1% extra, because beyond that, there's very little scope for you to make money. But within debt mutual funds and bank, you're not only diversified, but you also have different liquidity profiles that you have to keep in mind. And you also have, cash flows that come little differently. So for my investor looking at small savings, bank FD and debt mutual funds, you have this gamut of services that you can choose from that takes care of liquidity, risk, and also return.
All right. Okay, Santosh, thank you so much for getting us those insights and, of course, taking out the time and speaking with us at NDTV Profit. Thank you so much. All right, the third topic that we're going to take up on Your Money Matters today is, should you gift mutual funds in 2026? I mean, recently, I had a major event in my life where I realized that, gifting has to be meaningful. And, to talk about this and take this conversation ahead, we're joined by Anand Ladda, who is the founder of Invest Aaj for Kal, joining us now. Anand, always a pleasure speaking with you. My first question to you is, while we're used to gifting, box gifts and in case of non-box gifts, gold or cash, why are mutual funds not considered much? In fact, now I think they're emerging as a smarter gift options. And do you think that this awareness should be there in terms of where gifting comes into picture? It should be an option, right? Gifting of mutual funds.
Firstly, thank you so much for having me on the show, and I'm very happy New Year to all our viewers. I think it's a perfect topic to start the conversation of 2026. Of lately, earlier, I would say that gifting a mutual fund unit was a very difficult task.
Yeah.
Specifically, if your units were not in demat format, it was literally almost next to impossible to gift your units easily, and it used to take more than 15-20 days, so it was practically not possible for an investor to gift it. But now there is lack of awareness because rules have changed, and now literally you can transfer your units in 2 days and within less than 7-8 minutes of complete task. And it is actually a gift which your to whomsoever you will be gifting this, they'll also remember, because hopefully it will also appreciate, and as and when it will appreciate, they'll remember you. If we gift a flower, it stays for a night. If we gift cash, it probably people will remember it for a day or two. But if we'll gift something unique, which is a mutual fund unit, it will probably appreciate their wealth as well, and they might remember you for a longer time. So a very useful gift to give, and a unique one, because people are not gifting it right now.
Absolutely. And Anand, how exactly does that work, right? Mutual fund gifting in terms of mechanically and legally?
Firstly, process is very simple. You can gift it via your AMC, you can gift it via KEMS or K FinTech portal, or you can gift it via MF Central. It's very easy. But you should remember that you cannot gift a children fund, a retirement fund, a lock-in fund, or an ETF. These four funds are not allowed to be gifted. Other than that, normal mutual fund you can gift very easily. You want me to cover the complete process, step-by-step process?
Sure, why not? Why not?
So let me take example of CAMS Online, because it is very simple and almost same process is there on all the platforms.
Yeah.
You go on CAMS Online website. There is a section of MF Investor. You click that. Next, there is service for investors. There is a separate icon. You click that, and then you choose a transfer of MF units as an option. Then you fill in details. For example, your name, your email ID, PAN, your number, and then you give the reason of this transfer. For example, if you're gifting, you just need to print. You just need to type that it is for a gifting purpose. Once you have listed down your reason, portal will automatically tell you whether you are eligible or not. In most of the cases, you will be eligible, and you will move on to the next step, where it will ask you an OTP, which will come on your email and mobile number. You can just fill in your OTP, select the schemes, select the units, put down the recipient details, and boom. Within next 2 to 3 days, your units will be transferred without any hassle.
Interesting, and I'm sure this is very helpful for our viewers. Anand, thank you so much for that. But Anand, what happens to the tax liability when mutual funds are gifted to generally non-relatives? If I'm not wrong, if it's to your relatives, it's non-taxable. If I'm not wrong.
See, taxation is very simple. Firstly, if you are the donor, you need not worry about tax. There is no tax implication on the donor.
Okay.
To the donee, if you are receiving a gift from a relative, there is no tax. If you are receiving a gift from a non-relative and the amount is above 50,000, income will be considered as income from other sources, and you will have to pay taxes. But there is a catch. Suppose if it's your wedding and you are receiving a gift from a non-relative and value is above 50,000, on wedding, everything is tax-free. You just need to have records and everything will be tax-free. Other than wedding, if above 50,000 gift is what you are receiving and gift is from non-relative, it will be taxed.
Okay.
When you are selling your units, taxation is on the donee, and all the long-term or short-term calculation and all the taxation calculation will be considered from the initial date of purchase, which was probably purchased by the donor. So that you need to take care of.
Understood. Okay. Very well explained, Anand. In terms of gifting mutual funds, right? What kind of funds do you think work best? I mean, is it your equity, your hybrid debt? I mean, is there a rationale for choosing which mutual funds to gift?
I feel as such there should not be any rationale. You can gift a flexi cap, multi cap, or maybe even a small cap, mid cap fund. But it would be better if you inform the party in advance that this is something which you are planning, and you properly plan it up, and you give proper documentation also. As soon as the transfer happens, there is an updated statement which is being sent to you and to the donee as well. And probably you can share it once again and you can take care of it. If you are not sure which which mutual fund probably suit the risk profile of the investor to whom you are gifting. Probably you can gift to be on a safer side a flexi cap or a multi cap fund to be on a safer side.
Okay, and Anant, what's the one compliance or documentation mistake that generally people make that one should avoid? And of course, if you can give us a detail in terms of compliance, if somebody needs to take care of something.
As such, now the process is very transparent and it is completely online. Probably there is no if or but while you are gifting, and it is very easy process. Almost all the compliance process will be taken care of. You just need to ensure that if you are receiving a gift of above 50,000 from a non-relative, you have proper documentation for it. At times we feel that we'll take entries in some random bank accounts. Specifically, recently we saw a lot of income tax notices were sent, and reason for those notices were they were receiving some amount of cash or some amount of deposits or any form of gift in a dormant account, thinking that it's a dormant account, no one will look at it, and randomly they were receiving gifts of lakhs in that account. That is not a thing which you should do. You should have proper documentation. Any which ways, taxation in mutual funds and equities are still favorable in investors' side. So probably if you are if you sell your fund once it's long term, you just need to pay the long term taxation. That too after the initial tax free limit of 1.25 lakh. Which will take care of a majority part of the gains. So yeah, you just need to ensure that you are not trying some hanky-panky stuff in taxation, because department is very aware of what you are doing, and they'll send you notice if you try something unusual.
Absolutely, and that conveys a very meaningful message as well. Anant, one last question with regards to your one-line advice for anyone who's planning to gift mutual funds in 2026.
Try it out. This is something new. Probably to the person whom you will be gifting, they'll remember you for ages, because right now I don't see a lot of people gifting it. Once you start a new trend, probably instead of gifting cash or instead of gifting envelopes, if you gift mutual fund units, it will grow also with value. For example, just imagine if you had gifted silver probably a year back, it would have doubled and they would have called you and thanked you. So it can be a very unique gift. Do add it to your kitty.
All right. So that, conveys a very powerful and meaningful message to you viewers out there, that instead of box gifts or instead of, just transferring gifts from here to there, you can just go ahead and gift something meaningful. And, that is something that will, grow in terms of value for whosoever you're gifting this to. So Anand, thank you so much for giving us those details and of course helping our viewers understand a new way of gifting. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you.
All right. So viewers, that brings us to the end of the 3 conversations that we had for you on Your Money Matters today. I hope it was helpful. Stay tuned to NDTV Profit for more news and updates on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करनी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
नहीं भाई, कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है। Very good. SBI, the banker to every Indian. Truly.
Right, our next category is Actor of the Year Female. And to give away the award, we would like to invite Dr. Payal Kanodia, Chairperson and Trustee, M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Let's welcome in Amit Kalyani, Joint Managing Director of Bharat Forge, into the conversation. Amit, good morning, and at the outset, wishing you and everybody in the Bharat Forge family a very happy 2026.
Thank you, Neeraj. Wish you all also a very happy 2026.
Yeah.
First of all, I'd just like to mention one thing, that we are now in the silent period, so can't talk too much about any of the other businesses.
Completely
I can
agree.
talk about the defense orders and the things that you specifically wanted to focus on, so that's fine.
Sure, but I would want to start off, Amit, by asking Amit Kalyani, one of the captains of India Inc., about what does he feel about 2026, because 2025 was a year of multiple challenges from multiple fronts for an Indian corporate. How does 2026 shape up according to you?
So I think, as a businessman and as a, corporate, a lot of unexpected things happened in 2025. And I think any responsible or any, corporate in India will have found ways to adjust to the current situation and make growth plans for 2026, keeping in mind whatever has transpired in 2025. So I think we are all, cognizant of where we stand globally, geopolitically, and we have chalked out a plan by which we will be able to grow our business substantially going forward.
Okay. Now, Amit, Anushi was obviously talking about the defense piece because it's a recency order win. But as I read some of the notes that have come in the last 1 month on Bharat Forge, they talk about how defense, aerospace, restructured overseas operations would be the focal points for Bharat Forge, because North America Class 8 truck sales don't quite appear to be on a strong footing. Would that be a fair assessment of the larger part of your business?
Those three factors will definitely be a large part of our business, but two additional factors. One is doubling down and focusing on strengthening our automotive business in India, which is both across passenger car and commercial vehicles, and increasing our play in the industrial sector in India. These are our focus areas.
Okay. Let's try and nibble on them one by one. Maybe we'll come to defense in just a moment, but I'm inclined to ask you, Amit, one more question. There is a lot of industry chatter about how the Indian CV cycle is coming back after a very long hiatus, and we might be at the start of a cycle which might last the next couple of years. You are a veteran in this bucket as well. Do you reckon that to be the case, and therefore could that be net constructive for your business?
Yes. So first of all, I'd just like to, deflate this bogey of the US truck market. It is approximately, just about double-digit percentage of our total revenue. And that is our consolidated revenue, because we also have truck revenue in Europe. So it's not a very large part of our revenue. It's just 11, 12, 13% in that ballpark. Coming to the Indian CV and, let's say core industrials market, as India's GDP growth rate, you're seeing ticking upwards. And I think now you're starting to see a whole new phase of infrastructure development across India, whether it's in the cities and rebuilding city infrastructure, to expanding our highways and other kinds of, key public infrastructure, whether it's building new airports, ports, railway lines, railway terminals, cargo centers, etc. I believe that the build-up of India and Bharat will now propel India's economic growth. And this is something that we saw happen in China in the in the 90s, moving into the 2000s. And I think this is the same kind of period that we will see in India now for the next 15 to 20 years.
And Electra Green, let's pull up the counter on the screens and see what the stock is doing in trade. Commercial production when it comes to phase 1 of the Greenfield EV manufacturing facility in Hyderabad, that is what has kick-started. The stock is up nearly 5% in trade as we speak. Speaking exclusively to NDTV Profit, we have Mahesh Babu, MD at Electra Green Tech. Mahesh, welcome to the show and wishing you a happy new year as well. And always a pleasure to speak to you. My question coming to you is, this is an added advantage because capacity has always been a constraint when you talk about EV as a segment across the industry. With the commercial operations that have started, what are the kind of utilizations you're planning to achieve in the first leg?
Firstly, wish you and the viewers a very happy new year. I think we are very happy to announce that we have fully commenced the operation of phase 1 of our manufacturing facility. We can make about 2,500 buses per shift, and we can always double the shift and increase the capacity as we want. So the primary focus is to stabilize and consistently make products. So if you look at the registration numbers till now, as we are number 1 in last year with a registration close to 900 plus vehicles. This year in the 3 quarters, we have already achieved a registration of 950 plus vehicles. So we are looking at a very significant growth with the quarter looking at to deliver more vehicles in the coming quarter. So consistently we want to improve and we want to deliver as we progress.
So then 100% capacity is going to be around 5,000 units is what I understand. What is the timeline that you will go to 5,000 units, at full capacity?
See, firstly,
nature of a problem, it gets escalated to a particular level. So at the start, you have the user agency, which is actually implementing the project. If they have an issue or a problem that requires resolution, they upload. First of all projects are uploaded on the system, but the ones that need issue resolution, the issue is uploaded on the PMG portal, the Project Management Group portal. The ministry which deals with that particular project looks at what has been raised and updates its information on the portal. Thereafter, the project monitoring group looks at the data that's available, discusses the problem with the implementing agency and the state government, and thereafter it escalates it to the Department for the Promotion of Industry and Internal Trade, which is DPIIT. A review happens at the level of the Secretary of DPIIT. In some cases, problems get resolved at that level. If it is not resolved, it gets escalated to level 3, which is in the Cabinet Secretariat, where the Secretary Coordination convenes meetings or intervenes with the respective states and ministries, particularly on delayed projects and projects which have critical issues that have not got resolved at earlier levels. Beyond that, if it still requires further attention, it is raised with the monitoring group in the Prime Minister's office, which also has a minister attached to it. And finally, for the most important and or the most difficult projects, the matter is escalated for a review by the Prime Minister in one of these meetings, of which 50 have been held so far. So the process has multiple levels of resolution, with the Prime Minister at the apex for the most difficult and the most intractable issues. After the Pragati meeting, there is a follow-up mechanism. There's a multi-tier follow-up mechanism again, which ensures that what was decided in the Pragati review is actually implemented. Projects are tracked and monitored by the Cabinet Secretariat, while schemes and grievances are reviewed by individual ministries, and there is continuous oversight from the Prime Minister's office. Now, as you're aware, capital expenditure has shown a dramatic growth in the last decade, from 4.26 lakh crores in 2014-15 to 15.53 lakh crores in 2025-26. This is the sum of government and central public sector undertakings. It has increased by a factor of 3.6. So to effectively spend money on capital projects, it is not enough to increase the capital outlay in the budget. It is also necessary to be able to implement projects, to settle tenders, to complete land acquisition, to actually pour cement and build and construct. That is often more difficult than simply allocating money. And I would say without exaggeration that without the Pragati system, it might have been very difficult to actually deliver on the capital outlay increase. It might have been possible to provide budgets, but to get them actually spent probably would not have happened if we had not had the Pragati system. So Pragati, the portfolio of projects that the Pragati system has handled, so it has accelerated implementation of both projects and welfare schemes. It's not confined to projects, it covers programs, schemes also. But in terms of projects, it has so far covered over 3,300 projects worth 85 lakh crores. This includes both projects which had a problem and projects which did not have a problem. I am not suggesting that all 3,300 faced problems, but this is the portfolio of projects that Pragati has handled in this period of time. 61 government schemes other than projects have also been reviewed in Pragati. They include schemes such as the One Nation, One Ration Card, Pradhan Mantri Jan Arogya Yojana, Pradhan Mantri Awas Yojana, the PM Swanidhi Yojana, and the Swachh Bharat Mission. These are just examples of the 61 that have been covered. In Pragati, we also take up classes of grievances, not individual grievances, but classes of grievances that are found to be numerous or taking time to resolve. And some of the issues where grievances have been taken up in Pragati include those related to the coronavirus epidemic in 2020, 21, 22, RERA, the Real Estate Regulatory Agency, banking and insurance grievances, grievances related to Pradhan Mantri Matru Vandana Yojana and the Jan Dhan Yojana. These are again just examples. 36 different classes of grievances have been reviewed in Pragati over these years. This is a snapshot of the number of issues that have been raised and resolved. So if you look at the graph on the left-hand side, we have taken up 7,735 issues in the various projects that have been covered by this system, and out of which 7,156 have so far been resolved. And if we look at the resolved issues, 73% relate to only 3 topics. The largest number, 35%, is on land acquisition. The second largest is on forest, wildlife and environmental clearances. And the third is on issues of right of use or right of way, by which I mean the ability to lay a transmission line or a pipeline across someone's land. And how do you get permission for that to be done? The other issues occupy the balance of 27% of issues that were resolved. Now, if we look at a subset of projects that were personally reviewed by the Prime Minister at the apex of the system, 382 of the most complex or difficult projects have been reviewed by the Prime Minister in the 50 meetings. These involved 637 contractual packages or sections. 3,187 issues were raised by the agencies, of which 2,958 have been resolved up to now. Of course, some of the unresolved issues were also those raised in the last meeting 2 days ago, so they are yet to go through the cycle of resolution. In a sense, one issue has been resolved for every working day. And the issues that we are talking about are not very small. These are, by the time they get escalated to the Prime Minister, these are usually difficult issues. And yet, I'm happy to report that on an average, we are able to solve one of these issues every working day. The picture here is similar. 71% of the issues related to land acquisition or to forest, wildlife or environmental clearances or right of use or right of way. But there are other difficulties such as construction approvals getting approval for power or utilities, law and order, financial issues and other issues. The sectoral breakup of the Pragati projects which the Prime Minister has reviewed, 382 projects were reviewed, of which 114 related to roads and highways, 109 to railways and 54 to power. That is why we have those three secretaries here for this press conference. They are the largest beneficiaries of the Pragati system. There have also been many projects related to petroleum, coal, housing, health and family welfare, Jal Shakti, some related to external affairs, steel, and 18 from other sectors. Let me give you a picture, a very simple sort of set of examples of how Pragati actually has worked. So let's first take this very critical project of the Jammu, Udhampur, Srinagar, Baramulla rail link project, a project that has been critical not merely as a transportation project. So this project was approved in 1994. It was first taken up for review in Pragati on 24th June 2015, at which time the physical progress of the project was 40%. So basically over 21 years it had achieved 40% progress. It was then reviewed again in 2019 and finally in 2020 and commissioned on 6th June 2025. I'll now draw your attention to the graph on the right-hand side, the top right-hand.
What's in store for the markets in 2026? A lot of New Year resolutions that have been formed and a lot of targets that would have been set as well as to what should we aim to achieve from here on, not only on the personal front but also on the professional front as well. I am Hiral Datia, but let's get on to a conversation with Anand Shah, CIO, PMS and AIF from ICICI Prudential AMC. Anand, welcome to the show. Always a pleasure to speak to you as well. It's interesting to have you on the first day of the year at NDTV Profit. Wishing you a happy new year.
Thank you, Hiral, and Happy New Year to you, entire crew at NDTV Profit and all the viewers. Wishing them a very happy and prosperous and obviously the healthy 2026 to all of them.
Yeah, healthy and wealthy. I think wealth is what they're looking for from you, Anand.
Sure.
So, Anand, my question coming to you is over here, the way we've seen 2025 pan out, right? It's been a roller coaster ride. Across policy, across markets, there has been no particular direction, you know. I mean, a lot of global events that we've actually put our backs to. The question from here on is, what is your key expectation from markets in 2026?
No, so I think 2025 has been a forgettable year, but if you see in the context of the global emerging markets, it was a disaster. So India would have done in dollar terms approximately a flattish to 0.5% positive, but the global emerging markets are up 29.5% so far. So we have a massive underperformance of almost 29% plus. And this in last 2 decades has been one of the highest underperformance for the Indian equity markets versus global markets. And to be very honest, that also takes away one of the issue, which was the premium at which Indian equity markets used to trade relative to the other emerging markets. So I think that to that extent, the valuations is not so much of an issue. Couple of things, we started the year saying, you know, we had a fabulous 4 years on the markets and there needs to be a reset in terms of expectations. I think that stays. The returns in the markets over next couple of years would be far more subdued than what you have seen. Couple of things that have happened positive is obviously monetary stimulus or basically the monetary stance remains fairly growth oriented. So not only interest rate cuts, but ample liquidity has been provided. On the fiscal front also, government has done certain initiatives to kickstart the consumption, be it in terms of tax incentives or GST cuts, or even we would see some bit of money in the form of pay commission. So I think those are the positives that are there for the economy and to that extent to the markets in the coming year.
Okay, that's interesting. Let's break it down. If you're talking, Anand, about earnings growth and multiples, the expectation is that probably corporate earnings growth will accelerate in FY27. Will this be a primary driver for the market performance from here on? Or is there, room for a valuation re-rating from current levels according to you?
No, I think the market expectations have to be in line with the earnings growth rate, which in turn would be in line with the nominal GDP growth rate. I think we have seen a massive earnings pickup for India Inc. between 2020 and 2024. The profit to GDP from the lows of 2% that was there in the March 2020 has now reached again above 4.5%. So I think to expect the profit to accelerate faster than nominal GDP growth rate from here on would be a little far-fetched. It can happen for a year or two, but it cannot be a structural. So that's one part. Similarly, on the price to earnings multiple also, I think we had a lot of segments of the market, especially in manufacturing allied, corporate banks, PSU banks, which are extremely cheap starting 2020, 2021. They have also got re-rated. To that extent, I don't see too many pockets where the valuations are cheap that there can be a PE or a price to book re-rating. So I think the expectations needs to be muted more or less in line with the nominal GDP.
Okay, so muted expectation in line with the nominal GDP is what you should be looking at. If you have to talk about the global, markets, especially from the US Fed perspective, the interest rate cuts, along with that, you're talking about a potential weaker dollar influence. Will that really impact or influence your projections when it comes to reversal of F5 outflows, back into Indian equities?
Indeed, as I said, India has underperformed the emerging markets by almost 29% and similar numbers compared to the world equity markets. So I think the valuations is no more relative to the world. Absolutely, it might be still expensive, but relative to the world is not that much of an issue. Coming to the flows, I think given that AI was the theme last year, India was also at the receiving end in that terms that we saw one of the highest outflows from FIIs. From September peak of the market, from September 24 till date, it would be approximately $26 to $27 billion of outflows from FIIs that we have seen. So things can change given that we also believe that the valuations in the US equity markets and generally in the AI related companies and value chain remains fairly premium. A slight change in the sentiments away from AI into other markets would definitely lead to some possibility of some flows coming back to India, given the valuations are attractive and the growth would be far better this year than the last year.
So Anand, I'll pick it up from where you left in terms of the AI sector, right? I mean, it's high-flying US AI sector is what we're talking about. Anticipation is that probably it could be a bubble, there could be a correction coming in there. We're talking about India probably who's late in terms of joining the bandwagon, but the kind of investments your Indian IT companies are making when it comes to AI, in terms of data centers et al., is something that everyone is watching out for. How strong do you think is then the domestic economy as compared to being insulated from any of these global market, reactions?
No, so the way I see AI is very similar to what the telecom was in 2000. The issue was not that whether people will use data, people will use transport data from one continent to other continent, and whether they will use telecom into the next decade. I think that happened and people did consume. But even then, a lot of telecom companies went bust, which was an issue of cash flow rather than the viability. Similarly, we believe AI is here to stay. AI will remain an industry which will be extremely useful for corporates and individuals at large. And eventually there will be a couple of companies which will survive. But today, the extent of overinvestment and the premium valuations at which the AI stocks are trading both makes me believe that there are extreme risks to AI stocks at this point of time. Coming back to Indian scenario, I think the Indian IT companies are more of enablers rather than creators, and to that extent, through the various transitions of technology in last 2.5 decades that has happened, be it Y2K and be it subsequently internet and SAP and everything, I think they have transitioned and they have remained useful for the global corporates through every technology transition, and they will remain relevant even for the AI.
Agarwal Packers in Limited. Man with the cap. Not 300, 300, 300.
माही भाई कोई कूल बैंक बताओ ना, कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है, आँख नहीं फूटती धूम में, मैं फटदनी सी चाय बना ले, बहुत सहूलियत है हमें इसकी।
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले।
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1,500 crore rupees on it.
For 17 years, one scientist chose to stay with the problem. In the unforgiving terrain of Jammu and Kashmir, Dr. G. Madhavi Lata brought science, patience and precision together for turning complexity into possibility and engineering into nation building. NDTV Indian of the Year 2025, Science Icon of the Year, Dr. G. Madhavi Lata.
Presented by RP Sanjeev Goenka Group. Powered by Raymond, a legacy of craftsmanship and credibility. State partner, Government of Uttar Pradesh. Stationery partner, Natraj. Sustainability partner, ProStar. Social impact partner, M3M Foundation. Industry partner, Darwin Platform Group of Companies.
To our next category, which happens to be Health Leader of the Year. And to give away the award, we'd like to invite back on stage Kiran Nadar, founder, Kiran Nadar Museum of Art.
Anurag Chauhan, Director General Counsel and Company Secretary, Axis Max Life Insurance, which is one of India's leading life insurers with operations spanning over 2 decades.
The Health Leader of the Year award goes to Dr. Ashish and Kavita Sadav.
For decades, Punjab has been celebrated as the food basket of India, but today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure and a skilled workforce.
इंडस्ट्री लग जाऊगी, साढ़े नौजवान मुंडे कुड़े ਨੂੰ ਕੰਮ ਮਿਲ ਜਾਊਗਾ। ਇੰਡਸਟਰੀ ਤੋਂ ਅਸੀਂ ਸੁਝਾਅ ਲਏ ਨੇ ਸਾਰੇ, ਬਹੁਤ ਸਾਰੇ ਇੰਡਸਟਰੀਜ਼ ਬੈਠੇ ਨੇ। ਇੰਡਸਟਰੀ ਤੋਂ ਅਸੀਂ ਪੁੱਛਿਆ ਵੀ ਕੀ ਕਰੀਏ। ਸਰਕਾਰਾਂ ਤੰਗ ਕਰਨ ਵਾਸਤੇ ਜਾਂ ਸਰਕਾਰਾਂ ਕੋਈ ਮੁਸ਼ਕਲਾਂ ਪੈਦਾ ਕਰਨ ਵਾਸਤੇ ਨਹੀਂ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਹਮੇਸ਼ਾ ਸਹੂਲਤਾਂ ਦੇਣ ਵਾਸਤੇ ਔਰ ਲੋਕਾਂ ਦੀ ਤਰੱਕੀ, ਲੋਕਾਂ ਦਾ ਜੀਵਨ ਪੱਧਰ ਉੱਚਾ ਚੱਕਣ ਵਾਸਤੇ ਬਣਦੇ ਆ। ਸਰਕਾਰਾਂ ਦਾ ਕੰਮ ਹੀ ਇਹ ਹੁੰਦਾ, ਜਿਵੇਂ ਲੋਕ ਕਹਿਣ ਉਵੇਂ ਸਰਕਾਰਾਂ ਨੂੰ ਚੱਲਣਾ ਪੈਂਦਾ, ਔਰ ਚੱਲਣਾ ਚਾਹੀਦਾ ਵੀ, ਕਿਉਂਕਿ ਸਰਕਾਰਾਂ ਲੋਕਾਂ ਨੇ ਚੁਣੀਆਂ ਨੇ।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
They didn't follow, they built what didn't exist. Raw stories, honest journeys told by the men and women who didn't follow the beaten path. From market crashes to a global pandemic to 100 no's, they went through it all and finally found the light at the end of the tunnel.
When you began the idea of Razorpay, how did the idea emerge for you and your co-founders? Where were you in life at that point? What were you doing?
I was in Jaipur in my hometown. I went into a bank branch next to my home and said, hey, I want to start a payment gateway. How do I go about it? The guy looked at me, do you want a payment gateway? I said, no, I want to start a payment gateway of my own. And he said, like, nobody walks into a bank branch and says that. So the guy was utterly confused. And he said, I don't know how to help you there. Let me figure it out. Let me talk to my seniors in Delhi and connect you with somebody. And then the same thing happened in the next bank I went to and so on. So it took so much time to just figure out the right person to go about it. Then we went around and then we found, okay, this is some guy in Delhi who does these approvals. I connected to him, sent him a business plan. He looked at it, spoke to me, and then rejected us. So he said, "You're not from finance background. You have no idea what you're doing.
Yeah.
You're techie who said, hey, I can build this. We're not going to approve you." Sure.
At this point, the MNC job where you have tons of time is still going on? Or?
MNC job is going on. We have not left our job. So we built the product.
That's smart.
Yeah, so building the product on the side. We already started building the product. We started talking to people who would use it if we were to go live, and all of that. It was going well. Building the product part was also going well, but this was the hardest part. And this has been the hardest part of our journey. Right? So I went down to meet another banker. I went met his senior. I went and met some other banker. And in the 6 months from there, I would have personally met 100-ish bankers. Almost 80% of them said no. Or like some of them said, yeah, I'll look at it, we'll see, and so on. So we kept going around that. We kept building a product. And finally, I had a meeting in Mumbai. It's important there because finally I had a meeting in Mumbai with a guy who was a relatively younger guy in a bank who understood what we were talking about, who understood what startups are, who understood what we are trying to do, and said, okay, I can give you an in-principle approval. And I remember that because that meeting happened on a Friday, the next Monday I left my job. Right? So this is the only thing I was waiting for. I left my job and I said, because by this time, now the startup idea was taking shape. Because by this time I had spoken to a lot of people who could use us, a lot of folks who need us. We had spoken to a lot of my friends who said, hey, we're going to join you and build this out. This sounds like a great idea. So by this time we had shaped to what I started with earlier. Now we had really a startup idea. Now we thought that, okay, this could actually be a business. And so this was the only thing I was waiting for. So got the bank approval, left my job, went into this full time.
Which bank was this? Will you share it?
It was SDFC Bank.
Okay. Which finally said, okay, let's take a bet. And that one executive.
Just one individual in that bank who said that, okay, it's Kamla Mills in Mumbai. So it was that one individual who was relatively younger, who understood what we were doing and who said yes. And
And we're really thankful because that was the only thing we were waiting.
Who is funding all of this right now? Where is the money coming from? How are you guys managing? Because you've worked at Flipkart for some time. The startup Kida is there. You want to do your own thing. You found like-minded people. But what is the funding journey looking like?
So funding, so early though we kind of contributed our own money. But then Mukesh, Ankit, so two of our, Mukesh was at Flipkart. He was a CEO at Flipkart that time. And Ankit Nagori, who was kind of my boss at Flipkart. Both of them kind of did some angel, and then our families also put in some money. It was very small amount. We were also running very lean, like we were 4 of us without...
What was the seed amount?
It was 2 crore.
2 crores.
1.5 CR.
1.5 and then our small money.
1.5 CR is how this company has started. I think last quarter you've clocked, what, 1,900 crores in profits?
1,800.
1,890 or something.
Last year, sorry.
Last year is 1,890. Okay, 1,800 crores in profits. So you've started with 1.5 crore of seed.
But there was stuff that time. I mean, 2016, if you remember, 2015 was a beautiful period for starting from the funding point of view. 2016 was just flipped.
What was the initial pitch and the kind of responses that you were getting during this funding winter? 2017, 2016, 2017, when you're going around and, putting your pitches forward, what are people saying at that point to you?
So one biggest thing was this problem has been attempted by too many folks and it has not worked.
Yeah.
So that is the biggest one.
How many rejections?
I think we would have talked to almost everybody at that time when we were starting, of course. But then things got very good into 2018. Like 2018, it went the other way around. Like we started getting a lot of inbounds and so on.
Breakthrough moment that we were talking about, when you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
We, as I said, I'd done 40 investor pitches. And I had just gotten so used to the no's that it was just painful. Was running out of money. I took on, I was like, okay, nobody in India seems to be, is willing to fund us. And so I flew to the US and I started going to to investors there. So the change between India and the US at that time was to say, everybody believed that an ad platform is required and mobile internet would come. So there was a huge shift. But then everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you. Of course, I was getting very dejected. I was almost done and dusted, had no money, nothing was there. I was staying at a friend's place, going around Silicon Valley, pitching after pitching after pitching. Then one day somebody introduced me to Ram Shriram. He was an early investor into Google, also board member at Google. And I was just fascinated by the fact that, I'm going to meet Ram. And I was like, okay, fine, this is so cool. I will just go see him. And, of course, he's also going to say no. But you know what? I'm just going to go see him. So I just went out, made a pitch to him. 20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million. I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. And that moment when he said this, I somehow figured out the next 30, 40 minutes of the meeting, came out, sat into my rental car, and I crashed. I slept in the parking lot. I crashed. Because
You crashed the car or you fell asleep?
No, I fell asleep.
Okay.
I didn't crash the car. I did not ride the car. I was, it just took so much out of you, that moment to say, man, we are going to live.
Was it a difficult idea or a proposition to sell to investors?
Before you can get external funding, you can have a great idea, but I think you as founders, you have to also show that you believe it. And one way of showing it is put your own capital if you have whatever capital. So all three of us, Shreyans, Vijay and me, committed our own capital. Then once we did that, our friends and family members committed capital. And it was only that that allowed us to have some product and proof of concept is when institutional funding came. So I guess one key takeaway is it's just not about idea. You do have to put some capital behind it.
What was the initial capital amount for MyGate?
The initial capital amount before institutional funding came was about 2 CR.
Okay.
That was personal and friends and family.
Okay. So, in today's context, I think 2 CR doesn't seem that much to start a company.
In our case, what happened was the first institutional investors found us. We didn't find them. And there's an interesting story because they found us because the 3 partners were staying in gated communities. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke, कि यार मेरे society में MyGate लगा है, what is this interesting concept? 2 months later, another partner के society में लग गया. Another month later, उस partner के sister के यहाँ लग गया. And then they said, look, we need to call these guys because looks like something interesting happening in this gated community space.
That's a very lucky space to be in where investors are looking for you.
You come from a very humble beginning and have seen the impact of being hungry first hand.
I hail from a very remote village, from a beautiful place called Wayanad in Kerala. If you've not been to Wayanad, that's a must-visit place. During my early days, my village was so remote that we had no electricity in the village, we had no roads in the village. I had to walk miles to my school. Government's midday meal scheme was the only motivation factor for me to go to school. 3-time meal was a distant dream during my childhood days. Breakfast was a luxury. My dad was a daily wage worker in a ginger farm. Was getting paid around 10 rupees a day. As he was finding it difficult to meet both ends of the family, I ended up doing coolie job at the age of 10 with my dad. I was very poor in my studies. So I was a school dropout. I failed in class 6 and stopped going to school and started working in ginger farm with my dad. That's when my teacher, Matthew sir, came to my ginger farm and motivated me to go back to school. Of course, my parents tried to motivate me earlier, but I was not keen to go back to school. I went back to school and then life changed.
This sounds like the start of a movie script. What happens next? Why does life change after you decide that I will not be a school dropout?
So when I went back to school, I was a failed student. Everybody looked down on you. My batchmates or classmates were my seniors now. My juniors are my classmates now. They don't respect you after that. So if you have to go back to school as a failed student, it's a humiliating experience. My confidence was very low because I was a failed student. That's when Matthew sir gave me the tip of my life. He gave me this tip, which is when you're low on confidence, take baby steps. He asked me to focus on one subject. He was my maths teacher. I said, sir, I will focus on maths. Within 3 months, the Onam examination, I became a class topper for maths. It was a news in the school. Nobody could believe it. For them, it was a surprise. For everyone, it was a surprise. For me, it was my confidence. That confidence gave me that success gave me more confidence. I went ahead and became a school topper for all subjects in the next examination. The message that I took from Matthew sir was, when I was low on confidence, take baby steps, smell success.
आपकी शुरुआत कैसे हुई? आपने पढ़ाई कहाँ तक की है?
मैंने 10th तक पढ़ाई की, ओदी आधा छोड़ के चला गया, गांव में खेती करने लगा। 2 साल खेती काम किया, बारिश नहीं हुई, अकाल पड़ा। फिर मेरे को राजकोट आना पड़ा। राजकोट आके मेरे को विचार आया कि यहाँ सेट होना है, पैसा नहीं कमाना है, यहाँ हमको सेट होके यहाँ रुकना है। एस्टोन सिनेमा में गोविंद भाई खूट ने मेरे को 90 रुपया में नौकरी दी बड़े भाई को 150 रुपये में अच्छा काम किया, कैंटीन कॉन्ट्रैक्ट पे मिल गई, वहाँ चिप्स बाहर से आती थी, वो नहीं टाइम से मिलती थी तो घर में बनाने लगे। घर में बनाते बनाते कैंटीन में बेचते बेचते विचार आया तो बाजार में बेची, बाइक से बेची, रिक्शा से बेची, लोन लेते गए, आगे बढ़ते गए, लोगों को जोड़ते गए और आज जो ज़बरदस्त स्थिति बन गई। तो बालाजी चंदू भाई को पूछने लगे कोई, हमको तो 15 साल पहले कोई पूछते नहीं थे कौन चंदू भाई कौन बालाजी। तो एक इंसानियत की फ़र्ज होती है कि हम कुछ बन जाएंगे, हमको एक ब्रांड बनेंगे, ब्रांड के पीछे एक हमारा नाम होगा। नाम इसको बोलते हैं इंसान। इंसान एक ऐसी चीज़ है मरने के बाद उसका नाम रह जाता है, वो कभी मरता नहीं है, उसको बोलते हैं इंसान। तो एक इंसानियत के आधार पे हमने एक काम किया, कोई पैसा कमाने का काम नहीं किया है।
नहीं, पैसा तो खूब कमाया है, ऐसे नहीं।
नारायण नारायण किया तो पैसा तो आएगा ही। नारायण नारायण करो तो लक्ष्मी तो अपने आप आती है।
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of DigiYatra?
So I started my life journey or professional life journey as a maintenance engineer. I used to repair fax machines, install trunk mobile radio systems. So primarily in the telecom industry, and then from there I moved on into various different roles. Simulating equipment for networks, and then eventually I moved on to airports. So that's been my professional journey. But yes, I think when you start to look at your life, right? During my childhood days, we used to have these. Came from a very humble sort of family, right? And we used to rely on rations, and the rations used to be like once in a fortnight or once in a month we used to get those rations, which is rice and wheat and kerosene, for example, right? And we were in Mumbai suburbs, so these stocks used to be like used to come once in or twice in a month. Whenever the stock would come, we would get the message and then we would run, and my mom used to tell me, go and stand in the queue immediately. So we used to run and stand in a queue. So now my point is, queues is something which I think every Indian is used to, right? And this is from my childhood days I've been seeing. And as I grew up, so application to my college, right? Again, long queue. To even collect the application form, there is a long queue. Electricity bills, we used to stand in queues to pay electricity bills. And then of course, professionally, when I started, when I entered the airport aviation industry, again, it's the same thing, right? This is what was something which I felt, should not be, right? I mean, why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of DigiYatra began.
What a fascinating idea, and think about it, it's true. Indians as a people are attuned to stand in queues from birth to death. When people go through a huge health event, they tend to shut down. They don't want the world to know.
Yeah.
You came out and you're very vocal about what you went through in early 2024. You had a stroke. Do you want to share why you felt the need to talk about it, what that journey was like for you?
No, it's just in the spirit of the earlier thing what I said, in the spirit of just being open and just being honest about everything is that, it's just, how can I hide if I had a brain stroke and it was not possible. Even now I'm struggling, so talking to you, I'm coming up with words, as in I can find myself a lot slower. And it's improving at the time, but it's been only 9-10 months since the stroke happened, and
Was that your biggest challenge that you've ever faced?
By far, it's because the first 2 months of when it happened, it was basically my whole right side of the body had given up, and the first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all. So yeah, it was. I mean, I was not knowing what was going on, but yeah, definitely by far the biggest struggle of my life.
How your own personal journey has led to the creation of this idea and your own struggles with weight loss, etc. And this is an important time to talk about it. We just now have the official weight loss drug in our country.
Oh, yeah.
Obesity is a pandemic that we are facing as well. And the same strata that you're talking about, everyone's figuring what to eat so that you stay healthy. And was that really the challenges you faced then a big driver? And how does it lead to this?
So, absolutely. This, in hindsight, to me, it seems like my entire life was leading up to doing this. You know, you can't connect the dots when you're looking forward, but when I look back, it seems like this was my calling. And it started with the personal journey. I was, all my childhood, I remember just being a fat kid. And all the stereotypes of a fat kid, right? Like school topper, didn't play any sports, was into debating because you don't have to do any physical activity when you debate, right? So, spent all of that time with all the stigma of being fat and all the jokes around it, etc. All of that happened. Then when I lost weight, I thought, you know, now it's done. I lost some 40 kgs in 10 months by just going crazy. I just started running, stopped eating, zero science, zero understanding. I just understood the calorie equation of, you know, calorie in, calorie out, just cut off all the calories, start running, go mad. So willpower is how I got through it. And lo and behold, in 3 years, 30 kgs came back. And I was like, okay, something's gone wrong, but I can do this again. I can again willpower my way through it. And again, in 9 months, I lost 30 kgs. And I thought, okay, now I'm done. Now I can eat and drink like my thin friends. 3 years again, 30 kgs comes back. I lose it a third time, but the third time I was like, you know what, you've got to now understand this beast because it keeps happening again and again. That's when I got deep into research, started studying about food, started writing a blog called FitShit, which is how the company was born.
The 2007 split was a tough one, wasn't it?
So we were 6 of us who started. 1 person left right away in the first year. Then 5 of us ran the company for about 7 years, 6.5, 7 years. By 2007, differences were emerging. Part of this is because we are starting to become very successful, somewhat successful. So success always creates more problems than failure. That's my experience. The second thing that happened was that we all started to live in different parts of the world. So once we realized that the US markets and the Asian markets were better for our growth than India, then we sent 2 people to be in the US. That was me and Pranay. We sent 2 to Singapore to run the Asia markets, Pradeep and Nirmal, and RK was running it in India. Now, this was pre-Skype days and video calls and Zoom days, etc. So we used to have these teleconference calls, very expensive. Getting alignment with each other was hard. We were 5 equals, which is a big challenge. So the investors said, you guys should elect a CEO. We said, yeah, sure, we'll elect a CEO. We all went and met in London, a neutral location. We were trying to get a neutral location. We booked a big hotel and a bunch of conference rooms, and we said, we'll spend a full week, we'll figure out what to do with Fractal. So we got together, we had an election. Pranay and I, the 2 of us who were in America, we both contested the election. And the other 3 were going to decide who to choose.
Okay, so it was a toss-up between both
of us. At the end of the process, which was a day long, and white smoke came out of the chimneys, then they announced that, Shrikant, we have selected you unanimously as the CEO. And I was thinking, okay, is Pranay going to be upset? But Pranay, we have a great friendship throughout our history. So Pranay was like, yeah, this is good. I think you'll be a great CEO. So we got back to our respective locations, and then hell broke loose. Because, I was not really an effective CEO, just to be very candid. When I look back, maybe I was not running it as effectively. Maybe I wanted to take charge of it too quickly. They were not used to this. My ego came in the way. Net, a year later, the 3 people who selected me as a CEO said, we don't want any CEO. Let's get back to the previous way of working. And that didn't work out, and things went from bad to worse. And then 2 of them quit. And then after that, we had a 1.5 years of great disturbance, AI was doing, I think analytics and AI were picking up, but we were in a very bad place. I realized that my ego is my biggest bottleneck. And entrepreneurship is an ego crushing experience because, when you start a business, you feel like I'll be everybody's boss, and you realize that everybody is my boss.
Okay, the first 20 clients come in, then of course word of mouth, you begin to grow, and then 1992 Harshad Mehta hits.
Yeah, so it's then a very very important phase in my life. So 90, I did all that, and word of mouth spread, and even the best of big players also started trading with me. So business was starting to grow. Then I shifted from this Veena chamber and bought my own office at Raja Vadurgam Farm. Around 91 end, I think so, office was complete. I was doing inauguration and all that, 92 start. And within few months, Harshad Mehta scam happens. And my customers are unable to pay. And I run into huge debt. So I don't know, what do I do now? So people advise me that, okay, if there's a big debt from customers are not paying, it is better you declare yourself bankrupt. And coming from textile business, we say that we give a word and we make the payment. There's an obligation to exchange from my firm. I have to pay. So till late night, lots of experience, I would not name the community. They told, hamare community mein hota hai. If you told client is probably a business has made some losses, you can declare bankrupt. So I took a call, I will borrow money and I will pay back. So that is where I did my first dilution, borrowed money and told them that you'll get equity from on this firm. And I don't know when I would be able to pay you because debts are quite huge. At that kind of an amount of debt, even big brokers were declaring themselves bankrupt. So they were kind enough to say that we know that, okay, you are a good person, you will be able to build a business. They took that leap of faith, invested around 50 lakh 3 people. And today that 50 lakh would be around 1,000 crores. And still today also they haven't sold.
So yeah, the 3 original shareholders of the first dilution, imagine that 50 lakhs put in on faith and now worth 1,000 crores. So you lived up to that.
The kind of disruptions that your business had to go through. One is, of course, starting the business, and then this joint venture with Village Roadshow. 9/11 happens, they pull out, and you have to look for funds, you have to list. Then you have COVID coming in. So many of those, which have been some of the toughest moments.
I think toughest obviously will be when my dad passed away in 92. Nothing can compare. I was all of 25 years old and I just started Priya, and the trucking business suddenly was headless because my father was looking after that. I don't think there's anything that even comes close to that sort of setback that I had. And because then I had to do both things, my newfound love for cinema plus the responsibility of running the trucking business. I was married as well, and I was about to have my first, Niharika was about to be born. So that was a tough period. Then we had a fire where we lost a lot of money in the trucking company. That again became a big setback for me. So we just kept going, and of course after that, a Village Roadshow not wanting to expand was a big one because I'd already signed up a lot of multiplexes. I signed up worth about 100 crores.
सत्तर 75 वर्ष तक हम ये कोई कागज नहीं थे अब जो है अपन साइट हुई अपन ले अपन धरो
Siya Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or Gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी अब उस भूमि के नाम पर वह कर्ज ले सकती है व्यवसाय कर सकती है
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the Gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
To our next category, which happens to be Health Leader of the Year. And to give away the award, we'd like to invite back on stage Kiranadar founder, Kiranadar Museum of Art.
Anurag Chauhan, Director General Counsel and Company Secretary, Axis Max Life Insurance, which is one of India's leading life insurers with operations spanning over 2 decades.
The Health Leader of the Year award goes to Dr. Ashish and Kavita Sadaf.
Punjab government, foremost in public welfare. High-tech ambulance brings speedy help. The government led by Bhagwant Singh Mann has deployed more than 400 high-tech ambulances to provide rapid emergency assistance across villages and cities. Equipped with GPS tracking and digital communication systems, besides medical equipment like oxygen cylinders, ventilators and ECG machines. These ambulances provide critical care similar to the hospital emergency ward. This helps the doctors and paramedical staff to provide the best care to critically ill patients while in transit.
25 ਐਂਬੂਲੈਂਸਾਂ ਜਿਹੜੀਆਂ ਨੇ ਉਹ ਮੁਫਤ ਸੇਵਾਵਾਂ ਪ੍ਰਦਾਨ ਕਰ ਰਹੀਆਂ ਪੰਜਾਬ ਦੇ ਵਿੱਚ। ਸ਼ਹਿਰੀ ਖੇਤਰ 'ਚ 15 ਮਿੰਟ ਤੇ ਪਿੰਡੂ ਖੇਤਰ 'ਚ 20 ਮਿੰਟ ਔਸਤਨ ਟਾਈਮ ਹੈ ਉੱਥੇ ਪਹੁੰਚਣ ਦਾ। ਕੋਈ ਕਿਸੇ ਕਿਸਮ ਦੀ ਜੇ ਕੋਈ ਰੱਬ ਨਾ ਕਰੇ ਇਸ ਤਰ੍ਹਾਂ ਦੀ ਐਮਰਜੈਂਸੀ ਹੋ ਜੇ, GPS ਸਿਸਟਮ ਲੱਗੇ ਹੋਏ ਨੇ, ਆਪ ਵੀ ਅਸੀਂ ਚੈੱਕ ਕਰ ਸਕਦੇ ਹਾਂ ਕਿ ਗੱਡੀ ਕਿੱਥੇ ਹੈ।
In order to run this high-tech ambulance service efficiently and provide rapid assistance in villages and cities, the government has established a network where a dedicated helpline number 108 and 24/7 call centers help direct immediate assistance to patients in an emergency situation.
ਐਂਬੂਲੈਂਸ ਦਾ ਤਾਂ ਬਹੁਤ ਜ਼ਿਆਦਾ ਫਾਇਦਾ ਹੈਗਾ। ਐਮਰਜੈਂਸੀ ਦੇ ਵਿੱਚ ਐਂਬੂਲੈਂਸ ਦੇ ਥਰੂ ਆਪਾਂ ਪੇਸ਼ੈਂਟ ਨੂੰ ਬਚਾ ਸਕਦੇ ਹਾਂ।
This is proving very helpful in saving lives in critical cases of road accidents and heart attacks. Punjab government, foremost in public welfare.
Hello, good evening and welcome to Market Express. I'm Himakshi Bahugna. Now let's get started with the show and see how the markets have fared today. So talking about the markets, it was a stellar day of trade. Nifty has managed to scale a record peak. Sensex also jumped nearly 600 points as bulls took charge over the Dalal Street. And if we talk about the advance decline ratio, so that was sharply tilted in the favor of the advances. And it was a sea of green on the Dalal Street with bulls powering ahead and energy as well as PSU banks leading the gains. FMCG was the only sector to shut shop in the red, dragged by ITC that hit a 52-week low today. Talking about the Nifty Metal Index, that has hit a record high, gaining for the fourth straight session with a 5% surge in the last 4 trading days. And this rally is fueled by domestic safeguard duties and also robust global commodity prices. Meanwhile, the Nifty Auto is also in the top gear, rising for the 4th session in a row after strong December auto sales. Both the sectors, are driving the market momentum as investors cheer positive demand cues and also pricing the power. And big consolidation in the QSR space. The Sapphire Dyani merger becomes effective April 1 through a share swap route. Now, under this deal, shareholders will receive 177 Dyani shares for every 100 Sapphire shares. Now, Dyani will also pay a one-time fee to Yum. Now, brands to cover the merger-related expenses. With this move, India's largest franchise operators for global food chains are joining the forces, creating a stronger footprint in the quick service restaurant market. And all eyes now on how this merger reshapes the competitive landscape. Also, ITC shares have tumbled to a 52-week low as additional levies kick in from February 1st. So brokerages warn steep price hikes may follow, and Jefferies is expecting a 15% increase, while MK projects 20 to 40% across slabs. So MK has downgraded the ITC to reduce from add, while Motilal Oswal and JP Morgan has cut the ratings to neutral. So Nuvama has also moved to hold. Analysts have slashed the EBITDA estimates by 7 to 11%. So that's a huge, drop there for FY27 and FY28, with the lowest target now at 340 rupees. So clearly the sentiment around ITC has turned cautious as regulatory headwinds weigh on the outlook. Next up, we have Coal India. So the shares of Coal India has surged, marking their biggest one-day gain since August 2024. Yes, and what's the trigger here? So a major policy shift, that is foreign buyers can now participate in the e-auction starting January 1st. And consumers in the neighboring countries will also be allowed, expanding the buyer base beyond domestic traders. And this move unlocks the new revenue streams through cross-border demand and also boost the competitiveness in the e-auctions. And analysts are saying that the change positions Coal India as the key supplier across South Asia. And this also signals a strong start to the year for the energy major. In fact, let's look at some brokerage notes. So Citi is maintaining its buy call on RR Cable with the target price of 2,050 rupees and has also placed the stock on a 90-day catalyst watch. Now, the brokerage expects the company's earnings trajectory to remain strong, projecting a robust 74% year-on-year growth, and margins are also expected to improve, supported by operational efficiencies and also demand trends. And Citi's outlook signals confidence in the RR Cable's fundamentals and growth potential, making it one of the key picks in the electricals and cable space for now. Let's keep it going with the brokerage notes then. So Citi is maintaining its buy call on Polycab with a target price of 9,200 rupees and also has added the stock to its 90-day catalyst watch. The brokerage is expecting the company's earnings trajectory to remain robust, and this will be driven by robust performance in the wires and cable segment. So Citi projects a solid 38% year-on-year growth along with a 50 basis point improvement in the margins. So this outlook signals confidence in Polycab fundamentals and also positions it as a key player in India's electrical space. And big breakthrough for Time Technoplast. So the company has received approval to manufacture high pressure cylinders used for compressed gas applications, making it the first in India to get this nod. Now the clearance covers multiple high pressure gas cylinders, adding to its existing approval for oxygen cylinders, and this move allows Time Techno to enter the higher value advanced product segment, unlocking new growth opportunities in the industrial and specialty gas markets. This is a significant step forward for the company's innovation and also expansion strategy. Next up, we have Aurobindo Pharma that is strengthening its domestic presence with a strategic acquisition. So the company has completed the purchase of Khandelwal's branded formulations business for 325 crore rupees effective January 1st of 2026. Now this deal brings in 23 brands and also 67 SKUs, adding the depth to Aurobindo's portfolio in the Indian market. Now this move marks a significant step in expanding its branded formulation segment and also positions Aurobindo for stronger growth in the domestic pharma space as well. Next up, we have Indian Bank that is riding strong business momentum. In the third quarter, total business grew 13.4% year-on-year to 14.3 lakh crores. Now, gross advances have jumped 14.5% to 6.4 lakh crores, while the total deposits have risen 12.5% to 7.9 lakh crore rupees. So, the bank's domestic CASA ratio stands at a healthy 39.02%. And this signals robust deposit traction. And these numbers highlight solid growth across lending and deposits, positioning the Indian Bank for a strong finish to the fiscal year. Where South Indian Bank has reported steady trends in the third quarter. Total deposits have grown 12.2% year-on-year to 1.18 lakh crores, while the gross advances have risen 11.3% to 96,765 crore rupees. And if we talk about the CASA ratio, so that has improved slightly to 31.84% as compared to 31.15% year-on-year. So these numbers reflect consistent growth in both the lending and deposit, and this signals stability in the bank's core operations as it heads into the final quarter of the fiscal year. Whereas next up we have Kotak Securities that has also initiated coverage on Smartworks co-working with a buy rating and target price of 600 rupees. So the brokerage is highlighting Smartworks as India's largest flexible workspace operator with 10.3 million square feet of the leased area. Now, Kotak expects an impressive 38% CAGR in adjusted EBITDA over the next 3 years, and this is driven by expansion in area and also strong demand trends. Flexible workspaces remain among the top absorbers of the new office supply. However, Kotak is flagging key risk, that is sustaining occupancy levels and also sourcing new real estate. And viewers, MCX shares have hit a fresh high today after the stock has turned, ex-date for its 1-for-5 split. Now, the exchange has jumped about 4% in early trade, rising to a new peak as investors reacted to the split, which was aimed at improving the liquidity. And the strong move also comes at a time when MCX is benefiting from the higher commodity volatility and also solid volume growth through the December quarter. And big push for electronics manufacturing from the centre. The government has cleared 22 more projects worth nearly 41,863 crore rupees under the Electronics Components Manufacturing Scheme, or the ECMS. Now, these approvals form the third tranche, taking the total number of cleared projects to 46 so far. And what's important is that these fresh projects are expected to generate over 2.58 lakh crores in the production and also create nearly 34,000 direct jobs, more than double, the output expected from the first two tranches combined. So the scheme, notified in April 2025 with an outlay of almost 23,000 crores over 6 years, has seen massive interest, with applications proposing investments of over 1.15 lakh crores. Clearly, India's electronics push is gathering serious momentum here. And from manufacturing to the gig economy, so where the centre is now proposing new eligibility rules for social security benefits. The centre has proposed a key change that could impact gig and platform workers across the country. Under draft rules issued by the Labour Ministry, gig workers will need to be engaged for at least 90 days in a financial year with one aggregator to qualify for social security benefits. And for those working with multiple platforms, the requirement goes up to 120 days cumulatively. And importantly, a worker is considered engaged for a day if any income is earned. Irrespective of the amount, this notification came just the day before gig workers held a strike on New Year's Eve, demanding better pay and also working conditions, making this a closely watched move. And staying with jobs here, here's a story that's making headlines for all the right reasons. Amid a tough hiring environment, a standout success story from IIT Hyderabad. Edward Nathan Varghese, a final year computer science student, has landed a record-breaking 2.5 crore job offer. Yes, this is the highest ever for the institute since, inception in 2008. So Edward will join global trading firm Optiver as a software engineer starting July after converting a 2-month internship into pre-placement offer. Having grown up in Hyderabad and also studied in Bengaluru, the 21-year-old says that he remained confident despite the broader slowdown, proving skill still find its reward. And finally, back home strong. So investment numbers coming in from Tamil Nadu, and Tamil Nadu has clocked a strong investment here in 2025. The state has signed 270 MOUs committing investments worth 2.7 lakh crores, according to industry's minister. So these investments are expected to create over 4 lakh jobs with growth spreading beyond Chennai through regional investment conclaves, and the state also expanded its, the IT, infrastructure through tidal neoparks, and also set up new SIPCOT industrial parks in districts like Tenkasi, Madurai and Thiruvarur. Now, the minister has said that sector-specific policies have helped Tamil Nadu strengthen its position in the futuristic areas like aerospace, defense, electronics and manufacturing. Viewers, India's manufacturing sector has lost some steam in December, with the PMI slipping to 55, which is the weakest reading in more than 3 years. Despite the slowdown, the index has stayed well above the 50 mark, which basically means factory activity is still expanding and new orders and output continue to rise, but a much softer pace as demand has cooled and competition picked up across several categories. Export orders also weakened, posting their slowest increase in 14 months. Now on to some national news. Strong words coming in from India's External Affairs Minister. He delivered a sharp message on India's national security stance, calling Pakistan a bad neighbor and also asserting India's right to defend itself against terrorism. Speaking at IIT Madras, Jaishankar said that nobody can tell us what we should do or not do. So in a clear reference to Operation Sindoor, under which India has targeted terror infrastructure in Pakistan and POK last year after the Pahalgam terror attack, he said that when terrorism is pursued deliberately and persistently, India will exercise its right to respond on its own terms. So the minister also touched down upon the Indus Waters Treaty, which was suspended after the attack. And now to a serious public health emergency where fear and uncertainty continue to grip the residents. The water contamination crisis in Indore has turned grimmer, with death toll rising to 10 as the High Court hears the matter today. Residents of Bhagirathpura continue to report vomiting, diarrhea and dehydration allegedly caused by sewage mixing with the drinking water. Now, despite tanker supply and assurances from the civic body, locals say that they do not trust the water even after boiling it. Officials are saying that contaminated pipelines have been isolated and repaired. Health teams are conducting door-to-door surveys and compensation has been announced for the victims' families. Authorities admit that it will take some time to restore public confidence in the water supply. And new FASTag norms are now in force from 1st of February, bringing a major change for the highway users. So the National Highways Authority of India has scrapped the post-activation KYV process for the all-new FASTags issued to cars, jeeps and vans, and this move is designed to cut delays and also make the system easier for everyday motorists. Instead of asking users for repeated verification after activation, all checks will now be completed by banks upfront using the Vahan database before a FASTag goes live. So this means that no more follow-up calls, document uploads or last-minute suspensions for the new tags. Whereas India has logged its 8th warmest year on record in 2025, according to the Meteorological Department. Now, temperatures were higher than the long-term average, and the country saw a rise in cyclonic systems and also severe weather. Heavy rains and floods to thunderstorms and lightning, claimed more than 700 lives during this year. So lightning alone accounted for nearly half of all the fatalities, and the IMD notes that climate pressures will continue to shape India's weather patterns, with changing temperatures and also extreme events likely to remain a challenge in the years ahead. Now on to some international news. Viewers, protests in Iran are widening beyond the capital, with at least 7 people reported dead as demonstrations spread into the rural provinces. The unrest triggered by the country's ailing economy has now entered its 6th day and is being described as the largest wave of protests since 2022. So the deaths involving both the protesters and security forces were reported from 4 cities, many in regions home to Iran's Lur ethnic group. So while demonstrations in Tehran have slowed, their expansion elsewhere raises fears of a stronger crackdown by authorities, echoing memories of the Mahsa Amini protest that shook the country 3 years ago. In fact, US President Donald Trump has issued a sharp warning to Iran, cautioning authorities against using force on protesters as nationwide unrest intensifies. In a post on Truth Social, Trump has said that the United States is locked and loaded and ready to go if peaceful demonstrations are shot or killed. So the warning comes as Iran faces its largest protests in 3 years, triggered by worsening the economic conditions and also a sharp collapse of the rial. Now, Iranian media and rights group report multiple deaths as protests spread across several provinces, raising concerns of a tougher crackdown by the regime. Now, from political unrest to a climate emergency, deadly weather events hitting Afghanistan. At least 17 people have been killed and 11 injured in Afghanistan after heavy rains and snowfall has triggered flash floods across multiple regions. The season's first major rainfall has ended a prolonged dry spell but led to widespread devastation, damaging the infrastructure, killing livestock and affecting nearly 1,800 families. Among the victims were 5 members of a single family, including 2 children, after a roof collapsed in Herat province. Now, disaster response teams have been deployed to assess the damage as authorities warn Afghanistan remains highly vulnerable to extreme weather events. And news coming in from Hollywood, where a major legal battle is now unfolding. Actor and rapper Will Smith has been sued by violinist Brian King Joseph, who performed on his 2025 concert tour. So the lawsuit alleges sexual harassment, retaliation and wrongful termination, with claims centered around incidents during the first leg of the tour in March 2025. Now, according to the court filings, Joseph says that Smith made comments suggesting a personal bond and alleges misconduct during a hotel stay in Las Vegas, where access to his room is now being questioned. Now, Will Smith and his management team have not yet publicly responded to the allegations. And in the entertainment space, Ranveer Singh's Dhurandhar has now been declared tax-free in Ladakh. So the announcement was made by the office of the Lieutenant Governor of Ladakh in an official social media post. And shot extensively in the region, the film showcases Ladakh's stunning cinematic landscapes, with the move seen as strong support for filmmakers and part of the Union Territory's push to position itself as a preferred shooting destination. So the tax-free status is expected to further widen the film's reach in the region. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit for more news and updates.
Let's welcome in Amit Kalyani, Joint Managing Director of Bharat Forge, into the conversation. Amit, good morning, and at the outset, wishing you and everybody in the Bharat Forge family a very happy 2026.
Thank you, Neeraj. Wish you all also a very happy 2026.
Yeah.
First of all, I'd just like to mention one thing, that we are now in the silent period, so can't talk too much about any of the other businesses.
Completely
I can
agree.
talk about the defense orders and the things that you specifically wanted to focus on, so that's fine.
Sure, but I would want to start off, Amit, by asking Amit Kalyani, one of the captains of India Inc., about what does he feel about 2026, because 2025 was a year of multiple challenges from multiple fronts for an Indian corporate. How does 2026 shape up according to you?
So I think, as a businessman and as a, corporate, a lot of unexpected things happened in 2025. And I think any responsible or any, corporate in India will have found ways to adjust to the current situation and make growth plans for 2026, keeping in mind whatever has transpired in 2025. So I think we are all, cognizant of where we stand globally, geopolitically, and we have chalked out a plan by which we will be able to grow our business substantially going forward.
Okay. Now, Amit, Anushi was obviously talking about the defense piece, because it's a recency order win. But as one as I read some of the notes that have come in the last 1 month on Bharat Forge, they talk about how defense, aerospace, restructured overseas operations would be the focal points for Bharat Forge, because North America Class 8 truck sales don't quite appear to be on a strong footing. Would that be a fair assessment of the larger part of your business?
Those three factors will definitely be a large part of our business, but two additional factors. One is doubling down and focusing on strengthening our automotive business in India, which is both across passenger car and commercial vehicles, and increasing our play in the industrial sector in India. These are our focus areas.
Okay, let's try and nibble on them one by one. Maybe we'll come to defense in just a moment, but I'm inclined to ask you, Amit, one more question. There is a lot of industry chatter about how the Indian CV cycle is coming back after a very long hiatus, and we might be at the start of a cycle which might last the next couple of years. You are a veteran in this bucket as well. Do you reckon that to be the case, and therefore could that be net constructive for your business?
Yes. So first of all, I'd just like to, deflate this bogey of the US truck market. It is approximately, just about double-digit percentage of our total revenue. And that is our consolidated revenue, because we also have truck revenue in Europe. So it's not a very large part of our revenue. It's just 11, 12, 13% in that ballpark. Coming to the Indian CV and, let's say core industrials market, as India's GDP growth rate, you're seeing ticking upwards. And I think now you're starting to see a whole new phase of infrastructure development across India, whether it's in the cities and rebuilding city infrastructure, to expanding our highways and other kinds of key public infrastructure, whether it's building new airports, ports, railway lines, railway terminals, cargo centers, etc. I believe that the build-up of India and Bharat will now propel India's economic growth. And this is something that we saw happen in China in the in the 90s, moving into the 2000s. And I think this is the same kind of period that we will see in India now for the next 15 to 20 years.
More than 1 crore 86 lakh women in Uttar Pradesh are living with great relief today. They no longer worry about smoke and pollution because their homes now have LPG connections provided under the Pradhan Mantri Ujjwala Yojana.
हमें इसका बहुत फायदा है आँख नहीं फूटती धूप में मैं फटदनी से चाय बना ले बहुत सहूलियत है हमें इसकी.
The gift that Prime Minister Narendra Modi gave to the women of the country in 2016 has been further strengthened by the Yogi Adityanath government. During Holi and Diwali, women in the state are receiving 2 cylinders for free.
भारत के अंदर 12 करोड़ परिवारों को और उत्तर प्रदेश में 1 करोड़ 86 लाख परिवारों को उज्ज्वला योजना में फ्री में कनेक्शन मिले.
The first phase of the new scheme of UP government will run from October to December and the second from January to March next year. The state government will spend 1,500 crore rupees on it.
Powered by Government of Andhra Pradesh and EDB.
Right, our next category is Actor of the Year Female. And to give away the award, we would like to invite Dr. Payal Kanodia, Chairperson and Trustee, M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janhvi Kapoor.
Punjab government has taken a heartfelt step to bring relief to thousands of Dalit families burdened by old loans. Now, the loans they had taken before March 2020 will be waived completely, giving them a fresh start and peace of mind.
ਕੈਬਨਿਟ ਦੇ ਵਿੱਚ ਇੱਕ ਫੈਸਲਾ ਕੀਤਾ ਗਿਆ 68 ਕਰੋੜ ਰੁਪਏ ਦਾ ਕਰਜ਼ਾ ਬਕਾਇਆ ਸੀਗਾ ਐਸਸੀ ਪਰਿਵਾਰਾਂ ਤੇ ਨਵੀਂ ਸ਼ੁਰੂਆਤ ਉਹਨਾਂ ਲਈ ਅੱਜ ਇੱਕ ਹੋਊਗੀ। ਪੰਜਾਬ ਸ਼ਡਿਊਲ ਕਾਸਟ ਲੈਂਡ ਡਿਵੈਲਪਮੈਂਟ ਐਂਡ ਫਾਈਨਾਂਸ ਕਾਰਪੋਰੇਸ਼ਨ ਵੱਲੋਂ 31 ਮਾਰਚ 2020 ਦਿੱਤੇ ਗਏ ਸਾਰੇ ਕਰਜ਼ੇ ਉਹ ਮਾਫ ਕੀਤੇ ਜਾ ਰਹੇ।
This decision will lift a heavy burden off the shoulders of families who have faced financial struggles for years. It opens doors to new opportunities, hope and dignity for many deserving households.
मेरी सरकार ने बकाया राशि माफ कर दी, इसलिए मैं सरकार का बहुत-बहुत धन्यवादी हूँ।
Under the visionary leadership of Chief Minister Bhagwant Singh Mann, this initiative stands as a promise to support and empower the Dalit community, helping them rebuild their lives without the fear of debt.
कोरोना काल दे कारण मेरियां मੱਝਾਂ ਦੀ ਡੈਥ ਹੋ ਗਈ ਜੀ, ਮੇਰੀਆਂ ਕਿਸ਼ਤਾਂ ਟੁੱਟ ਗਈਆਂ ਸੀ। ਉਦੋਂ ਬਾਅਦ ਮੈਥੋਂ ਕਿਸ਼ਤਾਂ ਵਾਪਸ ਨਹੀਂ ਹੋਈਆਂ ਤੇ ਹੁਣ ਮੇਰਾ ਸਰਕਾਰ ਨੇ ਲੋਨ ਵਾਪਸ ਕਰਤਾ। ਧੰਨਵਾਦ ਜੀ ਬਹੁਤ ਸਰਕਾਰ ਦਾ।
This loan waiver is more than just financial help. It's a new beginning, a chance for brighter and better days ahead for Punjab's Dalit families.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Market ends the first week of 2026 with gains after Nifty hit an all-time high. All sectoral indices barring Nifty FMCG finish in the green with energy as the top gainer. Broader markets outperformed the benchmarks. Centre proposes 90-day work rule for gig workers to get social security, says they must be engaged with a single aggregator for at least 90 days in a year to qualify for benefits such as health, life and personal accident insurance. Government is yet to formally approve the proposal to hold Budget 2026 on the 1st of February. Sources say meeting of the Cabinet Committee on Parliamentary Affairs has not been held yet. All decks cleared for financial bids in IDBI Bank stake sales process. Sources tell that government will likely invite financial bids within a week. Government clears investments of over 41,800 crore in third tranche of electronics component manufacturing scheme. Approves 22 projects with production of more than 2.5 lakh crore expected that will generate around 33,000 jobs. BSE MD and CEO believes catch-up growth is being played in derivatives, tells NDTV Profit that the SME platform may not be a profit center for the exchange and may continue to be a cost. At least 10 have died in Indore due to contaminated water. Lab report confirms pipeline leak. Madhya Pradesh Chief Minister orders show cause notice for IMC Commissioner amid backlash. Hello and welcome. You're watching Profit 360 on NDTV Profit. I am Himakshi Bahugna and along the next half an hour, we'll be taking up all the market, national and international related stories. And first up on the show, we have the Union Labour Ministry that has proposed key social security benefits for gig and platform workers in the draft Social Security Code, Rules 2025. Now, to qualify for the benefits, workers must have worked at least 90 days with one aggregator or 120 days across multiple aggregators in the last financial year. And all the gig and platform workers age 16 plus must register on a government portal using Aadhaar and other documents. My colleague Himanshu is joining us to explain what the social security norms for gig workers mean.
The Union Labour Ministry has proposed important social security benefits for the millions of gig workers or platform workers in the country who are engaged for different kinds of work by aggregators. Importantly, the most important provision in the draft rules that have been published for public comments relates to the mandatory registration of every gig worker or platform worker who are hired by aggregators. It specifically says, and I quote, every gig worker or platform worker who has completed 16 years of age shall be required to be registered with Aadhaar and other documents as prescribed by the central government on a portal designated for this purpose by the central government. And importantly, every aggregator will have to publish data with regard to the number of gig workers or platform workers they have hired for different kind of work, and this will be used for generation of a universal account number or any other such unique number that will be given and allotted to every gig worker or platform worker. It also says that every eligible registered gig worker or platform worker shall be issued an identity card, digital or otherwise, bearing his photograph and other details as specified by the central government for such purpose, and such digital card shall be downloadable from the designated portal of the central government. So these are important provisions with regard to the mandatory registration of workers. But there are also essential prerequisites in terms of how many minimum days of work a gig worker or a platform worker has to do to access social security benefits. The draft rule specifies the central government may notify specific conditions for eligibility provided that such eligible worker has been engaged as gig worker or platform worker for not less than 90 days with an aggregator, or in case of multiple aggregators, not less than 120 days in the last financial year. So these are the basic minimum requirements that the government wants to implement once these rules are implemented across the country for a gig worker or a platform worker to access social security benefits.
So the centre has notified draft rules for social security of gig and platform workers, which was a long pending demand that's back in focus after nationwide strikes by the delivery partners and also ride-hailing drivers. But the big question remains, does this framework truly protect the gig workers, or does it still leave some gaps on the ground? Now, to discuss this, I'm being joined by Sumita Davra, former Secretary Labour and Employment, and Manoj Yadav, General Secretary of the All India Gig Workers Union. So let's get into the discussion, and welcome to the show.
Thank you.
So Sumita, so the centre has now notified the draft rules, under the code on social security for gig workers. So at a broader level, how significant is this move, and does it, finally acknowledge gig workers as a distinct category needing some sort of, formal social protection there?
Yes, this is a very important move, and we are aware that the Social Security Code had already defined the gig and platform workers way back in 2020. And now with the notification of the codes, we really are moving forward. The rules have been put in the public domain on 31st December 2025, and they are all for discussion. And we may also recall that the rules have actually been put there after consultations with the associations of the gig and platform workers as well. So they are supposed to be comprehensive. They're expected to be comprehensive. Now there's a 45-day period to comment on it. This brings a lot of clarity on going ahead on the next steps. For instance, the National Social Security Board can also, nominate an expert committee to give suggestions on the gig and platform workers scheme. Similarly, who will be the members of the Gig and Platform Workers Board? Similarly, there'll be a National Social Security Fund. They have also defined the formats to be filed by the aggregators. Registration of the Gig and Platform Workers will be the responsibility of the aggregators. The aggregator module has already been launched on the portal the rules are talking about, the portal being eShram, and it'll be the responsibility of the aggregator to electronically update the information on the worker so that there's real-time information on the number of days the worker has worked on the platform. So all this brings a lot of clarity on going ahead within the framework of the codes.
Absolutely. So that brings clarity, and that's the intent on paper as well. But how does it really look from, the ground? Manoj, gig workers had just gone on nationwide strikes demanding social security. From the workers' perspective, do these draft rules address the core demands, or do they still, fall short of it?
Thank you very much for inviting me today. I'm coming on the issue of this gig workers strike, what we have mentioned just. If you remember I believe on November 21, this notification came out, and immediately after that on 25th December, followed by 31st December, all India gig workers decided to go on the strike. The reason behind that, we definitely welcome the move of the government for providing the social security, but still it needs more clarity, what just Madam has said. But again, the question is not limited with the social security. Why gig workers went on the strike? Why they have gone on the strike? Because of their daily issues, like incentive issues, like medical issues, like their ID blocking, and none of them are seeking the retirement benefit. None of them are asking the immediate social security benefit. That will be after a long period. Now the government has given a draft bill with a condition of 90 days with individual and 20 days with the multiple. But still, as I said, it needs more clarity. But the crucial part, the real issues are still to be identified, and it has to be rectified, because the most issue, we got report on 31st, the many of gig workers received hardly 7 rupees as an incentive, which they used to get 50 rupees. It was really hectic. That was one of the reason also how this incentive are getting reduced without a confirmation of any association or any authority. And what you have just said about